not tracking regularly, but my initial understanding of looking at the charts is that there was this strong base building around this 280 to about 300 zone, and therefore a good up move could start. The first target is 370, followed by about 395 to 400 as the range. So I think the stock is heading towards those levels.
All right, good time to get in the 910 call then. What would your 910 call be, Mitesh?
I would go with the buy on Adani ports for targets of around 14. Adani ports is a buy, and I would look at a target of around 1485.
Okay, all right, let's get in Sudarshan. Sudarshan, what about your call?
Well, it's trend. Consider buying trend with a stop under 46.50.
Okay, all right, gentlemen. We'll come back to you all and revisit some of these calls. But let's go to the other Sudarshan, our teammate. He's here. He goes through a lot of brokerage notes. Been reading up. But today, I think he's bringing us two special ones. Tell us, Sud.
So I have traded two stocks and both are from the auto pack, and first one is Tata Motors Passenger Vehicles after the demerger that's known as Tata Motors Passenger Vehicles, which houses JLR, Indian Passenger Vehicle, and the company's stake in Tata Technologies. So BofA Securities has come out with a note downgrading the stock to underperform, and target price tag given is of rupees 375. And the downgrade is mainly because of the situation that JLR is into. And JLR forms almost 45% of the target price that BofA Securities has. And it says that cyber issue, US tariff, and the slowdown that company is facing both in US and China, it might weigh on the stock of Tata Motors PV, and also balance sheet overall may again face the issue of increasing debt build-up going forward. While for India Passenger Vehicles, it's saying that in the last 1 or 2 months, it's back towards gaining market share, but the problem remains the margin front. Company has to make sure that margin improves for India Passenger Vehicles business as well. Second note is on Hyundai. Again, it's from BofA Securities only. It has upgraded the stock after the investor day meet, and the target price it has given is of 2,800 per share. It says that new launches going forward are going to increase further, and it sees further upside to the volume guidance. And also market share, it's expecting to rise significantly from FY27, while margin is going to remain steady. Remember, Hyundai has given the margin guidance in the range of 11 to 14% from FY26 to FY30. Also on the valuations front, it finds risk reward favorable.
Well, you spoke about Hyundai. Yesterday itself, our colleague Parikshit spoke with the management, and here's a slice of that conversation on the management's way forward in terms of growth for India.
The main message that I've conveyed to all the stakeholders, including, of course, the shareholders in attendance, is that India is not important for the strategy of Hyundai, but it is the strategy of Hyundai itself. We're going to deliver in this market more than 860,000 total sales in the market. And then we have announced also an increase in capacity to 1.1 million, which would allow us to be, already we are, but to be by far the largest exporter of vehicles from India.
That is Hyundai speaking to Parikshit post the Investor Day call and betting big, doubling down, tripling down, as he said, on India over the next few years. In the pre-open, it's a positive start, close to about 0.3%. The GIFT Nifty is up close to about 70-odd points. So it suggests that the recovery that we saw yesterday will extend itself. So trading with a positive bias right now. The stocks which you should have on your radar this morning, as we pointed out, on the earnings reaction front, HDFC Life, HDB Financial, L&T Financial, KEI Industries, MRPL, Rosari Biotech. These are stocks you should keep. Angel One, Oberoi Realty, Axis Bank. And Axis Bank, at least in pre-open, is the big star. That's up close to about 4%, and it's pushing up a couple of the other banking names. So I can see HDFC Bank, Innocent Bank also trading with a positive bias in pre-open. And RBL Bank, it's been the stock in the spotlight for the last couple of days now. And now 18th of October is the board meet where they will consider a fundraise. The stock has doubled since the start of the year. But Mangalam, these are the earnings reaction. To watch today, there is a lot on the consumption plate.
Yep, you are looking at Nestle. The stock was doing well in yesterday's session, but importantly, it's 10% away from its 52-week high, trading at 60 times, 62 times. so to say, but not much expected from this quarter's performance. All eyes on the next quarter's performance. So revenue up 3.5%, 5,300 crore thereabouts is what the street is working with this time around. EBITDA largely flat, which implies a margin decline of almost 100 basis points, 22% versus 22.9%. And the net profit on an optical basis declines by 28% because remember, there was a one-off gain in the base quarter. What is more important to look at this time around is the absolute performance. Out there, you're looking at anywhere between 700 to 710 crores on the bottom line. The impact of GST-led trade transition would be anywhere between 350 to 400 basis points. So had it not been for the GST rate cut, you could have seen a revenue growth anywhere between 7 to 7.5%. 3 to 4% growth in their domestic business, 7 to 10% growth seen in exports, domestic volume seen between 1 to 2%, and 80 to 100 basis points impact on account of higher prices for some of their key raw materials, which include the likes of milk, coffee, and cocoa. More importantly, trajectory on growth in their pet care business, demand post GST, and strategy from the new leader, Manish, who takes over from Suresh Narayanan. The other one, which we're looking at, is Eternal. More importantly, here too, the commentary on competition for both food delivery as well as quick commerce will be extremely crucial. But year on year, these numbers are likely to be very strong. Revenue growth of almost 66%. EBITDA grows much lower than the revenue at 13%, which implies margin compression. But that's largely expected because of the strong expansion that the company has been doing on their quick commerce front. And as a result of which, there'll be a decline of 21% in the net profit. Nothing really to worry about here because a large part of that decline would be on account of higher depreciation. What the company has to say on food delivery, GOV, and the outlook for margins or reduction of losses in quick commerce would be the ones that would drive the stock from here.
Okay, and not to forget, lots on the technology plate too. So Infosys and Wipro, actually both of them. So we'll get a complete picture of the large cap IT action. And so far, TCS, HCL Tech Mahindra have all reported beats on muted expectations. In the case of Infosys, we'll have to watch if the FY26 guidance gets tweaked. And in the case of Wipro, the Q3 guidance will be very critical. And we've got two midcap IT companies, LTI Mindtree, which moved up 2.5% following the rub-off from Persistent and Cyient. So midcap IT consumption should be on your plate. The bell has gone and the Nifty has opened at 25,400, a gain of 78 points, continuing with the up move from yesterday. Yesterday, we closed with a gain of about 180 points and the Nifty this morning has added another 75 points. Sensex is up close to about 250 points. It's banks leading the way. The Nifty banking index is up more than 300 points, a rally of close to about 300 points. And it's Axis Bank all the way. Axis Bank is your top Nifty gainer, 3% up. The street is shrugging off that one-off provision impact on the bottom line. Most analysts are happy with the operational performance, the asset quality, loan book, and the stock is the big mover. And it's lifted up a Kotak Mahindra Bank and an HDFC Bank too. So Kotak Mahindra Bank is following close with a gain of about 1%. Eternal, another fresh record high on Eternal. The street awaits the numbers. The estimates are for a 65-66% jump in the company's top line in Q2, and Eternal is gaining ground. Two-wheelers also seeing some buying action today. So it's a firm opening for Hero MotoCorp, for Bajaj Auto and Eicher Motors. Now, ICICI Bank too is moving up. So ICICI Bank has a gain of close to about 0.5%. On the consumption plate, you've got a little bit of green coming in on Trent. On the way down, you're seeing softness coming through on the life insurance companies. So HDFC Life, SBI, sharp fall coming in on HDFC Life. Yes. Pull that up. It's 4.5% gone on that. So HDFC Life looks like the casualty. And Infosys, ahead of the numbers, is seeing some softness. In fact, so is IT. So TCS, Wipro, Tech Mahindra, two in the red.
Two stocks. One is KEI Industries. Yes, the results were good. The 23% growth that we've seen in cables and wires business. But there's something that the street does not like. Maybe it is, something led to the GST-related transition or the impending competition or how the volumes and margins of this business would be going forward. So something that the street does not like about these numbers, down about 7% counterintuitively out there. It's not that, the stock had seen a big move ahead of numbers or something of that sort. That's lower by about 7%. The other one is Oberoi Realty, up around 5% despite a decline in residential sales versus their peers. So, the street perhaps looking ahead. And the third one is RBL Bank. That one's opened fairly in the green after the management has said that they're going ahead with a board meet on fundraising. And the stock, remember, is out of F&O ban as well. So these three stocks from the broader markets definitely stand out. By and large, more stocks in the green than the numbers in the red, Nigel.
Well, KEI Industries, we'll have the management shortly with us, as well as HDFC Life, so we'll try to pull out some numbers from them. Both of them, the two earnings casualties of the morning. And you have a few stocks that are doing well. Keynes Technology, that stock is higher by close to 2%. They have shipped 900 multi-chip modules to the United States. So that's why, in fact, that's a little bit excited in trade. The earnings reactions this morning, there are a few actually. Huhtamaki Paper, that stock, in fact, is higher. The margins have moved from, I think, low single digit to closer to around double digits, high single digits. So the street likes that. Huhtamaki is up and about in today's trading session, one of the top winners out there. MRPL, we had mentioned it could potentially be one of the stocks of the day. Not just the operational performance has improved, they have gone ahead and they have pulled back on the debt as well. So that's why the stock is doing well. And at the end of the first quarter, actually, the stock got slammed, because there was an inventory loss. This time around, that wasn't the case. So that's why that stock's doing well. And what's giving it company on the upside is Chennai Petro. Remember, the street was bracing for a better second quarter, and we had mentioned this as well. First half of the year could look good. So that's why the read-through out there, and that's why that stock is up 4.5%. What else? Quick Heal. Stock is firing away in today's trading session. Well, that's doing extremely well as we speak. Big up move is what we're seeing on that one. 7.5% higher. What else? I think on the losing side, the HDFC Twins, that's Life and AMC is lower. KEI Industries is down, but I'll tell you what, Polycap as well is down. That's down close to around 2.5%. So it's having a bit of a ripple impact on some of these other names. We'll wait to hear out from the management as well. But let's welcome then our market master, our market guest. We have Gautam Chacharya, Head of Global Markets at UBS, who joins us on the show. Hi, Gautam. Where are you joining us from? India or?
Still on Diwali break already. So, but again, you guys wanted me to be there. So, yeah.
Good.
Happy Diwali to you and all the viewers.
Happy Diwali to you, to your entire family as well. I briefly bumped into you a couple of weeks or so ago. So you're clearly in festive mode, Gautam. But what do you feel about the markets? Everyone's talking about this last 1 year underperformance, that the Indian markets didn't party. You think our time has come?
I think three points. Technically, the markets are still stuck in range bound. And I say that simply because there is enough local liquidity in terms of mutual fund flows to support the market on the way down. But there's also a large pipeline of capital raising, which will potentially cap any meaningful upside. So that's a technical part. But beyond that, tactically, again, if we see progress towards a trade deal, that will provide some legs. Fundamentally, the valuations in absolute terms, earnings outlook, if you combine that, that's still not appealing risk reward for the broader market yet, unless we see a big breakout in fundamentals. Again, there's been a lot of hopes around consumption and GST cuts. But we have to see beyond that, because the consumption stimulus or GST cuts can provide near-term support to economy, but it needs to be followed up through a broader capex cycle if we need a sustained economic cycle. So that part is still missing or still something to see.
On the EPS front, Gautam, what is your expectation for the remainder of this year and more importantly, the next year? Because most on the street are pricing in 15-16% plus EPS growth in FY27. Do you think that's possible?
So look, I think the estimates for the street is not what investors tell us. In investors' mind, I don't think they're looking at 15-16% growth for Nifty EPS in FY27. They are more like high single digits to low double digits. That's where the market expectations are. And that's something definitely should be feasible. In fact, 15-16% is not out of range simply because of the low base which will be there. And there will be some impact from GST cuts, policy easing, etc. for sure.
And this particular year, I mean, do you think the second quarter is practically a washout quarter, so to say? The next couple of quarters where a lot of hopes are pinned because of the GST cut, and you're saying that there is a short-term impetus likely. So do you think a bump up in the third and the fourth quarter?
Again, some marginal bump up, yes. Meaningful bump up, too early to say. Like we have seen even the GST, the big debate out in terms of what the impact is. And our auto analyst had a very interesting note out that while if you look at just the Navratra period, the headline Y&Y growth for two-wheelers, four-wheelers is 20% plus. But if you start from, say, the Onam period, which is the right way to look at from adjusting for seasonality, etc., the growth is lower single digits. So we're still not seeing the big impact yet, which gives us confidence that we'll have a sustained upcycle. So it's early days, but again, a marginal uptick in 3Q, 4Q for sure. Whether it's going to be meaningful or not, it's too early and fingers crossed.
So auto sales, you're saying it's a subdued uptake, just about 9% if you look at the cumulative festive season sales. Are you getting a similar data point from the other consumption indicators?
Again, it's a mixed bag. Look, the FMCG, the consumer staples, etc. There, the inventory part has been much more, or is making the scene much more noisy around the GST cut. So very early days, and again, looks like the uptick is not as strong as initially believed. But again, the four-wheelers, two-wheelers, we saw some uptick in the festive days specifically, but for an entire season, it still looks below expectations.
Got that. So we are overestimating the benefit on consumption on account of the GST sales. Is that yet to reflect in the stock prices? Would you say that?
So I won't say overestimate as yet. In the last couple of weeks, the markets got ahead because the GST cuts are permanent. So the impact is not just for the 15 days. It will remain as we go along. So that's a great thing in terms of the cycle. In terms of stock prices and markets, again, markets, as I said, is stuck in a range-bound level. Hasn't moved up, hasn't moved down materially. So it's not really pricing in any major uptick from GST impact. No, it's not pricing in yet.
So since Gautam, Indian markets have been range-bound and you're the head of global markets, if you just zoom out, India's range-bound performance has underperformed, say, Taiwanese markets or Korean markets, where you have a lot more AI plays, and they've been the big beneficiary of this tech upcycle. Is there anything on the horizon which warrants a change that perhaps investors will start looking at India, maybe because the other emerging markets have run up too much, the valuation, the gap between the two has changed, or the fact that India's earnings, maybe on account of a low base, is changing? I mean, is there anything which makes you believe that India's underperformance vis-a-vis emerging markets could reverse?
Look, our EM strategist still remains underweight on India from an EM portfolio context. Having said that, tactically, yes, we have seen a big divergence, or as you said, India underperformance this year. And if you see some progress on trade deal and some impact of GST, etc., locally, then yes, underperformance can reverse fairly quickly. Because positioning-wise, from a global investor positioning, it is light from an India perspective. Both positioning in terms of actual weightage in their portfolios, as also their sentiment and outlook. From our discussion with global investors, it still looks like they're not in a hurry to take up an India weight to any meaningful overweight in a hurry. So that positioning gives us comfort that if things fall in place, this underperformance can reverse fairly quickly. But is it going to happen in the next 15 days, 1 month, 3 months? That's the tough part to say. Over the next 6 to 12 months, possibly.
What do you think has to happen for this to turn? Apart from, earnings, obviously you will see some green shoots out there. It doesn't happen immediately, like you said. But there could be something else that may happen in the globe that may not, make the investors of that country or money which is going to those countries be favorable and perhaps be a tactical shift towards India. What could the scenarios play out as?
There's kind of maybe a kind of a circuit breaker around what's been happening around North Asia, China, between US and China, as you've been reading the news. Again, what our reading is, talking to investors, markets, I think everyone expects this to be short-lived. And we have seen markets being largely resilient around that. So I won't go on a defensive approach saying that, okay, things are not good between US, China, and therefore India will benefit. I would look at more if there's a real good India-US trade deal, which gets India's tariffs back to a competitive or even a very competitive level versus its trading competitors. That will be a big catalyst for Indian markets, for sure.
So how are you positioning yourself, Gautam? I recall, there was a bit of a move between industrials as well as consumption. At current reckoning, the GST 2.0 is here. We know what the spends are. I think private spend still needs to pick up. Private capex could be the big trigger, I think, the big monetable for the next 12 to around 18 months. How would you position, between capital goods, industrials, and consumption on the other hand?
Thematically, we still overweight consumption, but again, it has to be pick and choose rather than a broad consumption pick. Like one of the themes we are clearly picking up in consumption across the board, which includes staples, discretionary, etc., is premiumization. Like autos, our analyst thinks the street is possibly overestimating in terms of the near-term growth. But within that, the premiumization plays will possibly even surprise positively. So premiumization is one big theme. The second big theme around consumption is the consumption tech or internet or food delivery and quick commerce. There we still expect markets estimates to be met or even beaten. So that's another space where we are very, very positive. Industrials, we still remain broadly positive on defense, but again, selectively. So the stock level is much more selective. But again, at the macro level, it's more consumption over industrials. The other two I'll mention where expectations are fairly low and positioning light is IT services. Again, there's a debate about the longer term, but near term, the positioning, especially amongst global investors, is one of the lightest we have seen. And as we've seen in the early results for IT, the expectations are so low that companies are actually meeting or even beating, especially the mid-cap ones. So the mid-cap IT space and similarly financials, there are pockets which can deliver given the muted expectations, not in absolute terms, but given the muted expectations.
So in the large cap consumer names, what would be the ones that would, stand the test of this premiumization best and perhaps be investable right now?
So again, the autos, there are two-wheeler and four-wheeler names which are the obvious beneficiaries, both premiumization as well as the EV. So that they are our top picks in autos and broader consumption space, or consumer-linked space. Within consumers, we would prefer the quick commerce delivery guys, and then specific companies which are playing up. Again, I can't name individual stocks, but specific companies geared to the premiumization theme, which is well known, the larger consumer FMCG companies.
So which would be, something in the beauty and personal care space, a marketplace out there as well. Then there is, a recent entrant, which is in home services, which is pretty similar. The TAM, they say, is pretty similar to that of all the quick commerce players. Would you look at any of them?
Look, broader marketplace / the internet consumer tech space, we remain positive. The home improvement, the new entrant which you're talking about, we don't have coverage on that, so I can't comment on that. But the broader home improvement space, we remain constructive.
Okay. Can you buy it at this juncture, these consumer tech platforms? They're great stories, but it's great if you've already entered in and you got in at a lower price. But at this price, how comfortable are you?
We're very comfortable. And again,
even to buy at this juncture?
Absolutely, because our analysts have done deep dive work on TAM. And that one observation I have is that I have seen the TAM, even by the bullish analyst, expand over the last 1 year. The TAM estimates.
Gautam, thank you very much for joining us from your holiday. Wish you, your family, the entire team at UBS season's greetings and look forward to chatting with you next time. Do come down to our studio.
Will do. Thank you.
Thank you.
To you all. Thanks.
Happy Diwali once again. Let's get to our corporate corner then on the show. IRFC is the company on our radar. Manoj Kumar Dubey, the chairman, managing director of the company, is now with us. They came out with their Q2 numbers. And what we would like to chat with the management one is, will the strong sanctions continue? They had guided for double-digit profit growth. Is that here to stay? And the opportunities under IRFC 2.0. This IRFC 2.0 is that historically this company functioned as a dedicated financing arm for the Indian Railways. So the entire order book would come in from leasing projects assets related to Indian Railways. But about a year back, the company embarked on a diversification strategy, which is called the IRFC 2.0, where they're seeking to fund even the broader railway ecosystem. So whether it's CPSCs, state government entities, metro rail projects, even renewable power projects, which are linked to railways. So that's the IRFC 2.0. Thank you very much, Mr. Dubey, for joining in. We'll come to that. But briefly, just first about FY26. You had given a guidance of 30,000 crore of disbursements for the full year. In the first half, I think you've done about 21,000 and 60,000 crore of sanctions. Again, your run rate is at 45,000 in the first half. What will these two numbers look like for the full year?
So, good morning, Rima, and I think you have made my job easier with giving the main part of commentary that I was supposed to give. So thank you for all the homework that you did for IRFC. So yes, as you rightly mentioned, in the March of this calendar year, we embarked on our IRFC 2.0 journey. And we started from one client model of Indian Railways to multi-client model within the government system, who are having linkages with the railways. And I'm very happy as you put up the numbers. We gave a guidance of sanctioning 60,000 crore of assets. We have already crossed the mark of 45,000 crore in this one half of the FY. That shows the way ahead. I mean, I don't want to put in numbers over and above that, but if you can put numbers, this 45,000 in one half of the calendar year, of the financial year, we are going to go extra miles going ahead. So far as our strategy is concerned, we are actually focused on growing our PAT in double digit. That is a vindication for the fact that in Q1 and Q2 both we showed the same kind of thing. There is one more clarification regarding our revenue. The dip in the revenue is not because of any other reasons, but for the fact that there is some accounting system. A moratorium that we were given to Indian Railways for projects for 5 years, we have extended by a year. So it is just the accounting thing. Next year, when we sign the agreement for this year as well as next year, the upside in revenue also will be showing the same thing going forward.
Okay. Sir, on sanctions, you did 45,000 in the first half. Is there any reason to believe the second half will not be as strong as first half? And why are you not in a position to raise the full year guidance from the current 60,000?
I mean, as the head of the team, if I'm giving very stiff target to my boys and girls, it is little too much on them.
Okay.
But believe me, the way they have performed in the first half and the kind of queries we are getting from all over in the railway ecosystem, obviously, we won't say no to anybody who is coming to us with a good quality of assets.
Sure.
So obviously, the target is going to be achieved. It is going to be more than what we have given the guidance, and that is what we are happy for.
Okay, so you will beat the guidance on sanctions of 60,000 crore and 30,000 on disbursements for FY26.
It looks like obvious for the. It looks like obvious for so far as sanctions of the assets are concerned. So far as disbursements are concerned, as you know, there was zero pipeline when we started on 2.0. And disbursement comes out of sanction of the assets only. So this year, 30,000 is a very good target that were given to us. And we are pretty sure that with the kind of progress we have and the kind of offerings we have in the kitty, we'll be crossing that, if not achieving the same.
Okay. All right. Hi, Mr. Dubey, and good to see you, Ben. You know, in the past, you were telling us how the business model is evolving, right? From just being core railway, you're moving to non-core railway, and that's what will help in terms of margin improvement. So tell us, what is the targeted NIMs you're looking at? And this disbursement target, you're sure, right? 30,000 is on. Because your boys and girls also, either they'll, they'll be keeping an eye out on this interview as well.
So actually, we as talked to you in the beginning of this FY also, that our focus is on yield. So PAT will be derived with better NIM. And the sweet spot or the better time that IRFC is having going forward in diversification is the fact that our NIM is now growing for the new businesses in 2x and 3x times, despite being very competitive in the government ecosystem. So obviously, you see the kind of NIM that we are having right now from 1.4, it has grown to 1.55. And the new businesses, our NIMs are going to be between 2 to 2.5. So going forward, for many quarters that are going to come, we will be having better and better NIM, better and better PAT, and a very consistent PAT. So this is a company where there is very minimal risk of any kind of prepayments, because the government side, it is a very steady kind of business. And because our rates are very fine compared to the peers, we have zero risk of any prepayment coming from our customers. All taken together, A, our NIM is going to be improved every quarter. B, my PAT is going to show a very steady progress. The target that we have given is our yield should be in double digits. So obviously, we are targeting to grow our PAT 10% or more every quarter ahead. And the plan is set for next 5 years as of now.
Got it. We got the broader horizon, sir. Just on disbursements, you're talking about 30,000 crores. First half of the year, how much is it?
First half, we have already disbursed more than 7,000 crore.
7,000 crores.
Because, the pipeline was zero when we started. So now the pipeline is coming steadily. We are very sure that with a few refinancing projects also in hands, we'll be crossing this barrier of 30,000 that were given to us majorly in Q3. And whatever will be left, we are very confident that we'll be crossing that in Q4.
Right. We take that point. Now, on beyond railways itself, if you would give us a sense on how much does railways account for your overall order book, or rather, your loan book right now, and where do you see that number headed over the next 3 to 5 years?
So that's the beauty. For the last, this is the third consecutive year when we did not get any order for funding to Indian Railways right now. This trend may continue for a year or two, depending upon how budgetary allocations are done by Government of India. Every February when the budget comes, there are many ministries competing for the government budgetary support. Right now, it is coming in abundance to railways. In future, if there is any deficit in the need of the railways, we are there to pitch in as their principal financiers. In addition to that, what we are doing is, as per our mandate, we are funding to anything which is having a link backward or forward with the railways, like the port connectivity, like the power supply to the railways, like any other railway linkages where hauling is done by railways. So this 45,000 crore asset that we have signed is all in the linkages, not directly to the Indian Railways. And we believe that going forward, the kind of queries we are getting and the kind of assets that are being offered to us, steadily 60,000 to 80,000 every year we are going to mop up from outside railways. And whatever comes to the railways will be cherry on the cake, because this 60 to 80,000 crore that we are targeting to mop up from the railway ecosystem, here the margins will be better, NIM will be better. In the railways, we worked on cost plus model where 40 bips is fixed for us for any kind of lending that we're doing. So taking two together, IRFC is placed for a very exciting time going ahead. This is my take.
Very quickly, in your words, you said that, the goal is double-digit profit growth quarter after quarter for the next 5 years. The plan is set. What is the 5-year roadmap? I mean, what is the aspiration, the ambition? Can you quantify that? 5 years.
Please say it again.
When you were giving the earlier answer, when you were talking to us about moving to higher yields, double-digit profit growth, you said that's the aspiration quarter after quarter for the next 5 years. The plan is set.
Yes.
So what is the 5-year plan for IRFC? Is there, and can you put that in numbers? We understand the broader picture about, moving beyond the Indian Railways. Absolutely. They play the ecosystem.
So absolutely, there was a dip in our asset under management for the last 2 years because there was no business coming from the railways. This particular quarter, we have reversed the trend. Now, going forward for the next 5 years, the plan is that our asset under management will be growing smartly, steadily. Coming out from that, our PAT will be growing every quarter. This is what we have set forth. How this PAT will grow and how this AUM will grow is derived from the fact that we are very hopeful, and the kind of competitiveness that we have in terms of our very less overhead, that in the railway ecosystem, which is huge, having port to electricity to logistics to MMLPs everywhere, we feel that with our very competitive rates, we will be garnering 60,000 to 80,000 crore kind of assets every year. This is a target for outside railways, having linkages with the railways. Going forward, we are also looking forward to the fact that maybe the Indian Railways, with their appetite of more than 2.5 lakh crore of capex every year, there may be a demand from their side also for funding. Taking two together, with these numbers, we are very confident that with zero risk of prepayments, as we are having very competitive rates offering to our customers, our PAT and revenue both will be growing steadily.
We wish you well, Mr. Dubey, and thanks a lot for speaking to us here on CNBC-TV18. Happy Diwali in advance to you as well as your entire team, and we look forward to tracking the progress of the company.
I just wanted to convey happy Diwali to the whole CNBC team, as well to my 55 lakhs plus base of shareholders. Thank you so much.
All right,
100%.
we wish all of them, your team, your shareholders, and everyone a very, very happy Diwali.
And more than 55 lakh viewers of CNBC-TV18 as well. Thank you so much.
All right, time to slip in a short break. We got another conversation on the other side. Vibha Padalkar of HDFC Life Insurance will be joining in to detail the past quarter's numbers.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by National Stock Exchange, Soch Kar, Samajh Kar, Invest Kar. Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, best है सबको पता है.
Welcome back. This is Corporate Trader, and you're tuned in to CNBC-TV18. Well, let's focus on another number that did come out yesterday, HDFC Life. The management's next on the show. The stock is under some pressure after reporting its Q2 numbers. We're now joined by Ms. Vibha Padalkar, the Managing Director and CEO at HDFC Life. Hi, Mr. Padalkar. Good morning, and thanks a lot for joining in. Well, the street doesn't seem to be very, very impressed with those numbers. But importantly, what about the second half of the year? That's going to be important. So fill us in with a couple of numbers. One is the growth. What kind of growth projections are you looking at? APE growth, I think some on the street are expecting around 14-15%. So you could tell us what do you expect on that. And VNB margins as well. Last few quarters, because of a variety of factors, it's come down to around ballpark around 24%. Do you see it stabilizing around these levels?
Hi, good morning, Nigel and everyone else on the panel. Actually, I want to deconstruct this into two parts. We had a fairly good quarter and we had a fairly good H1. We also delivered in terms of no surprises from an operating perspective. This is despite some of the external turbulence caused more notably due to the GST changes, which is largely welcome, but there would be a impact over the next couple of quarters. In terms of deconstructing why I'm saying we had a fairly good quarter is that we did see market share expansion, both in Q2 as well as overall in H1. In fact, the market share expansion in Q2 was even better at 100 basis points than the expansion of 90 basis points in overall H1, so versus Q1. Right. Also, the overall growth and hence was faster than the sector. All the right notes were hit in terms of retail protection growing at 34% in Q2. And as a result, sum assured also growing in the mid-20s. Embedded value, operating profit, new business margin, excluding the GST impact of 0.5%. So actually, there was a margin improvement underlying. And also in terms of some of the other metrics, whether it is in terms of new customers. So new to HDFC Life customers continued to be 70+%. These are first-time buyers of HDFC Life products. Annuity continued to grow. And more importantly, our agency channel, which we have talked about investing in, that also grew fairly well. Renewal premiums were robust. So really, it's a story of two halves with and without GST. But underlying performance is more than meets expectations.
Okay, all right, Vibha, you have given us a fair idea. And, the reason why you believe these numbers are good, market share gains, and also given the challenges, you're seeming fairly satisfied. But let's talk about growth. You could break it down, APA growth, retail growth. What kind of estimates are you working with for the second half of the year and what that means for the full year on the whole? And also VNB margins, my earlier question. Will it stabilize around these levels?
Yeah, on growth, what we have said is that it was a story of two halves based on the growth last year for us and for some of the larger players in the sector. So for HDFC Life, H1 last year grew by 31%. And also to remind your viewers that we had a withdrawal of the old surrender charge regime. And so Q2 growth last year was very robust. Like I said, overall H1 growth of 31%. So there's a large base effect, which then normalizes in H2. And hence, what we had mentioned is that growth this year will be in the early teens. We also are fairly coupled with whatever is happening overall in the macro situation, whether it is the political global turbulence as well as in terms of what's happening on job creation, savings rates, and so on. And hence the slightly more muted growth of about, like I said, early teens. So that's very much in the ballpark, maybe a month or so here and there, but fairly good. And we've also said that while we think it is going to be in the early teens, we will still grow faster if the market starts growing faster. And that's something that we have delivered on. In terms of outlook, no change in the outlook as of now. What we have said at the beginning of the year should continue, us continuing faster than the sector, and it will be in the teens.
Right. Just on the GST front, you did quantify that impact at about 0.5%, but that was just 8 days during the second quarter, right? On the third quarter, what could the impact be? And if you could, simplify that for us, how much would be the increased, sales on account of lower prices to the customer, and how much could there be an impact because of the lack of GST input credit?
Yeah. So the answer is in two parts here. One is on the back book, which we had quantified soon after the GST announcements were made, which we said it's unlikely to exceed more than 0.5% of our embedded value. And I'm happy to share that we are a shade lower than what we had put out, because we put it out immediately, but bottoms-up calculations at policy level also gave similar answers and a shade better. So that has been articulated and it's there in our investor presentation. On going forward business, there are three components. For this quarter, so quarter two, there has been, like you said, 1 month's impact. It's strictly from September 22nd, but people did defer purchases of life insurance policy. So effectively, it's like close to a month's impact. And on quarter two, if I were to just have share the impact on three key metrics, our PAT looked anemic at 3%. But if I were to remove the GST impact, it would be closer to 15%, both for the quarter and for the first half of the year. VNB growth at 8% would have been 11% for the quarter and about 12% for the first half of the year. And finally, on margins, our margins as against 24.1% would have been 25% for the quarter, and as against 24.5% in H1 would have been 25% in H1.
Right.
So
Thank you for
Right.
Thank you for articulating that. And just before we toss to our colleague Yash, just one question on the ULIP front. You wanted to bring it to sub 30%, but now it's still at 42%. What's your path to 30% here? And because it has an impact on your margins, right?
So a very good question, Nigel. And what we are trying to do is work within the system. And by that, I mean, unit-linked, like with equity mutual funds, continue to be customers find it attractive. So rather than pushing back against it, we are trying to see how we can increase the profitability as well as suitability for more affluent customers. And so having higher levels of mortality cover, given that the avatar of unit-linked is something that people understand, can we give more than 10 times cover, which is a very low level of cover? Can we increase it closer to 50, 60 times cover? And that's really what we're working on. And we've made meaningful impact and inroads into that. And hence, if you were to look at our sum assured just for the quarter has grown by 26%, which is more than double our company level growth. And that really shows that mortality cover, that part of our business is growing fairly fast. Part of it is due to retail protection, but also meaningful part is due to higher cover within unit linked. So getting more profitable.
Hello, Vibha. Good morning. This is Yash. To answering to Nigel's question, of course, you did mention that you expect early teens growth when it comes to AP and VNB, but margin seems to be an important point here. In the last 3 years, FY23, 24, 25, the margins have receded every year by about 100 basis points. H1 FY26 to FY25, they are largely flat. Do you expect similar deceleration, that is of 100 basis points in margins, to happen in this year also? And at what point and by what time period do you expect stability as far as margins are concerned, or do you think a floor has been hit at current levels?
So I want to counter that slightly. I want to clarify that, Yash, because margins have not decelerated ex-GST. So if I were to look at H1 margins last year at 24.6% versus a pre-GST margin at 25%. Post-GST is very close to last year's margins. So there are these two one-time impacts that have dented the core operating margins of the entity, which has been steadily rising. One is, as you know, surrender charges, which had a 0.3% impact on margins. And if you look at last year versus the year before that, so when surrender regime came in versus before that, it's really only the impact of surrender charges. Everything else has been neutralized by us in order to hold margins and also grow them. Similarly, this year, while the number of days that we're reporting after the GST changes are too few, 22nd September is when it has been rolled out. But what we have articulated is that we will get down to neutralizing the impact on margins. So we will close to hold margins. And thereafter, FY27, to answer your question, margin acceleration should happen, all things being the same. And when I talk about margin acceleration, just to clarify, even this year, before GST, I had said that we will hold margins because we want to invest in two aspects. One is technology and second is our agency business. Despite the fairly material impact of the GST changes, we are not winding down on those investments. They are investments for the future, because the easiest thing for us to do is to go slow or to retract some of the investments we need to make for the future. And we'll continue making that because this is a temporary blip.
All right, Vibha, thank you so much for joining in and giving us your views on growth going forward, the impact of GST, your outlook on margins. And we wish you and your team a very happy Diwali and festive greetings as well.
Likewise. Thank you so much, Mangala.
All right. With that, let's, tell our viewers something. As you could see when the conversation with Vibha was on and the stock price was showing, there was a money control stock score just above the line graph. Now, this is a score which is assigned to each stock, which is based on Money Control's multi-factor algorithm. It's calculated by analyzing over 40 parameters, which includes both current and historical financial statements, price charts, and the technical indicators for each stock. In fact, each of these individual parameters considered for calculation of the four factors are then assigned a score, which is then aggregated to arrive at an overall Q factor, G factor, V factor, and T factor score. Remember, this is a score and not a buy or a sell recommendation. Any investor, viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions.
Okay, all right. Well, let's focus on another earnings reaction. Then we had KEI Industries. That's the next management on the show. The stock is under pressure. The street seems to be a little bit disappointed in the revenue growth as well as the margins, though the gross margins did increase a little bit. Mr. Anil Gupta, the chairman and managing director at KEI Industries, joins us on the show. Hi, Mr. Gupta. First look at the numbers actually looked quite good. You know, the revenue growth has been quite good. So let's clear a couple of factors. Exports, they contributed a larger chunk to the revenues. So could you tell us what is the rough percentage it will contribute for this year itself, point number one. And point number two, if you could help us out, what was the domestic volume growth in your core business?
Good morning. The export growth has been substantial. It could have been more given little setback in revenue from US, but still we have been able to make up. And exports are now contributing around 17.5% of our total revenue in the second quarter. And if I see the first half, it is around 16.5%. I hope that we will be able to maintain around 18 to 19% of export of our total revenue in this financial year. We have grown by around 22% in this quarter in our wire and cable segment because of the fall in the revenue from EPC department. We have already stated in our past several years that we are reducing our EPC business, and that is under that policy. So the overall wire and cable revenue has grown by 22% in this Q2.
So I want to ask you, what is the volume growth in the domestic business? Exports have done phenomenally well, and I think that is margin accretive. You could correct me on that one. Exports are margin accretive. And also, what is the domestic cables and wires volume growth?
See, total volume growth in domestic and export is around 15%. You see, we have to look at the revenue in totality. We have shifted some of the capacities to exports from our domestic side because of the opportunities available there. So whatever capacities are available, we are utilizing them full, and wherever we can do better, we are shifting.
Okay. So domestic, did you lose volumes, or was it a lot lower than the total volumes of 15% because exports outperformed?
No, we did not lose volumes. Maybe 1 or 2% lower, not more than that.
Okay. So is this the strategy, sir? The strategy is going to be to ramp up exports and maintain your domestic market share. Is that a fair way of putting it?
Exactly. We are continuously ramping up exports, but while improving the domestic as well.
Got it. What about the margins then? Your gross margin, there was a bit of an uptake, but other expenditure went up. Because of that, the margin expansion may not be as much as what the street expected. From here on, how do you see margins move? The problem is that commodities are going on a bit of a melt up. So in the near term, there could be some kind of impact, maybe Q3 or maybe Q4. How do you see margins pan out from here on?
I expect margins to remain between 10.5 to 11%. So far as commodity prices are concerned, copper and aluminium prices are concerned, I have said in the past also that we don't expect any impact due to that, because we are adequately covering our metal purchases and metal inventories vis-a-vis the order book.
Sir, for the full year, when we last spoke to you, you had guided for, I think, about an 18-19% top-line growth, and cables and wires at 25%. Now, considering the first half, you are exceeding that run rate. What is the full-year guidance now? Can the full-year revenues be in excess of 20%? I mean, do you have the confidence to up the guidance? And what is the second half looking like?
I have guided that our wire and cables revenues will be 20% plus. And I still maintain the same for the whole year. Incidentally, I never said that it will be 25% plus. But
apologies.
Hopefully we will try to reach out there. But my guidance is 20% plus.
Okay.
Right. And
overall? So for the full year, what is the guidance? I think you had spoken about 18-19%, and in the first half, you're tracking at a 22% run rate.
Yes, exactly. So the full year, we will definitely try to aim around 20%, but because we are able to achieve that.
Okay. And so second half of the year, what is growth going to look like for you? I get the full year guidance, but if you could provide some nuance on what's happening on the ground and what we should expect.
We are seeing good demand in domestic as well as our export markets. And I don't see any letdown in our performance in the second half as well, in the third and fourth quarter. I'm sure that by fourth quarter, when our partial capacity in Sanand comes into full force, we will be able to improve our performance from the fourth quarter.
Right. We just come back to you. There are some visuals coming in from the listings of Canara Robeco and Rubicon Research. We'll shortly get the prices as well for both these counters. For Canara Robeco, it looks like a positive listing by about 0.5% on the NSE, and we'll get some data coming in on Rubicon as well. But you spoke about the Sanand plant. Could you give us a sense on where you stand on that as far as timelines of commissioning are concerned? Is there a delay? If yes, then what could the lost sales on account of that be?
There is a delay of around 3 months, and we are going to commission first phase of the project by November, and but the full plant will be operational by March 27. I can't quantify that what will be the loss of revenue because of the delays, but as per the guidance, we should continue to grow by plus 20%. Year after year.
So phase 1 that was expected in September, that gets commissioned now in November, and the entire plan that the street was working with somewhere midway through FY27. Now you're saying by the end, Q4, it will be fully commissioned, and there's no risk to these timelines, correct?
Yes, correct.
Well, always good speaking to you, Mr. Gupta. For the time being, the street seems to have expected something more on the growth, on the margins, as well as maybe a little bit disappointed on pushing up these timelines. But we take your guidance on board and wish you well. We'll keep tracking all these numbers as the quarter progresses, and wishing you and the entire team a very, very happy Diwali.
Thank you very much. Thank you very much.
By the way, this Rubicon Research has had a very strong listing. Issue price was 485. It listed at 620, now hovering around 600. And it had also seen very strong subscription in excess of 100 times, 103 to be precise, with the QIB portion inching towards 130 times. And it is one of the fastest growing pharmaceutical companies, at least in the last 2 years. The revenue CAGR was about 75%.
Even Canara Robeco, you know, when we had management out here, they did say that the best way to look at these companies now is not as a proportion of AUM, but as a price to equity multiple. And more importantly, they do not rule out the AUM doubling from their current levels of near 1 lakh crore to about 2 lakh crore in the next 3 years, given their past CAGR.
Because AUM-wise, it's much smaller than in HDFC, Nippon, Aditya Birla and UTI AMC. So, I mean, compared to the other listed entities, its AUM at 1.1 lakh crore is much smaller. All
right, good time to bring in Vinay Rajani, who's a senior technical and derivatives analyst at HDFC Securities, joining in. Vinay, what do you make of the market right now? Do you think it's broken out comfortably above the 25,400 mark right now, closing in on that 25,450?
Yeah, good morning. So Nifty has given a rise of 850 points from the recent bottom of 24,587. It has surpassed the previous swing high of 25,448. So it is into a continuation of an uptrend. Nifty has been into overall broader consolidation, but once we get a close about 25,400, it will confirm the breakout from the consolidation which is there for last 3 months. And every time the fall we saw in last 2 months, Nifty has been able to make a higher bottom in both the instances. So it is a good sign. Broader markets are improving. Nifty has given a breakout in intraday. We are waiting for close about 25,400. But yes, we should look Nifty with the positive bias. 25,200 is the immediate support, and the next resistance for the Nifty is seen around 25,670, where we saw a swing high in the month of June. So overall, one should trade with a positive bias.
Okay, and stocks?
Yeah, so basically today we have seen some fresh buying coming in FMCG stocks. So Nestle is one of the stocks which I like on the chart. So around 1228, one can go long. 1205 should be the stop loss on the upside. I'm expecting a short-term target at 1270. The second pick I would take from the power space, Tata Power, fresh breakouts. So these both stocks have not performed in recent past, but now seems to have broken out on the short-term chart. So Tata Power around 401, one can go long. 394 should be the trading stop loss on the upside. I'm expecting a target of 415.
Thank you, Vinay, for joining in. By the way, markets building on the gap up. We open up 75 points, now up 120, the Nifty touching 25,450. But it's Diwali in the air now. You can feel the festivities. And as investors are heading into the new Samvat, there are lots of questions. Has India's dream run finally paused? Or is this just a catch-up phase before the next leg? My colleague Prashant caught up with Samir Arora, who believes the tide is about to turn. From relative underperformance to shifting global flows and the impact of rate and tax cuts, here is why Samir thinks India's setup looks stronger than the sentiment suggests.
The big picture is that there are 3 or 4 positive things right now. Number one is India has done very badly this year relative to peers, emerging market benchmarks. So over 5 years, India has still done better than EM and China and all. Maybe only US has done better. But this year, India has had its worst relative performance in 30 years, which is some 25, 27% underperformance in 10 months.
Right.
That beyond a point does not last. Second is, what are the reasons why FIs are selling? I've been feeling that the world is interested currently, and not feeling that, you can see with data, that the world is putting a little bit of its global money into non-US markets. And it is not that they are doing it as a longer term play. Even currently this year, non-US has beaten US by more than 10%. So S&P is up some 13%. World excluding US is up some 23, 24%.
Right.
So you can do it because you're upset with US policies or tariffs.
There's performance as well.
And so it's not that
Correct.
I don't like US, a little bit only. And so if the rest of the world is getting money, so if the US is at 65%, if they reduce 3% for US, or 2%, and give it to the 35% part of the market, for them it is 6-8% growth. In that, we have a valid claim that we should also get money. But instead, India has been losing or people have been redeeming. I think that had to do with the extra tariff and the isolation.
And hopefully
of
that also
India.
perhaps.
That I think is getting over. You can see it from the tweets. You can see it from Mr. Bessent saying that they are going to change the energy basket in our favor. That is from India saying they are willing to buy corn and, a little bit. And then this good message that Trump sent to Prime Minister Modi, all those things, it's happening. Third is India has had a lot of interest rate cut, GST cut, tax cut. So all these things plus minus a few months has to impact. And fourthly, you can say that this year the IT guys were having very low growth. Even next year they may have low growth, but on a relative basis they're not declining more.
Correct.
And so broadly you will get 12, 13, 15% growth, and that kind of return for now is okay because your comparison is not with previous years but with debt returns or fixed income returns. And fixed income, say 8-10 years ago used to be 9%, 9.5% for 10-year government bond. So we would say you will get 15% return in equities. Now, if that is giving 6.5, you're supposed to make 12 only.
Correct.
And I think you will make 12 kind. And then maybe following year, IT will grow 2% more. So you'll, maybe 15, 16%. But in general, the world, the Indian public that is, will have to realize that 20 to 25 returns were not normal.
Thoda normalized.
Thoda normalized जो है, वो पहले होता था 15ish for the index, and then we are supposed to beat it. And now the normal maybe 12 to 13, 14, maybe for some time, and then we don't know.
With some shooting stars in between,
and then,
obviously.
You'll get some stocks will do well.
Yeah.
Shade of green for the markets, and adding glitter to that is Titan, up 2.5% right now as we speak. Good for a second quarter update coming in. Good gold prices as well. And speaking about gold prices, Manisha joins us now. Manisha, precious metals all around, festive cheer, Diwali glitter, what do you call it?
Oh, very, very bullish is what I'm calling it, and super bullish if you want to add to that, really, because we're looking at all-time highs yet again in the market today. You know, when you look at the last couple of months, that is where the major run for gold prices has come. So $40 an ounce has been taken off, and we are trading above those levels at this point in time. Also, when you look at the Indian markets and MCX gold as a reference, really, so 1,28,000 rupees per 10 grams is what you have to pay, and more if you add GST and making charges to that if you are stepping out to buy gold today. If you look at the overall price gains for this year, it is up by more than 61% for the year 2025 itself. I also want to take you through on what we've done in sense of gold prices for this current year from the very beginning. So we started this year with $2650 an ounce, and as you can see, it was a constant gain from the beginning of this year. Remember, there were geopolitical tensions and then those tariff concerns as well, which took prices to almost $3,000 in the month of March. 33 to 3,500 is where we traded between May to August, and then September onwards, it has been on fire. 37.50 in September has been a high, and for the month of October until time, we are trading at 42.40, with the markets believing that we haven't seen an end to this run-up, and October could end much on the higher note from where we are trading right now. Well, this chart tells you on how we've moved in sense of prices from Diwali to Diwali. So if you bought gold in 2023 during Diwali, it was trading at 59,000 rupees. We've clearly doubled in last 2 years when it comes to gold prices. Last Diwali, prices were trading at 78,400, and this Diwali, we are trading at 1,30,000 rupees. So clearly, strong gains if you bought gold last Diwali and Dhanteras, staying true to the saying that whatever you buy during Dhanteras does double up. Exactly what we are looking at right now. Silver price is exactly the same way. International prices are trading at around $53.50 an ounce. Here as well, when you look at MCX silver prices, it's trading at 1,64,000 rupees a kg. But if you step out to buy, there is a premium of 10% plus a GST and plus making charges. So you perhaps will end up paying nearly 2 lakh rupees a kg into the physical markets there. Looking at these current prices, silver also has gained up by 84% in this year. I do want to take you across on what we've done in sense of silver prices in international markets also. So we started this year with 29.5. We jumped up to nearly 33 in March. 39.5 came after many years. It was a 14-year highs when we did see 39 there, and then 45.20 in September. And as you can see, the largest of jumps have come in anywhere between August and October. $50 an ounce was an all-time high for silver, which we have crossed in October, with much higher highs being quoted by banks and brokerages as we step into 2026 as well. So look at the Indian prices now, and Diwali to Diwali is the one that you really have to watch out for. So if you bought silver in 2023, it was at 70,000 rupees. Last year was 90,000. This year, we've clearly doubled. So for gold, we've doubled in 2 years, but for silver, we've doubled just in an year. So almost 2 lakh rupees if you step out to buy there. Well, there have been various reasons that we've been quoting on why gold and silver prices are running. But the very near term clearly comes in from the Powell testimony yesterday that slowdown is threatening U.S. economy now, and 2 rate cuts going forward in this year is something that the gold and silver prices are factoring in. Apart from that, the U.S. and China trade tensions, you have ongoing U.S. government shutdown, which the markets believe that more that it prolongs, you will see more buying come in for gold and silver. And then to add to it all, it is demand for India, which is further adding premium. Markets did not think that Indians will buy at these higher prices. Remember, Indians are mostly called price sensitive, but step out in those jewelry shops and you'll see that perhaps has been is not the case right now. People are buying.
Step out in those jewelry shops, and that's exactly what Manisha is going to do. Run away from here right now. Go to Zaveri Bazaar and tell us exactly what in real time is taking place ahead of the festivities. But boy, 2 year, doubling in gold prices in a year's doubling in silver prices. It is expensive, but who's to say when it's shining this much? Take a short break. On the other side, Lata joins in with our special segment, It's the Economy.
Well, it's the economy. The Reserve Bank's MPC minutes that were published yesterday clearly indicate that the committee unanimously sees scope for a rate cut to support growth. All members said that they're waiting for earlier policies to play out. Since the October 1 policy, we have also had the September inflation data, which is again undershot the Reserve Bank's forecasts. Chances are October-December CPI forecast of 1.8% from the Reserve Bank may also be undershot. There are people who expect it to come in at 1%. To understand more about whether Reserve Bank will concentrate on growth or inflation when it sets policy rates in coming meetings, I'm joined by the external member of the MPC, Dr. Saugata Bhattacharya. Saugata, thank you very much indeed for your time. Well, actually, that is the question bothering the market, bond dealers. What will the MPC concentrate on? As you argue in your minutes, growth looks very resilient, and yet inflation is way below the MPC's lower bound of 2%. So what will you all concentrate on?
Well, so good morning, Lata. Thank you very much once again for having me on your show. Always a pleasure. So I think the members unanimously, I mean, I can't do better than the quote, the minutes, that in the inflation trajectory, particularly in the next couple of quarters, gives us space to ease policy further. But again, the basic question remains that given the, as you know, that monetary policy being forward-looking, I mean, you have to look at the trajectory of inflation going forward. We knew that inflation in September, the months of October, would be low given the very high base that you remember last year in September and October. And after that, inflation thereafter begins to taper off, and that will begin to increase the inflation print going forward. So that is one point. So there is absolutely no doubt that this inflation trajectory that is now that the RBI has forecast opens up space for further easing. Now it depends because there are so many conditions, so many other uncertainties that color our thinking, color our views, that this has to be done on a meeting-by-meeting basis. So I think there is scope for further rate cuts, but let's see how things move, what happens to the India-US trade deal, the India-EU FTA, etc. So there are so many moving parts in this current environment that let's see how things evolve over a period.
There is a chance of things coming in favor of growth, right? Because of the WPI being so low, the last number we have for September is 0.13%. I mean, when it's as low as that, the deflator of the GDP also comes in much lower. The expectations are that the second quarter GDP will also be, 7% or more. Yes. I mean, that's what I got from the street. As well, it's possible that a trade deal, we are very close to a trade deal before you all meet on December 6th. So if things are very pro-growth, is there a window that you may not, use that space at all because growth doesn't need help? Is that a possibility?
That is certainly a possibility. I mean, I don't think, because all of us know that this is now common knowledge, the information set that all of us are working with, that growth, as you said, Q2 growth is also likely to be strong. But then again, the same thing as in inflation, Q3 and Q4 growth onwards, that might begin to come down. I mean, it's not a bad number, 6.2%, that is now getting forecast for H2. That's not a bad number. But again, probably I think we also need to learn a little bit more about the analytics of our potential growth, etc. So that is work in progress. We need to figure out how much room there might be for further growth without heating up the economy, which current indicators seem to suggest that we have room to grow a little bit further. So again, I mean, all of these are factors which come in. And of course, I mean, when you are looking at not just the macroeconomic, but the macro financial, the environment that we are currently facing, that is something that we need to figure out. And particularly, as I've said that again, in your show the last time that we were there,
yes,
that the external balance is still not looking very good.
Yeah.
So despite the trade numbers that we got yesterday, and that of course is colored a little bit by gold silver imports. That's a one-off number probably. But other than that, there are still issues concerning our external balance, particularly, as I said last time around, the capital side of the balance.
Yes.
So again, that again is yet one more factor that goes into the MPC decisions.
Okay. No, I completely agree with you that, we don't know about the second half growth. And if you look at Asian economies, the growth picture is not at all looking good. If you look at Indonesia, Malaysia, Thailand, a number of, economies and the chances of being dumped with excess Chinese capacity. So would you have severe worries about growth at all? I'm asking you the other end of the question.
I wouldn't categorize it as severe worry, but certainly if the 50% tariffs persist on India, because the geographies, the UAE, China, Southeast Asia, etc., will probably not be able to offset. And remember that everybody is trading within this, without a trade deal, that everybody is trading within this limited set. So it will not offset the loss of markets that we might see in the US. And particularly, it's not just the merchandise trade, even the services trade system might get impacted with the other measures that we have seen. So work in progress. I don't know how things will move, but that is a risk. Yes.
Okay. If you can put on your economist hat, that's what you've been wearing anyway. What have you made of the ECB measures? They're only draft rules, but end-use restrictions have gone, pricing restrictions have gone. Are you getting, and even time, most of the ECBs can now be 3 years. You don't need, the minimum of 5 to 10 years is gone. Are you expecting that to loosen, or to increase dollar flows? Will that, remove the pressure on the currency? Not strictly an MPC question, but still, what have you made of that?
I get it. So no, obviously, I think there is space to increase inflows, capital inflows, both equity and debt, and particularly in the case of ECB external debt. So I think particularly remember, go back to the fundamentals, that there is now a problem with global savings. So the global savings that we had seen in the past, the huge pool, the savings glut, and then even that, so that probably is now gone. China is not exporting savings. The quantitative tightening from central banks is also beginning to cut down on the savings pool. So, and other countries also, particularly the US now, given the inflows, FDI inflows, other investment commitments into the US. So we are fighting. India will probably be fighting for the limited pool of savings. We need to get access to savings.
Okay.
There are risks and returns to increasing ECB. Obviously foreign debt might be risky at some point in time. But I think India's external debt at $750 odd billion, I think it's still relatively okay. I think we can absorb more capital inflows. And particularly now with this savings pool, with domestic savings now flowing outside, as you're seeing the IPO numbers, etc. So probably enlarging the pool of potential savings, the pool of capital, might actually be a good thing at some point.
Okay. Now, fair enough. And you're also saying that it is coming at a time when anyway we have to fight for savings harder. So it's not necessary that if we loosen the rules, money is going to flow because the kitty itself is smaller. Saugata, what about the way in which you look at 1 year forward inflation? Ultimately, that seems to be the more important parameter that the MPC is looking at. The Reserve Bank's forecast has been consistently but lower. They started at 4.9 for the June quarter. Now they are at 4.5. Given the undershoot in inflation currently, the base gets lower, and there are a bunch of economists who believe that next time in the December forecast, they may bring the June quarter down to 4%. So, does that also increase chances of a rate cut? And in your mind, is there at all space for more than a cut? More than one cut?
More than one cut. You're absolutely right that the inflation forecast that RBI, the survey of professional, the median of the survey of professional forecaster have been consistently overestimating. And I'm also I want to understand the dynamics of food prices a little better. What is causing this level of disinflation? The sowing area, etc. So we know, but it's still, it's been consistently been lower than what we have been estimating. And remember, once again, it's not just a matter of how much space there is for rate cuts. Too much deflation, disinflation is not good. Even for if the core inflation is still okay, but even if you strip out the gold prices, the super core inflation, even that is very low.
Yes.
This is not good. There needs to be a certain level of inflation for private investment, for production decisions, etc., to be put into effect. So too low an inflation number is also not desirable.
Yes.
But given all of this, that inflation, given the base effects, given whatever we might see of higher growth in the global economy, commodities prices moving up a little bit, etc., will begin to push inflation up. I'm still going with the RBI's forecast at this point in time, 4.5 in Q1, and etc. But you're absolutely right that there is space for rate cuts. How many, how much, how deep? Difficult to predict at this point.
I take your point. It's just that the Asian disinflation is a little scary. So it's not just food. And that's why I was asking you if there is space for more than one. Thank you very much, Saugata Bhattacharya. And we do hope we will get a chance to interview you before, not just have this policy-wise meeting, but sometime in between as well. Thank you very much. And Diwali greetings to you and yours. Well, that's the word coming in from one of the external members who has voted for the rate cut and for keeping the policy neutral. We'll wrap up on Bazaar on that note. Chart process coming up.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, best है सबको पता है. Co-powered by SBI, best है सबको पता है. In association with Think Equity, Think Motilal Oswal.
Axis Bank gains in trade on the back of its September quarter numbers. The bank posted a strong loan book growth and net interest income beat, but profit took a one-time hit on account of provisions. The stock up 2%.
Shares of KEI Industries, it's down by close to around 5% post their quarter two numbers. The company's revenues falls a little bit short of the street estimates. The management, however, tells CNBC-TV18 they expect the second half of the year performance to be strong, with exports scaling up.
HDFC Life trades under pressure as the company's second quarter new business premium falls short of estimates. Management tells CNBC-TV18 they expect margin acceleration from FY27 onwards.
And shares of Quick Heal, they trade higher after reporting of 46% revenue growth sequentially. The company also turned to profit in the second quarter of FY26.
Shares of Oberoi Realty too higher by about 4%. The company's profit jumps 29%, demand driven by strong demand across residential and commercial projects.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And as we've been saying in the last few days, this market has turned pretty much into a buy on dips market, after we started taking out those crucial resistance marks. And importantly, the September high as well has got taken out, Mangalam. So, went with green today and happy to see that I am matching with the market.
Absolutely. Good numbers coming in. I'm wearing grey today, but the only thing I can say is that grey clouds have been moving away from the market right now, and there is a fair amount of green. That's all we can say about it. But
Mangalam, besides the markets, one key aspect we're going to be looking at is going to be earnings.
Yep.
And I believe you are setting us up for the FMCG numbers. So let's hear about the quarter tak for FMCG.
Yep, let's do that. In fact, what I can tell you about the FMCG numbers this time around ahead of Nestle's results is that it's a quarter where there will be a fair amount of transition. So you just move around and look at, how the street is expecting the setup to be. It's a quarter in transit, largely because in the first half of the quarter, there was higher than expected rainfall in some parts of the country. In fact, there was flooding in some parts of the country as well. So as a result of which, there was some weakness in demand. GST cuts were announced with effect from September 22nd. So as a result of which, some destocking impact as well would happen. But the good part, Tier 2 and rural growth has actually outpaced urban, which has been facing a bit of a slowdown, but gradual improvement is what we're seeing out there as well. So this is a quarter, which is a quarter in transition. So what we need to watch out for would be loss in primary sales due to GST transition, demand commentary in the third quarter, and stability in key raw materials. Apart from all of this, we'll also watch out for a couple of leadership announcements, strategic leadership announcements, because for HUL is the first quarterly performance under Priya Nair, and for Nestle also under Manish. And finally, consolidated business growth for HUL will be flat to low single digits. So that's the one company. Among the others that have reported their updates so far, Godrej Consumer, mid-single digit revenue growth, EBITDA declined year on year, and that's largely on account of the GST-related transition. For Marico, strong double-digit constant currency growth for their international business, but overall growth has been coming in at near 30s. So that's something we will most definitely watch out for. For Dabur, consolidated revenue growth in mid-single digit with margins which are maintained. So bunch of companies are on our radar. Retailers, however, they've had a reason to cheer as the early festive season has boosted footfalls. V-Mart's same-store sales growth up 11%, V2 retail up around 23% as well. And it's been a glittering quarter for all the jewelry players, led by a sharp surge in the prices of gold. And all these stocks are well bid even in today's trading session. So Titan saw 19% on that base growth in their domestic jewelry business. Kalyan Jewelers as well, 31%. But if you look at the overall expectations, analysts expect varied performance across the board. So for Asian Paints, the revenue is likely to decline 2 to 3%, EBITDA likely to improve by about 8 to 10%. Tata Consumer would be one of the stocks I'll be watching out for, 15 to 17% top line growth with a slight decline in margins. Britannia, the impact of GST transition would be felt most on Britannia, so that's something we'll be watching out for. And even Nestle and Colgate, the worst performance this time around may come in from Colgate. But apart from all of this, the three numbers that I'll be tracking personally very closely is one, trend, because we already have the second quarter update. The stock has seen a bit of a correction. Post the actual numbers, could we see a turn in sentiment or not is something they will be watching out for. Trend. For Tata Consumer, how does growth pan out is something we'll be tracking. And finally, for Eternal as well, management commentary. For the FMCG sector, valuations have always remained rich, and this time around as well, not too different. But the only solace that one can have is that the current valuations are a lot lower than 5-year average valuations, even though the current profitability growth and revenue growth have been lower than 5-year compounded averages as well. So it's a quarter marked by transition, tempered growth, and a plenty of hope riding on the GST cut-led festive rebound ahead. In fact, as we speak, we also have Abneesh Roy, who's the Executive Director, Nuvama, for Consumption and Research, joining in. Abneesh, it's a quarter which is in transit. What is it that we can expect in terms of outperformance from a couple of companies, and the one or two things that you'll be watching out for from management commentary?
Yeah, thanks. Good morning. Yes, today the FMCG results will start, and Nestle clearly under Mr. Manish Tiwari, this will be the first quarter. So from a top tier performance in Q2, we expect Bikaji Foods, Marico, Tata Consumer, Pidilite, United Spirits to be the star performers, and laggards clearly wherever the high rains have impacted and GST impact is on the higher side. Such companies will be Imami, Colgate, United Breweries, Varun Beverages, Godrej Consumer, etc. Coming to Q3, my sense is we will see good news coming back. See, Q2, as Mangalam highlighted, is not the right quarter for staples, especially because first 2 months there was a recovery. But from September 6 to September 22, there was a 4 days kind of an average impact on the sales because of the GST transition. So basically, whatever number comes today and next 2-3 weeks, basically there will be almost -4% kind of impact because of the GST transition destocking. And that's why that's not the right number to look at. We do see in Q3 grammage addition coming in lower unit packs, affordability in the bigger packs, and of course some level of restocking will happen. So our topics will be essentially the food companies. We like Bikaji, we like Britannia, Nestle, we also like Hindustan Unilever, and discretionary we like definitely United Spirits. We also like Asian Paints and Pidilite. So those
Got it. Surprising that you like Asian Paints right now, because most on the street are still, not with, very positive on Asian Paints given the sort of disruption that there is right now. But I take your point, Abneesh, not the perfect quarter to look at, but the third quarter will be extremely crucial. Volume growth expectations. What are your volume growth expectations from the second half of this year, largely because there would be that additional grammage impact coming in as well? And what are your margin expectations? Because even though raw material prices are volatile, they've not seen a big surge. Do you see any room for margin expansion from here on? And how are all of these, when you look at the valuations, how are these placed for the entire pack on the whole? Because valuations, while they're lower than their 5-year average, they're still, pretty much in line with the sort of performance that we've seen over the last 3-4 years.
Yeah, good question. See, from a GST 2.0, clearly from a food companies, I think the impact is on the higher side in terms of benefit. So that's why Britannia, Bikaji, Nestle will be the bigger beneficiary. The simple reason is the 5 rupee, 10 rupee pack grammage addition happens, and consumer buys a pack of say bhujia or a biscuit. He doesn't buy a grammage of say 100 grams. So the real consumption boost will be there in such packs. Unlike that in Colgate, if you see, yes, 30-40% of Colgate is also lower unit pack, and initially they will also see the grammage benefit in those packs. But in a 1-year perspective, those things will normalize. In toothpaste, that's why I don't see too much of a direct benefit of GST 2.0. On the flip side, Colgate can see some impact for the inverted duty structure. So coming to margins, it's a function of operating leverage, it's a function of raw material, and it's a function of GST 2.0 inverted duty structure. That's why I'll be cautious on Colgate. In terms of benefit, I think clearly operating leverage benefit will come in Britannia. My sense is Britannia can touch double-digit volume growth also in H2. So basically from October 15th is where I think the recovery for FMCG, restocking and the normalization is going to happen in most of the categories. So that's why Bikaji, Britannia, Nestle will see a good uptick in terms of volumes and some level of margins. I don't think companies will retain any GST benefit, but operating leverage benefit will come for Britannia, Bikaji, Nestle, etc. in H2. So yeah, we are positive on those 3 names from a valuation perspective also.
All right, it's Diwali. So let's talk about the drinks. What do you like out there? We have a trailer coming in, I think, from JM Breweries as well. Those numbers look good. Obviously, it's on a smaller base. But how you approach this space? Are you enthused?
Yeah, we are seeing a trend reversal there. So in United Spirits, if you see Andhra and Karnataka really firing, and in Q2, those 2 markets have really helped in spite of decline, almost high single-digit decline for spirits companies in Maharashtra, and some companies double-digit decline in Maharashtra. Karnataka and Andhra are making up. And from a H2 perspective, you're absolutely right. Disposable income will definitely increase. And that's why I think spirits companies can benefit. Second, of course, is United Breweries. Q2 will be quite weak because of the very high range. We expect -2 India volumes. In fact, in H2, we expect recovery there because Maharashtra, as I said, spirits is seeing almost double-digit volume decline. Beer is starting to see the benefit. It has not come in Q2. It will come in Q3 and Q4. So we are positive on United Spirits from a Q2, H2 perspective and United Breweries from a H2 perspective. Q3 will be weak for United Breweries.
Okay, cheers to that, Abneesh. Always good to hear your thoughts. You're optimistic on Asian Paints, United Spirits as well, and mixed trends coming in for the FMCG pack. We look forward to hearing from you as the numbers start hitting the screen, Abneesh. But thanks a lot for joining in today. Well, let's slip into a short break. We'll focus more on the markets as well as on stock-specific actions. Stay tuned.
The market continues to do well at the high point of trade now, firmly above the 25,450 mark as well, closing in on that 25,500. Can it happen in the next 20 minutes or so if Chartbusters Now, we'll take the credit for it, but if not, then we've still taken the credit for the up move that has taken place. But among all the secondary market listed stocks, we have had a new listing today as well, and that's Rubicon. A good move, 25% versus its issue price. So good going. We have Parag Sancheti, who's the Executive Director and Chief Executive Officer of Rubicon Research, joining in. Thanks a lot, Mr. Sancheti, for joining in, and more importantly, it's a momentous occasion. 25% up move over and above your issue price, irrespective of the price move as well. In a company's lifetime, being listed on the bourses is a momentous occasion and a milestone. While it is a milestone, it's also a crown of responsibility that you have. And the first thing that the street will be eyeing when it comes to responsibility is sustaining your over 70% growth rate in the revenues. Over the last 3 years, your revenues have compounded over 70%. Do you think this is a pace that can continue over the next couple of years, or do you see this moderating?
Yeah, thanks for having me on the show. And indeed, this is a momentous moment for us as a promoter family, our employees, all the people who've been associated with the company. So really excited about the new phase in the public markets. We'll continue to do our best. Our performance, and we'll continue to keep on focusing on our execution and our research and development. And that's what we can do and move ahead in the right direction by selecting the right products and executing and getting approvals on the right time.
All right. Yeah.
That's, I think, what the direction is.
All right. Hi, Parag. Now that you're listed, first we'd like to congratulate you, congratulate the entire team. Market capitalization at around 10,000 crores. Wow, on the first day of listing. So good going on that front. But now you're at the liberty of giving us some kind of an outlook, and you could quantify it as well. So revenue growth trajectory, what could it be? Give us a broad band, Parag. And also margin trajectory has been improving. Q1 was better than what you saw last year. Do you think there is scope for margins to improve?
So I think, as I mentioned, I think we'll continue to focus on execution. I think we see many opportunities in the market. I think, and we have a great team to execute on the plans we have laid out, and we continue to work around that plans to ensure that we continue to grow in a healthy way. And as we go ahead in the later part of the year or the next year, I think our plans, our launches are already kind of in progress. So we are very, very confident of the way the company is going to grow ahead.
All right. What about margins? You give us some numbers. Last year you did about 20% in margins. Do you think you have the room to take it further to 21, 22, 23%? Because the rate at which you're growing revenue, I'm sure at some point the operating leverage will catch up as well, right?
Yeah. So there are lots of operating levers in the business which are there, and obviously we don't want to guide to a, as you know, understand we're a new listed company, so I think we want to definitely meet the expectations the street has. So I think don't want to put a number to it, but I think there are multiple operational levers to our business, including launches, a new plant coming on stream. So a lot of other launches, a lot of our specialty business growing. So a lot of operating levers, and as we look at utilizing all of them, definitely we see directionally a very, very positive sign towards growth in that sense.
All right, Parag, you're keeping it very, very sleek. You're trying to give us any kind of numbers. But I want to ask you directionally, since you're talking direction, last year your net profit was around 135 crores. Now, because the debt comes down, you save ballpark 32 crores of interest cost. And going by the kind of rate that you're growing, do you think you're in for your PAT number to move from around 135 crores closer to around 270 to around 300 crores, which would make the stock trade at around 30-35 times? 270 to around 300 crores net profit possible directionally in the next 2 years?
So I'm sorry, but directionally, I think we will go as per the plan we have. And
what is the plan?
The operating levers.
What is the plan that you have?
So, as I mentioned, not at the liberty to disclose it, as we are just getting listed as a listed company. But as we move ahead in the direction and we go in this journey, I think we'll definitely work towards a broader guidance as we move to, and our business, as you know, is a R&D based regulated markets business. So I think as we move in the listed journey, we'll definitely come out with something more directional and more substantive to give you. But as of now, I would say multiple levers. I think everyone can work out what the numbers could be. But I think we are obviously working towards that plan which we have internal, and I think move from there.
All right, Parag, thank you so much for joining in. We wish you good luck for
thanks
future and the long term for the company as well. And as people who've been, speaking with listed companies for a while now, the limited experience both Nigel and I bring, we can tell you that if you can guide the street and meet those expectations or beat those expectations, there's nothing really to worry about from a regulator standpoint. Regulators start to get worried only once you start over-promising and start giving direction to the stock itself. So you can always rest assured, focus on your business, give us realistic numbers, and perhaps attempt to beat them or meet them. With that, good luck for your journey in the listed universe. We take a short break, come back, get you more of the markets and a lot of stock-specific action.
Welcome back. As you can see to the top of the screen, Mangalam and me have been the good luck charms, all the 4 indices in the green. But we'll have a wrap up on this edition of Chartbusters. The team of Trading Hours padding up and coming in to take center stage. Stay tuned.
Co-powered by SBI. Best है सबको पता है. In association with Think Equity, Think Motilal Oswal. Co-powered by SBI. Best है सबको पता है. In association with Think Equity, Think Motilal Oswal.
Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Hormus Patakia. Big gains on the markets. We are comfortably above that 25,450 mark for now, just contrary to the shades we have brought to the studio right now, Hormus. But yes, if we talk about the mid-caps, largely in line with the benchmarks, 0.4% higher there. It's a banking index which is in line and is leading to the gains that we are seeing on the benchmark as well. Most of the sectoral indices, they are in the green as we speak. Titan, some of these Tata Group stocks are doing really well. So Titan is the top gainer, up 3%. We have Tata Motors, which is up around 2%. M&M, Eicher Motors, Kotak Mahindra Bank. So some of these are the big movers in the Nifty pack. As far as the Nifty index performance is concerned, we have the auto index, which is the top gainer, followed by realty. Second day running for this index, so we'll watch out for the trends in this one. But as I said, broader markets also doing really well. So Hormus has gone across to the big wall to talk about some of the big movers in the market. Hormus, tell us more.
You know, the theme of the broader market moves today is that the volumes are crazy, if you could call it that. And you start off with a name called Share India Securities, and the stock is up 17% in today's session. Has now extended its gains. Now it's up 18%. It's now 30% higher in the last two sessions. Was up around 10% in yesterday's trade as well. Now today's volumes are already 5 times of yesterday's volumes. We had more than 70 lakh shares that have changed hands. The 20-day average is just above a lakh for the stock. The stock has now moved above its 100-day moving average of 163. The 200-day moving average comes up to 183. So that's the other level to watch out for on the upside. But Despite this two-day up move, the stock has been an underperformer, still down 43% in this year so far. Huhtamaki India is the other one among the broader market movers, is reversing a bit of a trend here, 16% higher on this stock. And before today's session, the stock was down in 7 out of the last 8 trading sessions. The volumes today are already the highest on record. This is just the first couple of hours of the trading session. The stock has now had more than 65 lakh shares that have been traded. The 20-day average here as well is just over a lakh, and it's still, despite this move today, the stock has been an underperformer, down around 5% on a year-to-date basis, snapping a 3-day losing streak today. And lastly, Godavari Biorefineries is reacting to approval of a patent, and that has now, this 12% move has ensured that the stock has turned positive for the month of October. You've had more than 2.5 lakh shares that have been traded. Here too, the 20-day average is only 20,000 shares, and the stock has taken support at its 200-day moving average, which was at 239, has moved higher from there. The next level to watch on the upside, the 50 DMA at 270, and the 100 DMA, which comes up to 275. Some broader market movers, but the common theme moving on very, very strong volumes, Sonal.
Oh, yes, big volumes. That's what we are looking at in terms of market moves right now. Thank you so much, Hormus, for joining us as always and getting us those top movers. But what is not stopping is the listing action. We have Canara Robeco AMC, which got listed on the exchanges with a premium of 5% against its issue price, and it surged from those levels as well. The company's IPO was subscribed almost 10 times during the bidding process. Right now, the stock is up around 14.5%. Rajneesh Narula, who is the MD and CEO at the company, is joining us now to talk about the future outlook and the business as well. Mr. Narula, good morning. Thank you so much for joining in. Well, now that you're listed, you will be able to give us more idea of the future prospects of the business as well. For an EMC, of course, the AUM growth matters the most, and the fee that you take on that in terms of revenue contribution also is something that investors would like to know. What is the plans with AUM growth going forward? What are you targeting? You've seen around 30% CAGR in last 2 fiscal. Is this something that you'll continue, or it could be better than that?
Well, good morning, and thank you for having me on the show. It's a proud day for all of us at Canara Robeco, especially the staff that have built this beautiful company. Yes, you're absolutely right. We've been one of the fastest growing AMCs over the last 5 years, and we have put up a very impressive CAGR of 30%. We do believe in the India story, and we do believe the industry is poised for a breakout movement as well. So we do see a long runway, and we do see growth momentum, and we are confident that we will keep up this momentum going forward as well.
Mr. Narula, good morning. Thank you for joining in, and congratulations on your listing today. You know, Mr. Narula, your institutional business, your folios over there account for less than 1% of your overall business. Is there a plan to increase this portion, say to at least mid-single digits first before you go to double digits?
Well, you know, in the institutional business, typically is a high ticket business. So typically the number of folios tend to be smaller. We are building a retail franchise. We want to have a dominant position on the retail franchise because for us, retail money, especially in equities, is very sticky. And we are on a T+1 business model. So we shouldn't forget that because the industry is such that all investors can take money out on the next day, right? So if you want to build a company that survives time, you need to go retail and you need to go equity.
Anyway, it's the DIIs or the retail, actually the retail money that's coming into the market, especially when it comes to the SIP number that we've been talking about. Mr. Narula, I wanted to understand the competition parameter right now. We have almost 54 AMCs, if I'm not mistaken, out of which 4 to 5 are listed now. In terms of competition, what are the strategies that AMCs can take up to increase the AUM growth or improve on the AUM? Because at the end of the day, yes, we do have a lot of products, but growth will be limited because of the number of accounts that we are seeing now.
That's actually a very good question. You can actually have 2 strategies, I believe, in our business. One is a sales-led strategy. So you invest a lot into distribution and you build your business from there. The other is the investment-led strategy, where you deliver on performance, a consistent performance over time, and then AUM growth naturally happens. We prefer the investment strategy. That's going to be our focus going forward. It's been our focus in the past as well, where all our funds which have crossed 10 years have outperformed their benchmarks.
Any particular product which will see higher growth? Is it going to be equity? Is it going to be debt? What is the concentration looking like in the overall AUM?
Well, we believe that equity markets will outperform all other asset classes 7 out of 10 years. That's our firm belief. And hence, we are positioned accordingly. 91% of our AUM mix is in equity because of that belief.
Mr. Narula, Sonal highlighted one bit about the number of AMCs. It almost makes you believe that the investors or market participants are almost spoiled for choice, right? With BlackRock now also joining the fray, what do you do to first protect your market share and B, then grow it further as well?
Well, this in a way is a very beautiful industry. You only get money or AUM based on performance. So yes, initially there will be hype around brands that come in, and it's good to see more AMCs coming into the marketplace. It means they believe there is a huge runway and there's opportunity in this space. But you can only get AUM because investors and unit holders only reward you on your track record. So you need to perform first before you get money. And I think everyone has his own unique race to run. We will run ours. We will build an institution that survives time.
Okay, Mr. Narula, you know, this is an industry which will not have a lot of expenditure. It's a capital-light industry in general. So the way you can improve profits is by improving your revenues overall. What is the AMC's fee structure? How often can you change that fee structure? Just trying to understand what could the levers for revenue growth be basis the fee structure.
Well, as you're aware, the fee structure is based on a TER that you can charge to the schemes, and each TER is basically mandated by regulators. So for equity schemes, it's different. For debt schemes, it's different. And you're absolutely right that the fee structure and your yields will a lot depend on the revenue growth that comes through. But typically, it's AUM driven, right? So it's the kind of AUM you get from the markets that you get that are very important, and from the kind of distributors that you get your AUM. That's important. But to me, if you have to put a single factor in terms of growth, it will be AUM growth that will lead to profitable growth overall. Because you're absolutely right, it's a capital-light business and we have operating leverage in our business. Because the same fund manager can manage 1,000 crores or 10,000 crores.
Final question from my end, at least, Mr. Narula. What are your strategic priorities now that you have become a listed company? You can tell us about the next 3-year, 5-year plan. And if you could also tell us by what percentage are you aiming to grow this year? We're already done with the first half of the year. So based on what the road ahead looks for the second half, what kind of revenue growth, margin performance are you aiming for?
Well, if you're asking for a strategic focus, we are a people's business. So our strategic focus is to be a company that can attract talent. For me, the day you stop attracting good talent, that's the time, you possibly will start losing business. So for us, we are a people business, focuses on our quality of people and the talent that we have. That's very important for us. Yes, there are other priorities as well, which is about growing in different markets, different product lines that we have. We have a lot of opportunities in considering different product lines as well. We will possibly launch another fund before the end of FY26. And clearly, in terms of growth rates, we believe that we can replicate similar growth rates as in the past, going forward, at least for FY26-27.
All right, we take that point, Mr. Narula. Thank you so much for joining in today with your thoughts and the outlook in the business going forward. The stock is up 14% after a 5% listing pop that we saw on opening. But with that, we'll do one thing. We'll leave you with a quick note. As you must have seen on the screen, there's a money control stock score just above the line graph. This is a score assigned to each stock based on money control's multi-factor algorithm. We'll get Infosys, because Infosys is also reporting numbers, so that stock will be on our radar today. So how is this particular factor calculated? It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators. For each stock, each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive an overall Q factor score. There's G factor score, V factor score, and T factor score as well. All of this is explained to you on the screen. But do remember, this is not a buy or a sell recommendation. Any investor viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back on Crypto Corner. Today we are joined by Sandeep Nailwal. He's co-founder at Polygon. Sandeep, hi, thank you for joining in. What is, first of all, your sense on the all-time highs and then the buoyancy that we've seen in cryptos in 2025?
Due to the regulatory positivity that has come in the US for crypto overall, starting with Bitcoin, then Ethereum, stable coins, so many things that you are seeing. The markets and I would say the larger and the wider participants in the markets are seeing it as a actual asset class. Plus also the deeper integration of Bitcoin using these digital asset treasuries, started with MicroStrategy famously, and then many of these Ethereum DATs have come in, and many other projects are also launching DATs, which essentially allows NASDAQ and NYSE listed companies to acquire these assets, and these entities become digital asset treasury companies. So a lot of stock market participants can participate. So that is opening up floodgates of institutional capital into crypto and stable coins, and US going all out on stable coins and adopting stable coins as one of the strategic assets of US has also contributed to it. So especially now when you see in the macro markets, I think the Fed is probably going to turn dovish in their stance and cut the rates and all that. And due to that, a lot of liquidity is going to hit the market, and which is going to get deployed in various asset classes. And crypto is now a legitimate, proper asset class where institutional capital is being deployed right now. So it's going to be like this for some time at least.
Sandeep, also, how would you take a look at the Indian markets now? We are looking at higher adoption on the retail side. The ticket size perhaps is still on the low side, but technology, would you say, when it comes to institutional adoption, still continues to lag?
I don't think technology continues to lag. Technology is pretty global in nature. The same technology is available in India also. But I think because we have still, as a country, as a nation, India, we have not adopted crypto with open arms yet. So it's still going to be a little bit slower adoption in terms of on the institutional level. But retail adoption, where retail can get access to using some of the products that are available to them, using the exchanges and whatnot, retail is getting onboarded. It's the institutions which are not able to right now engage in crypto. Also, the wider retail and institutional capital that is available in India, that also cannot enjoy the benefits of the asset class. I mean, in US, in Bitcoin alone, it has created generational wealth for millions and millions of people. Hopefully in India also slowly it will open, and there is still a lot of upside in let's say Bitcoin, Ethereum, many other high quality fundamental projects that are building in the space.
Sandeep, just what is Polygon's outlook now? What is the next leap from here on for you? I mean, there's so much that you have been doing, but the next year, where do you see yourself in sense of scaling, transparency, efficiency, or creating more apps?
Polygon, I mean, you might have seen yesterday only Polymarket, which is the largest crypto app built in the entire space, which retail app, I would say. Yesterday, they received $2 billion in funding from New York Stock Exchange, and it's fully built on Polygon. And this should be something that in Indian circles at least should be celebrated big time. And this is one of the bigger achievements of crypto. And with Polygon, we are constantly focused on these real world use cases. Like, we are less focused on speculative use cases like meme coins and all that. We are more focused on real world use cases. And this is actually fully determined using the stable coins, for example. Stable coins Polygon remains to be the number one daily active users chain for USDC is the rank 1. For USDT, which is the number 1 stable coin, it's rank 3. For non-USD stable coins, Polygon POS has around 60 to 70% market share. If you include for non-USD, non-Euro, it has 90% market share. So we are very heavily leaning into payments and stablecoin. And I almost consider Polygon as this neo fintech, which includes various elements of fintech, combined with the background underlying protocol, which is the Polygon protocol, the blockchain where all of these things run on top of.
Sandeep, while in the US, as you mentioned, it's leading in terms of regulation with the Genius Act. How do you look at the other countries look at crypto in sense of regulation, adoption, or even a broader framework for that matter?
I mean, we see, vastly positive stances from every geography whatsoever. Right now, I would tell you that literally I get buzzed by some or the other governments or government bodies of various geographies to come and speak at their events and see what Polygon can do there. Many of the times we see the domicile requests that, if we move Polygon to this place, then we will be provided X amount of working space. If we can bring developers there, then we will get X amount of funding and many things. Polygon, though, has is much further ahead in that journey to kind of for these benefits. But point is that every government that we are seeing, whether it's Middle East, Southeast Asia, Indian subcontinent, everywhere, we see positive and open arms discussions with crypto and Polygon related stuff everywhere.
Well, that point is well taken. So much being done and so much money being deployed as well. And congratulations, by the way, on New York Stock Exchange putting in $2 billion on your app, which is Polymarket there. Sandeep, always a pleasure speaking to you. But with that, that's the time for a break on the show. On the other side, we'll talk market and stock specifics.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. The good part about today's trade, not just the fact that the indices are trading with healthy gains, but the fact that the Nifty has now made a new swing high, surpassing the previous one of 25,448. Siddharth Rai Mangla, the senior research analyst at Stockbox Technologies, is now joining in for a quick chart check. Siddharth, good morning. Thank you for joining in now that we are above that 25,450 mark from where we had reversed previously. Where does the Nifty head? Does it have enough legs to take it to record high levels? Firstly, more importantly, will the Nifty bank take it to the record high levels, and your stock recommendations for the morning?
Hi, Hormuz. Good morning. Thanks for having me on the show first of all. See, Hormuz, if we talk about Nifty, things have changed pretty quickly for the index in the past 24 hours. In the first half yesterday, till the first half, 25,200 seemed to be the most important support for Nifty, which shifted higher towards closing, and 25,300 was the new support by closing yesterday. And now we are seeing as 25,400 as the new most important support, which tells us that the momentum has been very strong since yesterday. And again, I was discussing this just yesterday with Nigel and Manglam that once Nifty manages to go and sustain about 25,300, there'll be a very strong up move. There'll be almost a full-blown breakout, which can take Nifty towards the new highs. Now, from here, Hormuz, next important levels to look at will be 25,600, 25,650 in those ranges. So if somebody has an existing long position, they should definitely hold on to them with stop losses below 25,400 in spot. And as I just said, people can also take fresh long positions here because the index looks very strong and very nicely poised for a move towards 25,600, 25,650, those multi-month highs.
Okay, take that point. Siddharth, if you could quickly tell us your individual technical picks.
Yeah, sure. So, see, there are two stocks, both of which we have to buy. The momentum is very good. The first one is BSE. See, there was a very good momentum, a very fast momentum building up for the past 15 days, but 2,500 proved to be a strong resistance in the past 2-3 sessions. Today, with a very strong up move, the stock has managed to come about 2,500, and we can see a fresh momentum building up here. So BSE can be bought in spot right now. The price is around 2,548. It can be bought here. The stop loss will be 2,520, and our targets being first target 2,599 and the second target being 2,620. The second stock is from the auto space and the name is Mahindra and Mahindra M&M. See, the stock was consistently in a consolidation for the past 15 days, from which it has come out now. The breakout is very good. The move is very strong. So I think there'll be a higher move towards 3650. So Mahindra and Mahindra can also be bought in spot right now. The price is around 3560-ish. It can be bought. The stop loss will be 3525, and our targets being, as I just said, the first target 3650, the second target being 3675.
Siddharth, thank you so much for sparing time and joining us with your views on the index and on specific stocks as well. We'll take a short break. On the other side, our Diwali special market masters with market veterans Manish Chokhani and Madhu Kela on the other side. Stay tuned. We'll be right back.
Hello and welcome. It's that time of the year again when lights, optimism and the spirit of renewal takes center stage. As investors look behind the candles and crackers to the year ahead, we are here to decode what lies beneath the sparkle of markets this Diwali. Joining us today are two of India's most respected market voices. Manish Chukani is a veteran investor, needs no introduction. Actually, both don't need any introduction. As I like to say, he's of course director at Enam Holdings. Madhu Khela is with us, veteran fund manager, and of course founder of MK Ventures. Again, needs little by way of an introduction. Together, we'll take stock of the year gone by, explore what the next Samvat could hold, and ask the question every investor, I think, is thinking about. Is this the time to stay the course, take profits if there are profits, and of course, or double down? Manish and Madhu, great to have both of you here. Thank you very much.
Thank you, Prashant. And a very happy Diwali to you, the entire team at CNBC and all your viewers.
Happy Diwali to you, Madhu bhai. Happy Diwali.
Happy Diwali.
You know, I want to start not with stocks, but the hard stuff. Gold and silver is, I think, top of mind. Every day we are sort of seeing this dizzying move. It has been dizzying. Gold, $2,000 in 2020, almost $4,200. Silver has taken out this $50 mark, and it's been a dizzying rally. Manish, you've been talking about this move to hard assets, the dollar debasement kind of trade. But take stock of it from where we are, because what you do depends on what you've already done. So in that sense, what's your take?
So let me take 2 minutes to just give the background to how it plays out. That the world's always looked for something which is a store of value and a medium of exchange. And that's typically then centered around the US dollar ever since they broke what was the gold standard. What that has done is it's given the US the freedom to print money and effectively debase all other currencies and all other asset prices, leading to US now becoming 70% of global market cap. And they were at peak, I think, also 65-70% of global currency reserves. But every decade, this excess money printing has led to bubbles. So in the 70s, you had the Nifty 50 in the US, which then culminated in the rise of gold, silver, and oil in 1980. In the 80s, it went to Japan and Taiwan. Their markets went up 12 times. In the 90s, it went to NASDAQ. In 2000-2010 period, it was back to commodities and emerging markets, of which China was the center. 2010 to 20 went back to technology. And it got extended by the excess money printing which happened around COVID. And that led to also this money going into, AI and stuff, which really has 10-15 year gestation. Great technology, but otherwise you would not have had that kind of money to pour into it. On that, when they started seizing the assets of the Russians and cut them off swift, I think the world woke up that we need an alternative to the dollar. And
they went back to the oldest.
And they went back to what they knew best. And remember, 2020 to 30 was also meant to be the changeover from tech to hard assets. So you got both the themes coming together and this rise of gold, silver, uranium, hard assets. So when you get parabolic rises, typically the market pauses for breath, like a stock market. Last year we were very high. The market went sideways. We paused for breath. It cannot go up continuously. And as Buffett says, gold is a fear trade. It's an insurance. It's not a dividend-paying cash flow asset. Equities is your hope trade. So the world is clearly divided. The equities is going with the AI boom, which at some point will climax out.
So for now,
but this hard asset theme is here to stay.
But pause. I mean,
yeah, I mean, when you see parabolic rises in 1 or 2 months, like silver has just gone parabolic, it has to pause, maybe correct a bit, but this bull market by no means.
Gold, by the way, going back in history, has corrected 30-40% at times. It has. By the way, I spoke with.
But just pause that thought, because people argue this in dollar terms. But because the rupee keeps collapsing, the Indians have never seen down years in gold.
Correct, obviously.
So that's why gold and real estate have been such favored assets for the average Indian.
William Buter, who was the global economist at Citi, the interview will air tomorrow. He wrote an article in the FT saying that central banks must sell all their gold now.
Great.
He thinks, well,
buy what?
He says the reserves should be a diversified set of things. It cannot be 25% in gold, which is where it is now.
How much is it in
It's just
US
a controversial view. I'm just taking the opposite side for the sake of it.
Bring him on.
So you're saying a pause, maybe a bit of a correction.
Pullback will always happen, but it's a long-term bull market.
Madhu.
So traditionally, I've been more positive, always been in equity. And that fundamental view has not changed. You can tactically use gold and silver as an asset allocation call. But I don't think someone like me can invest heavily and significant portion of my portfolio in gold and silver for a long run. And my premise is based on very fundamental thing that all the noise about this gold and silver price is all technical in nature. There's nothing fundamental about it, right? There's no real fundamental usage of gold or silver which can justify these prices. We're all talking these central banks are buying, dollar is debasing, and I agree with Manish's point. But when I buy good companies, their earning could go up. Like if I buy really good companies, their earning could double in 4 years, quadruple in 8 years. So effectively, I'm buying those companies much, much cheaper 8 years down the line. The same is not true for gold and silver. That is point number one. And point number two, right now, the rise looks, as a market participant, it looks very euphoric to me. Abhi taxi wala, pan wala, sab gold, silver lene ka advice kar rahe. So I would suggest, if you are buying incremental gold, unless you are buying it for usage, for saving, that you should refrain.
Actually, we've spoken to gold companies. They said that volumes are down 20%.
Yeah.
Value is up 20% because of...
And I'll make one important point here. Why are we feeling so good about all this, Prashant? COVID low, our market cap had fallen to 1.2 trillion. Today it is $5.5 trillion. Gold has literally tripled from COVID lows. More than tripled, right? And analysts used to expect our gold reserves are $1.5 trillion 5 years back. So, but just by definition, it should be close to $4 to $5 trillion, including all the gold, which is
the temples and everything.
Yeah, a temple, hidden, not hidden, right?
Correct.
Just imagine the wealth effect which India is going through. That is the bigger point. That's the bigger picture everyone is missing. Let's say $3 trillion in gold and $4 trillion in the stock market. 85% of all stock market gains are domestic. Only 15% owned by foreigners.
Correct.
100% of all gains in gold are domestic.
But that,
so in economy,
that gain, it is, wealth effect is very powerful effect, but you can't monetize that wealth effect in that sense.
Prashant, you are feeling good. That's why you're buying a 700 crore apartment, right?
Maybe not
700 crore. Well done, Madhu.
No, I'm just saying the people are buying. This all over the place. I'm just saying this wealth effect is what is
powerful one.
Is a very powerful one in an economy which is 4 trillion. You have literally created $7 trillion of incremental wealth in last 5 years.
100%. Let me segue from that point. You say it's a fear trade. Maybe the fear now, hopefully the fear goes down as well, right? Which is one of the factors there. From our perspective is this India-US trade thing, which went completely the opposite way than all of us expected. Voices and generally just the tone, tenor, etc. suggest that maybe it's on the mend. Would you agree, Madhu?
I agree. That's what I'm saying. And this is how the markets make kind of a, euphoric rises. That it has to get coupled with this rise. It has to stall somewhere. It has to get corrected with some fundamental thing happening. And this could be the trigger that, the 5 wars have stopped. You have to give credit to Trump. That, literally 5 wars have literally stopped, right? And let's say if US-China trade deal happens and US-India trade deal happens, then a lot of uncertainty will go away. So that fear trade which was going on, at least in gold, specifically the panic buying, I would say, by central banks, that could temporarily stop.
Yeah, maybe along with the Bitcoin as well. That's another story. But
But
on the India,
all these guys haven't held that physical gold. They've all got in a short squeeze. What he's saying is right. It's all technical squeezes which play out in parabolic rise.
But India-US money, more and more looks like something is going to get done soon.
See, think of India. All the tailwinds now are behind you. Last year we were worried about valuations. We've gone sideways for a year, so we're generally better off. The government's given you tax cuts. They've given you GST cuts.
2.5 lakh crores.
The central bank
budget and GST, 2.5 lakh crores.
Then central bank's given you interest rate cuts, and the regulators actually encouraging banks to go out and give more credit. So you couldn't have better conditions for business to take risks. The government's encouraging you with PLIs or what can we do to help you. So the conditions are actually good this year, unlike last year.
One thing still remains a bit of a, that's what I hear from...
When you said it, even last time, remember we said our exports were 80 billion, 40 billion were excluded from it. 40 billion largely came down to textiles and aquaculture and so on.
Correct.
So the sentimental effect is great. But the way the erratic policies keep coming and going. If you're an industrialist, do you take a 10-year bet saying I put up a plant? Because if it's beyond this term, then you take a bet. But at the end of this term, what if the next guy comes and says, I want to overturn it? So that animal spirit, as the RBI governors also said, has been a bit missing. Because these policy uncertainties are what keeping us
You think it'll
behind.
come back with this thing happening?
It will be much better. But we couldn't say when the deal didn't happen that we are not so affected and now suddenly say, wow, it's fantastic.
Correct.
It is a positive.
Yeah.
But this market anyway is going to take a lot of these positives and start
Manish,
climbing.
The perception, I think what the market was actually worried about, including me, is the perception that India and
get
US
worse.
are not getting along. And then things could get much worse. 40% of all FI flows have come from the US. Let's not forget, right?
Yeah.
And it is one thing is this $40 billion is only goods export. But just imagine the services dependency on. So US is a very important partner.
I'll give you
and
one
we need
more.
to be friendly.
Absolutely, for sure. You want to be friends with everyone. But I'll give you another interesting way to look at it. The US is close to $65-70 trillion market cap, and it's held 30% by foreigners. So it's almost $20 trillion of foreign ownership of US markets. Every fund manager now in the world knows that you're near the end of the boom over there. That money has to rotate out. The biggest enemy of US is China. Money went to China. The Chinese market is up 40% because when valuations
But money went this year. I mean, actually, last couple of years,
but this is when the war was at the peak with China. So we give too much importance to people can be patriotic and they can be investors and they need not be the same thing.
Under Biden, I remember having conversations with foreign investors saying that, well, when Chinese funds, etc., come to pitch, they've said it on air. We just told them, sorry, boss.
But it changed.
It cannot. But it changed.
It changed. That's what I'm saying.
And it will change big time.
And when you see a profit opportunity, same way 18 months ago, people would say China is uninvestable, it has no terminal value. How come the same chaps have gone and bought it?
Madhu, you have a directional view in terms of if this US-India thing happens, let's just bring it down to the level of sectors where it will show up the most. What's your sense?
So I would say what has proven even in the last year, well, I would like to see two things really matter. One, are you able to catch some real long-term theme? Like we discussed 3-4 years back, this energy transition. And you see how much value creation has happened.
On the back of this, where do you think? On the
energy transition thing, right? So I would pick up the larger trend which is there is the usage of AI.
Okay.
And really people working on scale and cost using AI. I think it will make dramatic and very significant impact on companies which are able to adopt this and on companies which are not able to adopt this. It will be a Kodak moment for them.
True. Wow. That's a perfect Kodak moment to take a break also. Let me just, allow me to take a break. I'll come back and we'll start exactly on this point and we'll look at other sectors as well. So take that break. We continue this very interesting chat with both Madhu and Manish. Stay with us. Welcome back to this Diwali special. We are sitting down with Madhu Kela and Manish Chokani, and we are now, over the next 7 minutes, going to talk about where to bet on. I mean, we're not near term, but which are the bigger themes to focus on from here. Before we took that break, Madhu, you said AI.
Yeah. So the AI usage is here. And I would think that this is very early stage of the usage, at least in India. And clearly not reflected anywhere in the market. On a $5.5 trillion, I can't even count $2 billion worth of real AI direct companies. While, in the US, that number could be 15, 20, 25%. Or in China, that number could be similar.
अगर आपको नहीं मिला तो फिर
नहीं ना, listed है नहीं ना.
Listed नहीं, unlisted.
Unlisted में खोज रहे हैं.
We both agree on AI being powerful. And like when the internet came, the beneficiaries were people who used it.
Yeah.
Now, when you think of AI, you want organized data sets for the AI to be unleashed. Who has the most organized data sets? We were the beneficiaries in internet as the BFSI. The same thing applies today in AI. We create analyst reports now in literally 10-15 minutes with use of AI. Imagine what it's doing to the banking sector. Think of productivity gains, which you'll get both in capital marketplace as well as in banking as well as in insurance. It's the biggest play of India, of AI, is actually our financial space. In any case, it's playing into this thematically, that financials is poised to lead this market going forward from here. Like I've given you in our last interaction, that SBI beats Reliance in profit soon. ICICI beats TCS in profits. Axis Bank beats Infosys in profit. It's a seminal change which is going on and people haven't realized. And the capital market theme is a secular structural trend.
So you're saying
and
there is
even for
financial
private equity, like we spoke before the show, you have ways to access private equity deals also with some of the best. His nephew runs a fantastic fund.
Right, absolutely. Are there those plays in the private market, Madhu?
There are those plays which are coming up.
Not listed yet, but they are there.
There are those plays which are coming up. But we are more focused on usage of AI.
Which is application layer.
Which is application layer. I think that is where the real money will be made. Prashant, I'll just take 30 seconds. To give you an example, like today, all legal work is still not AI-led. Now tell me, there are hundreds of judgments which would have happened on any subject in last 100 years.
Right.
Just imagine a situation. Someone will create it in 3 years down the line. If there was a layer, how powerful it will be. And the lawyers who are not using it, how
No, it's happening. I
inefficient.
had a conversation about this with Cyril Schroff, and he said, well, they are doing some
If
real
we
work.
put it in the
And I
judiciary,
can tell you, already in America, it is already happening. There is already a company which has been able to do it in America already.
if they legislate this for the judiciary to give you judgments, those 6 million or 60 million cases stuck in the High Court, then you'll be bullish on India.
Manish, 10 साल में
Because that is real ease of doing business.
5-10 साल में हो ही गए.
That's where we are stuck.
If not the judgment, but at least judges will start using it to get a proper summary of it.
Absolutely.
जो आप बोल रहे थे 13 मिनट में analyst report. I mean, if you're able to sort of summarize cases which are going out.
It's crazy, boss. Absolutely. I'm saying we are seeing the gains of productivity.
The other
already.
one with AI, it's related, is basically the physical infrastructure, which is data centers in India.
Absolutely.
You've invested on the private side, at least, with many of these
Sure,
sort of things which go into the data center.
Absolutely. Data center and energy both.
Okay.
Because that is what is like an indirect way to play. Because there is so much data that you will definitely need. And according to me, the scale and the size of the growth in all of this will surprise many optimists as well.
Okay.
That's where I can see things going.
On the listed space, there are a bunch of them, but you think
Not too many, not too many. One or two which are there, direct plays are not the ones
where you think, where you are kind of at least.
Now, I am saying, but what has played out for us is you identify a large theme, right? And you start early, even if you have to wait. I'm saying in a fantastic theme, even if you make a mediocre investment, your gains will be phenomenal. If you make an exceptional investment in an industry which is tailwind, I have come out very frustrated investing in best companies.
Where the tailwind is missing.
Where the tailwind is missing. Or rather, there is headwind.
Correct. Manish and Madhu, from the AI is one theme, and I think it's that direction, as you're saying, it's in a way positional chess. I mean, you directionally it is going to grow. So you got to find things which you said it's capital markets, financials, which perhaps anyway have a tailwind, and this kind of bolsters the argument. And you spoke about data centers and power, etc., as themes. And of course, on the private side, many application layer companies where you're making
which are coming up.
What else, as you look ahead into 2026, both of you?
I would
which
say
are these themes where you should look for ideas?
Prashant, I would say, let's say broad market. Last year, people are crying. You yourself gave me data. 30% of the companies out of 500 still made 30% return. Because there are opportunities on bottom-up basis. India is happening, my friend. All this capital market money which is being led is raised. People are not going to put in fixed deposit. This is money is being raised for productive purposes. And I am specifically very bullish on some of the smaller companies, even the companies which are getting listed on the SME exchange. 100, 200, 300 crore market cap. These entrepreneurs are coming from tier 3, tier 4, tier 5 cities, exceptionally hungry. They have not seen this kind of capital in their lifetime. So there will be lots of winners from here. So Prashant, it's not about calling the broad market. It is actually betting on India's entrepreneurship on a bottom-up basis. That is the way to make money.
Are you going small in that sense now?
We are objective. It's not we are only looking small. I am saying the opportunity is bottom-up. And as long as the market doesn't fall, if I can make a case that market will fall 20%, then this bottom-up will not work. Then everything else will fall. I am not making that case. I think market remains sideways. The view is more marginally positive on the market than on negative, because Manish already spoke about it. There are a lot of things which were like a headwind has already turned like a tailwind for the market. So earning growth will be higher, liquidity is there, RBI has cut rate, globally things looking like settling down, and predictions for earning growth is maybe at the bottom. Things will improve from here for the market as a whole. Now within that, if you call the market, I am saying you bet on bottom-up ideas rather than betting on Nifty. That's
no, 100%. Both without saying, but my point in terms of themes, as you identified, AI as a theme, energy transition was one. Names like transformers, rectifiers, etc. have made a lot of. I mean, there are many actually. Alcoholic beverages. I mean,
so that I would say, I would if you tell me one sector, it will be financial sector, where I think the overall basis stocks have not performed to their fullest potential, and we are already seeing kind of recovery take place. And there is way to, one is you can play in an asset-light mode, which are capital market related plays, and the second you can even play banks.
Capital market and banks, and this can sort of squares with what
I'll give you a most unpopular one. Yes. Finance Minister indicated that after all her tax work is done, she wants to turn her attention to public sector.
Okay.
They've already said, for example, they may do consolidation of some of the PSU banks. This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat. If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bet.
Just PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme that, like, I'm just surprised people haven't realized Vedanta will make more than $1 billion on silver, which is a byproduct. So the amount of earnings coming through in metal companies is unbelievable what is happening. The highest rate of change this year in terms of earnings will come in Tata Steel and Jindal, for example. I'm not suggesting the stocks, but the thematically, the way it happened in 2000-2010 period, the move into hard assets and the earnings that can come out from there can be very dramatic.
And you have, I mean, you and Inam, the group has been positioned with metals, JSW, etc.
And so, see, like, again, that gold and all is, like he rightly says, it's part of your asset allocation. It's your insurance policy. It's not an asset.
Earnings kicker is
but earnings is fun is from people who make money out of hard assets. It includes manufacturing as well, which is a big theme for India.
If I can give 30 seconds, before we close. I think I see a lot of people are nervous because money is not being made in the last 12 months. You know, on a contrary, developed markets have done well, silver has done well, gold has done well. But markets have proven that people who have stayed invested through last 20-25 years are the ones which are smiling. So I don't think people should deter away from equities just because last 6-12 months performance have been muted.
100%. That's a wonderful message to, I mean, I think leave our viewers with. I could go on. We've barely scratched the surface, I feel, but time limits on television programming. But we will continue this conversation. Have both of you back. Once again, wish the both of you a very happy Diwali from all of us here at CNBC TV18. Manish and Madhu, thank you very much for joining us.
Thank you.
Thank you.
Shubh Deepavali.
Co-powered by SBI. Best है सबको पता है. In association with Think Equity, Think Motilal Oswal. Co-powered by SBI. Best है सबको पता है.
Signs of a Trump-Modi alignment on trade ups hopes of an early resolution on tariffs, lifting sentiment. Auto and consumer durables lead gains while energy drags.
Axis Bank reports strong loan growth and beats margin expectations, but a one-time of rupees 1,200 crore standard asset provision on RBI's direction impacts the bottom line. The bank hopes to write back the provision by the end of FY28.
Insurance buyers deferred policy purchases due to GST revision, says HDFC Life, hurting business in September and causing a miss versus premium growth expectations, but margins in Q2 come in ahead of estimates.
The board of RBL Bank will be meeting on 18th of October to consider a private placement of securities. The exchange intimation at a time sources point to Emirates NBD buying a sizable stake, ups expectation of a revelation soon on this.
It seems there's no stopping the gold and silver rush, with both precious metals scaling to record levels as expectations of a Fed rate cut, rising US-China trade tensions, the US government shutdown, and Indian festive demand stir combine into a bullish cocktail. Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, no complaints coming in for the markets because we seem to be building on gains from yesterday's trading session. So 25,458 is currently where the Nifty is at the high point, up around 0.5%. It seems as though all guns are blazing for the markets at this point in time. We have the Bank Nifty, which is up around 0.5%, the Midcap Index, which is up around 0.5%, with an advanced decline ratio, which is in positive terrain. So maybe there are positive movements when it comes to Modi as well as Trump, and maybe that's possibly fueling the sentiment for the market. And overall, the festive cheer seems to be, sprinkling onto the markets at this point in time. We've got two good listings in today's trading session as well.
Absolutely, two good listings that have come in as well. This week has been not bad for listings in terms of the moves that they've seen coming in. So that's something that we'll keep an eye out on. But two good listings today. Most of the sectors trading in the green except for PSU banks. That is a bit subdued in today's trading session. Yesterday it was in the green, trading with very strong gains. Today, it's trading with cuts of almost 0.4%. Other than that, also what we have not doing well is the pharma pack, very muted in today's trading session, so keep an eye out on that one as well. But FMCG, that's buzzing away in trade. The Nifty FMCG is up 1%. And among that, the top gainers coming in, Nestle India. This is, we're seeing the numbers reported by the company. How are they looking like? What is it versus our expectations? We have Mangalam now, who's joining in with us to give us details on this front. Afternoon, Mangalam.
Well, the first FMCG company major to report their second quarter numbers on the street is not going on with a lot of expectations, but more importantly, it's also the first quarterly performance under the new leader for Nestle India, Manish Tiwari, and what a performance it has been. The company's reported strong double-digit revenue growth. In fact, the street was working with a number of just 5285 crores, which would imply a 3.5% sort of growth. The company has gone ahead and reported a 10% plus revenue growth at 5600 crores. In fact, the EBITDA as well has been a beat against expectations. The margins a slight miss, but nothing really to complain, because on an absolute basis, the EBITDA and the revenue have been strong beats, and the net profit as well, 753 crores versus street expectations of 710 crores. What is it that led the growth? Domestic business grew about 10.8% versus expectations of 3 to 4% growth. Exports grew 14.5% versus again expectations of 8 to 10%. So both on domestic and exports, the company has done a lot better and led by strong double-digit volume growth in a lot of their categories. In fact, the company says 3 out of their 4 product groups delivered strong volume-led double-digit growth. And there was distribution expansion in products like KitKat, which aided volume, especially in the rural markets. We've been talking about how rural and T2 are doing a lot better this time around. Even Munch and Milky Bar did well. Pet food business reported high double-digit growth. In fact, the best ever since incorporation of that business into Nestle itself. The only near-term worry, so to say, is the gross margins. They compressed about 230 basis points. The street was working with a number of an 80 to 100 basis points compression, but nothing really to worry about there, because milk prices are expected to soften after the festive season. Coffee prices also expected to stabilize, if not fall, and edible oil prices are the only ones which are likely to remain firm. We are seeing some moderation in cocoa prices as well. So all these factors doing extremely well. Apart from all of this, what the street was eyeing is the leadership strategy under Manish Tiwari, and that has been outlined as well. They've said they're focused on penetration-led volume growth. In fact, they will invest in growth, accelerating investments in both brands as well as manufacturing capacities. This after they've, increased their capacity in the Sanand facility. And finally, the endeavor for the company remains fast, focused, and flexible. All these factors working well for Nestle. The stock is about 10% away from record high. Did well in yesterday's session, is doing well today as well. Trades at a premium to the FMCG sector, but if it continues this kind of outperformance, there's no reason to believe that this premium won't be justified.
Okay, all right, Mangalam. Thanks very much for that. So Nestle says that domestic sales did grow at double-digit rates and led by volume growth. The stock, as you can see, is outperforming. It's up around 3% at this point in time. But we do have a lot of other stocks which are buzzing in trade today, and Vivek is here to take us through that list. Vivek.
Well, thank you so much for that. Again, a day where advances far outpaced the declines. After the results of Nestle, we've seen the whole consumption pack move up as well. But one particular sector that clearly stands out today is actually the realty pack. Oberoi Realty came out with a very strong set of numbers, and they've given a very strong guidance as far as the second half of the year is concerned. And it has taken, along with it, Godrej, Prestige, Sobha, most of the realty stocks today doing quite well. Tips Music came out with its results yesterday. The company has gone ahead and done a guidance cut as far as top line growth is concerned. But again, H2 is expected to be slightly better. Stock higher by 7%. MRPL, Q1 was quite weak for all of the refiners, but MRPL, good show today, has cooled off a little bit from the day's highest point, but healthy GRMs is what MRPL witnessed in Q2. Aether Energy, again, in the broader end of the markets, this particular stock at a fresh 52-week high today, almost 5% higher. And Craftsman Automation, this particular stock, on very strong volumes today, is up over 5%. On the other hand, a few laggards as well. KEI Industries, Street clearly not liking the fact that the Sanand plant commissioning could be delayed, down over 5%. Network Technologies, a clear outperformer today, seeing a bit of profit booking. And select insurance companies, especially after the kind of guidance that HDFC Life has given, most of these stocks seeing a bit of profit booking today. HDFC Life down over 1.5% today.
Okay, Vivek, thank you so much for that. Keep an eye out on all those buzzing stocks. Also, our BLS International, that's perked up in trade today, 6-7% of gain. There's some news flow that came in there as well. On that note, we're going to slip into a very short break. But after the break, Prashant will connect with Rahul Joshi, MD of Network 18, to decode their Q2 numbers. Stay tuned in for that conversation.
Welcome back. Well, we talk about, a variety of businesses all day long. Let's now talk about the business of media itself. It's my pleasure to welcome in Rahul Joshi, Managing Director at Network 18. Rahul, great to have you with us here.
Thank you, Prashant.
Thank you very much. And it was a tough quarter, but I think revenues are up about 7% or so. So why don't you lay it out for us in terms of how the quarter panned out? What were the pulls and pushes? And we'll dive deeper.
No, I think, Prashant, the first 2 quarters of this year have been very challenging. I think it's one of the toughest years that I have seen in the business, if you leave aside the COVID year. I think, there has been a little bit of a slowdown in the economy. And I think the advertising market in particular has been really soft. Even in this quarter, advertising volumes have been down. So I think a 7% growth in high single digit, it gives me a great amount of satisfaction that the team has really worked hard and pulled its load. I think a few things that have really helped in this. One is that I think as a news network today, we have a 14.2% share. It's at an all-time high. To put it in perspective, it is more than the combined share of maybe the next 2 or 3 players. Okay. At least the listed players like India Today Group, Z, all these, so we are at a commanding position in terms of reach. In terms of market share, you are well aware that, we are number 1 in CNBC, our flagship channel. CNN News 18 has been number 1 for over 3 years. Same is the case with News 18 India. In regional, we are number 1 in many of the flagship brands, including, News 18, Lokmat, and so on. So that has given us the pricing power over the last few years. So even though the advertising volumes may have been low, the pricing power has, taken us has seen this growth of 7%. On the other hand, it's not only our reliance on advertising, but on reliance on subscription revenue and new sources of revenue that we are constantly looking at. So, if you look at money control, it has, till about 4 years ago, 100% of the revenues were advertising. Today, it's 70-30. 30% is from non-advertising revenue. It is subscription. Money Control Pro has 1 million subscribers. Money Control Super Pro, which was launched 3-4 months ago, has, really opened well for us. I'm still not disclosing the numbers, but, we are not selling for less than 2,500 rupees per annum. So that's been a really, great, Pro by contrast was just 999, and the ARPU is lower obviously because we've given some festival offers, etc. So I think this subscription revenue is another piece that has opened up. Now in Money Control, we've also got into lending. That's the third leg, another revenue stream that's opened up. We've now we've created something called Creator 18. So we've onboarded 40 creators exclusively, and we represent them in the market, and through them we reach about 125 million MAUs. Now, this is another offering that we take to the client. So, it is a force multiplier to our business. So that's the other. So we've been able to look at this business very differently, focus on news adjacencies, non-news businesses, which are content related, but not necessarily hardcore news as you and I understand it.
Absolutely. That sets it up very, very well. On the Creator 18, how does the business model work? Do you get a share of the content or, the revenues that those creators make, and do you enable them in ways?
So, it is an industry first kind of phenomenon. We were the first to sort of quickly jump in and realize that, we need to create this collective and, get on board creators who are creating. And this has nothing to only do with news. News are journalists are creating. They are the creators themselves. But, this is to get into other areas like fashion, lifestyle, food, art, culture. Because we also have a global brand like First Post, we are also onboarding some creators who are global creators, right? So we get them, and we get them on our platform. They get another platform to use, and we get their reach. We represent them in the market. We go and pitch for business for them. We take our business to clients and offer this additional service of 40 creators who are exclusive to us, and many more who we work with non-exclusively from time to time. In the last 6 months, we've done 300 campaigns, with them, not necessarily on our channels alone, but everywhere, on social platforms and where. So we bring in the managerial expertise, we bring in the marketing, the branding, the sales expertise, and we let those creators use our platforms. We take our creators, we get their platform and their visibility as well for our brands.
And if, this is going to get as disaggregated as you've been saying it will. The content as a business, I
Yes.
think that's perhaps the right strategy, right?
Absolutely. See, we have to look ourselves as a content powerhouse, as a content factory. We take our content to where the audiences are. If the audiences are on social, we take them there. Today, a lot of our children, kids, youngsters, teenagers, they live on social media. Right? They wake up with social media, they go to bed with social media. So they consume their news on social media, they consume all their content on social media. So we've got to be there. You know, we have to think differently and appeal to the Gen Z as we go along.
Just to take you back to advertising, you said a lot of course, the conversation has been about non-advertising, but the advertising pie itself, I mean, I actually jokingly in the newsroom when I'm here anchoring, I look at ads and I say, well, that's a new one. That's a new one. There's a lot of new stuff across industries. And as they say, media is essentially at the end of the day a reflection of how the economy is doing in terms of advertising. So, I mean, I'm seeing a lot of it.
No, I think what what the government has been able to do is quite commendable. You know, they've cut income tax rates in the last budget, and now, you know, with this GST rationalization, I think there is money in the hands of people. So they are spending that money now. I think that, you know, we're seeing the green shoots now. See, if you look at the auto sales in the last month, I mean, they have been, you know, so people were holding, after the announcement of GST rationalization till it kicked in on the 22nd, people were probably holding back. But after that, it has really taken off. So I do think that there are green shoots that are visible. The next 2 quarters should look up if the trend continues. Of course, there are large macro factors also at play, but if they are all to resolve themselves, I think the next 2 quarters do look good for the industry.
Do you I mean, what is the share of advertising now for the group as such, for shareholders of Network 18? I mean, what would be advertising now?
As a percentage of
revenues,
non-advertising total revenue, the breakup.
Revenues, yes.
So we don't provide the exact breakup, but, you know, suffice to say, I was giving the example of money control that, you know, till 4 years ago, 100% advertising, today 70-30. 70-30. Right, 30 years from non-advertising, subscription, lending, etc. But if you look at, you know, we also get a lot of subscription income from, you know, on our television business. So that also pretty much follows the same sort of pattern. But going forward, I do think that, you know, we have to press on the, you know, get on to, you know, non-advertising revenues also in a big way. Advertising will grow for us because we are in a leadership position, because news will continue to grow. But I think news adjacencies will grow too, you know, and I think we should look at subscription as a way to grow in the future. And in places like money control, we have to also look at transactions. You know, so lending is our first foray there, doing reasonably well. We hope we can accelerate there as well.
You know, it's for the last, actually more than 1 year, actually, since President Trump took over. It's been a very, I mean, global has been such an important part of the content conversation here in India as well, with all that is happening. And I think we have a first post, I mean, I think as an offering, which addresses that. I think you've been trying to build up Prime, CNBC Prime as well.
So, you know, if you look at that, so with First Post and CNBC, these are two important legs of our, CNBC is really the flagship of the, you know, of the entire group, Network 18. It continues to grow. You know, we have with CNBC, you know, CNBC-TV18.com has been doing a very healthy growth over the last 3 years. Combined, the brand is growing. I think what we have done with CNBC is to even look at the top slice of the market, you know, the most premium end. With CNBC Prime, we hope to get there. CNBC Prime is global news for the Indian audience. So you pretty much wake up with Japan markets and, you know, you end with the US, New York. So you know, so you pretty much make sense of global markets because today they are all interlinked, right? I mean, Indian markets do feel the impact of what is happening globally. So that's CNBC Prime. And along with CNBC-TV18.com, like Money Control started Money Control Pro and Super Pro, we've started CNBC Access. Now, Access is creating experiences for people. It's priced at, you know, 5,000 rupees per annum. So it's highly priced. And, you know, in the last few months, we've had a lot of subscribers who are looking at those experiences. And those experiences are events, campaigns, interaction with our anchors. We have events, special shows for them, you know, slightly some shows that are behind the paywall, you know, so that's what Access is doing. On First Post, you know, it is one of the fastest global brands, fastest growing global brands in the world. We compete with BBC, Al Jazeera. Our ambition is to make it, you know, a global brand out of India. And I think you will see over the next year, you know, we are significantly increasing the number of hours of content, global content, done by global editors and global anchors. You'll see that happen over the next 6 months to a year. I think advertising is one big, you know, leg of the revenue, this revenue leg. The other is, you know, we get YouTube revenues. And we will also, in time to come, open up subscription here. Because I think for good global content, I think there is money to be made here.
On the lending side, I think there's a partnership with the HDFC Bank. Could you just talk to us a little bit about what the roadmap is? What's the direction of travel for this business?
So lending again is something that we started about 18 months ago. We thought that we have so many users on our platform. How can we make the most of it? How can we make them engage with the brand on an ongoing basis?
Sure.
So they come in for news. We have a large funnel, 100 million users come in every year through the funnel of news, through the funnel of tools. We built a lot of tools, to help investors invest in the markets, traders make sense of the markets. How do we use this, to take our revenues forward? So we thought that it is a good idea to get into fixed deposits and lending. There is no default risk on our balance sheet here. We are just the pass-through. We get a commission. And I think HDFC is one big partnership that we have entered into this year. We announced it at the GFF recently. We also have many more lenders on, who we've been doing business with over the last 18 months. But I do think that HDFC, we have to watch this space. I think it will really give us that big kicker.
Because the audiences are there. You have to convert it.
That is right.
In terms of
you have to convert the right audiences who are capable of taking a loan. If you can give the right audiences to these guys and convert them into business, I think there is commission for us also at the end of it.
And do you think it perhaps becomes a non-negligible part of the sort of overall pie?
Oh, yes, I definitely think so. Okay. I do think that, as I said, it's 70-30 for money control. I do hope that, we are able to increase the non-advertising part of the business substantially over the years.
Rahul, to all CEOs who come here, we ask them the question about the guidance. Any guidance you'd like to provide for the business as you look ahead into, the second half and goes beyond?
As I said I just said a little while ago, I think the second half looks promising. For the news businesses and for businesses such as ours, the quarter 3 and quarter 4 are always bigger than quarter 1 and quarter 2. Because last quarter we burn a lot of our revenues on events, on campaigns. Some of our big properties all play out in the last quarter. There is a budget that is coming up. There is a Bihar election in this quarter, though, for a large organization like us, it's a small uptick. So I think there is excitement in the next this quarter and the next. Let's keep our fingers crossed. Nobody can predict the larger global macro environment factors, but if they all play out as expected, I think we should be seeing a better 2 quarters in the coming.
Hopefully, some amount of repair and recovery with regards to US-India as well, sooner rather than later. So I think all of it adds up.
Yes,
in terms of
absolutely.
sentiment, which is so important.
It has to come together for us to be able to do well.
Rahul, really great having you with us here and getting us a blueprint roadmap for the business at Network 18. Thank you very much.
Thank you, Prashant.
Thank you. Well, I think we'll slip into a quick commercial break here. We're going to come back. Ekta, Winnie back in the studios. They'll take you through more on market, stock-specific action in just a bit.
Welcome back to Halftime Report on CNBC TV18. As of now, the market's 25,500. About that mark is what the Nifty is trading at. The day's highest point is what we're seeing for the Nifty 50. So keep an eye out on that. Broader end of the market also is doing well, 0.6% of gain coming in from the midcap industry as midcap sector as well. But let's move on and talk about Tips Music. That's the stock that we're keeping an eye out on. They reported a resilient Q2 FY26 performance. Double-digit growth of around 11% is what the company has managed to, carry on even this time versus last quarter. It was a 19% growth. We have Kumar Taurani, who is the MD at Tips Music, joining in with us to discuss their numbers. Good afternoon, Mr. Taurani. Thank you so much for joining us on the show. I want to start by talking about your revenue growth. Last quarter, 19% growth. This quarter, around an 11% growth that you're seeing coming in. And your guidance for FY26 is now at overall 20% growth. Previously, you had given a guidance of 30% growth. So, one, do you think you will still be able to achieve 20% given that the first two quarter averages are still coming into around just 15%? And what will drive this growth now going forward?
See, this year we have earlier, before first quarter, we announced that this will be a tough year because there is many changes. Many OTT apps shut down or gone behind the paid wall. So we have those challenges. But I feel that my content is really doing well. And we have a lineup of very good new releases, non-film music. We have signed many artists. So I think that will give us a jump. Plus also YouTube is a little slow, but YouTube is also gaining now. And there was they were not supporting UGC platforms. So we have again spoke to them and we are trying to convince them and again bring back to them on that service as well. That they should support UGC content. So that's happening. Many things are happening. And I feel that 20% is achievable and we'll achieve 20%.
Okay. Mr. Taurani, YouTube has been slowing for you all for the past couple of quarters, right?
No, actually, it's a shorts. There is another revenue stream that is shorts. That is being slowed down, but we don't have any impact on that because that's a lump sum kind of a deal with YouTube. So we will not have any money impact.
Okay. So how is the Meta platform doing for you all as well as Spotify?
I mean, both are doing well. We are really doing a lot of good things on them. My mini songs are really working very nicely. And there is 3-4 songs which I have written in my annual report. This really doing well.
Okay.
Mr. Taurani, what about your ad spends as well, right? Ad and promotional spends have been going up. Do you see that continuing even in the second half of this year as well? And what rate is it expected to continue to see an increase? Will it be this 100% that we're seeing in terms of an up move?
See, we target our content acquisition and promotion for that content around 25%. So we will be in that range.
Okay. Just, coming back to that, if you could just give us some statistics with regards to the paid subscribers and how much you're generating in terms of revenue compared to last year and last quarter.
It's really increasing by 50% year-on-year basis. This year, we feel 50% will be more. At present, it is 10%. We make money from subscription. Achha, there's one more thing. Recently, that government has reduced the GST also. That will also impact our business. As these consumer products or whatever people are buying, they will buy more and the companies will advertise more. So that will also impact our business. We will make money there also.
So currently you're getting revenue of around 10% from paid subscribers and you expect it to increase to 50%?
Oh, no.
Or it's growing at 50%?
Yes. So last year it was 7, this year it is 10, you can say like that.
Okay. All right.
Also, sir, what about your margins? They have seen an improvement coming. As of now, I'm talking about your EBITDA margins. This quarter, 76% versus last year the same time, around 74%. What is the peak level of margins we can expect from the company in the next year or two? And do you see further improvement?
That you can judge us in that range. We will be delivering performance in that range.
Okay, so it will be around this 74 to 76%. That is the range.
70 plus you can assume.
Okay. And what about content costs as well? That has come down significantly. Will that be seeing a reduction, this acquisition cost that comes in from the content side?
See, we don't have control on the film releases. So we do a lot of music, film music. So, but producer don't know when he's releasing film. Sometimes it get lot of delays happen. So that's a problem we have. So we have planned to let us do some non-film music. At least every 15, 20 days, we release one song. And we have signed many artists. Like you must have seen Aditya Rekhari, we have released. Recently, we have released Apar Shakti Khurana. Now again, Aditya Rekhari, we are coming. Mohit Chauhan is there. B. Prag is there. Lucky Ali is there. Paradox is there. So many artists, all top artists, youngster like, or all kind of music, pop music, spiritual music, and rap music. Everything we are coming out with non-film music. So that is in our control. So we are doing that.
Okay. All right. So just before we let you go, Mr. Taurani, just want to wrap it up that you are still working with that 20% growth revenue guidance which you had provided for FY26. You're still on track for that.
Absolutely. See, now this year, maybe another 1 year, it's a challenging year for us. But our shareholders, I give one message to my shareholders. Please see us in the long term. From beginning, I am saying this. Now industry is around 3,000, 4,000 crore industry. It has a lot of potential to grow 10,000 crores in next 5 years. So I think wait for that. There will be a big jump. There was a jump which we have seen for last 4-5 years, but because of this OTT problems and OTT is not supporting free content. They are converting their customers on a subscription basis. So these are few challenges, but I think we will overcome this in next few quarters. And again, you will see, we will start growing 30%.
All right, Mr. Taurani, we're going to leave it on that note. Thanks very much for joining in and speaking with us. The stock, however, is higher, up around 9% at this point in time, sticking to their guidance of 20% revenue growth. We'll take a short break, but up next, Sachin Jain, MD of World Gold Council, will join in. Stay tuned for that conversation.
Welcome back. Joining us on the show now is Sachin Jain. He's Managing Director of World Gold Council. Sachin, thank you so much for joining in. Another day, another all-time high is how the world is living by when it comes to gold and silver prices. $4,200 done, and we're trading above that now. How are you looking at this euphoria? Is it now becoming a bubble? The last $400, $500 markets now believe is just froth. How are you reading it?
So first and foremost, thanks, Manisha, for getting me on, and to you, to your viewers, and to yourself, warm festive wishes. It's the most special time that we all celebrate life, celebrate happiness and joy. So thank you for getting me on. You say it's a joyride of sorts in terms of what's happening with gold price. And as you just mentioned, historically, for every $500 up, we've seen an average of 1,086 days that it takes to increase $500. The last rally from $3,500 to $4,000 took precisely 36 days and is still going up. So, as I said before on your platform, that the pillars on which the gold pricing is built on, it still seems that more are in favor of gold and not so much so as how it can be against gold. But what we're seeing in the markets is there's deficit of physical gold, and hence the premiums in the markets are going pretty much from the range of $20 to $30. So a lot of those kind of things, and that really purely reflects on the phenomenal demand of physical gold right now in the jewelry stores in particular.
Sachin, so you're telling us that at all-time highs as well, there is demand, especially coming in from India, from retail. I'm sure you're talking to a lot of people around on ground. Who are buying? What is this demand? Is this more to do with bridal, or is this investment?
Actually, Manisha, we saw 2-3 areas, and things are going so quick. When we touched 100,000 to 110,000, generally the stores were quite dry. As it crossed in the range of 115,000, and just when we had the Akshay Patra, that time, which is not so auspicious, that time is when the rally really began for consumers flocking on the stores. So yes, the demand is fairly high for bullion and for investment demand particularly, but also we've seen a lot of preponement of, let's say, wedding jewelry that people have to buy perhaps in the next 2 or 3 months, and all that preponement is happening. So it's a mix of big pieces, high-end pieces, and a lot of bullion.
And people are ready to buy gold at premium as well, as you said, Sachin.
Well, it's a euphoria as you started your session on, Manisha, and the fact is that it's true. The fact is everybody believes that they've perhaps missed the rally, which eventually get in, and certainly there is an auspicious buying that happens right now. It's all reflective of what is culminating on the rally.
Sachin, would you buy at these levels?
100% yes.
All right. All right, we are slightly scared here in the studio. But Sachin, talk to us about, are you further bullish from here on? Because a lot of people feel that this is some consolidation, some sanity perhaps, even for a small time, should come in now. What is your opinion?
I think, Manisha, when we say from perspective of, I always say that from a long-term perspective, the aspects happening around what's happening in the gold, and of course now in the financial markets, how the countries are buying, and no subject has changed, just only intensified. With your platform, we've been talking about de-dollarization, we've been talking about central bank buying, we've been talking about financialization, which of course this year has gone ballistic. But I guess all these trends are similar, and in the long-term perspective, the sort of pillars in the strength of gold are certainly in favor. Now, what happens in short term, we really can't predict. But I again put forth on your platform that look at gold from a long-term perspective as a hedge, as a diversifier of your portfolio. Today, we always talked about 10 to 15% as a diversification in gold, which makes so much health in your portfolio. But we've now, over the last 3 months in particular, worked with a lot of family office where everybody says, yeah, I'm invested or divested in gold, but those actual percentages have been actually much lower, and people are now correcting their portfolios. So I think from a long-term perspective, think at gold as not a tactical asset, but a very strategic asset, and it played from a long-term perspective, then certainly will get the right results.
Sachin, I'm just looking for numbers now. How much household gold do you think India holds right now? That's one number. Second is, are you changing your number in sense of India gold imports? And third is, do you still believe that a lot of new buyers are coming into the market, and what would that percentage really be?
First question from my side, Manisha, we have published around 25,000 tons of gold that sits in households. Now, that's purely a summation that we have from 1990, where we have the official records available as World Gold Council. But the actual number perhaps might be a little more. So that's number one. Number two, you talked about other new buyers coming in, and I certainly think new buyers are coming in in getting in the aspect of gold. Financial wise, the way gold has performed just this year at a 51% up. If you look at long term, compounded growth has been over 7%. So I think all these aspects have delivered as gold as a very important asset class. I mean, I was reading this year, there's been a phenomenal growth in the ETF market as well globally. Over 634 tons have been added up. Even in India, we've seen great growth in ETF. And if you see the fundamental of that, gold in the financial consumption will cross about $6 trillion this year, which basically means that about 17,80,000 crores worth of gold is getting traded on a daily basis. And that makes gold as the most liquid asset on planet Earth. So I think all these, with the hedge, with the diversification aspect, I think it makes a lot of attraction. And new buyers are coming in both in the form of financial markets and consumption there. But I also believe that we'll have new people coming in for jewelry, a renowned consumption for jewelry. We've seen a lot of recycling, which is gold to gold has gone up. I mean, when we report our numbers of Global Council, we emphasize on the fresh gold. But we also are looking at the recycling, which is gold or old gold converting into new gold. And that has crossed almost 50% now in terms of consumption on the floors.
Such interesting facts there. Sachin, thank you.
Strong numbers as well.
Strong numbers and buyers coming, whether, jewelry or financial side. That's interesting to know.
Let's go get some gold.
I am wondering if I should, because I think since December we have spoken about it. Since then it's come up so much. I don't have the guts to go for it right now. I don't know if it's right or
Sachin's
wrong.
buying gives me some assurance.
Yeah.
I think I might just go buy some bit.
Some bit. Diwali ka wo token. But thank you so much, Manisha, as well as Sachin, for joining us for this conversation on the commodities front. But with that, viewers, we are absolutely out of time on this edition of Halftime Report. As of now, Nifty trading at the day's highest point. Thank you so much for tuning in. Up next, Business Lunch.
Co-powered by SBI. Best है सबको पता है. Co-powered by SBI. Best hai sabko pata hai. In association with Prakash Surya Steel Tubes and Pipes. And Hindware Italian Collection, designed for Sukoon.
Signs of a Trump-Modi alignment on trade-ups or hopes of an early resolution on tariffs lifting sentiment. Auto and consumer durables lead the gains while energy stocks drag. Axis Bank reports strong loan growth and beats margin expectations, but a one-time 1,200 crore standard asset provision on RBI's directions impacts the bottom line. The bank hopes to write back the provisions by the end of FY28. The board of RBL Bank will meet on the 18th of October to consider a private placement of securities. The exchange intimation at a time. Sources point to Emirates NBD buying a sizable stake, ups expectations of a revelation soon on this. It seems there is no stopping the gold and silver rush, with both precious metals scaling to new records as expectations of a Fed rate cut, rising US-China trade tensions, the US government shutdown and the Indian festive demand stir combine into a bullish cocktail. And US President Donald Trump says Prime Minister Modi has committed to stop Russian oil purchases. The Indian government responds in a diplomatic fashion, reiterating that its import policies are guided by domestic priorities, but adding that it is in talks on expanding US energy imports. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Patakia. It's a very, very positive penultimate trading session to this week. It's an earnings-heavy day as well. We are counting down to some important results, but the key takeaway for the first half of the session is the fact that the Nifty has now crossed the 25,500 mark, almost a double hundred yet again for the index. It's now making new highs, at least on a swing high basis, still 700 points away from the original record of 26,277, and a lead contributor to that has been the Nifty Bank, as has been the case over the last few weeks. Now the Nifty Bank at 57,300, so almost around about 350 points away from its own record high, which is at 57,628. But a sector that has been in the spotlight over the last couple of hours has been the FMCG space, and that is after Nestle came out with its results a few minutes ago, and the FMCG index now 1.5% higher, led by Nestle, which is now trading with gains of around 4.25%. A high single-digit domestic volume growth compared to expectations of 1 to 2%. And as a result of Nestle's earnings, a lot of other FMCG stocks have started to move higher as well, say for the likes of Radico Khaitan, say for the likes of Varun Beverages, say for the likes of Colgate, all of them trading at the highest point of the day. But the other major result that was reported last evening was Axis Bank, and Gaurav is now joining in with more details on this and the fine print. Gaurav.
Well, yes, when we look at Axis Bank, when we look at the numbers, three things to highlight. First is that when we look at loan book growth, now that has returned to its double-digit growth trajectory. It came in at around 11.7% growth on a year-on-year basis. Remember, for the last 3 quarters, Axis Bank has been reporting single-digit loan book growth, which was actually weaker than what we had estimated earlier. Other than that, second trend, which was very positive for Axis Bank, is the net interest margins. Now, they came in at around 3.73% versus what it was at 3.8%. This indicates 7 basis point fall versus what the street was expecting at around 3.63%. So definitely this number was also better than what the street was expecting, and at the same time management said that the cost of fund, actually they managed it well, and that is the reason why net interest margins came in just 7 basis point lower. So that was not a one-off impact. It is something that the management did. Third is that when we look at the gross slippages because of the technical impact, remember last quarter management recorded technical impact, and that is the reason why slippages as well as credit costs, that was elevated. But in this quarter, if you look at the absolute number, the gross slippages, that has come down almost by 44%, and at the same time, if we look at ratios, be it gross slippage, net slippage or credit cost, all these ratios have come down significantly, and again in line with what we have seen as a trend for the bank. What came in as a hiccup is that there was yet another one-off in the provisions. For this quarter, the provision number increased almost by 1,240 crores, and this was one-off, not because of any asset quality risk, but it was because of the classification. RBI directed bank to create provisions worth 1,231 crores because 2 of the crop loans were classified as PSLC. So that is the reason why we saw PAT declining almost by 26%. But all in all, when we look at stock performance, it is performing well because of the good numbers that we have seen and operationally strong quarter for Axis Bank in this quarter.
Indeed, Gaurav, thank you for that update. Axis Bank's results rubbing off on other banks as well, and as a result, the Nifty Bank headed towards the highest point of the day as well. Shifting our focus now to the IT sector. Now, ahead of the big IT results being Infosys and Wipro later this evening, Rima gives us a lowdown on the key things to anticipate from these companies and, of course, from LTIMindtree as well. Rima.
Thanks so much for that. So just to quickly get through the numbers then, for Infosys, it's expected to be a dollar revenue growth of about 2.2%, margin expansion to 21.3%, and a profit expected to jump nearly about 5%. But the key is, what does the company do with respect to its guidance? The current guidance is 1 to 3%. Some analysts believe the company could tighten it, increase the lower end, and therefore the new guidance stands at 2 to 3%. But this is not material unless the upper end of the guidance, that 3 becomes, say, a 4%, which is not currently in the price. Margins are likely to be stable. Wipro is the other one, and in the case of Wipro, the company is expected to deliver a constant currency revenue growth of 0.2%, so within the company's guided band of -1 to +1. Now, margins for the company, according to the poll, 16.8%. And this is lower compared to the adjusted margin. So last quarter, there was a restructuring impact. And therefore, the reported margins were lower. But the adjusted margins were 17.3%. So 16.8 compares with 17.3%. And the reason why rest of the IT companies have reported a margin expansion because of the rupee fall, Wipro is not, because they won some large deals and there is a transition cost associated with them. Now, key is going to be the guidance. Some believe it could be -0.5 to +1.5%, or -1 to +1. So that's going to be key. And the last one is LTIMindtree, where again the company had spoken about growth in Q2. So the street is penciling in a top line growth of about 2.2%.
Rima, thanks a lot for that. Indian Bank numbers on your screen, an 11.5% net profit growth and a 6% growth in its net interest income. Asset quality relatively stable as well, little change on a sequential basis. The provisions have gone up slightly on a sequential basis, down on a year-on-year basis, although the stock has now moved to the highest point of the day, 1% higher for Indian Bank. We'll get more details on this. But the two new listings, Canara Robeco and Rubicon Research, we spoke to the managements of both of these companies about their growth outlook going ahead. Listen in.
We believe that equity markets will outperform all other asset classes 7 out of 10 years. That's our firm belief. And hence, we are positioned accordingly. 91% of our AUM mix is in equity because of that belief. The kind of AUM you get from the markets that you get that are very important, and from the kind of distributors that you get your AUM. That's important. But to me, if you have to put a single factor in terms of growth, it will be AUM growth that will lead to profitable growth overall. We will possibly launch another fund before the end of FY26. And clearly, in terms of growth rates, we believe that we can replicate similar growth rates as in the past, going forward, at least for FY26-27.
We'll continue to do our best. Our performance, and we'll continue to keep on focusing on our execution and our research and development. There are multiple operational levers to our business, including launches, a new plant coming on stream. So a lot of other, launches, a lot of our specialty business growing. As we move ahead in the direction and we go in this journey, I think we'll definitely work towards a broader guidance as we move to, and our business, as you know, is a R&D based regulated markets business. So I think as we move in the listed journey, we'll definitely come out with something more directional and more substantive to give you.
A healthy listing for Rubicon Research, 27% higher compared to its issue price. And now the other one, of course, RBL Bank, out of the F&O ban today. But the bigger story is the fact that Emirates NBD looking to acquire stake. Of course, we reported about this yesterday. Ritu is joining in with more details on this and the board meeting scheduled for Saturday. Ritu.
Well, as we've been reporting, the highly anticipated Emirates NBD RBL Bank deal is set to be announced very soon. In fact, we could hear about it as early as this Saturday when the RBL Bank board meets to consider and, if thought fit, approve a fundraising through a preferential issue or private placement, etc. Incidentally, that's also the day the bank is going to be reporting its second quarter numbers. Now, we had reported that Emirates NBD, the second largest lender in the UAE, is looking to acquire around 60% stake in RBL Bank in what is said to be a landmark deal, marking one of the largest foreign forays into India's private banking space. This is also going to, of course, factor in the mandatory open offer that Emirates NBD will have to make. Now, NBD, we understand, is going to acquire this through a fresh equity issuance to its wholly owned subsidiary, which means the entire investment is going to be directly infused into the bank. This is also important because RBL Bank's current foreign shareholding is well over 22%, and the fresh equity issuance to Emirates NBD will expand the overall capital base of RBL Bank such that NBD's stake remains within the regulatory FDI cap of 74%. Now, our sources also indicate the transaction is expected to be priced, of course, in line with SEBI's prescribed formula, but without a major premium to RBL's current market price. The transaction, of course, cannot happen without RBI's blessing, and they, we understand, have given an informal nod to this change in control. Formal submissions to RBI, of course, will follow once the boards approve these deals. Now, while RBI is not expected to relax the 26% voting right cap, our sources do suggest that they may offer a glide path to Emirates NBD, allowing it to gradually bring down their shareholding in RBL Bank. So October 18 is the key day to watch out for a firecracker deal in the banking system just in time for Diwali.
Ritu, thank you for that update. Take a short break. More news and updates on the other side. Welcome back. Now, in a significant diplomatic development, US President Donald Trump has said that Prime Minister Narendra Modi has vowed to halt purchases of oil from Russia within a short period of time, signaling a possible resolution to a key issue at the center of the diplomatic and trade rift between Washington and New Delhi. Trump revealed that Modi made this commitment during a previously undisclosed conversation on Wednesday. Listen to what he had to say.
We have a great relationship. He just said that 2 days ago, as you know. We have a great relationship. No, we were not happy with him buying oil from Russia because that lets Russia continue on with this ridiculous war where they've lost 1.5 million people, by the way. Russia's lost 1.5 million people, soldiers mostly. This is a war that should have never started, but it's a war that Russia should have won in the first week, and they're going into the 4th year. And I want to see it stop. So I was not happy that India was buying oil. And he assured me today that they will not be buying oil from Russia. That's a big stop. Who would think I created peace in the Middle East and can't get the two guys to settle? But I think we'll get them. But if India doesn't buy oil, it makes it much easier. And they're not going to buy. They assured me they will. Within a short period of time, they will not be buying oil from Russia. And they'll go back to Russia after the war's over.
The last line being the more important context there from Donald Trump. Meanwhile, the External Affairs Ministry has responded to these comments and says that India's consistent priority is to safeguard consumer interests in oil and gas imports. Parikshit is here with more details on this. Parikshit.
US President Donald Trump has made a big statement stating that the Indian Prime Minister has told him that India will stop buying Russian oil. They may not do so immediately, but they will do so in the next few months. The Ministry of External Affairs has reacted to President Trump's statement. While they've not confirmed or denied whether there has been any immediate conversation between the two leaders on shutting off Russian oil purchases, but they have indicated that India will expand the energy partnership with the United States. In a detailed statement, the MEA has said that India's consistent policy has been to safeguard interests of Indian consumers in a volatile energy scenario, ensuring stable energy prices and secured supplies have been our twin objectives, and we've been broad-basing our energy sourcing and also diversifying to meet market conditions, and this has been our stated policy. Having said that, the MEA has said that India has for many years sought to expand energy procurement from the United States, and there has been steady progress in expanding the energy procurement from the US as well. The current US administration is showing interest in exporting more oil and gas to India, and discussions are ongoing for future contracts as well. In this backdrop, we'd like to tell our viewers that according to industry sources, India has already purchased $8 billion worth of oil and gas from the US in 2025. This is already 60% higher on a year-on-year basis. Sources tell us that by the end of this year, these oil and gas purchases may even touch $12 to $13 billion, and possibly by the end of this fiscal, we would see a total purchase from the US to the tune of around 24 to 25 billion US dollars. Sources say that this itself would do a lot in terms of bridging the $45 billion trade deficit between India and the United States, and it addresses the concerns of the US in a great manner. Having said that, there has been very positive conversations and commentary on the India-US trade negotiations by both sides. Sergio Gore, the US ambassador designate, was in India. He's had conversations with a series of officials, including Prime Minister Modi. He's gone back with a positive message as well, we are told. Let's see what happens. India's Commerce Secretary is in US for negotiations. So let's see what happens in the next few weeks now.
Take a short break. More news and updates on the other side. Stay tuned.
पता है।
Welcome back. Double century almost again for the Nifty. 25,520 is where the index currently lies. The Nifty Bank also nearing record high levels, just 300 points adrift off that. And keep an eye out on 3 other numbers that have just come in during the course of the show. Mastech, Swaraj Engines and Indian Bank, the 3 stocks that have just reported numbers over the course of the day. Mastech now 2.25% higher after its results. Swaraj Engines has slumped to the lows of the day, 4.5% lower, while Indian Bank continues to hold on to gains of around 1%. We call time on this edition of Business Lunch. From me, thank you, and the team, thank you so much for watching. Midcap Radar on the other side.
Co-powered by SBI. Best है सबको पता है. In association with Prakash Surya Steel Tubes and Pipes and Hindware Italian Collection, designed for Sukoon. also powered by SBI. Best hai sabko pata hai. In association with Aditya Birla Capital.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. What a stellar move on the upside today. Nifty is above that 25,500 mark. And you know what? It is still not the most outperforming index. We are seeing good gains coming in from the banking names. Midcaps are slightly underperforming, but there are no complaints because the advance decline ratio strongly in favor of the advances.
Good afternoon, Sonal. Absolutely right. Our screen is green and especially the consumption pack after the results of Nestle seeing quite a bit of a positive rub-off. But we have a lot lined up on the show, so let's start off with the top headlines. Market at day's high as signs of a Trump-Modi alignment on trade ups hope of an early resolution on tariffs, lifting sentiment. Auto and consumer durables lead gains. Mid-caps relatively underperform.
BLS International surges after it bags a 3-year contract from the government to establish and operate Indian visa application centers in China. The stock is up nearly 9%.
It's a strong listing for Rubicon Research on D Streets. Stock lists at 620 rupees versus issue price of 485 rupees. Management tells CNBC-TV18 that their planned launches are already in progress and will continue to focus on execution.
Mutual fund player Canara Robeco AMC lists on the bourses with a premium of 5% against its issue price, but after that has surged 15% intraday after the listing. Management of the company tells us that they will see 30% AUM growth going forward.
The board of RBL Bank will meet on October 18th to consider a private placement of securities. The exchange notification comes at a time when sources point to Emirates NBD buying a sizable stake, and this ups expectations of a revelation soon on this.
All right, those are the top headlines. It's a 200-point uptick on the Nifty. Bank Nifty is up almost 600 points. The mid-cap's doing well, 300 points higher on that one. So let's go across to our special segment, Mid-Cap Movers. We have Ria to take us through the mid-caps that are moving around in trade. Ria.
Well, yes, starting off with the gainers first, Share India Securities is up 19%. It hit an upper circuit of 20% earlier in the session. This stock is continuing its gain after an 8% pop yesterday after the company issued an approved and 50 crore NCD issue. Tips Music is the next one, 8% higher after a strong set of results in Q2 of FY26. The strong growth for the company has continued and lower content costs have led to improved profitability for the company. Aether Energy also higher by around 7%, continuing its rally since its IPO in May, up nearly 120%, 127% since then. Ola Electric also hitting an upper circuit of 5% after entering India's battery energy storage systems market. Other gainers today include ITI, Craftsman Auto, Apar Industries, Sona BLW Precision, as well as BSC. Moving on to the losers then, KEI is down roughly 5% after recovering slightly from its 7% dip in early trade. The results were largely in line for the company, but the commissioning of the phase 1 of the Sanand facility of the company has been pushed back by 3 months. So that is what is leading to the steep fall in the stock price today. NetWeb is also down roughly 4% today, down 13% off its recent highs. However, after a nearly 150% rally in the last 6 months. Tata Investment also down roughly 2.5% to 3%. The stock is also down nearly 14% after Tuesday's high after the stock split. And Anant Raj as well as Max Financial also losing in today's trade.
Well, thank you so much, Ria, for joining us and giving us a list of all of the movers as far as the broader end of the markets are concerned. Well, let's now slip into a short break. The management of DB Corp joins us next to discuss their Q2 numbers and more.
Welcome back. You're still tuned into Midcap Radar. The stock on our radar now is DB Corp. The net profit has surged 13% YOY in quarter 2 FY26. Margins have expanded to 22.5%. The stock is higher by 2% as we speak. Spike post numbers. Girish Agrawal, who's the promoter director at the company, joins us now to discuss the quarter gone by and the outlook going forward. Mr. Agrawal, good afternoon. Thank you so much for joining in. Well, your ad revenue growth has been strong this time. If we talk about on the quarterly basis, it is up 12% on a YOY basis, and when you say if you exclude the early festival benefit as well, it's high single digit. Now quarter 3 also is festive season. Do you think this is a trend that will continue for the full year? What kind of ad revenue growth you are looking at? Because in the first half it's just 2%.
Correct. So I think with the GST momentum happening, we are confident that this number of high single digit should continue for the balance 6 months also. Because in this quarter, the advantage came from the festive, because the Navratra started from 22nd and the GST benefit also happened. But I think the whole momentum in the country is taking shape. So hopefully we should be able to close the year with a strong single digit.
Okay.
And I think one more important aspect, what is happening with the print industry is the overall growth. If you look at the circulation wise, as per the Audit Bureau of Circulation, there's been a 3% growth. Around 8 lakh copies has grown over last 6 months. So I think that's a very positive indication in the country that the newspapers, that people were thinking that going down, are largely stable and showing a 1 or 2% growth in the circulation. I think that's a very positive sign.
Okay, Mr. Agarwal, like you said, a couple of triggers for you. Q3, number one, festival season continues, and you also have the Bihar elections that are upcoming. Typically, during state elections, what is the kind of bump up you see, especially as far as the ad revenues are concerned, and will it be better than what you saw as far as last year is concerned?
Maybe not, because Bihar is not that big a market, and that not large a state where crores and crore rupees are pumped in the market by the political parties. So I really not see very huge uptake on Bihar election.
So despite that, you're guiding for a high single-digit growth as far as ad revenues are concerned. Okay,
that's what we've been trying for. It looks like that because of the GST momentum, that should happen.
Okay. Mr. Agrawal, I wanted to understand the sectors which are contributing to the ad revenue growth. Is it real estate? Are you seeing it more come from consumption?
All of them. So jewelry, strong double-digit growth. Real estate, FMCG is flat. But healthcare, IPO business, education, they all are in this quarter on a good double-digit growth happening.
I'm surprised. You are saying FMCG is flat. Do you think that is something that will improve because of GST cuts? Because that is one space where the consumption boost or consumption push has been around.
We are hoping so, because now, as guided by the couple of the FMCG companies, that quarter 3 and 4 will take some benefit for them. If that happens, the advertising should go up there. But I think I'm banking more on the real estate sector, because this GST benefit has directly not been observed by this sector as of now, because the benefit which has happened in the automobile or other sectors, the real estate has not got a major benefit out of it. But I'm sure the whole cycle, so from next month onwards, we hope that the real estate sector goes up and the advertising comes from there.
Okay, Mr. Agarwal, the other thing that the street wants to know is, especially when it comes to FY26, and especially for the app-based business, the subscription come advertising-led digital monetization. What is the kind of growth that you're seeing over there? FY26, what are the targets?
We have got around 20 million MAUs on our app, which is a monthly active users. And our focus is to grow that number. Frankly speaking, monetization is a later stage once you have the critical mass with you. So we are really not focusing much on the monetization. Idea is to take this 20 million number to much higher. And I think if you compare DB app with other players in the market, we are doing amazingly better compared to any other player.
Okay, so what are the numbers looking like for the app in terms of revenues, the bottom line, the digital business overall?
Very minuscule, because we are in the development stage, we are in the investment stage in the app business. So we are not really focusing on the numbers in terms of revenue. Idea is to focus on the acquisition of the customers with us, readers with us. So we're focusing on the...
Yes. No. So for that focus, or to acquire more customers, is there a kitty you have set aside for investment? What kind of money will you be putting in there? Any further investments in the digital business overall? Because of course, digital is the way to go when it comes to media now.
See, DB Corp as the company has a profit of almost 650-700 crore rupees EBITDA. And I think whatever is required for the investment in the digital, company is capable enough, and we are doing it with the approval of our board. So nothing out of the context need to be spent in the market, because digital will grow based on the content. And most importantly, we are focusing on the content. So for example, my salary bill as a company last year was 450 crore rupees. And if I have to invest more, increase more manpower on the ground for news coverage, I'll be more happy to do that.
Okay, Mr. Agarwal, again a hygiene question. Newspaper print prices, how has that trended, and what kind of impact do you see on EBITDA margins?
Thankfully, the newsprint prices are under control. They're maintaining the same numbers. So that's one big relief we have with us. And I'm hopeful that for the next 2 quarters, the numbers should largely stay there only.
So the EBITDA margins will stay at current levels in that case?
Yeah, in print, we have a EBITDA margin of 30%, and we hope that this 30% for the print should continue.
And consolidated, this quarter was 22.5%. What's the target for FY26?
Largely there, or maybe improve a bit, because in radio, we have now got 14 more stations. So we hope that those stations should become operative sometime, some of them in the Q4. So that revenue should also come into the system.
Take that point, Mr. Agarwal. Always a pleasure speaking with you. Festive greetings to you and everyone at DB Corp as well.
Wish you also.
With that, we'll wrap up on this conversation. But before that, a quick note for our viewers. As you can see on the screen, we did see for DB Corp as well, there is a money control stock score just above the line graph. This is a score assigned to these stocks. This is basis a lot of parameters as well. It is basis the algorithm, which is after analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions.
Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, the market continues to do quite well. The Nifty up over 0.9%. Well, one particular sector especially doing very well today is the Nifty FMCG pack after the very encouraging results from Nestle, where the company handsomely beat street estimates as far as volume growth was concerned. Now, that particular sector has taken off quite well in the session today. Have a look at Nestle, that particular stock higher by over 3%. Along with that, Varun Beverages, that is the other stock from the FMCG pack, up over 3% today. Names like Colgate-Palmolive, Tata Consumer, all of these stocks near the day's highest point. In the last half hour or so, what's also done well is the Nifty Metal Pack. After starting the day on a subdued note, it's seen some action and some pickup in buying, especially over the last half hour or last 1 hour, you could say. Look at names like Tata Steel, that's doing very well. Jindal Steel up over 2.5%. Jindal Stainless, that particular stock too has picked up quite significantly. Names like Hindalco too near the day's highest point. But remember, today we had two new kids on the block. Canara Robeco AMC and Rubicon Research made their D-Street debuts today. Earlier, we spoke to the managements on the company on their growth outlook going forward. Let's listen to snippets from those conversations.
We believe that equity markets will outperform all other asset classes 7 out of 10 years. That's our firm belief. And hence, we are positioned accordingly. 91% of our AUM mix is in equity because of that belief. The kind of AUM you get from the markets that you get that are very important, and from the kind of distributors that you get your AUM. That's important. But to me, if you have to put a single factor in terms of growth, it will be AUM growth that will lead to profitable growth overall. We will possibly launch another fund before the end of FY26. And clearly, in terms of growth rates, we believe that we can replicate similar growth rates as in the past going forward, at least for FY26-27.
We'll continue to do our best. Our performance and we'll continue to keep on focusing on our execution and our research and development. There are multiple operational levers to our business, including launches, a new plant coming on stream. So a lot of other launches, a lot of our specialty business growing. As we move ahead in the direction and we go in this journey, I think we'll definitely work towards a broader guidance as we move to, and our business, as you know, is a R&D based regulated markets business. So I think as we move in the listed journey, we'll definitely come out with something more directional and more substantive to give you.
Well, that was Rubicon Research Management telling us about the way forward, higher by over 25%. But moving on, French luxury department store Galeries Lafayette is all set to open its stores in Mumbai next month. They've teamed up with Aditya Birla Fashion and Retail to bring high-end French fashion to India. My colleague Shilpa Ranipeta spoke to Nicola House, Executive Chairman at Galeries Lafayette Group, and Ashish Dixit, Managing Director of Aditya Birla Fashion and Retail, and began by asking about their new store in Mumbai.
So I think as far as this store is concerned, you can see today it's almost there. Yeah. We still have a few things to fix, and I think first week of November is when we are targeting to open. Right. Between 1st to 5th of November is when we expect this store to open.
Right. And
as far as the Delhi is concerned, we are still in the process of identifying the right place and the dimensions of the store. We'll also have the benefit of some of the learnings that will come to us as we open Mumbai first couple of months. It could be anything from 2 to 3 years by the time the store actually comes up, because that's what it takes to build a store of this nature, as you can make out.
In the store there will be 270 brands. Out of them, 70% will be for the first time their presence in India. So it's lots of newness. And there will be French, international, and of course also Indian brands.
And if I could understand, what can we look at then for the rest of the year, a steady state margin profile for the business? Because I believe Pantaloons has been doing better. I think you had sequential margins of about 17% last quarter, correct me if I'm wrong. Pantaloons was doing a lot better. You've worked a lot on rationalization, consolidation of stores, etc. So how can we look at the margin profile then?
I think at this stage, I won't be giving guidance for the second half. But as you can see, the trajectory over last couple of quarters, and in fact, last 18 months has been very promising. Mm-hmm. We built a very impressive set of new businesses in last 2 or 3 years.
Yeah.
Building new brands and businesses takes time, and turning around is also, acquired businesses also takes time. But I think all of that is pretty much work which is beginning to show results. I'm very confident that every quarter you'll start to see the improvement as we've been showing in the last couple of quarters.
Well, French fashion in Mumbai soon via Aditya Birla Fashion. Well, a couple of stocks that are reacting in a subdued manner to the results. The first one is, of course, HDFC Life. Have a look at HDFC Life. The company has guided for a slightly muted margin trajectory as far as H2 FY26 is concerned. HDFC Life down over 2%. And taking cues from the results of HDFC Life is Max Financial. Remember, they have Max Insurance, and that particular stock has fallen close to 4% in the session today. Along with that, Yes Bank, that particular stock too near the day's lowest point. On the other hand, what's doing well are the CDMO names, and Syngene near the day's highest point. But with that, it's all the time we have on this edition of Midcap Radar. Mutual Fund Corner when we return.
Co-powered by SBI. Best है सबको पता है. In association with Aditya Birla Capital. Co-powered by SBI. Best है सबको पता है.
Hello and welcome to the Diwali special edition of MF Corner. I'm Sonal Bhutra and with me is Vinny Motiwala, wishing all our viewers a very happy and prosperous Diwali. This is a time for a lot of excitement, right? We have Dhanteras on Saturday, then we follow it with a lot of festivities. So wishing all our viewers a very prosperous one. But what a Samvat it has been when it comes to markets, when it comes to the returns that we've seen in the mutual fund industry. Before we toss to our guest for the show today, let's talk about the big moves that we've seen this time, Vinny.
Absolutely, Sonal. Firstly, festive greetings to you as well, Hope we all have a prosperous new year. But it's been an interesting year, like you were saying. And what was shining the most was gold and silver. That took the center stage. And obviously, this was in Samvat 2081. While obviously hybrid asset allocation funds, when you look at that, that was also a steady, modest gain, what they managed to see. Equity-heavy domestic mutual funds, that struggled a bit to keep up with the pace. And as we enter Samvat 2082, what is the big question now? What is the next mutual fund industry story that we're watching out for? What is the next sector that we should keep an eye out on? What are we watching out for? We have Ashish Gupta, CIO at Access AMC, as well as Ajay Khandelwal, the fund manager at Motilal Oswal AMC, joining us to talk to us about the expectations from the industry going forward and what we are keeping an eye out on. Ashish as well as Ajay, good afternoon. Thank you so much for joining us on the show, and festive greetings to both of you as well. Let me start with the main question now this time. It's when you look at it on the year gone by, or we're spoiled maybe in the last couple of years when you look at it as well, in terms of the performance that the industry has given us. Now, which segments are there that surprised on the upside or maybe failed to surprise you all also in Samvat 2081? And what are the signals that you actually saw in terms of pivoting your allocations in this Samvat that has gone by? Ashish, first you.
Thanks, Vinny and Sonal, for having us, and greetings to you for Diwali and all your viewers. I think last 12 months has been an interesting time. I think when we entered Samvat 2081, the market mood was very different than what it is today. But actually, there were multiple signals, and that provided interesting opportunities. So if you go back about a year from now, the focus was entirely on the small and mid-cap space. And actually, the entire industry was focused just on funds in those categories. We actually saw the strong pipeline of IPOs and supply that was coming in that space, and we reduced our exposure in that segment. Similarly, if you recall, after the changes at the RBI stands towards monetary policy change from January of this year, and that was really a big signal towards increased allocation to the financial sector, both the banking sector and NBFCs, and we believe that is something that has played out for the last 9 months and will continue to play out for the investors over the next year as well. The third big one was really more recent when we saw more decisive government action to spur consumption. We have had the largest ever cuts in GST, and I think consumption is a theme that is coming more center stage on back of that. So those are 2-3 kind of big macro triggers for shifts in allocation that we saw over the last year.
Some interesting themes that worked out, right? Very interesting insights as well. But Ajay, what's your take? What are some of the themes that you think could work in the next Samvat, and you can pivot your allocations accordingly?
Hi. So happy Diwali to all the viewers in advance. Coming to themes, I think given the uncertainty in market and because if you look at last, as Ashish also explained, whatever has happened in last 1 year, I think some of the sectors which are very well placed according to us, our financials, where we believe NBFCs, capital markets, they will do very well. And another interesting sector, I would not say sector, but another theme that we are looking at is that there are a lot of these companies which are putting up capacity to substitute imports. Now, this is something where we believe that because last year has been volatile, there's been impact on operating performance, but this year I think all those things will iron out as soon as the capacities will come on stream. The import substitution, I think, will lead to P&L improvement drastically. And also, I think with the cuts, urban consumption, because it has suffered for now almost 2 years, I think urban consumption will make a comeback along with the premiumization. So I think these 2-3 things will continue to do well in this year.
Absolutely. So consumption is one theme that I think everyone's talking about coming back, and this GST cut is something that is going to give it a boost as well. Ashish, while when you talk about the reality check that we got in terms of the mutual fund industry, because when you look at it in terms of returns also, look at the multi-cap, flexi-cap schemes, they were actually the ones that were posting some bit of a modest gain that we saw coming in here, not even great returns. So what is it as an investor that should maybe be my key learnings that I should be keeping an eye out on? If the market continues to be volatile, what should the expectation now be for Samvat 2082?
So I think, first of all investors, and particularly equity investors, have to be clear that markets are inherently cyclical, and volatility is part of the equation. Even if there is a structural uptrend, you will never have a linear move in the market. Right, and having spent 30 years in the market, from we have seen Asian crisis, dot-com bubble, GFC, COVID. I think volatility is natural, and while last year has not been great for market, I think it was a good consolidation phase for the market. We have seen market expectations become more consistent with the earnings growth trajectory that has come in, because over the last year, the pullback in market is largely in line with the earnings downgrade we saw. So we have seen about a 10% downgrade in earnings expectation. And as you were highlighting, the pullback in the markets has been depending on the part of the market you are in, between 5 to 8%. So I think there has been a recalibration of expectations. If I look at the year ahead, I think we are looking at a period of better earnings growth, and we see less risk to earnings coming through. So I think the earnings have bottomed out now. And actually, FY27, we think earnings growth will move up from the single digit that we'll see in FY26 to somewhere between 15 to 17%. So we do expect a period of better performance from the market, despite all the global headwinds that are still around us.
Take that point. Ajay, we've seen this big rise in the SIP base, right? Every month we are talking about record high numbers. But as we did see Ashish also mentioning that earnings growth that has bottomed out now, we'll continue to see higher numbers from here on. What would you say to new and existing investors? What kind of return expectation should they have on the markets now? Because that is exactly what everyone wants to know when they look at specific mutual funds to invest in as well.
Yes. So continue to what Ashish said. See, we have in last 25 years not seen 2 consecutive negative year return in market. So I think that way we are placed well in terms of market where it is there. Secondly, for us it is fairly simple. Last 1 year there is no return, whereas in 6 months' time we'll start looking at FY28 numbers. So practically 3 years of earning roll, and there is no return. So from that perspective, I think markets, according to me, should be broad-based. And SIP investors should take this opportunity to actually add for the time being to their allocations. They should increase their SIP amount because I think market will be broad-based and this will be a good year.
Okay, markets will be broad-based and this will be a good year. That's the word coming in from Ajay. But on that note, actually we're going to sip into a very short break. Don't go anywhere. We'll come back and discuss more in terms of trends now that we're expecting to see in Samvat 2082.
Welcome back. You are still tuned into the Diwali special edition of MF Corner. We still have with us Ashish Gupta, Chief Investment Officer at Axis AMC, and Ajay Khandelwal, who is the Fund Manager at Motilal Oswal AMC. Well, we've been talking about the equity part of things and how markets reacted or performed there. But commodities, that has been one space that has surged. And how? I was looking at the returns, gold up anywhere between 55 to 60%, those ETFs doing well. Silver ETFs, they are trading at a premium. What's happening here? Ashish, let me come to you. Do you think this is something that could continue and investors should continue to look at this particular segment? How are you looking at the gold and silver ETFs performing from here on?
Sure. So, Sonal, first let me clarify that within commodities as well, we have not seen a broad-based rally.
Yeah.
We have seen precious metals like gold, silver do well. More recently, copper has also started doing well. But if you look at, for example, energy commodities, they are actually not performed well at all because global demand outlook continues to be weak. Precious metals has been another story, and the reason for that is that currencies have two roles to play, or two large roles to play. One is as a means of exchange, and secondly, a store of reserve of value. And as over the past 12 months or 24 months, you have seen the confidence in US policy making become weaker. People have looked for other stores of value. And really, that's where kind of gold and silver have come to prominence. As you know, US has the largest monetary base. US M0 is itself is just $6 trillion. US M3 is more than $20 trillion. So as people have started to kind of look for the more diversified stores of value rather than USD, there has been incremental investments that have gone into gold and silver, both from investors as well as central banks. So I think this trend is likely to continue, given the fact that there are more rate cuts expected in the US, despite US inflation still looking up. And investors need to have an allocation to these in their portfolio. Having said that, I think like we were seeing in the small and mid caps last year, one should not really expect the returns of the last 12 months or 24 months to be repeated. So, for example, gold is now up 40% each in 2024 and 2025. So I don't think people should invest with that kind of return expectations from these metals in the short run. But I think as a store of value, these are important asset classes. And really, while making a portfolio, you need to have uncorrelated assets to enhance your risk-reward profile.
Absolutely. Don't expect those high returns coming back again. That's the word there. But yes, because look at the commodity funds, right, which are this on an average, which I was looking at it. Gold commodities on an average, the return that came in the last 1 year, 63%, 92% came in from the silver-related commodity funds, ETFs, fund of funds. All these have given fabulous returns, but don't expect similar returns coming in. Ajay, you know, the point in terms of commodity side investment, as well as what do you think are going to be 3 themes or sectors that one should now monitor in this new Samvat, which would give them good alpha generation?
So as I explained earlier, I think financials, because what we have seen is that in terms of lending, I think the growth rate will improve. With interest rate going down, liability repricing will happen and margins will also see improvement. The asset quality pains are almost over. So I think financials will do well, and within there also, I would say NBFCs will grow faster. They'll continue to win market share. And in terms of price action, I think capital market, some of the intermediaries in capital market, they have seen much higher price correction than what is actually in terms of business performance, what was there. So they will do well. Apart from that, I think healthcare will continue to do well. Urban consumption, these are few things which we believe that they will continue to do well in this year also.
take that point. So this is all about what could do well, what the market outlook is, and the entire macro perspective on mutual fund investments as well. But Genuine, we do have a rapid fire for you. In fact, Winnie has drafted all those questions for both of you. So let's get started with that one. In this question, we'll ask the question and we'll request both of you to answer that. Let's start with the first one. Ashish, this is for you. Your Diwali bonus. Would you invest it in an SIP, multi-cap fund or commodity mutual fund?
So I think it will be a multi-cap fund at this stage of the market. I think after the pullback over the past 12 months, it's a good time to be investing in equities.
Okay, multi-cap fund, that's the pick coming in from Ashish. Ajay, your word, multi-cap fund, commodity side of fund, any other sectoral fund?
Multi-cap and even sectorals, because as I said, I believe markets will do very well this year. There will be broad-based rally. So some of the sectors which are adversely impacted because all the uncertainties that has played out in last 1 year, I think we will see a strong comeback there also.
Okay. So that is also sectoral, also some of the themes that you have mentioned also is something that we could look at. The next one, Ashish, if you could give one thumb rule for SIP investors heading into Samvat 2082, what would it be?
So I think just that you need to stay disciplined, use volatility as an ally rather than something to be. So use volatility as an opportunity. And use the pullbacks in the market to stay consistent with your SIPs.
What about you, Ajay?
As I said, these are good opportunities where market has given practically no return. And in last 25 years, it has not happened for consecutive years. So please use this opportunity, add to your SIP amount and take advantage of it.
Okay, we talk about a lot of things which are trending in the market. It's all about trends on social media or otherwise in the market, right? What, according to you, Ashish, is the biggest myth about multi-cap funds or flexi-cap funds you would like to bust for the retail viewers?
So I think one simple thing is that multi-cap and flexi-cap are not the same funds. So multi-caps have to invest 25% of the AUM across all three categories, large, mid, and small. And flexi-cap can invest in any proportion. So they are not really the same category of funds. Both are distinct from each other.
Ajay, one sector that you think maybe is overhyped and something that one could avoid?
So see, there are, you will find companies in all the sectors where sometimes the price performance run ahead of numbers. There are certain sectors where Street has started valuing on order book. So we need to be careful with the narrative and numbers wherever, and especially during these uncertain times where somebody is losing market share or working capital is getting stretched. That is where I think we need to be very careful. So there are enough examples in all the sectors, but by and large, I think these fundamentals is something which I would like to highlight here.
What about you, Ashish? Any specific sector that you think is overhyped, or you would go with Ajay's answer?
So I would, in fact, not a sector, but I would say, Ajay spoke about the capital market theme. We also believe in that theme, but we would really not recommend having exposure to companies that have high exposure of products like derivatives, because I think regulation there are evolving and that might put earnings at risk.
Ashish, a quick one. What are the three themes maybe that you are looking at in 2082, Samvat?
So I think Ajay spoke about financial, so I would not kind of repeat that. The three I would add, one would certainly be defense. I think both in India and globally, spend on defense is increasing, and in India, there is also a push towards indigenization. So I think we should see companies in that sector do well. Consumption, not just because of the GST rate cuts, but we are seeing both patterns of consumption changing with the Gen Zs as well as new channels for consumption take root. And I think companies that are at the cross-section of this are really going to benefit. Third, I would say specialty manufacturing and automation. I think that's where we are seeing globally companies gain market share. So I think those three would be my picks in addition to the financials that Ajay spoke.
Take that point, Ajay and Ashish, thank you so much for joining in today. It was a pleasure speaking with the two of you, and festive greetings to you and everyone at your companies as well. That's all we have on this Diwali special of MF Corner. Thank you so much for tuning in. But we'll take your leave. Thank you for watching and stay tuned for more news and updates.
Co-powered by SBI. Best है सबको पता है. Powered by LIC, हर पल आपके साथ. Co-powered by SBI, best है सबको पता है.
To understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
A positive start is what we're seeing coming in for the Asian market.
He assured me today that they will not be buying oil from Russia.
Some positive comments coming in from President Trump, which will help sentiment on the whole, and that could be the big driver.
Considering the country's growth ambition,
the banking industry has a major role to play.
India is not important for the strategy of Hyundai, but it is the strategy of Hyundai itself.
25,400, a gain of 78 points.
If things fall in place, this underperformance can reverse fairly quickly.
We did see market share expansion, both in Q2 as well as overall in H1.
We are building a retail franchise. We want to have a dominant position on the retail franchise.
When you say parabolic rises in 1 or 2 months, like silver has just gone parabolic, it has to pause, maybe correct a bit.
Exports grew 14.5% versus, again, expectations of 8 to 10%.
We built a lot of tools, to help investors invest in the markets.
What a stellar move on the upside today. Nifty is above the 25,500 mark.
Well, it's beginning to look and feel a lot like Diwali. Look at the markets go, right? Up and away. The Nifty is now close to the 25,600 mark. And yesterday, we added about 170, 180 points in the Nifty. Today, we've added another 265 points. Very, very strong. You're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema. With me are Nigel and Ekta. Hi, guys. 1 hour to go. Where do you think we'll end?
I think we'll end at the highest point since July 2025. We're just looking at the data. We haven't had a close at around 25,600 all the way since July 2025. So that's going to be important. And today, actually, sentiment was good overnight because of what Mr. Trump had to say. It appears India is moving towards a deal with them, hopefully. But earnings reactions have been positive. Axis Bank on another day could have been down. Today, the stock is up still 2%. Street is willing to look ahead and believe that the best is yet to come. And even Nestle, that's delivered a good set of numbers. The street is believing the sector has turned. So Nestle has spiked up and the entire FMCG pack as well. Sharp spike is what we got. Pat, as those numbers did come in there. So, that's definitely driving sentiment that earnings are beginning to turn. So
and even IT wasn't bad, right? The picture that we had so far. And today, of course, the 2 earnings reactions that he spoke about.
Yes, and we've got 2 good listings as well in today's trading session. So I think everything seems to be on the positive side. But if you're talking specifically about the financials, I think, the Nifty Bank nearing that record high in today's trading session. There's a lot of buying and a lot of optimism, which is actually seen in the banking space. And not to mention that we have a whole host of banks which will be coming out with numbers in the next few days. Saturday is actually going to be a Diwali for banks when they come out with numbers. We have the likes of, ICICI Bank, Federal, HDFC Bank, PNB, J&K Bank, RBL, IndusInd, all of them releasing numbers on Saturday. So there's a lot of optimism ahead of that, and maybe Axis is setting the base a little bit, in terms of what we can possibly expect. But nonetheless, that's on the markets at this point in time. But let's tell you what we have lined up on Closing Bell today. Earnings fire up the markets. The Nifty is perched at day's high above 25,500 levels. Even amid broad-based gains, it is the autos, FMCG and real estate counters leading the way today. The star of today's session is Nestle. Domestic sales led growth furthered by volumes in high single digits in the quarter gone by. A detailed fine print of those numbers coming up on Closing Bell. Among other stocks reacting to numbers, we have HDFC Life, which is downbeat in trade after Q2 performance, fails to woo the street. Details on the performance in the quarter gone by coming up. And in earnings expectations, we'll tell you what to expect from JSW Steel in the quarter gone by as well. All right. Well, in any case, we do have Mitesh now joining in to tell us how one should position themselves in what is a very lively market. Mitesh, well, I think it's time to wish you a happy Diwali. At least the markets are indicating that at this point in time. So give us a sense. What's your strategy this afternoon?
True. I think, this does feel like a festive season. And, in fact, I was highlighting this level of 25,630 odd, which is where we got the highest closing on the 27th of June. And I said that most likely we will get towards that and test that. Now that we are close to it, my advice is please take some profits on the long positions. Maybe you get a day or two of pullback, but I think the structure is on the positive side, which means that eventually you should get past 25,630 as well. And then therefore you should look at fresh targets, and which could be in vicinity of 25,900 to about 26,000. So I'm broadly positive. But tactically, given the fact that last 2 days has seen a rally from 25,100 to about 25,600, 25,630 was the earlier high, I think it makes sense to take some profits off the table.
So take some profits now, and when the Nifty crosses 25,650, you would look to add to your long positions towards 25,900, 2,600. Is that correct?
That's correct.
Okay. What about stocks, Mitesh? Hi, afternoon.
Yeah, hi. I have actually two buy calls right now. HDFC Bank is a buy with a stop at 979 for targets of 1,020. And HUL, after a long time, has come on the buying radar. That's the buy with a stop at 25.34 for targets of around 25.90-95.
Okay, all right. Thanks a lot, Mitesh, for joining in and giving us those calls. We'll re-invite you on the show later on today. By the way, from the broader markets, actually, there are a few stocks that are doing pretty well as well. Pull-up tips. That one's up close to 7%. So good move is what we're seeing on that particular counter. Sharp spike up is what we're seeing. Good volumes as well on tips. And Ather Energy as well, a company that's been gaining market share. The street likes it. And in fact, from low teens market share, they moved to high teens. That stock continues to run away. But
I think Nifty Bank has hit all-time high levels.
No. Nifty Bank.
Nifty Bank, yeah. Nifty Bank is at all-time high levels, while the milestone on the Nifty is 25,600.
Yes, so the best level since the 2nd of July, no complaining coming in there. 25,612 is currently where the Nifty is at. Bank Nifty at a record high.
Yeah, and the gains are coming on very rapidly, right?
Yeah.
When just 5 minutes back, when I was looking at the Nifty, we were up 260. In 5 minutes, we've added about 30 points on the Nifty. So I'm saying the last leg, push, the gains are piling on very, very rapidly. But let's talk about
Yeah, I think the Nifty Bank, actually, we should get the number up. I think it's 57,000. What's the number on the Nifty Bank, actually?
59,300 odd.
Yeah, no, 57,500.
57,000.
The high, I think, the all-time high, I think, is around 57,628. I think we have 100 points or so to get there, unless in today we had a tick that went above that mark. Yeah, so I think we have around 100 points or thereabouts to get on the Nifty Bank. 57,628.4. That's the highest level we have seen on the Nifty Bank. Probably it's at a 52-week high, though. We'll get back to that data point. Well, let's talk about the stock of the day. Nestle India gaining in trade after reporting a solid showing in Q2. Mangalam joins us to dissect those numbers. Mangalam?
Well, the first FMCG company major to report their second quarter numbers on the street is not going on with a lot of expectations, but more importantly, it's also the first quarterly performance under the new leader for Nestle India, Manish Tiwari, and what a performance it has been. The company's reported strong double-digit revenue growth. In fact, the street was working with a number of just 5285 crores, which would imply a 3.5% sort of growth. The company's gone ahead and reported a 10% plus revenue growth at 5600 crores. In fact, the EBITDA as well has been a beat against expectations. The margins a slight miss, but nothing really to complain, because on an absolute basis, the EBITDA and the revenue have been strong beats. And the net profit as well, 753 crores versus street expectations of 710 crores. What is it that led the growth? Domestic business grew about 10.8% versus expectations of 3 to 4% growth. Exports grew 14.5% versus, again, expectations of 8 to 10%. So both on domestic and exports, the company has done a lot better and led by strong double-digit volume growth in a lot of their categories. In fact, the company says 3 out of their 4 product groups delivered strong volume-led double-digit growth. And there was distribution expansion in products like KitKat, which aided volume, especially in the rural markets. We've been talking about how rural and T2 are doing a lot better this time around. Even Munch and Milky Bar did well. Pet food business reported high double-digit growth. In fact, the best ever since incorporation of that business into Nestle itself. The only near-term worry, so to say, is the gross margins. They compressed about 230 basis points. The street was working with a number of an 80 to 100 basis points compression, but nothing really to worry about there, because milk prices are expected to soften after the festive season. Coffee prices also expected to stabilize, if not fall, and edible oil prices are the only ones which are likely to remain firm. We are seeing some moderation in cocoa prices as well. So all these factors doing extremely well. Apart from all of this, what the street was eyeing is the leadership strategy under Manish Tiwari, and that has been outlined as well. They've said they're focused on penetration-led volume growth. In fact, they will invest in growth, accelerating investments in both brands as well as manufacturing capacities. This after they've increased their capacity in the Sanand facility. And finally, the endeavor for the company remains fast, focused, and flexible. All these factors working well for Nestle. The stock is about 10% away from record high. Did well in yesterday's session. Is doing well today as well. Trades at a premium to the FMCG sector. But if it continues this kind of outperformance, there's no reason to believe that this premium won't be justified.
Thank you. Very well explained. And now Nestle is just 5% away from its all-time high level. The all-time high is 1347 on Nestle, and the stock is now at 1280. So not much distance to go after today's 5% gain. Devin, are you surprised by Nestle's strong numbers? Look at the volume growth. Much higher than the muted 1-2%. And we thought bulk of the benefit on account of GST festivities will come in Q3, but it looks like it's been an early Diwali for Nestle. I mean, what does one do with Nestle given the valuations? And should we expect similar numbers from the rest of the staples pack?
Yes, Rima, good afternoon. Well, I think not completely surprised so, because I think we have been counting on the possibility of a very strong tier 2, tier 3 dominance. These particular companies are having both HUL and Nestle, including Britannia. They are actually, I think, penetrating into the hinterland in a very systematic manner all these years. And what I like most about these companies that they are actually, I think, been adapting the AI in making, in reaching out to the distribution points in a very systematic manner, which means that I think the logistic part of the problem, which otherwise I think used to result into some kind of discounting of the products because of the bulk storage at some point of time with this distributor, is now a matter of past, and this is getting reflected into the margins as well. So in my viewpoint, I think though the numbers have come and the tier 2, tier 3 are the dominant force, I believe that I think the impact of reduction in the price due to GST, etc., is likely to play out over the next 3 to 4 quarters in a very systematic manner. Till the time next year, I think when we start looking at the result on a higher base of current year, I think you should be seeing next 3 to 4 quarters as a very systematically high quarter for some of these FMCG companies, and particularly the likes of Britannia, likes of Nestle.
Okay, all right. Deven, wanted to ask you about the cables and wires players. For one, Polycap actually has recovered from the lows of the day. I recall the stock was down close to 3%. Good recovery is what we're seeing on Polycap. But KEI Industries, the stock continues to remain under pressure as the street is disappointed by the slight miss in revenues as well as profitability. Also, they're a little bit disappointed with regard to the commissioning of the new facility. We spoke to Anil Gupta, the chairman and managing director of the company. Let's listen in to what he had to tell us.
I hope that we will be able to maintain around 18 to 19% of export of our total revenue in this financial year. We have grown by around 22% in this quarter in our wire and cable segment because of the fall in the revenue from EPC department. We have already stated in our past several years that we are reducing our EPC business, and that is under that policy. So the overall wire and cable revenue has grown by 22% in this Q2.
Okay, all right. Deven, what do you make of this one? KEI Industries, first look at it, you'll say 22% growth in cables and wires business. Things look pretty okay. The problem, I think, from a market perspective was bulk of the volume growth came in because of exports, though it's a higher margin business. The fear is that the domestic environment is not too good. The second point is gross margins went up, but EBITDA margins didn't go up by as much, and the commissioning of the facility gets delayed by a few quarters. So I guess put that together, and not very cheap valuations. The street didn't like it. But what do you do from here? You look to buy the dip?
I think the last point which you made, Nigel, I think is a pertinent point. I think the valuations in the last 6 months, I think if you see the price trajectory, I think the prices have moved up for the stock. And that's the reason for which I think after the result announcement, I think some amount of softness called profit booking is being seen. At the same time, I think there is going to be a slightly challenging environment going forward, particularly because of the stronger commodity prices, the copper prices. And that's where probably I think on contract to contract basis or supply to supply basis in this case, we'll have to see how exactly I think they're passing on the cost, I think, to the end consumer. Should it require to be absorbed at some point of time? And that's the little amount of, I think, concern for most of the analysts. And that's where I believe that I think some amount of subdued, what we call, I think, the performance of the selling, which is currently happening, is justified. In my viewpoint, while I remain confident about the strategy implemented by likes of Polycap, because I think they are creating vertical-wise presence in different verticals with the specialized products within the wire and cable space, we believe that I think that company would continue to have edge or others, particularly in the form of, I think, enjoying a little better margin. So clearly, I think the distinction is now being made with the larger ones like Polycap vis-a-vis the other players at this point of time in the market.
Okay, so that's on KEI Industries. That stock is down around 6% It's sticking to its guidance, however. But the other one which we just want to talk about is HDFC Life's Q2 results, which really impressed the street. Yash is here for a quick read-through in terms of the performance this quarter gone by. Yash, tell us more.
Well, very quickly, what do we know so far? The results on all counts have been in line with what the street was anticipating. In fact, there has been a beat of about 100 basis points which has come on the margins as against what the street was anticipating. In that case, why is the stock down? Of course, at opening trade, the stock was down as much as 4%. Now it's down about 2.5%. There are three important reasons which really come for that particular move on the stock. One is that the management in the interview given to CNBC-TV18 said that for the current financial year, the margins will remain at current levels. That is about 24 to 24.5%. The street was anticipating that there could be some improvement in the margins in the second half and for the year, but that the management does not believe so and expects the margin to remain at current levels. And any improvement will only come from FY27 onwards. So that's the first point. Second one, there has been no decision on the commission cuts in the passage to distributors yet. There are renegotiations which going on, which puts an uncertainty in terms of how much pressure will HDFC Life have to absorb on its books and how much will be passed on to distributors. So that's the second uncertainty. The third one is that the management in the interview again to CNBC-TV18 has guided for early teens growth. Now early teens anticipating or assuming that it would be about 13%. In that case, there are peers which are delivering much superior growth at the same valuation, which is about 2.2 times price to embedded value forward. So at the same valuation, if there is an avenue for higher growth, then of course investors might look at those options as well. Explains why the stock is behaving the way it is today. That is down about 2.5% in trade.
All right. Thanks, Yash, for that. HDFC Life is under pressure, but the Bank Nifty definitely isn't. It's just about 100 points away from that record high. So a lot of momentum which is coming into the markets in the last hour of trade. Deven, but before that, the HDFC Life, do you look at that stock? Disappointing numbers this time?
Well, I think if you go by the management commentary and I think take that into account, then minus the GST impact, I think, which they had to absorb because of the changes on life policies, I would think that I think on a normalized environment, I think they have grown decently well as far as I think if you remove the GST and the IT, that is input tax credit, I think benefit which they could not get in this quarter. I think if you remove that part of it, I think the working of the company possibly is, I think, not as bad as I think it is appeared to be at this point of time. In my viewpoint, I think the crux is in the area of, I think, valuations. The EV to EBITDA, that is embedded value in this case, I think is definitely, I think, remaining at the premium level. And that is the reason for which, even though with a stable business model for HDFC Life, I think the stock has always been underperforming in the marketplace. Whereas the peers are comparatively available at cheaper levels, I think, on the valuation front. And that's where probably the liking for adding those peers into the portfolio vis-a-vis HDFC Life. Nothing wrong with the company, except that the valuation in the market is remaining fully priced at this point of time.
Okay. By the way, Cyient reports numbers later today, and that stock has suddenly spiked up. So it's up close to about 3% on Cyient now. So just get that intraday up for you on your screen. Midcap IT had a very strong session yesterday after persistent stellar numbers. So it lifted the entire IT pack. Today, apart from Infi Wipro, you've got LTI Mindtree and Cyient, which declares numbers. So the street will be watching that very closely. In fact, a couple of other IT names are also, I think, moving up a tad bit. First, so Zensar, you are seeing a little bit of an uptick coming through in them. Deven, quick word. We've had two new listings today, both strong, Rubicon Research and Canara Robeco AMC. Did you, participate in any of these IPOs? What would the advice be now after the listing?
Still some time for me to, I think, study those companies, Lima, I think, and then come back at some other point of time.
Got that. Oberoi Realty is also having a good session, 5.5% up. In the real estate pack, which is your preferred pick?
So we, among the new ones, I think the listed one is Lotus. I think that is what we like, I think, this company, because of the premium to ultra luxury segment, I think that is a journey which this company has traveled very well. And we like, I think, the approach that they are carrying. So in their portfolio, they are largely having the luxury property or the ultra luxury properties, which is fetching them better realization along with the redevelopment model moat that they have carried. I think that proposition more than the other ones. Other ones are good, but I think they were priced in today as much as I think they could. Probably, I think this one is deserving to be added into the portfolio.
Okay, all right, Devin. Well, we're going to thank you on that note. Thanks very much for joining this afternoon and taking us through all of your views on the market. Well, for the Nifty, 25,588 is where we're at. We have the advanced decline ratio, which is extremely steady at this point. 2,400 stocks advancing to around 1,900 stocks declining on the Bombay Stock Exchange. We'll take a short break, but we'll be back with Pramod Gubbi of Marcellus Investment Managers to talk more about stocks. Stay tuned. Welcome back. Well, we have the eternal numbers which are flashing on the screen. The EBITDA is coming at around 239 crores versus our poll of around 256 odd crores, and that is a margin of around 1.8%. What stands out is really the revenue which has come through this time. So the revenue has come in at over 13,000 odd crores, and that should come up for you. The net profit, as you can see, is down around 63% on a year-on-year basis. The revenue is coming at around 13,590 odd crores, which compares to around 4,799 crores year on year. And also on a sequential basis, there's a huge jump in terms of the revenue. So 13,590 compares to 7,167 crores sequentially as well. The quick commerce revenue, as you can see, is around 9,891 crores versus 1,156 crores. So those are a couple of details which are floating in with regards to Eternal. And you can see that the stock is up around 1% at this point in time. We'll wait by for a breakup in terms of, what the segments would be.
Actually, the segments are there. The food ordering and delivery, out there, the growth is closer on 20%. But the quick commerce business that's coming at around 9,900 crores, not just on a year-on-year basis, on a sequential basis, that compares with around 2,400 crores. So I think that's the reason why those numbers are looking so huge in comparison to our poll, because the quick commerce part of the business has done much better than what the street was working with. This is as per what, the initial numbers that we have right now. Profitability appeared low, and that's why the stock did move down. But I think now the street is coming to terms with regard to the revenue beat, and that's why the stock is up closer on 3.5% from the low point of the day. We're waiting for further clarity with regard to these numbers. But initial take, beat on the top line. The reason for the beat is a quick commerce business that effectively on a sequential basis has gone up by closer around 4x. Rima, anything else?
Oh, it's incredible, the kind of top-line growth. It's a 183% increase in the company's revenues on a year-on-year basis, inching towards 14,000 crore. Quick commerce top line has gone up by 750%. I know you're expecting super normal kind of revenue growth, but even the estimates were like 130, 150%.
You have to see if there's some kind of extraordinary which has come through, with regards to the quick commerce revenue growth. So that has to be seen in terms of at least whether there's any kind of extraordinary. The EBIT is positive as well this time. So 1 crore, which compares to around 2 odd crores. In terms of the other segments, just a quick handle on that. The hyper pure supplies, which is basically your B2B business, has actually fallen year on year as well as Q on Q. So it's coming at around 1,023 crores as compared to 2,295 crores, which they did last quarter. So there's a sharp fall which is coming there. And on a year on year basis as well, there's a dip which has taken place. It compares to 1,473 crores same time last year. So there's a dip which has taken place in terms of the hyper pure supplies, which is their B2B business segment. But otherwise, it is obviously quick commerce, which has actually stolen the limelight this time for Eternal, which has come through. And as you can see, the EBIT is positive. 1 crore in terms of an EBIT as compared to 2 crores same time last year, and as compared to 9 crores in the previous quarter. So the EBIT on a sequential basis for quick commerce is lower, but nonetheless on a year-on-year basis, it's higher, and or rather just about flat. And for the revenue, obviously, there's a huge uptick which has taken place for Eternal. As you can see, the stock is spiking up around 3% odd.
The stock has been hitting record levels day after day. Yesterday also it was at a record high, the prior day also, and now again, it's a 3.5% up move. Really capitalizing on the opportunity and increasing the penetration of quick commerce. And I think that's the reason why it's been bid up so much, Eternal, because it's executing also very well on the opportunity. Pramod Gubbi of Marcellus Investment Managers joins in. Pramod, I know you don't like talking about individual stocks, but just give us your initial numbers on Eternal. Numbers are just trickling in, and Mangalam will also be joining in. But the quick commerce play and Eternal, Swiggy, your thoughts on what we're seeing?
Hi, thank you. Thanks for having me here. No, it is clearly a significant penetration story, right? There's significant shift from mainstream grocery retail into quick commerce. So the addressable market is as big as you can think it can be. The only challenge was around execution. Clearly, these numbers suggest that execution has been pretty much fantastic. What we also have to see is the profitability piece, where I think there's been some sort of a disappointment, but it was in some sense expected. If you're going to push the top line this strong. The only question is there increase in competitive intensity? We saw some sort of competitive intensity subsiding last quarter. We expected pretty much similar trends to continue, but these profit numbers need to be seen in greater detail to arrive at that.
Pramod, just request you to stay on. Our colleague Manglam is also now joining in. Manglam, have we seen 750% jump in quick commerce revenues before?
All right, so here's one thing about quick commerce, and because the reason why this jump has happened is because, remember, between the last time and now, it is a majority domestic owned company, and as a result of which they are owning their inventory. So every time you own your inventory, you make a sale on that, the gross order value gets reflected as a revenue, as against the take rate that a company takes, or as against, the sales that they make on this traded basis. So which is what explains this sort of big jump that has taken place. The company had told us earlier as well that they are looking to own their inventory. So it's the third party model which was there, which is now their own inventory model, which is why that big a jump that we've seen in the business. What really stands out for me, however, is that, two things. One, every time they're owning the inventory, they will have to deploy more capital, so the working capital increases. But in return for that, they were going to get about 100 basis points more in margins because they were now owning the inventory. So the net operating value growth, or the NOV growth, which is coming right now of 137%, is a more comparable number than the 750% jump that we've seen on a reported basis because of this change in the model. And this is the big positive, 137% growth in the NOV, because the street was working with a number between 120 to 130% as well. So that 137% goes down as a beat. The other thing that goes down as a beat for me is that the food delivery business, which has been growing at around 16 to 18%, this time around has grown at around 20%. So that's a big positive as well, because for 3 quarters in a row, the business was growing at around 16%, and the street thought that's slowing down until the last quarter, where the growth stabilized and the management said that from here on growth will only increase. So that's something we had to look at. That's exactly what has happened. The growth has increased from the previous quarter. They've added 272 new quick commerce stores. That's again something that was expected. 1544 was where they were, and the street was expecting the current quarter's number to be close to around 1750 to around 1800. So all of this works well for me. The reason why the stock may be coming off may be because of some sort of commentary around competition. So that's something I'll be watching out for in the shareholders letter. And that's perhaps the only reason that explains why the stock may be coming off. But, as far as the reported numbers are concerned, when it comes to the food delivery business, the addition of quick commerce stores and the net overall value, or the sales value that have come in from the quick commerce business, the growth of almost the net order value of 137% isn't bad at all. In fact, it's at the higher end of street expectations, if not above that.
Okay. Any reason why the B2B business has seen a sharp fall in terms of revenue? Have you managed to look at that?
I haven't managed to look at that, but for B2B businesses, they did say that a large part of the B2B businesses will be subsumed in the own inventory model, because typically what happens is that quick commerce right now, you are doing a third-party thing. Thereafter, now you own your own inventory, so even the B2B supplies go via that. So a large part of that may perhaps be then taken into the quick commerce business, which is why it may have gone lower, but I have to look at more details.
Yeah. By any chance, have they given the like-to-like? As you said, right, the jump in numbers is because of the change.
This is the NOV.
And that's in line with what they've been doing, or even better.
120 to 130% was expected, closer to 130, 135% as well. So this is pretty much in line with expectations, if not beating the expectations.
Okay, so that's the number we need to go by. NOV of around 137% growth this time. Thanks, Manglam, for that quick take, and we'll probably try and get you back on.
This explains why the food, why the stock has been selling off a little bit, because food delivery NOV has come in at 14% now, which is lower than what the company had done earlier. So they had done 16% earlier. The management said this is stabilizing. Food delivery revenue has increased, but NOV has come down. What this basically means is that their take rate has increased a little bit, and at the same time the discounts have reduced. So which is why we have the NOV, which has grown at only 14%. So here the competitive activity is something that will be eyeing very, very closely, because on the quick commerce end, even as competitive intensity is coming off and the worst of margins is behind them as far as the management commentary is concerned, food delivery, here's a new form of competition coming in from the likes of Rapido, etc. So if they start eating into the company's market share here, then what has been a cash cow for you will start being margin diluted because of the competition that there is. So that's something we'll most definitely watch out for. Food delivery, NOV at 14%, is something that may concern the street a little bit, but I'll look into more detail and come back.
Okay, so maybe it means that maybe there's a little bit of competition which is clicking at the heels at this point in time. All right. Well, we do have Deven Choksi joining back in for a quick take on Eternal. Deven, if you've managed to just look at the numbers, what Mangalam pointed out is that there is some amount of restructuring in terms of how they're reporting the quick commerce revenue. And separately, the NOV for the food business is up only around 14%. Previous quarters has been 16%. Your take?
Well, I believe that I think other than the numbers, I think what one should be mindfully looking at the size of the company as far as the market cap is concerned, and size of the company as far as I think EBITDA and the profit is concerned. Even if one takes, I think, the 4 quarters profit as 1,500 crores at EBITDA level, and I think the market cap of 3.5 lakh crore, assume that I think with all the kind of corrective steps that they are taking, I think this 1,500 crore of the EBITDA becomes 3,000 crore. Market cap is 3.5 lakh crore. 12 months, I think from now, I think that is likely the profit. What would be the valuation at which I think one would feel comfortable buying this kind of a company? It seems that I think the market is probably, I think, factoring some amount of need to correct on the valuation side. I guess I think the valuation is expensive, remains expensive, unless I think this is a material jump into the profit. Probably all other calculation metrics that we are trying to apply, I think, is now going to solve the problem on the valuation side.
All right, Deven, appreciate you joining in and giving us that quick take with regard to Eternal. The stock has come off. Also, there is some commentary that's coming in there. Eternal Limited, they are saying that they are fighting multiple headwinds, including soft discretionary consumption in general in India. That's point number one. Point number two is they're expecting a slow uptick in growth rate in the near term for food delivery itself. So after dancing away, the stock has now cooled off. Initially, there was a big beat with regard to the quick commerce business. It appeared was very good, but it's basically the change in accounting standard that caused that particular kind of beat. And as Mangalam said, the key business, which is the food delivery business, out there, they're sounding a little bit cautious, and maybe the growth, the NOV growth, is not as much as what the street worked with, or maybe it's slowed down a little bit in comparison to the previous quarters, which explains why the stock has come off the top. Let it settle down a little bit. The take is that, in fact, the numbers are pretty okay. There is some cautious commentary as well that's coming in there, but we'll have to understand in further detail. As Mangalam gets that, he'll join us back. Pramod Gubi is still in conversation with us. Pramod, sorry for making you wait by. Eternal coming out with a set of numbers that's racking everyone's brains. But how are you feeling about the market on the whole? Last 1 year has been challenging. One would say we have done pretty okay, going by the kind of challenges we had on the domestic front. We had earnings that slowed down as well. We had an issue, a skirmish with Pakistan. And on the global front, there are a lot of issues. President Trump at center stage. Do you think the markets are now bracing for a better move in the next 1 year or so?
Well, predicting markets in the short term is always challenging, but I think I agree with you. The last 1 year, despite the challenges that we've seen, it's not just the narratives, right? Clearly, economic growth and earnings growth, we've been almost, 6 quarters of single-digit earnings growth, whereas valuations at the market level across indices are pretty much above historical averages, significantly above historical averages. The fact that the markets have been flat is actually a pretty good outcome, and clearly, we have to thank all the flows that's coming into mutual funds for that. But if you pause there and look at the relative situation relative to the rest of the world, we have underperformed massively. I think that's a better way to take away the events of the last 1 year rather than absolute terms. Now, the question is, going forward, have we seen the worst? I reckon earnings are likely to bottom out soon. Partly from a statistical perspective, you have very favorable base rates, but we also got some sort of stimulus in the form of both income tax cuts as well as the GST cuts running into this festive season. Hopefully, this can trigger a sustained recovery, consumption leading to utilization levels going up and further private sector capex, the long elusive private sector capex to trigger a job creation, much needed job creation, because we're facing structural headwinds around automation and AI. Only then can we have any sort of a stronger view in terms of earnings recovery sustaining well beyond the next 12 months and also justifying the current valuations. Even then, I reckon, given where valuations are, we might just protect the downside. but we might be looking at a more consolidatory sort of a market environment over the next 12 months.
Okay, more of a consolidatory type of environment for the markets in the next 12 months. Pramod, thank you very much for joining in and taking us through your views this afternoon, and season's greetings as well. Well, we need to take a break on that note with the news that Eternal is in fact down around 2% off the day's high. And we have the markets, however, the Nifty, which is holding with a gain of around 258 odd points. Be back with more. Stay tuned. Welcome back. Well, let's go across to Nigel now. He's joining in from the F&O desk to tell us what he's looking at today. Nigel, over to you.
Well, Ekta, things have been looking good. We have been maintaining this view that this market from sell on rise had turned into a buy or dips, and that's precisely how it's playing out. Just one word of caution, the PCR is gradually moving up. It's moving to the upper end of the range. The momentum is definitely with the bulls, but currently at around 1.46, at least the last time I checked. Normally at around 1.6 is when it gets into that overstretched zone on the upside. And the reason that it's moved up is because put trading, just take a look at the addition you're seeing, 25,500 put. The premium has come down to less than 50 rupees. Start of today it was 165 rupees. 25,600 put as well. That premium from around 240 rupees, that's come down to around 80 rupees. On the flip side, the call buyers, they are very, very happy. Now we'll have to see how that works out because the highest, open interest built up is at around the 25,800 call. And those call buyers will be very happy. Start of today, it was only around 5 rupees. And today, in fact, it's moved to around 20 rupees. And at one point of time, it was more than 30 rupees. In terms of stocks that are in focus in today's trading session, there's a perfect example of shorting getting into a result. Oberoi LD, the numbers appeared weakish, but the stock has suddenly found momentum and those shorts are scramping away for a cover. So that's a bit of a short covering bounce out there. Similar is the case with Angel One. Stock badly beaten down. There's a bit of a short covering bounce being played out there as well. So both those two have come in for a bit of a short covering bounce. And fresh buying is what we are seeing on select FMCG names. And at the forefront is Nestle India. Good move on the stock. Big open interest built up. And Cyient as well. The other one, we are seeing a good amount of momentum on that one. So short point is the markets look good for more. In the near term, the PCR is the only cautious factor which is moving to the upper end of the range.
Okay, all right, Nigel, thanks very much for that. We'll just look at the Eternal stock now because that is now down around 4%. It's been a huge turnaround which has taken place for the worse for Eternal. As you can see, there's a sharp dip which has taken place, and obviously the street is not liking maybe the commentary which is coming from the management as well as the internals after looking at that. But time now to get to our segment D-Street Chatter. Nimesh is here to give us all of the insight into the dealing room chatter and what he's looking at. Nimesh, anyone mentioned anything on Eternal?
Not really, Ekta. It's basically a reaction to the earnings. So, and also remember for Eternal, it's been a big mover. The market cap is now more than 3 lakh crores. So any disappointment will lead to this kind of reaction. So I'm not very surprised with the kind of reaction we're seeing in Eternal. Overall in the market, though, it's an extremely strong day for the markets. The Nifty has rallied almost 300 points intraday. It's cooled off from there. But surprise, it's almost a 1% move. And all this move is largely led by the large cap names. If you look at the broader markets, they've relatively underperformed. So if I talk to some traders and all, they are not very happy because portfolios have not done well. It's only the Nifty which is showing up big strength with up to almost 250, 270 points. And as I said, within the large cap names, it's the financials who's taken the leadership now. Big move on the bank Nifty. It's up more than 1%. And rightly so, because there is now clear tailwinds coming in for the banking sector. We have got large deals coming up. Saturday we'll see a big deal in RBL Bank. And also, generally, there is a momentum and lack of ownership. So that's clearly playing out in the banking sector. Flows, again, it's a mixed day, but I understand the buying has resumed. And remember, the Nifty, the FIs are still net short more than 90%. So as things move up, you're going to see a bit of short covering rally as well. What on the technical levels? 24/7 is the next level to watch on the upside. If that gets taken out, the feedback from technical experts is you will see further short covering rally. So there is a bit of momentum now for the bulls to play on this rally, but I guess there will be more catch up once the Nifty crosses 24,700 on the upside.
Okay, and specific stocks, Nimesh?
Well, so a couple of names. First stock is CMS Info. That stock has recovered from the intraday lows after a large block. Nearly 2% equity got changed hands. Understand a leading FPI holder was a seller in today's block, and there are multiple buyers, so disclosures could be interesting. But I understand that FPI was a seller in CMS Info today. The second stock is Marine Electrical, a small stock only listed in NSE, but that's been buzzing. It's down today, but off late you've seen a bit of momentum there, and volumes also picked up. And for Marine Electric, there is a strong buzz that maybe the company is going to bag a very large order very soon. So that's a trigger there. The third stock is M&M. That's been buzzing in trade today on very large volumes, and there is a bit of delivery-based buying as well. There was a Morgan Stanley tactical buy as well in the morning. They expect over the next 60 days the stock to outperform, and there is buying resuming in M&M at current levels. And the last name is Aether Energy. We saw that initiating report from MK yesterday. The stock was up 3% yesterday. Even today, the stock is up almost 8% and on good volumes. I understand one domestic mutual fund has been an active buyer in Aether Energy, and hence a big move in that stock as well in today's market.
Okay, all right. Nimesh, thanks a lot for that. Well, let's hop across to Mitesh Thakkar from Bonanza Portfolio. Mitesh, what's the call on the Nifty first? Start preparing for a good Diwali, take some money off the table. You've had a quick fire run, or do you say hang on to your long positions and give us your fresh trades?
No, I already said that Nigel take some profit because 25,630 was the high which it got on 27th of July. And you've had a good rally in the last 2 days, roughly about 500 points. and you're hitting a previous high. So I think 25,600 is a good level to take some profits, but the directional bias remains on the long side. So you've had a good run, you might see some pullback, some consolidation, the intraday averages will catch up, and then we should see further higher levels. So for the timing, I have two buy calls. Grasim is a BTST, keep a stop at about 28.39 for targets of 28.75, and GMR Airport is the one. That's the BTST with a stop at 90 for targets of 90.
Got it. Okay. All right. That's the advice coming in there. May not hurt to take some money off the table on the headline index. But as part of Samvat 2082, my colleague Prashant caught up with veteran investor Samir Arora at his Mumbai office. In this snippet, he talks about how he's been an India bull and how 2008 global financial crisis made him change his outlook on markets. Let's listen in.
2007 and broadly even now, consider myself as India bull. In fact, I was on the cover of, I think, this Dhirendra Kumar's magazine.
Value Research.
Where it said Mr. India Bull or something. Okay. And I used to collect bulls and I still collect, but now not as many. So then you become the representation or the poster boy, and even you guys or CNBC, whoever would call, and I would say, no, HDFC, nothing is wrong, and this ICICI, nothing is wrong, it is Lehman Brothers, overly defended because you took that position in public. So after that, therefore, I don't overly defend anything because I have realized that even if people say, oh, this fund manager is saying it publicly, but privately, no, you think the same thing and you act in the same way.
Correct.
If you don't say it.
If you say it loud, it becomes difficult to change your position.
And even to yourself. Even to yourself. So I went to one like a course kind of thing where there's like a 101 hour these. I think it was organized by CLSA. So it was for traders actually. And they said if you're sitting in a room and everybody's sitting and you are long gold, and gold goes up, you don't get up and say yes, because now everybody thinks that you are long gold, therefore you are a gold bull. Now if gold corrects after 30 minutes, when you're talking about traders, you will not sell.
Correct.
Because you have just
publicly expressed your...
So I see today, good thing is, today one of the bigger mutual fund companies has taken a position. I am bearish. I am on cash. Now market falls 10%. If they buy, people will say, you were bearish only for 10%. So these kind of things I have totally...
So you wisened up to that kind of...
basically... I realize that these positions are not to be taken publicly. You be ruthless and a little bit shameless. And in my room, office in Singapore, I have these Ganesh, Lakshmi and all. And below that, I have got NAV in letters, because by the 3 letter people buy their own initials. I bought NAV. NAV is the boss.
NAV is the boss at the end of the day.
As long as you are doing things properly, NAV is the boss.
All right, back to talking about quick commerce. Eternal is now down close to about 3% as the street digests the numbers, but its peer competitor, Zepto, has raised close to $450 million in fresh funding that takes its valuation to $7 billion. This round saw participation from new investor CalPERS, alongside existing backers who have doubled down on their investments. We spoke to Adit Palicha, the co-founder and CEO of Zepto, about the details of the fundraise. Listen to it as we slip into a break.
Financing has been, pretty significant milestone for the company. We're excited to, have all the names that you mentioned in your introduction, and I think from our lens, the focus is, we've been able to grow. The reason why we were able to get this financing done is because we've been able to grow from roughly around 500,000 orders per day in mid-2024, when we closed our last fundraise, to about today 1.6 to 1.7 million orders per day. What we've been able to do, which I think is more important, is we've been able to consistently keep turning stores profitable. We've turned hundreds of stores, incremental stores, profitable even as we expanded. And so those are the foundations for this fundraise. The vast majority of this $450 million is primary, and we're now in a position where we've got close to $1 billion of net cash in bank. So we're more than well capitalized to take the company through the next few years. So that's basically where we are right now.
Welcome back. Well, we have Mayuresh Joshi joining in now to discuss a couple of stocks as well as his take on the market. Mayuresh, hi. Welcome to the show and season's greetings. I'm not sure what to ask you about first. Nestle, which is up around 5% or Eternal, which is down around 4%. So take your pick. Which one do you want to talk about? Do you want to start the conversation?
Afternoon, Ekta. No, season's greetings to you and the entire team.
I think you're on mute.
No.
Oh, okay.
Sorry. Afternoon, Ekta, and the entire CNBC team and all the viewers. Wish all of you a very happy, healthy, and prosperous Diwali. I think Nestle's numbers actually stood out on two counts. One, I think the superior growth that they probably exhibited, the 10.8% sales growth that has happened with higher single-digit volumes, and 3 out of their 4 categories, including confectionery, packaged foods, the coffee business also doing well. Augurs well, because this was a tough quarter for FMCG companies. They were just coming out of a lull. Demand was expected to still remain soft, and yet they have performed relatively better in terms of performance, both in terms of price as well as volumes. Going forward, again, I think the expectation largely in terms of input cost, which largely would have hurt their margins a tad bit in this quarter, might also inch higher because you're expected to see milk prices, coffee prices, cocoa prices actually remain benign. Though palm oil prices might be a little bit higher. So I think even the margins might start moving a tad bit higher. And with expectations of more stores expected to open up, specifically on the semi-urban and rural front, along with the plant at Sanand for Maggi, I think there can be significant push that can come through. Valuations have always been expensive, but if they're able to deliver in Q3, Q4 with GST rationalization, I think those premium multiples might work. For Eternal, I think there was a long discussion. I heard that over the last 30 minutes. I think the entire aspect here, as we've always maintained, is valuation still remains sky high. For Eternal, competition still remains extremely intense. And therefore, how margins play out specifically in the food delivery business is going to be extremely critical. Volumes will show an uptick in this quarter because with festivities around, both quick commerce and food delivery should pick up quite significantly. They've accelerated their store opening, but valuations remain very, very expensive.
All right, Mayuresh, thanks for that. Well, I think we'll have to wind down on the markets today. And actually, it was a very, very good trading session. The Nifty goes home with a gain of 250 points. The Nifty banks 600 points. The real story was in the broader markets. You had Rubicon, the new listing that did very well, up and about in today's trading session, a 30% return on day one. Canara Robeco as well was up close to around 13%. Both those two were the stars of the day. The other stocks that reacted favorably, Nelcash was up close to 17%. BLS as well was up and about in today's trading session in all cargo terminals. Boy, oh boy, a big move is what we saw on that front. From the frontline stocks, well, what did very, very well? Nestle, clearly the one that was the beat of the day, up 4.5%, and it triggered the entire FMCG pack to move up as well. All those stocks, whether it was Tata Consumer, Titan, all of them were up 2.5 to around 3.5%. The banking names as well looked good. Axis Bank came out of the set of numbers. There was a mixed view out there, but the stock ended higher, telling you the way the market is approaching some of these numbers, willing to look ahead. And the Nifty Bank as well did zoom away and trade. Eternal, mixed set of numbers coming in there, very volatile in the final hour of trade, but by the time we wound up, the stock was down close to around 3.5%. So the bulls will feel Diwali is near, and that's why they were lighting up the Lal Street in today's trading session.
Okay, and the Nifty and the final tick on the Nifty is about 25,566, not quite at the day's high, which was 25,625, but a gain of 1%. Midcaps ending up about 0.5%. That brings us to a close on Closing Bell. Don't go anywhere. We'll continue the conversation and prep you up for tomorrow with Markets Forward.
Powered by LIC, हर पल आपके साथ. Co-powered by SBI, बेस्ट है सबको पता है. Co-powered by SBI. Best है सबको पता है.
Markets hit near a 4-month high. Nifty crosses 25,600 but end mildly below that mark. Banks seeing a big buying. Index is within touching distance of record high. Midcaps underperform.
Axis Bank reports strong loan growth and beats margin expectations, but a one-time 1,200 crore provision on the back of RBI's directive impacts the bottom line. Nestle India soars as it reports strong revenue growth in Q2, even as margins contract. The street likes the domestic sales growth of double-digit.
It seems there's no stopping the gold and silver rush, with both precious metals scaling the record high levels. As expectations of Fed rate cuts, rising US-China trade tensions, the US government shutdown and Indian festive demand stir the combine into a bullish cocktail.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I am Reema Tendulkar. With me is Vinny. And Vinny, what a good session, right? Yesterday, we added about 170, 180 points in the Nifty. Today, we've seen follow-on buying, 260 points up on the Nifty and closing very close to the 25,600 mark. It's about a 4-month high on the Nifty. And the Nifty Bank also came in kissing distance of its lifetime high. I think it ended just about 200 points of the lifetime high levels. So very, very strong session. And the good part is, the earnings, the expectations were on the lower side, but IT has delivered so far. Axis Bank looked good. And Nestle's volume growth has literally lit a fire in most of the FMCG names. So the FMCG index also gaining close to about 2%. So that was a big driver of the optimism today. And plus, even that Trump comment, right? He spoke to the reporters at a press conference where he said that I had a chat with Modi and, he's a good friend and etc. But he has promised, or he claims that, Modi has spoken about stopping the Russian crude oil purchases. It will take some time because it's a process. But I guess the way the street is reading it is that, if perhaps we manage to get that done, then maybe it opens the way, paves the way for an India-US deal, and that penal
That is
tariff
surely something everyone is waiting out for, and it's positive for that.
Yeah.
Reema, you've rounded it up very well, right? Interesting day. And advance decline ratio, I think today also is in the favor of advances. So there's no complaining on that front as well. But let's talk about what's going to be on the show for y'all as well. We have something exciting galled up for y'all. We'll start with the top movers and shakers of the day with Hormuz. And then we have Eternal, Nestle, Axis Bank that are reacting to the second quarter numbers. So we'll decode what the numbers look like this time. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. But first up, let's get started with the first segment of the day. And we have Vivek Iyer, actually, who's joining with us from the big wall to tell us the top movers and shakers of the day. Vivek?
Well, thank you so much for that. Well, a very exciting session, especially in the second half of the trading session. We saw some very sharp moves come about. Like you mentioned at the start of the show, the results of Nestle was something that actually pushed up the entire consumption pack. So let's start with that. Nestle ended the day higher by almost 4.5% higher. But along with that, Varun Beverages, Tata Consumer, even and HUL for that matter, moved up over 1.5%. The other stock on the radar, the big newsmaker was RBL Bank. Throughout the trading session was under a bit of pressure. The last hour did see some buying, ended up over 2%. The entire realty pack for the second straight session, one of the top gainers. So you look at names like Oberoi, very strong Q2, very strong H2 is what the company is guided for, ended higher by over 5%. And along with that, a whole host of realty names ended in the green. And Tips Music, this particular name, the management actually joined us earlier today, higher by 6% on good volumes. Now this up move came despite a guidance cut from the management, especially as far as FY26 was concerned. On the other hand, a few laggards as well. KEI Industries, a key facility, the commissioning is going to get delayed over there. The street didn't like that, over 5.5% lower. Eternal, despite the one-time, or you could call it an inventory change in which the company actually went ahead and accounted for its top-line growth. Now, despite that, there was significant volatility. The stock ended lower by over 4% on very cautious commentary in the shareholder letter. The other stock on the radar, or the other set of stocks, was, of course, the insurance name, HDFC Life, very weak or muted margin outlook for H2. That stock ended lower by 2.5%. Max Financial, SBI Life 2 ended the day with cuts.
Okay, thank you so much for that, Vivek. Important stocks to keep an eye out on, and now where they're going to be headed in tomorrow's trading session as well. But we had Nestle that was buzzing in trade, and because of that, the FMCG pack also managed to close in the green. Now that gain, Nestle gained 4% after it delivered a very strong set of numbers. What did the numbers look like? More details on that front. Let's go to Mangalam for those details.
But it was a stellar set of numbers coming in from Nestle, and as a result of which it ended as the top Nifty gainer in today's trading session. The street did not go in with much expectations. In fact, 3.5% was the revenue growth that most on the street were anticipating, and largely because it was also a GST-related transitory quarter. But the new leader of Nestle, Manish Tiwari, had other plans, it seems, because the revenues grew over double digits and, more importantly, led by near 11% growth in the domestic business. So it was a top-down beat coming in, 5,600 crores in terms of top line, as against street expectations of 5,300 crores, and that percolated down to the bottom line as well, where the net profit was 750 crores. The company reported, the net profit at that level, whereas street expectations were close to 710 crores. The important part, sales for the company grew in at a double-digit rate, led by volume growth. In fact, the volume growth, what we understand from sources, are high single digits as compared to street expectations of 1 to 2%. And it was led by, the confectionery business, where KitKat as well as others saw penetration-led growth. And apart from that, milk products and nutrition also, while they had a mixed performance, the outlook here is a lot better because milk prices are coming down. Pet food businesses reported the best performance ever since its inclusion into the Nestle India business. The important part, the management laid out their strategy too. They said they're focused on penetration-led volume growth, and at the same time they will invest in growth, accelerating their investments in brand building and capacity, and their endeavor is to remain fast, focused, flexible. The street liked that. The stock, which was about 10% away from its all-time high, did well, and now is just about 5% away.
Okay, Mangalam, do talk to us about Eternal as well. They reported the numbers as well, a 63% decline in its net profit for the second quarter. Quick commerce revenue also seeing a growth of around 8-fold. Is that what we're seeing looking this time in Q2 FY26? Mangalam, over to you.
Well, so if you look at, Eternal's reported numbers, you'll have to discount the way the revenue has been reported this time around, largely because the company had changed their business model, which is reflected in the 8-fold jump in the reported revenues that we've seen in the quick commerce business. Remember, the quick commerce business earlier as a recognized revenue was just the take rate, but now because the company's moved into keeping their own inventory, the entire sales is as good as the net order value, which is pretty much what the company has reported this time. And the net order value on a comparable basis for the quick commerce business has grown at 137%. This compares with street expectations of 130 to 140%. However, the reason why the stock ended lower is because the EBITDA decline was a little more than street anticipated, and as was the net profit decline. So if you look at it, from a street expectation standpoint, the net profit came in at around 65 crores. The poll was 139 crores. The EBITDA came in at 239 crores. The poll was 256 crores. Food delivery business, there the sales grew by about 14%, the net operating net order value, that is. And the company said that the recovery there has been slower than anticipated. In fact, they expect slow uptick in growth in the very near term in the food business. That's not all. Even in the quick commerce business, while the NOV growth accelerated to 137% as expected, the adjusted EBITDA margins improved very little, from minus 1.8 to minus 1.3, where the company has said pace of margin improvement has been slower than what we anticipated, and they are making additional investments for market share growth. So all the savings that they're making, they're passing it on to the consumers, and they've also increased their guidance for acceleration of stores. They will now get to 2,100 stores by December, as against what they had earlier guided at 2,000 stores, and Blinkit store count as well is closer to 1816. The important part, and this should come up for you, as their cash balance. Over the last quarter to now, their cash balance is actually reduced by about 500 crores. That is another thing that spooked the street, which is why the stock ended lower. It will be very interesting to see what the brokerages write on Eternal tomorrow.
Okay, thank you so much for that, Mangalam. So keeping an eye out on Eternal in tomorrow's trading session as well. Just bring on our guests for today as well, Mayuresh Joshi as well as Richard Jain. Both of them are joining in with us this evening. Richard, just a quick word in terms of Nestle's on the technicals and charts. How is it looking?
So overall, I think the chart sector is quite positive because we have seen in last couple of trading sessions, the price of move has been supported by good volumes. And earlier, under the stock was facing some resistance around the 1220, 1240 mark, which has comfortably been taken out today. So, and FMCG as space also, if you see, it has not yet performed in the recent market up move. So, in terms of risk reward ratio, the risk reward ratio is favorable for the sectoral move as well. And since the stock has given a good closing, we could expect an up move towards 1370, 1360 kind of range in the short term in Nestle.
Okay. We do have Wipro that has also come out with its numbers as well. We had an expectation in terms of rupee revenue of 22,700 crores, and versus last quarter was 22,080. So we'll talk more about that in details later. But overall, let's move on and actually talk about the banking space as well, right? Because that is something that has been in focus. We have Axis Bank that gained 2%, and this is after its Q2 numbers that came in. Let's go across to Gaurav to give us more details on this front.
Well, yes, when we look at Axis Bank, the thing that we had to look is that operationally this quarter was strong, but at the same time, one-time impact on provision is something which came as a pinch of salt. So I'll come to that. When we look at numbers, the first strong cue from this quarter is that the loan book growth, now that has reached 11.7% on a year-on-year basis. Remember, Axis Bank was reporting loan book growth somewhere in the single digit for the last 3 quarters. When we talk about net interest margins, that was another area where we saw positive surprise. Net interest margins declined just by 7 basis points to around 3.73% versus consensus estimate of 3.63%. And management said that there was no one-off impact. It was only because they managed the cost of funds efficiently. So definitely that was also something which was positive. Third is that when we talk about the gross slippages because of technical impact, now that declined almost by 44% on a sequential basis. Remember, in last quarter, because of the technical impact, we saw slippages as well as credit cost increased. But in this quarter, we saw significant improvement on a sequential basis in ratios as well as in terms of absolute numbers. Now, what went wrong is that in this quarter as well, there was a one-off impact in provision somewhere in the range of 1,230 crores. Now, this was the amount directed by RBI, and this was not because of the asset quality issues, but this was because of the one-time provision which was asked for the discontinued crop loan variant, which was classification issue as per management. Now, they say that they will recover this amount as by the end of FY28. So there is nothing to worry about, but this is something which impacted profitability because that declined almost by 26% on a year-on-year basis. But overall, when we look at the numbers, operationally, it was a good quarter. Because of this setback, we saw some kind of gains which eroded, but at the same time, we saw bank performed well in a day-to-day.
Thank you very much for that. Mayuresh, good start for the private banking season. We'll get the true picture on Saturday, ICICI Bank and HDFC. But Wayne, with your thoughts on Axis Bank and what it means for investors or shareholders?
Afternoon, Nima. I think decent set of numbers. I think the softness in numbers was largely expected by the street. And therefore, I think a large part of the market belief is that Q3 and Q4, the numbers will be relatively better, both in terms of core advance growth, the credit deposit ratios itself, asset quality pressure should largely peak out. The CASA deterioration and the NIM compression that you've largely seen should also peter out. And therefore, I think a strong recovery in numbers is something that the street is probably pegging in. Also, I think for the sector as a whole, I think the updates which have come as far as Q2 is concerned seem to be very, very encouraging. A few of the PSU banking stocks have delivered decent set of numbers as well. And therefore, I think as we head into the second half, a large part of these parameters that I've been speaking about should largely start working in favor of a few of these banks. And therefore, I think anybody holding an Axis can continue holding, because I think the mixed set of numbers is something that the street was probably expecting. But there is hope that as Q3 comes through, numbers should start improving, not just for Axis, but for the system as well.
Okay. Thank you so much for that, Mayuresh. But on that note, we're actually going to sip into a very short break. So thank you so much, Mayuresh, as well as Richard, for joining us. But viewers, don't go anywhere. Up next, we'll bring you the corporate voices of the day and key events to watch out for in tomorrow's trading session. So stay tuned in.
One sector, it will be financial sector, where I think the overall basis stocks have not performed to their fullest potential. And we are already seeing kind of recovery take place. And there is way to One is you can play in an asset-light mode, which are capital market related plays. And the second, you can even play banks.
Capital markets and banks, and this can sort of squares with what
I'll
you're
give you a
saying.
most unpopular one.
Yes.
Finance Minister indicated that after all her tax work is done, she wants to turn her attention to public sector.
Okay.
They've already said, for example, they may do consolidation of some of the PSU banks. This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat. If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bet.
Just PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme.
India has done very badly this year relative to peers, emerging market benchmarks. So over 5 years, India has still done better than EM and China and all. Maybe only US has done better. But this year, India hasn't had its worst relative performance in 30 years, which is some 25-27% underperformance in 10 months. That beyond a point does not last. Second is, what are the reasons why FIs are selling? I've been feeling that the world is interested currently, and not feeling that, you can see with data, that the world is putting a little bit of its global money into non-US markets.
Welcome back. Wipro reports its Q2 numbers in line with street expectations. The company's constant currency revenue growth has gone up by 0.3%. This is within the company's guided band of -1 to +1 and in line with what the market was anticipating. Now, EBIT margins have come in at 16.7%. Now, this, the company says, was impacted by about 116 crore on account of a client bankruptcy. If you adjust for that, the EBIT margins have come in at 17.2%. And this perhaps would be higher than street expectation. The street expectation was that margins would come under pressure because of large deal transition. There are upfront costs associated with it. But given the rupee depreciation, the company seems to have done okay on the margin front on an adjusted basis. But reported margins at 16.7%. But what's nice is the guidance, Q3 guidance. That's the December quarter guidance has come in at -0.5 to +1.5%, which means at the midpoint of it, it's a growth of about 0.5%, better than what the company has delivered in Q2. The company's deal wins have also been robust. The total deal wins have come in at $4.6 billion. The large deal wins at about $2.8 billion, expanding on a quarter-on-quarter and on a year-on-year basis. So all in all, it's a decent showing from Wipro, in line, largely in line with street expectations, and the Q3 guidance suggests some improvement versus Q2, and that could be taken well by the street.
Thanks so much for that, Rima. We'll keep an eye out on Wipro in tomorrow's trading session. But let's take a look at the top corporate voices of the day. And first up, we had HDFC Life that fell 2% on an inline set of numbers in second quarter. Now, speaking to CNBC-TV18, the management said that it saw market expansion in Q2, and despite external turbulence, it saw no negative surprises. The company expects growth in FY26 to be in early teens, outpacing the market. And next up, we also had KEI Industries that fell over 6% despite reporting an inline set of numbers in second quarter. The firm's top boss told CNBC-TV18 that it is maintaining its current revenue guidance growth of 20% for the wires and cable segment. And he also expects performance in the second half to be strong due to good demand in domestic and export market. He also said that the commissioning of its plant has been postponed by 3 months and is expected to be fully operational by March 27.
Canara Robeco AMC saw a tepid listing on Dalal Street. The company listed at a premium of 5.4% to the issue price. The management indicated that assets under management are expected to grow at a robust pace of 30%. Notably, 90% of the AUM is equity-based, reflecting the firm's strong equity focus. The company continues to prioritize AUM growth over revenue growth as a part of its long-term strategy.
And meanwhile, Rubicon made a strong debut on Dalal Street, listing at a premium of 28% over its issue price. Its company's management shared that the planned product launches are on track with a continued focus on execution. The firm said that some of its key business drivers include product launches, new plant setup, and growth in specialty segment. The company is also strengthening its R&D-led business in regulated markets.
And before we wrap, let's prep you up for tomorrow and tell you the big events to watch out for. Gaurav is now joining in.
Well, yes. From the global market, first let's talk about US unemployment rate. Remember, that data is going to come. And amidst the macro environment, which is currently there, it is important to see how this number comes. Remember, Street is expecting around 4.3% as unemployment rate. Other than that, World Bank IMF annual meeting, that is going on. So let's see if anything material comes out of that. But apart from that, from the Indian market, first let's talk about the FX reserve data. Now, we'll get that data. And that is also important because if you look at rupee, the rupee has depreciated, and that is the reason why we will be watching out on this data. From the company specific data points, we have results going on, and tomorrow the biggest company is coming, which is Reliance Industries. Other than that, we also have JSW Steel and L&T Technology. Now these companies will be posting the results, so we'll be watching out on that. We also have Havells India, India Cements, Polycab India. They all will come up with their second quarter's results. And from the financials, we have got AU Small Finance Bank, Poonawalla FinCorp, and Bank of India. Some of these companies we have already seen some rally. So definitely watching out on how the numbers are coming, if they will disappoint investors or investors will share more about it. Apart from that, let's also not forget that tomorrow is a listing for Canara HSBC Life Insurance Company. So we will be also watching out on how the listing goes. As of now, there was decent subscription data, but let's also watch out how the listing goes for this company tomorrow.
Okay, Gaurav, thank you so much for that. But with that, we're going to wrap up this edition of Markets Forward. Thank you so much for tuning in. More news and updates on the other side.
Co-powered by SBI. Best है सबको पता है. Presented by Standard Chartered.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. Festive cheer on the Lal Street. The Sensex and the Nifty rise to the highest level in nearly 4 months after a strong rally. The Nifty Bank nears record highs. All sectoral indices close in the green. Silver and gold continue their record-breaking run as investors look for safe haven buying. P.N. Gadgil Jewelers, the chairman, says silver is facing a unique problem ahead of Dhanteras and Diwali, with higher prices boosting demand. Says most jewelers are stocked out. President Trump claims Prime Minister Modi has assured him that India will stop buying oil from Russia soon. India's External Affairs Ministry says import policies are guided entirely with the interests of the consumer in mind. Nestle India reports strong revenue growth in Q2 even as margins contract. New global CEO announces 16,000 job cuts worldwide as he targets volume-led growth. The Swiss multinational suffered unprecedented managerial turmoil last month, with the CEO getting sacked for an undisclosed relationship and the chairman stepping down earlier than planned. Quick commerce fueled Zomato parent Eternal in Q2. Revenue triples on a yearly basis. Food delivery net order value up 14%. Zepto raises $450 million from existing investors and a new investor in California's pension fund at a valuation of $7 billion. The company's valuation has doubled in the last 12 months. Aditya Birla Group partners with iconic French brand Galeries Lafayette to tap into India's booming luxury market. Kumaramangalam Birla says the group is in the next phase of strategic acceleration and the portfolio is tilting towards consumer-centric ventures. Johnson & Johnson faces a major lawsuit in the UK. As many as 3,000 people allege the company knew its baby powder was contaminated with asbestos, a substance linked to cancer, but concealed the risk for decades. J&J denies all allegations. Less than 3 weeks to go for the Bihar elections. The opposition alliance is yet to firm up a seat-sharing deal. Supreme Court tells the Election Commission to explain the deletion of 65 lakh names from the voter rolls, which will be published tomorrow. Well, let's start with the day's market action. The Sensex and the Nifty ending near a 4-month high after a strong session today. The Nifty crossing the 25,600 mark in intraday trade, closing a percent high. The Sensex up over 800 points. That's a 1% gain. And the Nifty Bank near a record high, up by over 1% as well. The Midcaps also putting on strength today. So big buying across the board that we saw. All sectoral indices closing with gains, with realty and FMCG rising 2% each. Here are some top market experts with their big bets this festive season.
If you tell me one sector, it will be financial sector, where I think the overall basis stocks have not performed to their fullest potential. And we are already seeing kind of recovery take place. And there is way to... One is you can play in an asset-light mode, which are capital market-related plays. Okay. And the second, you can even play banks.
Capital market and banks, this can sort of squares with what
I'll give you a most unpopular one.
Yes.
Finance Minister indicated that after all her tax work is done, she wants to turn her attention to public sector.
Okay.
They've already said, for example, they may do consolidation of some of the PSU banks. This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat. If they privatize, for example, or sell big stakes, why are they holding on to Nalco or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bet.
Just PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme.
India has done very badly this year relative to peers, emerging market benchmarks. So over 5 years, India has still done better than EM and China and all. Maybe only US has done better. But this year, India has had its worst relative performance in 30 years, which is some 25-27% underperformance in 10 months. That beyond a point does not last. Second is, what are the reasons why FIs are selling? I have been feeling that the world is interested currently, and not feeling that, you can see with data, that the world is putting a little bit of its global money into non-US markets.
Well, market experts, they're weighing in on what we are seeing. From equities to commodities, gold extending its rally to a fresh record high. This is US-China trade tensions and the US government shutdown forces investors towards the safe haven metal. Prospects of interest rate cuts also boosting demand and supporting prices. Prices of silver have seen positive momentum spurred by both consumer and industrial demand. P.N. Gadgil Jewelers MD told CNBC-TV18 that silver faces a unique problem in India. Listen in.
I think silver, like you said, is a unique problem right now. There is too much demand and very little supply in the market. I think everyone is right now almost stock out. What we have, silver is what they're booking, which were already taken. So there is very little silver which is available for sale right now. Same is the case with silver articles. The karigars don't have silver to make articles now. So the situation is like whatever is there in the store is what you can sell. And the demand just doesn't seem to end. Every day the prices are going up. The premiums are going up in the market. But the demand is still going further up. So I think it's a unique situation where prices go up, demand should come down, but your prices go up and demand goes up further. And next day wake up, prices go up further, demand further goes up.
Well, prices are up and away. US President Trump claims that India has promised to stop buying Russian oil. Speaking to reporters at the Oval Office, Trump said he's received assurances from Prime Minister Modi that India will hold purchases within a short period of time. Trump also said that now he will get China to do the same. Remember, oil and gas are Russia's largest exports, with China, India and Turkey being the biggest customers. Here's President Trump.
In light of China's export curbs on rare earths, do you view India as a reliable partner going forward? And are you planning to meet Prime Minister Modi in Malaysia? Are you open to talks in terms of
Yeah,
trade?
sure. He's a friend of mine. We have a great relationship. He just said that 2 days ago, as you know. We have a great relationship. No, we were not happy with him buying oil from Russia, because that lets Russia continue on with this ridiculous war where they've lost 1.5 million people, by the way. Russia's lost 1.5 million people, soldiers mostly. This is a war that should have never started, but it's a war that Russia should have won in the first week, and they're going into the 4th year. And I want to see it stop. So I was not happy that India was buying oil. And he assured me today that they will not be buying oil from Russia. That's a big stop. And he's assured me there will be no oil purchased from Russia. I don't know, maybe that's a breaking story. Can I say that? Would you say? There will be no oil. He's not buying his oil from Russia. It started. You know, you can't do it immediately. It's a little bit of a process. But the process is going to be over with soon.
The Indian government is, as I said, is acting having in mind the interests, the national interests of this country in the first place. And our cooperation in energy is very much in tune of those interests.
Well, that's the Russian ambassador reacting to President Trump's comments. Infosys numbers are on your screens. FY26 raises the lower end of the guidance to 2% from 1%. Revenue growth seen at between 2 to 3%. More coming up on Infosys in just a second. The External Affairs Ministry has responded to President Trump's claim, saying that the government's priority is to protect the interests of consumers. The ministry neither confirmed nor denied if this conversation on Russian oil took place between Prime Minister Modi and President Trump. Parikshit Luthra is here with more.
Well, the Ministry of External Affairs is saying that for the last few years, they have been diversifying their energy basket in order to make sure that Indian consumers get oil and gas at the best possible rates, and India's energy security has also been maintained. Having said that, the Indian government, through the Ministry of External Affairs, has said that for the last several years, India has been looking to expand energy imports from the United States, and even the current administration is in favor of expanding India-US energy ties. And therefore, there are discussions ongoing between the two countries. We've not made any comments on whether we are stopping purchase of Russian oil or not. Having said that, we can tell our viewers that according to industry estimates, our energy imports from the US are already up 60% on a year-on-year basis. They've already reached around $8 billion US. And sources say that by the end of this year, by the end of December 2025, our energy imports in the US would be around $12 to $13 billion US dollars, and by the end of this fiscal, it could very well be around 24 or 23 billion US dollars. This, according to sources, may even be enough to address the trade deficit. There is a $45 billion trade deficit between India and US, and oil purchases, gas purchases are likely to be a big component, a big way for India to reduce that trade deficit and assure Donald Trump. Let's see how things will go on for the next few days. But what we hear from both India and US is that the commentary of the leaders, of the officials, is now very positive as far as the trade negotiations go. The final contours of the trade deal, of course, are yet to be agreed upon.
All right, Parikshit, many thanks for joining us. And of course, India's chief negotiator, Rajesh Agarwal, currently in the US for talks. Infosys, as I pointed out with its second quarter numbers. Rima standing by now to decode them for us. Rima.
Well, it's a good set of numbers in Q2. The company has delivered a revenue growth of 2.2% in constant currency terms, ahead of consensus expectations of 1.8%. And this marks the second consecutive quarter of strong growth. It was 2.6% in Q1. They followed it up with a 2.2% revenue growth, which basically means in the first half of the year, the company has grown pretty well. Margins, though, have expanded by 20 basis points. So 20.8 has become 21%, but slightly lower than expectations. And also some of the other peers, aided by the rupee depreciation, managed to expand their margins more than Infosys. So while the revenue growth has been strong, perhaps there is a little bit of a miss on the margins. Now on to the full year guidance. FY26, earlier the revenue guidance stood at 1 to 3%. But considering the strong showing in Q1 and Q2, the company is confident at least to raise the lower end of the guidance. So now the new revenue guidance stands at 2 to 3%. But, rough calculation would suggest that, after this performance in Q1 in the first half of the year, maybe, why has the company not raised the upper end of the guidance? I mean, is it because they're just being conservative and they want to see the situation play out? So, that's a little bit puzzling that after this Q2 performance, maybe there was some scope to raise even the upper end of the guidance. Margin guidance on expected lines remains unchanged at 20 to 22%. And for the first half of the year, the company's margins are bang in the middle of the guidance. There's one internal which is actually fairly positive, and that is actually two of them. One is deal wins. So deal wins continue to remain healthy. In Q2, it was strong in Q1. But the second one is attrition. Is the total headcount addition. Remember, the increase in headcount is also in a way seen as a leading indicator of demand. It's only when you have demand visibility will you go ahead and hire. And IT companies went through a lean patch where headcount addition was very modest. Some attributed it to the AI productivity-led benefits. That's the reason why they didn't hire so much, or because of the overhiring that happened in the post-COVID boom. But in the current quarter, Infy's headcount has gone up by 8,200 employees. And I think that as a signal is fairly encouraging. Sandeep Agrawal, fund manager at Sovilo Investment Managers, now joins in. Sandeep, give us your thoughts.
Hi, good evening, and thanks for having me on the show. So I think, obviously the numbers are slightly better than estimate, and also they have adjusted that better than expected number by upgrading the lower end of the guidance. So definitely, slightly better than what was expected, and margin guidance have also been maintained, and TCV is also good. But the only point which I would like to highlight is still, the growth is 2 to 3%, and even if they achieve the upper end of guidance, it will be 3%. So the challenge, I think, is a mature industry, and they can do only this much, and they have done very good in this current environment where, efforts are going down due to AI. So I am not seeing this as a negative number, but again, nothing great to read about on the positive side also.
Okay, so beating modest expectation, and it's not that growth is gung-ho. Point well taken, Sandeep. Thank you for joining in. In fact, as you can see, Salil Parekh has started the press conference.
10% was new or net new work. In addition, we announced a mega deal worth $1.6 billion after the close of the quarter, but before our results announcement. We've added 8,000 employees during the quarter. Our client interactions are showing a strong focus on deploying AI across the enterprise, both for growth and for cost efficiency programs. In doing this, we are continuing to scale our team of forward deployed engineers. With a strong performance in Q2, we change our revenue growth guidance for the financial year. The new guidance is growth between 2% and 3% in constant currency terms for the full year. And our operating margin guidance remains the same as in the past quarter at 20 to 22% for the full year. With that, let's open it up for questions.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Jayesh Sangrajka, Chief Financial Officer, Infosys. The first question is from Ritu Singh from CNBC-TV18.
Thank you. Hi, Salil. Hi, Jayesh. Salil, firstly, on the guidance, the fact that you've tightened it but not really increased it from 1 to 3 to you've gone to 2 to 3%. And, with a 2.2% growth this quarter as well. At the current run rate, you'll at most have a flat growth for the rest of the year for Q3 and Q4 with the current guidance. You'll easily get to the top end. So I wanted to understand, are you not seeing a meaningful recovery, especially when it comes to your manufacturing, retail, these kind of verticals? What kind of headwinds do you continue to see? Because for Infosys, the contribution to revenues is slightly larger than peers. That was one. Also on the H-1B visa issue, if you could give us some details on how many employees you deployed on this visa for this year and the previous maybe a couple of years, and whether you see now this as being something unviable, sending freshers on H-1B visas, to work in the US. If I may also ask, your peers like HCL Tech have also started to quantify their AI revenues. We've been asking you this for several quarters now, and we understand AI cuts across services and sectors. Could you give us a sense of, what exactly you're seeing there? And finally, the Versant Group acquisition. What exactly was the contribution to revenues, and whether you're looking at further M&A in the region or outside? Thank you.
So let me start, and Jayesh will add in a couple of things. First, on the guidance and the environment. So in the guidance, typically we have the second half of the year is slower than the first half. That's the normal pattern. So we've continued with that pattern. Having said that, we've seen good traction, and that's how we've actually increased the guidance. The previous guidance was 1 to 3, and now it's 2 to 3. So in a sense, we have much more confidence with the lower end being increased in what we see into the outlook for the year. In terms of the specific industries you mentioned, we had a good performance on manufacturing, on financial services. We still see constraints in retail. We do see a good pipeline there, and we will see how that plays out in the coming quarters. Keeping all those things in mind and the global environment in terms of the macro, we decided to keep the guidance at 2 to 3 with all of those factors that I mentioned. On the H visa, what we've shared in the past, what we've shared recently, first, our US workforce, the number of people that require Infosys sponsorship for immigration is a minority. So the majority of the people don't require it from our perspective. Second, we've built a large number of centers and hubs which are focused on digital, on innovation, on technology and AI in the US. We have relationships with universities. We have a training facility there. With all of that in mind, we are clear today that we will work with our clients without any disruption to their services and into the future. We don't have any specific information to share on the numbers that you had suggested.
When you say a minority was dependent on the H-1B visa, could you give us, in percentage terms, how many of your employees that you were sending abroad were on these visas? And when you say there won't be any disruption, how exactly will that play out?
So there, we don't share the specific numbers, but the majority of our employees in the US are employees who don't require any Infosys immigration support. The way we are working with our clients, we've reached out to each of them and made sure that we see and they see how their delivery continuity becomes on track and remains the way it is right now. Then On Versant, so first, there's nothing in the this quarter. They're going through all the approvals and so on. So the regulatory approval, which is a normal process, we'd anticipated it would come sometime in the coming months. Yes, we are very much looking at other acquisitions. We have a good pipeline. We don't know when those will materialize, but there are some opportunities there which we are looking at.
Sorry, the question on Versant was, going forward, what kind of contribution to revenue do you expect? And in M&A, what are the areas, what are the geographies where you're looking to fill the gaps?
On the contribution, we don't have anything to share now. When it closes, we will be in a position to give that information. Is there anything more on Versant?
I think we have given the last year's numbers of Versant already in the stock exchange filings, that we did last time when we announced that. So you can make an estimate based on that. But just to add to what Salil was saying on the guidance as well, if you look at the commentary last time when we gave a guidance, we very clearly said that the upper end of the guidance is where we are expecting stability in the environment, and the lower end of the guidance is where we are expecting worsening in the environment, right? As we stand today, the environment still remains uncertain, and despite that, on the back of Q2 performance, we have tightened our guidance, where again, we are very clearly saying that at the lower end, we expect the worsening of the environment, and the upper end, we are expecting stability in the environment, right?
On AI, I think we are scaling up massively on AI. We have a large team of FDEs. We are doing a lot of projects on enterprise AI with clients, on growth, which is focused like in the sales function or marketing function, on cost, which is focused on many of their processes, optimizing them, on customer service, on code development. So there's a broad set of AI work that we are doing with our clients. There's a large number of clients for which Infosys is today the AI partner of choice. So we're going quite well. We have strong partnerships with a lot of different large tech companies. We believe there's a huge amount of opportunity in the enterprise AI space. And with our experience on how to navigate within the enterprise landscape, we are quite well positioned to help with that.
Thank you. The next question is from Jude from ET Now.
Hi, Salil. Good to meet you here, and congratulations on that performance. You spoke about scaling up on the AI front. Could I get you to throw some light on what those specific deals are like? What is the AI order book shaping up to be at this point in time? And more importantly, what will your hiring trends be like for the rest of FY26? And I know for a fact that you have the confidence, which is why you've raised the lower end of the guidance. But what is the overall demand environment shaping up to be like for the fiscal?
So on AI, I think what we see today is a lot of interest where there's deep work going on, whether it's on a specific knowledge process or it's in credit risk, or there's work doing on software development, or there's work going on customer service. So broad area of AI projects that we are working on. In some cases, we're working across an enterprise on transforming that enterprise from an AI perspective and making them the leading enterprise in their industry in AI. So good traction there. In fact, we have more and more of this that we want to start to share in the sense of what are the approach that we are taking, how it's working, and you'll see that as we go through in the next few months. On the environment, as Jayesh was sharing, the environment is still uncertain. And what we see today is some changes in where the global environment macro is looking. We still see in some of our large markets that there is growth, but there's also some inflation, there's job creation, which is constrained. In some other markets, there are cost constraints. Some industries are seeing that. So that's a mix. Equally, we are seeing a lot of strength, for example, in financial services. Our client base is doing very well. We see extremely good growth. We've seen good growth in manufacturing in this quarter. We have a portfolio where we are across all of these different industries, which helps us to deliver the kind of performance that we've delivered for this quarter. On terms of hiring,
so if you look at our hiring for this quarter, our net addition is already at 8,000. We had given a guidance in terms of the fresh hiring for the year, and we had said 15 to 20,000 what we expect. We have hired in the first half 12,000 plus freshers already, so we are well on our track to hire close to 20,000 this year.
Well, that is Infosys there. Salil Parekh taking us through the results for the company. Strong performance coming in there for Infosys for the second consecutive quarter. More importantly, telling our colleague Ritu Singh there that the H-1B issue should not be disruptive for Infosys. While not giving a specific number, that the US workforce for Infosys on an H-1B visa is quote-unquote in a minority. We will, of course, decode more and keep you posted on all the other earnings of the day and the top stories. But for now, it's a wrap on this edition of Business 360. Stay tuned. Lots more coming up.
Presented by Standard Chartered. Special partner, Nuvama. Let's do it right.
Hello and welcome to this very special Diwali program. We thought of stepping out of the office and into one of the more newly minted mutual funds here in Mumbai. Well, it's nearly 2 years old, but I don't think you should draw a linear graph to how many years old the mutual fund is and, of course, the assets under management, which has been growing at a much faster rate. I'm in the offices of Helios Mutual Fund, and with me is the man I reckon for now is larger than life, and, of course, I think more recognizable than the fund itself. Samir Arora, I think needs no introduction. Samir, great to have you with us here.
Thank you very much.
Happy Diwali.
Thank you. Happy Diwali.
I thought इस बार instead of asking you market क्या लगता है यहाँ से क्या what will the market look like? Let me take you back a little bit.
Okay.
From working in a mutual fund many years ago, many years ago, many moons ago, now to running a mutual fund, founding a mutual fund, how does it feel? How's the journey? How do you reflect?
As I say, nobody knows anything about anything beyond a point. So when I was in Alliance, first of all, how did I join Alliance? I had no idea. I applied for more than maybe 150 jobs at Wharton, and I got a call. And my mom was in US at that time and said that somebody from Alliance called. I said, I don't know which Alliance, who's Alliance. Then I checked in my list that I had applied to them. And then I got a job, and it was in New York. But then India opened up coincidentally around the same month when I started working. And Alliance was interested in setting up asset management companies in emerging markets. I happened to be an Indian guy who had recently joined them in investments. But I had to do a few things. I had to give up aspirations for a green card or live in US, because if I joined their India thing, I had to come back to India. So I did that. And so, yes, it's been
Well, let me take you back before that. You went to IIT Delhi, IIM Calcutta.
Yeah, I went to Wharton to do a PhD. And then I didn't complete it and got a job with Alliance. And so
imagine what a loss it is to students if it was Professor Samir Arora.
And what a loss to me it would have been if I had been a professor.
But why? Why didn't you pursue it?
First of all, PhD is extremely boring. And I did 2.5 years. So that's why I have a master's degree in finance from Wharton, which is like a consolation prize.
You've always been a slight non-conformist, if I can.
In terms of what?
I mean, just in terms of thinking. I mean, it's a.
I'm a Punjabi extrovert. That is all.
No, I mean, but you look at issues, and I found that many times over the many years that we've spoken. You bring some, it's an original line of thinking, and kind of, as someone put it to me, you're a first principles thinker. That's how.
Yeah, maybe. So I don't know. I'm happy if that is the thing. It's not that anybody plans it like that, but some become macro, some become micro. But the good thing is that I have never taken, even the Alliance days, it was not a job. It was life. And for many years, even Helios, I used to call it Alliance by mistake. Actually, when we started Helios, the name that we first thought, maybe jokingly, which would have been maybe even good name, is Excellence. Ex-Alliance.
Excellent.
So even now, I don't consider it like a job. Of course, it's a job is the first part, but this is life and work and so much fun.
So much fun.
That you're willing to call it.
But does the I'm sorry to use that word for the lack of a better word, you can the non-conformist or non-conformism come in the way of, because if the market is going one way, it's not that necessarily you're going the other way.
No, I'm not going, and I'm
not for the sake of it in any case,
but to be contrarian.
Right.
No, not at all. We don't say that you have to be.
But has it cost you?
No.
Nothing.
You can see our performance.
Has been
No. Broadly, it works because of the rejecting model, which is actually a life model in terms of how you should go about things to narrow down the possibilities of anything.
Any sort of when you started out, while we were here in India earlier before you left, any change in your broad, fundamental thinking about markets, or has it remained kind of? It's evolved, obviously.
Yeah, it has evolved.
It keeps
in terms
evolving.
Of refining how we think and how we present. But the big picture I absorbed early that equity markets over time will beat everything else. So if over time they beat everything else, that means in a bad time, in theory, you should not run away from the market. You can run away from the stock or stocks. You can run away from fund managers. But you don't run away from the market, because if in the end we know that after every fall the market has regained or crossed its previous high, that means if during that fall you had done even a little bit of averaging,
You don't get that benefit
then
from
you
the
would
market.
get. So in Alliance days, somebody asked me this question because that time we used to do many more of these public events. So somebody said, I said, if you are angry with us at any time because of a fall, redeem from our fund and put anywhere else.
But don't stay away.
But don't stay away. Now people will feel, oh my God, what a noble fellow. And I immediately said, and if you're angry with other fund managers,
You can do this.
you redeem from them and give to us. So in the end, people will move around within that group because if a market is really bad. So I went to one like a course kind of thing where there's like a 101 are these. I think it was organized by CLSA. So it was for traders actually. And they said if you're sitting in a room and everybody's sitting and you are long gold, and gold goes up, you don't get up and say yes, because now everybody thinks that you are long gold, therefore you are a gold bull. Now if gold corrects after 30 minutes, we're talking about traders, you will not sell.
Correct.
Because you have just
publicly expressed
positioned
your.
that. So I see today, good thing is, today one of the bigger mutual fund companies has taken a position. I am bearish. I am on cash. Now market falls 10%. If they buy, people will say, you were bearish only for 10%. So these kind of things I have totally.
So you wisened up to that kind of. I mean,
I
basically.
realize that these positions are
There's
not
no
to be
upside in
taken
that sense,
publicly. You be ruthless and little bit shameless. And in my room, office in Singapore, I have these Ganesh, and Lakshmi and all. And below that, I have got NAV. In letters, because by the 3 letter people buy their own initials. I bought NAV. NAV is the boss.
NAV is the boss at the end of the day.
As long as you are doing things properly, NAV is the boss.
But your theory
this
of
image, I will look better if I call myself 20-year view, all that I don't care.
But fundamentally, I mean, I think a friend of mine put it well. He said that you can't predict all moves on a chessboard.
Correct.
So you play positional chess. But positionally, the chess, in your mind, the analogy is for the market is that you remain bullish.
Forever,
You have to remain constructive. Otherwise,
there's so much data across the world. Even now, even if you look for US, the US returns for the last 25 years are 8% in dollar terms. So even the US has given you 12% in rupee returns.
Correct.
This is when US is very mature and been around 100 years. India has been giving over this very long term. In rupee terms, maybe 14, 15, and in dollar terms, about 11, 12 in dollar terms. Over 25 years, I'm saying.
But I mean, it puts us right on top in terms of.
No, what I'm saying is, therefore, 25. What I'm saying is, people say, can you make 10, 12% forever? Actually, the thumb rule is whatever is the debt return or the government security return, I mean, government 10-year bond, you add 5, 6%, 4%, 5%. That is the thumb rule for what return you can get.
Yeah. Should we sit down and continue the conversation?
Okay.
Come. Samir, we've recounted the journey over the last 30 years. If you are to crystallize your learnings, like for the lack of a better word, 3 mantras that you live by, what would those be?
So I guess we are talking about my mantras in relation to equity markets, because that is my sort of role, job, whatever. So first, as I said, is that over time I have understood that equity markets do better than alternatives that you can have for your money. Mostly it means beating debt, maybe real estate, although these days it's not beating gold, but in general you can say that. And therefore investors or individuals and particularly young retail investors have to understand that equity markets over time do well, even though necessarily those same stocks may not do well. So in a bad phase, you may be angry or upset with the market, with the stocks or with the fund managers, but don't easily leave the market. And if you can, average a little. Why? Because if the markets, we have seen over 100 years that every time there's a fall, after a few years, the market is higher than what it was just before the fall. Correct. Because it's an all-time high, that means it has anyway covered all the falls. And therefore, if you could average in between, by definition, your recovery will be magnified.
Not that new investors need any encouragement, right?
Right now they don't, correct, because they have accepted it. Right? But of course, their expectations may have to come down a little bit.
For the heck of it, like if I take the opposite view, it's almost price agnostic flow, right? I mean, it's just
in
coming
India,
in India,
maybe a little bit, but we don't think that the prices are so high that they need to worry. Because one more thing, if you want another one of mine, is what you do depends on what you have done. Correct. So people who were not investing before, if they have now got 10%, 15%, they might as well be agnostic. It doesn't matter. Right. If somebody is 70% invested, maybe he can be a little bit more careful about whether he should add more or not. For people who have 30 years ahead of them in terms of working and earning, also it does not matter that you put in 1 year, 2 years, because it's very difficult once you break this discipline to know exactly when to come back. But anyway, that was not my mantra, I'm just saying. Okay. So my mantra otherwise is that, which I keep saying on Twitter also, that nobody knows anything about anything beyond a point. Which means A, you can't overly concentrate on a few names, and B, you can't overly invest for the long term and ignore the things that happen in between. So if you see many of these companies which we consider as very highly overvalued, it's not that other people don't think it is overvalued. They also know it is very expensive, high valuations, but they would say that the TAM is very big or the management is very good. Effectively, you are substituting one flaw by saying some long-term, thing.
Far into the future. But does this rule also apply differently to different people in that sense?
Of course, because for example, when our thumb rule has been that we have these 8 factors and we will mostly veto even if one factor is bad. So if we say sometimes that the management is very bad, the guy who has it among his top holdings, some mutual fund manager or some fund manager, he will also know that the management is bad. But his answer will be, but it is very cheap. It is discounted.
No, what I meant is people who are not at a certain level in terms of wealth, etc., who are starting out, and it's maybe a controversial point, but they're told, well, the only way you're going to get to some level of
is to try and
compound in a concentrated
faster way. But the thing is, if you have knowledge to think that you can compound like that, because the thumb rule is, if 100 individuals who want to make higher returns because of economic reasons, if 100 people concentrate, unless they're all concentrating on the same thing, they can't all do well. So by definition, if assuming that they have some common, some not common, and they all have 10 stocks each, so these guys would have concentrated, 100 people would have concentrated in 500 stocks. Let us say although they all own 8-10 stocks each, 2-3 are common between some people, all people. So there are at least 5-6 stocks which are of different this thing. So that means there are 500 stocks on which these guys chose to be concentrated. So how can all of them do well? So if all don't do well, that means it's not the concentration strategy that worked, but your lottery.
Correct.
So that is a different game than you're buying a lottery. If you say I'm concentrated in 3 stocks, 4 stocks, you're buying a lottery.
So no one knows anything beyond a point.
So therefore, don't be overly concentrated. And our other thing is, don't be overly compensating current issues for long-term. Thing that this is India's growth story, therefore everybody in the
country. Because long-term is
long-term mein ho jayega. Because there is time value, if you are thinking of making 15-18% per annum, which is fair and reasonable in many cases, then if you think that 3 years ke liye expensive hai, but it's a long-term story, to pehle aapne 50% you have left in between, in theory. So when people come and tell me, mostly analysts and all, that's a 5-year story, I say, why did you not tell me that it is a 2-year story? Why didn't you say it is a good story? Why did you characterize it by saying 5-year story? Which basically means the first 2-3 years bada महंगा hai. So मैंने कहा, I am here. Hopefully I'll be around 3 years later. So call me then. So that is the way of saying it. Anybody who tries to say this is a long-term story, then something is wrong. They should say, like we say, har term ke liye. It should be a story for 1 year also. And once in a while, it may not work in 1 year, and it's okay. But you are not having all your stocks with a 5-year view and a 10-year view.
Correct.
Third, I don't know. I didn't think I would. You said 2-3, so I gave you 2. But I can come up with a few more.
But you are applying all this, of course, in the Helios funds, right? I mean, I think it's done very well. Almost 2 years old. The AMC, your schemes are in the top percentile. So you're applying all of that.
We are applying means that is now our philosophy, you can say. By the way, this mutual fund is up, whatever, 54% in less than 2 years. But we have a PMS track record since 11. If you saw that PMS track record from the date of the launch of these other funds, if they were launched then, we would have beaten the #1 fund of this country. Also in our PMS over the life of... But it's just that PMS doesn't get that profile and all that. If you do 10, 12 years, 15 years, whatever. We start in 11. So our long short fund, so that is not, that's a philosophy broadly that eliminate first. Because our thing is, and stat shows that if there are 100 companies in the market or index, some 30% will do very well and some 30% will do badly. Okay, and the rest are around the index. And we find that it is easier to know what is bad. So if the 30% that are doing badly, so if we are owning 50 stocks, so 15 stocks will turn out to be good and 15 will be bad. If I can be very strict about bad, that I don't buy very high valuation, I don't buy very low growth, I don't buy bad history, or I don't buy a very competitive industry, or I don't buy anything which is disrupted. So the bad 15 I can't avoid it. But if I can make it 5, 10, even 10 if I make it, that the whole thing shifts. We have to beat the market by a few percent to be considered this thing that you have done well, and that broadly we've done nearly all.
And it's happened in a market which people are sort of complaining that it's been a bad market.
Everything is relative to that market.
Correct. And we had a fantastic.
So my thing is that many people say, why are you looking at the market? Even in our hedge fund, we say first we have to beat the market, because as I said before, the market beats everything else. If you can broadly, consistently beat the market, you have beaten those other things like that. And because very few people beat the market, you have beaten the others. So this idea of absolute return is also there in our, at least in our offshore hedge fund. But broadly, consistently beating the market, broadly, consistently. I also don't like the idea which one fund recently exhibited is that I am so strict about my own stocks that for 5 years I'll underperform, but in 7th year I'll outperform so much that I have made up for the 5 years of underperformance. Now over 7 years I'm doing well, because many investors would be frustrated, partners would be frustrated, and you would have a miserable life for those 5 years.
Samir, as we sort of wind down and we talk about markets all the time, so I thought we should do something slightly different, slightly enduring longer term. But let's wrap with that question. What's your prognosis?
So the big picture is that there are 3 or 4 positive things right now. Number one is India has done very badly this year relative to peers, emerging market benchmarks. So over 5 years, India has still done better than EM and China and all. Maybe only US has done better. But this year, India has had its worst relative performance in 30 years, which is some 25-27% underperformance in 10 months. That beyond a point does not last. Second is, what are the reasons why FIs are selling? I've been feeling that the world is interested currently, and not feeling that, you can see with data, that the world is putting a little bit of its global money into non-US markets. And it is not that they're doing it as a longer term play. Even currently this year, non-US has beaten US by more than 10%. So S&P is up some 13%. World excluding US is up some 23-24%.
Right.
So you can do it because you're upset with US policies or tariffs.
But there's performance as well.
And there is so it's not that I don't like US, a little bit only. And so if the rest of the world is getting money, so if the US is at 65%, if they reduce 3% for US, only 2%, and give it to the 35% part of the market, for them it is 6-8% growth. In that, we have a valid claim that we should also get money. But instead, India has been losing or people have been redeeming. I think that had to do with the extra tariff and the isolation of
that
India.
also perhaps.
That I think is getting over. You can see it from the tweets. You can see it from Mr. Besant saying that they are going to change the energy basket in our favor. That is from India saying they are willing to buy corn and a little bit, and then this good message that Trump sent to Prime Minister Modi, all those things, it's happening. Third is India has had a lot of interest rate cut, GST cut, tax cut. So all these things plus minus a few months has to impact. And fourthly, you can say that this year the IT guys were having very low growth. Even next year they may have low growth, but on a relative basis they're not declining more.
Correct.
And so broadly you will get 12, 13, 15% growth, and that kind of return for now is okay because your comparison is not with previous years, but with debt returns or fixed income returns. And fixed income, say 8-10 years ago, used to be 9%, 9.5% for 10-year government bond. So we would say you'll get 15% return in equities. Now, if that is giving 6.5, you're supposed to make 12 only.
Correct.
And I think you will make 12 kind. And then maybe following year, IT will grow 2% more. So you'll get, maybe 15, 16%. But in general, the world, the Indian public that is, will have to realize that 20 to 25 returns were not normal.
थोड़ा normalized.
थोड़ा normalized जो है, वो पहले होता था 15ish for the index, and then we are supposed to beat it. And now the normal maybe 12 to 13, 14, maybe for some time, and then we don't know.
With some shooting stars in between,
And then,
obviously.
we'll get some stocks will do well.
Yeah. Samir, real pleasure to sit down with you.
Thank you very much, Ji. Thank you
To
very
you,
much
to the
to
Helios team, everyone, wishing you a very happy Diwali.
Thank you very much. And may you all start your SIP soon in our Helios fund.
Thank you.
Thank you very much.
Special partner, Novama. Let's do it right. Co-powered by SBI. Best है सबको पता है. In association with Tata Capital. Count on us. And car ka action hero, Acco.
Hello and welcome to News Center. I'm Parikshit Luthra. US President Donald Trump has claimed that Prime Minister Modi has assured him that India will stop buying Russian oil. Speaking to reporters at the Oval Office, Trump said India will halt purchases within a short period of time. In response, the Indian Ministry of External Affairs said safeguarding consumer interests will be top priority. The ministry neither confirmed nor denied if this conversation on Russian oil took place between Prime Minister Modi and President Trump. The MEA went on to say that there has been steady progress on the expansion of the relationship with the US and discussions are ongoing about a trade deal. India's chief negotiator Rajesh Agrawal is in the US for a fresh round of talks. Here is President Trump speaking on India's oil trade with Russia.
This is a war that should have never started, but it's a war that Russia should have won in the first week, and they're going into the fourth year. And I want to see it stop. So I was not happy that India was buying oil. And he assured me today that they will not be buying oil from Russia. That's a big stop. And he's assured me there will be no oil purchased from Russia. I don't know, maybe that's a breaking story. Can I say that? Would you say? There will be no oil. He's not buying his oil from Russia. It started. You know, you can't do it immediately. It's a little bit of a process. But the process is going to be over with soon.
To take this discussion forward, I'm now joined by Pramit Pal Chaudhary, South Asia Practice Head at the Eurasia Group, and Sumit Ritolia, Lead Research Analyst at Kepler. Thank you very much, gentlemen, for joining us. Sumit, if I could first try and understand from you, we currently hear from our sources in the industry that India's oil and gas purchases from the US have already touched $8 billion US. They're likely to reach about $13 billion by the end of this year. Could you give us a sense of what you have gathered from various sources about India's oil imports from the United States currently, and how does this compare to India's imports from Russia right now?
Okay, hi Parikshit, thanks you. So yeah, there is a notable increase in India's purchase from the United States, particularly in the Q3. I mean, July to September, as in we speak, or October is lining up to one of the highest imports in terms of crude oil and gas since 2022. So Indian refiners have increased their purchases from United States. But compared to Russia, like I would again take a break and say, like, India is very unlikely to rapidly decrease or go down on the path of not buying any Russian barrels. So to be honest, whatever if it has to happen will be based on pricing, or if unless like there is a sanctions tomorrow, like what we have on Iran and Venezuela. So and at the time of speaking, like October loading from Russia to India is around at fourth month high, around 1600 KBD, and in October imports to India is highest since June. So data speaks that yeah, Russian barrels is here to stay. And compared to US barrels is corresponding around 5 to 10% of India's total import, whereas Russian barrels is sitting at the highest top of the ladder with around 35 to 40% of total import.
Right. Let me also now go across to Pramit. Pramit, how do you see Donald Trump's statement, a very strong statement where he said that he has spoken to Prime Minister Modi. Prime Minister Modi has assured him that he will be stopping Russian oil purchases altogether. Do you think we're now close to arriving at some sort of trade agreement?
So keep in mind that U.S. Treasury Secretary Scott Bessent had already publicly said a few weeks ago that they were expecting India to phase out Russian oil, but over a period of time. And we've been hearing that the Americans have basically urged India that as you phase it out, buy U.S. oil. India had said, can we also buy Iranian and Venezuelan? We've seen reports of that to replace some of the Russian oil. We haven't got that agreement. The good thing about saying that we will buy American oil as a part of a partial phase out is that there is very little American crude available. Most American crude has been bought or booked well in advance, largely by governments and companies trying to keep the American system happy. So the phase out, if there is going to be one, will be over a period of time. But all of this points together at least an agreement coming to on the 25% punitive tariff that was imposed over Russian oil purchases. India has always said, and you saw Vladimir Putin acknowledge this in a public statement, that this is an economic decision. In other words, it's not about a strategic policy. It is just that if Russian oil is cheaper or makes more economic sense, we will continue to buy it. If it doesn't make economic sense, we are prepared to go somewhere else. Today, that Ritola would know better than I would, but my understanding that gap, the benefits of buying Russian oil are now actually being reduced to possibly as little as $2 a barrel, simply because global oil prices have fallen and are now very, very close to the $50 G7 price cap on Russian oil that we are following right now. So for India, the economic benefit is not particularly great. Our Russia relationship is extremely strong, so it's not driven by oil. And if it's part of a larger trade deal, then it would make perfect sense in the national interest for India to do so.
Right. And what is your sense, Pramit? What could India do in terms of long-term energy purchases from the US to meet the trade deficit? Certain sources in the government believe that, yes, there is a $45 billion trade deficit, but the energy trade itself may be good enough to address this trade deficit.
So you may remember after the February summit between Modi and Trump, the Indian Foreign Secretary Vikram Misri in the press conference afterwards had said India could see, if I remember correctly, buying $20 billion worth mainly of LNG from the United States. Oil not in great supply, other products that are coal and so on don't make much sense to get from the United States. But LNG is something America does produce in large quantities. Even they're kind of tapped out for the time being. But by early 2030, we should start to see a large increase in American LNG production, something that we do need. In the negotiations, the private negotiations between India and the US, America has also said that India investing in LNG programs in the United States would also be considered acceptable and would be considered an offset against that trade deficit. That would actually make the most sense. These long-term LNG terminals, gas fields are generally quite profitable. We found that definitely with the Russians when we invested in Sakhalin, which seems to be coming out of sanctions in Siberia, that these are extremely profitable for India. So if that is also going to be part of the mix, then it makes perfect sense for India to consider both buying LNG in the long run, but also even better, perhaps investing in American LNG terminals and gas fields.
Right. Sumit, if I can return to you, what would be your sense in terms of the total value of India's oil purchases from the United States by the end of this year? We've got informal estimates of about 12 to 13 billion US dollars. What would be your estimate for this fiscal or for this calendar year since Trump has come to power and till the end of this fiscal year?
So our internal assumption is around your number only. But coming back to again, like there is not much potential upsides to India buying crude oil from United States. So we have already hit 300 KBD till now, and I see further upside of around 150 KBD only. Whatever the minister was saying, that whatever India can increase buying is another on LNG and LPG, but on crude oil side, we are almost capped.
So you're saying that now there is greater room for buying LNG and LPG from the US. That's what you're saying.
Yeah, rather than increased crude oil imports. Like crude oil, we can go max to max 100 to 150 KBD more, but not more than that.
All right, maximum 100 to 150 KBD more. That's what Sumit is saying. Pramit, also, what do you think are the remaining sticking points in the deal? Is it the average tariff rate? Is it because they want greater access to agriculture and dairy, or they want zero tariffs for US automobiles also?
Knowing the way the Trump administration has negotiated both with us and with other countries, my understanding is on the agriculture, there is a broad agreement that products from like soya products, which and corn products could be imported into India. India needs a lot of that. We are short, for example, of high quality livestock feed. And both corn and soya livestock feed is something we need. We are already one of the world's largest importers of soybean oil, so being able to buy some from America, which should be reasonably easy. But we've basically put in, at best, a phase-in for actual grain, in other words, soybean grain and corn itself. And that more or less will get us past the agricultural gate. But I think more importantly is that there are now issues of so-called national treatment. Trump has often said that India cannot have a discriminatory regulatory policy towards US versus Indian firms in a digital and financial space. So for example, India imposes a slightly higher tax on foreign banks than it does on Indian banks. It has data localization, cross-border data restrictions on foreign companies. It has similar restrictions, for example, in e-commerce and so on. I think at a time when India is trying very hard to attract FDI, our net FDI numbers have collapsed in the past year or so. This actually makes sense. So I think on that, we shouldn't see too many differences as well. The question is time. Do we have time to complete all of these technical details before the end of the year, given that India has a holiday, America has two big holidays coming up, to Thanksgiving week and Christmas, of course, and the US government is shut down, which makes it extremely difficult to negotiate with them. That is, I think, maybe a bigger constraint than anything else.
Okay, now in terms of diversifying, if we were to slow down buying of Russian oil and gas, Sumit, where else would we go apart from the United States?
Okay, so that's a good question, and I think Indian refiners are already on the diversification spree. We have increased intake from LATAM. You have increased volume coming from Nigeria this month, and even the public sectors have increased their cooperation with Middle Eastern suppliers. So in terms of if India sees the day that we need to diversify, but I don't see more than 200, 300 KBD unless there is some complete guidance from the New Delhi. So US, LATAM, particularly Brazil, and in Africa, you have Nigeria, and one of the major sources of our energy, Middle East, is there, also there.
All right. Pramit, we've just heard from the MEA spokesperson. He was asked if there has been any kind of conversation since yesterday between Prime Minister Modi and President Trump, because President Trump claimed that Prime Minister has told him today that India is going to stop buying Russian oil. The MEA spokesperson has said that, as far as I know, there has been no telephone calls between Prime Minister Modi and President Trump yesterday. What does this indicate to you? There are also indications coming in that Prime Minister Modi will go for the ASEAN summit in Malaysia later this month, and there could be a possible meeting between the two leaders. How do you see Trump's statement and the Indian government's denial of that phone call?
So Trump, as you know, his statements, the reality of what was said between him and other world leaders and what he says at the press conferences, there's often a bit of a gap. And he has a tendency not only to confuse what was said, he even confuses the countries that are involved and will often confuse world leaders. And definitely the time when exactly he heard what and from where can also often have to be corrected later on by the US government. I think for all our practical purposes, I think what we're really looking at is a commitment from India to consider phasing out Russian oil. And that, I think, Besant's statement is a really better indicator of that, in return for a reduction in the removal of the punitive tariffs, and presumably as part of a larger FTA negotiation agreement over a period of time. That would make perfect sense.
Right.
Whether they had a phone conversation yesterday, I doubt that. Trump and Modi have had reasonably restricted phone calls, and normally something at this kind of a conversation, this is not something that will be discussed in that level. But Trump, I think, can probably confuse this with either earlier statement between the two, or possibly even one of the other intermediaries. For example, we had the U.S. ambassador designate Sergio Gore was in India for a week, and it's perfectly possible that Gore briefed Trump, and Trump has then extrapolated that to being a conversation between him and Modi, and that is also on par with the way Trump has acted in the past.
All right. Thank you very much, Pramit Pal Chaudhary and Sumit Ritolia, for joining us here for a very interesting discussion. We have to take a break, but before we go, let's listen in to what Randhir Jaiswal, the MEA spokesperson, had to say about Donald Trump's post on India stopping purchases of Russian oil and India's response so far.
अमेरिका से जो टिप्पणी आया ऊर्जा को लेके, उस पर हम लोगों ने अपनी एक प्रेस विज्ञप्ति, एक स्टेटमेंट जारी किया है। तो मैं आपसे कहूँगा कि जो हम लोगों ने स्टेटमेंट आज सवेरे आप लोगों के सामने रखा है, उस पर आप नज़र डालिए। जहाँ तक टेलीफोन की बात है, तो उसमें मैं ये कह सकता हूँ कि मेरी जानकारी के हिसाब से प्रधानमंत्री और राष्ट्रपति ट्रंप के बीच में कोई बातचीत नहीं हुई कल।
Welcome back. You're watching News Center. Hitachi Energy has announced that it will invest 2,000 crore rupees to expand its Global Technology and Innovation Center in Tamil Nadu. The investment is likely to create at least 3,000 new jobs over the next 5 years in Chennai. I caught up with Hitachi Energy's Global CEO Andreas Schierenberg and also India MD N. Venu, and began by asking them about the company's outlook for India amidst global headwinds.
Well, a lot of things have changed in the meantime. And of course, being on site and having a direct view of what is going on in India and looking how the investments are going is, I think, always a prudent thing to do. And that's what I have done. So we have visited our activities here and looked what we have invested, looking forward to more investments. We have announced lately that we're building a greenfield transformer factory here. So I think I wanted to get a feel and touch how is India doing. Yeah?
Right. You've just returned from Tamil Nadu as well, just a few hours back. Could you give us a sense of what is the Memorandum of Understanding with the Tamil Nadu government all about? This is said to be worth almost 2,000 crore rupees.
Well, we have our global support center there where we're doing a lot of engineering, programming, testing, and some development. And after we started to invest there 2 years ago and we built up nearly 3,000 people, I think now it's the second stage. We want to grow further. We are investing even more. And I think there are more than 2,000 jobs coming to that region additionally in the next 2 to 3 years.
Right. Overall, what would be your outlook on India at this stage? We're in the middle of a lot of geopolitical tensions and trade wars. But overall, how would you see India at this point? And what is your level of optimism about future investments?
Well, I can only speak about my business because this is what I see. And I have to say I was very, very much surprised as I was here in India last year, the first time after a couple of years, to see the progress of the electricity nets grid here in India. Having a synchronized grid, the biggest one in the world, working with renewables, trying to even build more. It's a very, very good development. And we are participating in that. And I think for that, I'm very much optimistic that this will continue to make the energy grid in India even more secure and resilient and more green.
Right. I'd like to ask you, Mr. Venu, about the performance of the company in India. We saw strong performance in Q1 of this fiscal, strong performance in FY25 as well. Going forward, what do you think is going to power the growth of Hitachi Energy in India? You were sitting at an order book of around 11,339 crores at the end of June 2025. How do you expect to finish the year?
Yeah. No, we are seeing 2-3 dimensions. One is that the market is very strong. The tailwinds arising out of energy transition is so huge, especially on the infrastructure, on the transmission networks, and also renewable penetration. In addition to that, but we are also seeing a very strong thing on the electrification standpoint. Many of the industries, especially on the, many process industries are expanding it, and we also see the data center. Data center is a very big market for us, and we have been consistently saying for the last several years that this is a prime market. Is one of the high growth segments and where we are targeting this thing. And we today, one out of the 3 data centers in India is powered through our solutions, our technology in that. So we are saying if the market is growing X, we grow higher than the market. And we have been proving for the last several years. And we see the outlook for the next couple of years also very strong pipeline, robust pipeline arising out of all these segments will help us to grow further.
Right. If I were to ask you, Andreas, what's the ambition now? Hitachi, clearly a very strong player in the energy transition sector in India. But today, what's the appetite for the future? What's the larger target and vision?
Well, of course, we want to support this energy transition in India as much as we can. That's why we are engaged here. Of course, we are a leading company in HVDC and all the technology which enables that transition. And of course, we want to participate here. Our motto for our Indian activities is India for India and India for the world. So first what we're producing is for the Indian market, and then we're doing exports. So we want to supply all the necessary equipment and material to continue that journey with our customers.
So how is India contributing to the global growth right now? And how do you see it contributing to your global growth in the next 5 years?
Well, there's a little bit of export from India, but I have to say most of that equipment we are producing stays in India. Venu is very much taking care about that, and I think that's right. And India plays a big role. It's one of the big growth markets in our portfolio, developing very favorable. And from the trend, I think that will take on for a long time to implement everything what is on the agenda. So that's very good for us.
If I can add to Andreas what you talked about, India offers 3 things to Hitachi Energy. One is that it's a market. The market is developing. Market is sustainable today. Market is more and more predictable. That's number one. Second one is the manufacturing ecosystem. We have 19 manufacturing factories. We are expanding both brownfield and greenfield. So today, 1/4 of what we produce, we are exporting it. So there is a scope there also. And the third one is India has a huge talent base. And using this talent base, we created, a few years back, the Global Technology and Innovation Center. That's what Andreas talked about. And we are going for the second phase. So all these things are a huge drivers for the global organization.
Right. In terms of the regulatory framework, this is a conversation that comes up very often when you speak about energy transition in India.
Right.
Anything on the wish list?
No, generally, my wish list is that the regulators has to be ahead of the innovation, right? And that's where things should start in that. And if you're lagging behind that, then a lot of things will come. And especially on the energy transition today, with a lot of supply-demand challenges are there, we expect that move away from transactional project to project approval and then RFQ based to basically the program based. And that's what we are looking from, project to a program based, and it should start from the regulation and then goes on everything. What we mean is that don't look at only project, by piece, look at in a multiple 10 years, 5-year period, whatever it is, and need all the approvals, permits, etc. And then we start bidding, and then all the OEMs can also cater to those kind of requirements.
Right. Let me also ask Andreas to add to that. Andreas, in an interview last year, you had said that India's electrical grid is becoming a liability factor for energy transition. You were comparing how the India market is to some of the other global markets. Could you give us a sense of what can be done better in India, which would probably help companies like Hitachi Energy?
I think it's most of what Venu already mentioned. I think we see very good growth here, very good projects. I think the strategy is very good. The implementation is going on. The question is, how can you do it faster and cheaper? And faster and cheaper is just a way how to approach that. If you go just from project to project in a transactional way, you approve a project, you're doing it, you can do that. It will just take a little bit longer because long lead items cannot be bought beforehand. Capacity cannot be reserved, and that's what we see in other parts of the world, that the regulators are changing their way. So we have frame contracts. We just signed a big frame contract in Germany for 600 million for 10 years for 25,000 transformers, just to reserve the capacity to be ready. Otherwise, we have to be very conservative because we are a shareholding company. We have to invest the money wisely. We cannot build empty capacity. So if a project comes, it will be executed. But it would be better if we have a better visible horizon, what is coming to us and to the others.
So long-term visibility and long-term contracts as well. Now, my final set of questions to both of you. Your overall outlook for the India market, global growth, and where do you see India there?
India is one of the hotspots for the global growth for us in the energy transition. It has its own strategy, which is implemented. It has done a lot of progress in the past, and I think going forward, it's continuing that way. So it's one of the growth pockets for us and in the world for building out their grids, and that's definitely a very interesting place to be.
Right. So where would India be in your top 3 or 4 markets?
Yeah, it would be exactly there in the top 3 or 4 markets.
Okay, fine. Venu, my last question to you. How do you expect Hitachi Energy to post growth in this fiscal? What kind of margin growth, what kind of revenue growth are you expecting?
As you know, as part of our company strategy, we don't give a forward looking, but let me give you a little bit of, information so that you understand that. And we are consistently saying that the market is growing, we are growing higher than the market. Because how we are growing? Because one is that we have a huge focus on the go-to-market, and especially on tackling the high growth segments, and the service is the biggest lever for us, and we have more than 70,000 crores worth of install base here because we've been present last 75 years, and we really want to leverage and offer our products, including the digital layer on top of this, to our customers. Many of our customers, especially the data center customer, they are looking at us not only the product supplier or technology supplier, they're looking at the life cycle partner, and that's where we play a major role there. And we are really bullish on the service strategy, and we created a separate service BU globally and also locally here, and we will be leveraging on that. And then exports is the third one, which is very important. As I said, 25% of export consistently we are doing it, and then it has a plan. It has a plans to go further on that.
All right. So, Andreas, Venu, thank you so much for being with us, telling us about Hitachi Energy's strategy for India and its importance for global growth as well. Thanks once again for being with us here.
Thank you for having us.
Thank you.
Thank you.
With that, it's a wrap on this edition of News Center. More news and updates right here.
Co-powered by SBI. Best है सबको पता है. In association with Tata Capital. Count on us. And कार का action hero, Acco. special partner, Nuvama. Let's do it right.
Hello and welcome. It's that time of the year again when lights, optimism and the spirit of renewal takes center stage. As investors look behind the candles and crackers to the year ahead, we are here to decode what lies beneath the sparkle of markets this Diwali. Joining us today are two of India's most respected market voices. Manish Chukani is veteran investor, needs no introduction. Actually, both don't need any introduction. As I like to say, he's of course director at Enam Holdings. Madhu Khela is with us, veteran fund manager, and of course, founder of MK Ventures. Again, needs little by way of an introduction. Together, we'll take stock of the year gone by, explore what the next Samvat could hold, and ask the question every investor, I think, is thinking about. Is this the time to stay the course, take profits if there are profits, and of course, or double down? Manish and Madhu, great to have both of you here. Thank you very much.
Thank you, Prashant. And a very happy Diwali to you, the entire team at CNBC, and all your viewers.
Happy Diwali to you, Madhu bhai. Happy Diwali.
Happy Diwali.
You know, I want to start not with stocks, but the hard stuff. Gold and silver is, I think, top of mind. Every day we are sort of seeing this dizzying move. It has been dizzying. Gold, $2,000 in 2020, almost $4,200. Silver has taken out this $50 mark, and it's been a dizzying rally. Manish, you've been talking about this move to hard assets, the dollar debasement kind of trade. But take stock of it from where we are, because what you do depends on what you've already done. So in that sense, what's your take?
So let me take 2 minutes to just give the background to how it plays out. That the world's always looked for something which is a store of value and a medium of exchange. And that's typically then centered around the US dollar ever since they broke what was the gold standard. What that has done is it's given the US the freedom to print money. And effectively debase all other currencies and all other asset prices, leading to US now becoming 70% of global market cap. And they were at peak, I think, also 65-70% of global currency reserves. But every decade, this excess money printing has led to bubbles. So in the 70s, you had the Nifty 50 in the US, which then culminated in the rise of gold, silver and oil in 1980. In the 80s, it went to Japan and Taiwan. Their markets went up 12 times. In the 90s, it went to NASDAQ. In 2000-2010 period, it was back to commodities and emerging markets, of which China was the center. 2010 to 20 went back to technology. And it got extended by the excess money printing which happened around COVID. And that led to also this money going into AI and stuff, which really has 10-15-year gestation. Great technology, but otherwise, you would not have had that kind of money to pour into it. On that, when they started seizing the assets of the Russians and cut them off swift, I think the world woke up that we need an alternative to the dollar. And
they went back to the oldest.
And they went back to what they knew best. And remember, 2020 to 30 was also meant to be the changeover from tech to hard assets. So you got both the themes coming together and this rise of gold, silver, uranium, hard assets. So when you get parabolic rises, typically the market pauses for breath, like a stock market. Last year we were very high. The market went sideways. We paused for breath. It cannot go up continuously. And as Buffett says, gold is a fear trade. It's an insurance. It's not a dividend-paying cash flow asset. Equities is your hope trade. So the world is clearly divided. The equities is going with the AI boom, which at some point will climax out.
So for now,
but this hard asset theme is here to stay.
But pause. I mean,
yeah, I mean, when you see parabolic rises in 1 or 2 months, like silver has just gone parabolic, it has to pause, maybe correct a bit, but this bull market by no means
gold, by the way, going back in history, has corrected 30-40% at times. It has. By the way, I spoke with...
But just pause that thought, because people argue this in dollar terms. But because the rupee keeps collapsing, the Indians have never seen down years in gold.
Correct, obviously.
So that's why gold and real estate have been such favored assets for the average Indian.
William Buter, who was the global economist at Citi, the interview will air tomorrow. Okay. He wrote an article in the FT saying that central banks must sell all their gold now.
Great.
Thinks, well,
by what?
He says the reserves should be a diversified set of things. It cannot be 25% in gold, which is where it is now.
How much is it?
It's just a controversial view. I'm just taking the opposite side for the sake of it.
Bring him on.
So you're saying a pause, maybe a bit of a correction.
Pullback will always happen, but it's a long-term bull market.
Adu.
So traditionally I've been more positive, always been in equity, and that fundamental view has not changed. You can tactically use gold and silver as an asset allocation call, but I don't think someone like me can invest heavily and significant portion of my portfolio in gold and silver for a long run. And my premise is based on very fundamental thing that all the noise about this gold and silver price is all technical in nature. There's nothing fundamental about it, right? There's no real fundamental usage of gold or silver which can justify these prices. We're all talking these central banks are buying, dollar is debasing, and I agree with Manisha's point. But when I buy good companies, their earning could go up. Like if I buy really good companies, their earning could double in 4 years, quadruple in 8 years. So effectively, I'm buying those companies much, much cheaper 8 years down the line. The same is not true for gold and silver. That is point number one. And point number two, right now, the rise looks, as a market participant, it looks very euphoric to me. अभी टैक्सी वाला, पान वाला सब gold silver लेने का advise कर रहे हैं. So I would suggest, if you are buying incremental gold, unless you are buying it for usage, for saving, that you should refrain.
Actually, we've spoken to gold companies. They said that volumes are down 20%.
Yeah.
Value is up 20% because of...
And I'll make one important point here. Why are we feeling so good about all this, Prashant? COVID low, our market cap had fallen to 1.2 trillion. Today it is $5.5 trillion. Gold has literally tripled from COVID lows. More than tripled, right? And analysts used to expect our gold reserves are $1.5 trillion 5 years back. So but just by definition, it should be close to $4 to $5 trillion, including all the gold,
Everything.
which is
the temples and everything.
a temple, hidden, not hidden, right?
Correct.
Just imagine the wealth effect which India is going through.
Yeah.
That is the bigger point. That's the bigger picture everyone is missing. Let's say $3 trillion in gold and $4 trillion in stock market. 85% of all stock market gains are domestic. Only 15% owned by foreigners.
Correct.
100% of all gains in gold are domestic.
But that,
So in any economy,
but that gain, it is, wealth effect is very
But
powerful
इसीलिए
effect,
मैं
but you
क्या
can't
बोल रहा हूँ?
monetize that wealth effect in that sense.
Prashant, you are feeling good. That's why you're buying a 700 crore apartment, right?
Maybe not maybe.
700 crore. Well done, Madhu.
No, I'm just saying the people are buying. This all over the place. I'm just saying this wealth effect
that's
is
true.
what
It's a
is
powerful one.
Is a very powerful one in an economy which is 4 trillion.
Yeah.
You've literally created $7 trillion of incremental wealth in last 5 years.
Yeah, 100%. Let me segue from that point. You say it's a fear trade. Maybe the fear now, hopefully the fear goes down as well, right? Which is one of the factors there. From our perspective is this India-US trade thing, which went completely the opposite way than all of us expected. Voices and generally just the tone, tenor, etc. suggest that maybe it's on the mend. Would you agree, Madhu?
I agree. That's what I'm saying. And this is how the markets make kind of a, euphoric rises. That it has to get coupled with this rise. It has to stall somewhere. It has to get corrected with some fundamental thing happening. And this could be the trigger that, the 5 wars have stopped. You have to give credit to Trump that, literally 5 wars have literally stopped, right? And let's say if US-China trade deal happens and US-India trade deal happens, then a lot of uncertainty will go away. So that fear trade which was going on, at least in gold, specifically the panic buying, I would say, by central banks, that could temporarily stop.
Yeah, maybe along with the Bitcoin as well. That's another story. But
But
on the India,
all these guys haven't held that physical gold. They've all got in a short squeeze. What he's saying is right. It's all technical squeezes which play out in parabolic rise.
But India-US money should look more and more looks like something is going to get done soon.
See, think of India. All the tailwinds now are behind you. Last year we were worried about valuations. We've gone sideways for a year, so we're generally better off. The government's given you tax cuts. They've given you GST cuts.
2.5 lakh crores.
The central bank
budget and GST, 2.5 lakh crores.
Then central bank's given you interest rate cuts, and the regulators actually encouraging banks to go out and give more credit. So you couldn't have better conditions for business to take risks. The government's encouraging you with PLIs or what can we do to help you. So the conditions are actually good this year, unlike last year.
One thing still remains a bit of a, that's what I hear from...
When you said it, even last time, remember we said our exports were 80 billion, 40 billion were excluded from it. 40 billion largely came down to textiles and aquaculture and so on.
Correct.
So the sentimental effect is great.
Yeah.
But the way the erratic policies keep coming and going, if you're an industrialist, do you take a 10-year bet saying I put up a plant? Because if it's beyond this term, then you take a bet. But at the end of this term, what if the next guy comes and says, I want to overturn it? So that animal spirit, as the RBI governors also said, has been a bit missing. Because these policy uncertainties are what keeping us
Do you think
behind.
it'll come back with this thing happening?
It will be much better. But we couldn't say when the deal didn't happen that we are not so affected and now suddenly say, wow, it's fantastic.
Correct.
It is a positive.
Yeah.
But this market anyway is going to take a lot of these positives and start climbing.
The perception, I think what the market was actually worried about, including me, is the perception that India and US are not getting along. And then things could get much worse. 40% of all FI flows have come from the US. Let's not forget, right?
Yeah.
And it is one thing is this $40 billion is only goods export. But just imagine the services dependency on. So US is a very important partner.
I'll give you
and
one
we need
more.
to be friendly.
Absolutely, for sure. You want to be friends with everyone. But I'll give you another interesting way to look at it. The US is close to $65-70 trillion market cap, and it's held 30% by foreigners. So it's almost $20 trillion of foreign ownership of US markets. Every fund manager now in the world knows that you're near the end of the boom over there. That money has to rotate out. The biggest enemy of US is China. Money went to China. The Chinese market is up 40% because when valuations
money went this year. I mean, actually, last couple of years,
but this is when the war was at the peak with China. So we give too much importance to people can be patriotic and they can be investors and they need not be the same thing.
Under Biden, I remember having conversations with foreign investors saying that, well, when Chinese funds, etc., come to pitch, they've said it on air. We just told them, sorry, boss.
But it changed.
But it changed.
It changed. That's what I'm saying.
And it will change big time.
And when you see a profit opportunity, same way 18 months ago, people would say China is uninvestable, it has no terminal value. How come the same chaps have gone and bought it?
Madhu, you have a directional view in terms of if this US-India thing happens, let's just bring it down to the level of sectors where it will show up the most. What's your sense?
So I would say what has proven even in the last year, well, I would like to see two things really matter. One, are you able to catch some real long-term theme? Like we discussed 3-4 years back, this energy transition. And you see how much value creation has happened.
On the back of this, where do you think? On the
energy transition thing, right? So I would pick up the larger trend which is there is the usage of AI.
Okay.
And really people working on scale and cost using AI. I think it will make dramatic and very significant impact on companies which are able to adopt this. And on companies which are not able to adopt this, it will be a Kodak moment for them.
True. Wow. That's a perfect Kodak moment to take a break also. Let me just, allow me to take a break. I'll come back and we'll start exactly on this point and we'll look at other sectors as well. So take that break. We continue this very interesting chat with both Madhu and Manish. Stay with us. Welcome back to this Diwali special. We are sitting down with Madhu Kela and Manish Chokani, and we are now, for the next 7 minutes, going to talk about where to bet on. I mean, we're not near term, but which are the bigger themes to focus on from here. Before we took that break, Madhu, you said AI.
Yeah. So the AI usage is here. And I would think that this is very early stage of the usage, at least in India. And clearly not reflected anywhere in the market. On a $5.5 trillion, I can't even count $2 billion worth of real AI direct companies. While, in the US, that number could be 15, 20, 25%. Or in China, that number could be similar.
अगर आपको नहीं मिला तो फिर
नहीं ना, listed है नहीं ना.
Listed नहीं, unlisted.
Unlisted में खोज रहे हैं.
We both agree on AI being powerful. And like when the internet came, the beneficiaries were people who used it.
Yeah.
Now, when you think of AI, you want organized data sets for the AI to be unleashed. Who has the most organized data sets? We were the beneficiaries in internet as the BFSI. The same thing applies today in AI. We create analyst reports now in literally 10-15 minutes with use of AI. Imagine what it's doing to the banking sector. Think of productivity gains, which you'll get both in capital marketplace as well as in banking as well as in insurance. It's the biggest play of India, of AI, is actually our financial space. In any case, it's playing into this thematically, that financials is poised to lead this market going forward from here. Like I've given you in our last interaction, that SBI beats Reliance in profits soon. ICICI beats TCS in profits. Axis Bank beats Infosys in profit. It's a seminal change which is going on and people haven't realized. And the capital market theme is a secular structural trend.
So you're saying
and
there
even
is
for
financial
private equity, like we spoke before the show, you have ways to access private equity deals also with some of the best. His nephew runs a fantastic fund.
Right, absolutely. Are there
throw the
those
ball
plays
back
in the
to him.
private market, Madhu?
There are those plays which are coming up.
Not listed yet, but they are there.
There are those plays which are coming up. But we are more focused on usage of AI.
Which is application layer.
Which is application layer. I think that is where the real money will be made. Prashant, I'll just take 30 seconds. To give you an example, like today, all legal work is still not AI-led. Now tell me, there are hundreds of judgments which would have happened on any subject in last 100 years.
Right.
Just imagine a situation. Someone will create it in 3 years down the line. If there was a layer, how powerful it will be. And the lawyers who are not using it, how
No, it's happening. I
inefficient.
had a conversation about this with Cyril Shroff, and he said, well, they are doing some real work.
Put it in the
And I
judiciary.
can tell you, already in America, it is already happening. There is already a company which has been able to do it in America already.
If they legislate this for the judiciary to give you judgments, those 6 million or 60 million cases stuck in the High Court, then you'll be bullish on India.
Manish,
Because that is real ease of doing business. That's where we are stuck.
If not the judgment, but at least judges will start using it to get a proper summary of it.
Absolutely.
जो आप बोल रहे थे 13 minute में analyst report. I mean, if you're able to sort of summarize cases which are going out.
It's crazy, boss. Absolutely. I'm saying we are seeing the gains of productivity.
The other
already.
one with AI, it's related, is basically the physical infrastructure, which is data centers in India.
Absolutely.
You've invested on the private side at least with many of these
Sure,
sort of
absolutely.
things which go into the data center.
Absolutely. Data center and energy both.
Okay.
Because that is what is like an indirect way to play. Because there is so much data that you will definitely need. And according to me, the scale and the size of the growth in all of this will surprise many optimists as well.
Okay.
That's where I can see things going.
On the listed space, there are a bunch of them, but you think
Not too many, not too many. And one or two which are there, direct plays are not the ones
where you think,
where
you are kind of at least.
Now, I am saying, what has played out for us is you identify a large theme, right? And you start early, even if you have to wait. I'm saying in a fantastic theme, even if you make a mediocre investment, your gains will be phenomenal. If you make an exceptional investment in an industry which is tailwind, I have come out very frustrated investing in best companies.
Where the tailwind is missing.
Where the tailwind is missing. Or rather, there is headwind.
Correct. Manish and Madhu, from the AI is one theme, and I think it's that direction, as you're saying, it's in a way positional chess. I mean, directionally it is going to grow. So you got to find things which you said it's capital markets, financials, which perhaps anyway have a tailwind, and this kind of bolsters the argument. And you spoke about data centers and power, etc. as themes. And of course, on the private side, many application layer companies where you're making.
Which are coming up.
What else, as you look ahead into 2026, both of you?
I would say
which are these themes where you should look for ideas?
Prashant, I would say, let's say broad market. Last year, people are crying. You yourself gave me data. 30% of the companies out of 500 still made 30% return. Because there are opportunities on bottom-up basis. India is happening, my friend. All this capital market money which is being is raised. People are not going to put in fixed deposit. This is money is being raised for productive purposes. And I am specifically very bullish on some of the smaller companies, even the companies that are getting listed on the SME exchange, 100, 200, 300 crore market cap. These entrepreneurs are coming from tier 3, tier 4, tier 5 cities, exceptionally hungry. They have not seen this kind of capital in their lifetime. So there will be lots of winners from here. So Prashant, it's not about calling the broad market. It is actually betting on India's entrepreneurship on a bottom-up basis. That is the way to make money.
Are you going small in that sense now?
We are objective. It's not we are only looking small. I am saying the opportunity is bottom-up. And as long as the market doesn't fall, if I can make a case that market will fall 20%, then this bottom-up will not work. Then everything else will fall. I'm not making that case. I think market remains sideways. The view is more marginally positive on the market than on negative, because Manish already spoke about it. There are a lot of things which were like a headwind has already turned like a tailwind for the market. So earning growth will be higher, liquidity is there, RBI has cut rate, globally things looking like settling down. And predictions for earning growth is maybe at the bottom. Things will improve from here for the market as a whole. Now within that, if you call the market, I am saying you bet on bottom-up ideas rather than betting on Nifty. That's
no, 100%. Both without saying. But my point, in terms of themes, as you identified, AI is a theme, energy transition was one. Names like transformers, rectifiers, etc. made a lot of. I mean, there are many actually. Alcoholic beverages. I mean,
so that I would say, I would if you tell me one sector, it will be financial sector, where I think the overall basis stocks have not performed to their fullest potential, and we are already seeing kind of recovery take place. And there is way to, one is you can play in an asset light mode, which are capital market related plays, and the second you can even play banks.
Capital market and banks, and this can sort of squares with what
I'll give you a most unpopular one.
Yes.
Finance Minister indicated that after all her tax work is done, she wants to turn her attention to public sector.
Okay.
They've already said, for example, they may do consolidation of some of the PSU banks. This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat. If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bet.
Just PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme that, like, I'm just surprised people haven't realized Vedanta will make more than $1 billion on silver, which is a byproduct. So the amount of earnings coming through in metal companies is unbelievable what is happening. The highest rate of change this year in terms of earnings will come in Tata Steel and Jindal, for example. I'm not suggesting the stocks, but the thematically, the way it happened in 2000-2010 period, the move into hard assets and the earnings that can come out from there can be very dramatic.
And you have, I mean, you and Inam, the group has been positioned with metals, JSW, etc.
And so, see, like, again, that gold and all is, like he rightly says, it's part of your asset allocation. It's your insurance policy. It's not an asset.
Earnings kicker is
but earnings is fun is from people who make money out of hard assets. It includes manufacturing as well, which is a big theme for India.
If I can give 30 seconds, before we close. I think I see a lot of people are nervous because money is not being made in the last 12 months. You know, on a contrary, developed markets have done well, silver has done well, gold has done well. But markets have proven that people who have stayed invested through last 20-25 years are the ones which are smiling. So I don't think people should deter away from equities just because last 6-12 months performance have been muted.
Manish Madhu, thank you very much for joining us.
Thank you.
Thank you.
Shubh Deepavali.
Special partner, Novama. Let's do it right.
Presented by Standard Chartered.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening.
So I was not happy that India was buying oil, and he assured me today that they will not be buying oil from Russia. That's a big stop.
US President Donald Trump claims Prime Minister Modi has assured him that India will stop buying oil from Russia soon. India's External Affairs Ministry says no telephone call took place between both leaders yesterday. Also adds India's top priority is to protect the interest of consumers. Infosys meets estimates in the second quarter, tightens the FY26 guidance band on expected lines. Wipro also reports second quarter earnings in line with expectations. All Big Five Indian IT services companies exceed street expectations in the second quarter. Festive cheer on Dalal Street. Sensex and Nifty rise to the highest level in nearly 4 months after a strong rally. Nifty bank near record high. All sectoral indices end in the green. Gold and silver continue their record-breaking run as investors look for safe haven buying. Both precious metals have gained over 50% so far in 2025. Nestle India reports strong revenue growth in Q2 even as margins contract. New global CEO announces 16,000 job cuts worldwide as he targets volume-led growth. The Swiss multinational suffered unprecedented managerial turmoil last month with the CEO getting sacked for an undisclosed relationship and the chairman stepping down earlier than planned. Quick commerce fuels Zomato parent Eternal in the second quarter. Revenue triples on a yearly basis. Food delivery net order value up 14%. Zepto raises $450 million from existing investors and a new investor in California's pension fund at a valuation of $7 billion. The company's valuation has doubled in the last 12 months. Aditya Birla Group partners with iconic French brand galleries to tap into India's booming luxury market. Kumar Mangalam Birla says the group is the next phase of strategic acceleration and the portfolio is tilting towards consumer-centric ventures. Johnson & Johnson faces a major lawsuit in the UK. As many as 3,000 people allege the company knew its baby powder was contaminated with asbestos, a substance linked to cancer, but concealed the risk for decades. J&J denies all allegations. And less than 3 weeks to go for the Bihar elections, the opposition alliance is yet to firm up a seat-sharing deal. Supreme Court tells the Election Commission to explain the deletion of 65 lakh names from the voter rolls, which will be published tomorrow. All right, let's start with the day's market action. Sensex and Nifty ended near a 4-month high after a strong session today. Nifty crossed the 25,600 mark in intraday trade. Banks witnessed big buying with Nifty Bank flirting with its record high. Midcaps also closed in the green but relatively underperformed the blue chips. All sectoral indices closed with gains, with the realty and FMCG rising up 2% each. Here are some top market experts with their big bets this festive season.
If you tell me one sector, it will be financial sector, where I think the overall basis stocks have not performed to their fullest potential. And we are already seeing kind of recovery take place. And there is way to, one is you can play in an asset-light mode, which are capital market related plays. And the second, you can even play banks.
Capital markets and banks, and this can sort of squares with what
I'll give you a most unpopular one.
Yes.
Finance Minister indicated that after all her tax work is done, she wants to turn her attention to public sector.
Okay.
They've already said, for example, they may do consolidation of some of the PSU banks. This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat. If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bet.
Just PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme.
From equities to the commodities market, gold extended its rally to a fresh record high. This as the US-China trade tensions and the US government shutdown forced investors towards the safe haven metal. Prospects of interest rate cuts further boosting demand also supported prices. Prices of silver also saw positive momentum spurred by both consumer and industrial demand. P.N. Gadgil Jewelers MD told CNBC-TV18 that silver is facing a unique problem in India.
I think silver, like you said, is a unique problem right now. There is too much demand and very little supply in the market. I think everyone is right now almost stock out. What we have, silver is what they're booking, which were already taken. So there is very little silver which is available for sale right now. Same is the case with silver articles. The karigars don't have silver to make articles now. So the situation is like whatever is there in the store is what you can sell. And the demand just doesn't seem to end. Every day the prices are going up. The premiums are going up in the market, but the demand is still going further up. So I think it's a unique situation where prices go up, demand should come down, but your prices go up and demand goes up further. And next day wake up, prices go up further, demand further goes up.
All right, let's put the spotlight on the big story that we are tracking. A day after US President Donald Trump claimed Prime Minister Modi assured him about not buying Russian oil, MEA spokesperson Ranveer Jaiswal said that no phone call took place between the two leaders yesterday. Speaking to reporters at the Oval Office yesterday, Trump said he had received assurances from the Prime Minister that India would halt Russian oil purchases within a short period of time. However, the US President did not provide further details. The External Affairs Ministry had earlier said that India's import policies are guided entirely to safeguard the interest of the consumer. Remember, oil and gas are Russia's largest exports, with China, India and Turkey being its biggest customers.
In light of China's export curbs on rare earths, do you view India as a reliable partner going forward? And are you planning to meet Prime Minister Modi in Malaysia? Are you open to talks in terms of
Yeah, sure. He's a friend of mine. We have a great relationship. He just said that 2 days ago, as you know. We have a great relationship. No, we were not happy with him buying oil from Russia, because that lets Russia continue on with this ridiculous war where they've lost 1.5 million people, by the way. Russia's lost 1.5 million people, soldiers mostly. This is a war that should have never started, but it's a war that Russia should have won in the first week, and they're going into the 4th year. And I want to see it stop. So I was not happy that India was buying oil. And he assured me today that they will not be buying oil from Russia. That's a big stop. And he's assured me there will be no oil purchased from Russia. I don't know, maybe that's a breaking story. Can I say that? Would you say? There will be no oil. He's not buying his oil from Russia. It started. You know, you can't do it immediately. It's a little bit of a process. But the process is going to be over with soon.
अमेरिका से जो टिप्पणी आया ऊर्जा को लेके, उस पर हम लोगों ने अपनी एक प्रेस विज्ञप्ति, एक स्टेटमेंट जारी किया है। तो मैं आपसे कहूँगा कि जो हम लोगों ने स्टेटमेंट आज सवेरे आप लोगों के सामने रखा है, उस पर आप नज़र डालिए। जहाँ तक टेलीफोन की बात है, तो उसमें मैं ये कह सकता हूँ कि मेरी जानकारी के हिसाब से प्रधानमंत्री और राष्ट्रपति ट्रंप के बीच में कोई बातचीत नहीं हुई कल।
Moving on to the earnings now, Infosys reported a stable set of numbers in the second quarter, meeting street estimates on most parameters. Net profit rose over 6%, while dollar revenue jumped nearly 3% on a sequential basis. The company has said it hiked its revenue guidance for FY26 to 2 to 3%, while margin guidance remained unchanged at 20 to 22%. Company CEO and MD Salil Parekh said that Infosys has delivered 2 consecutive quarters of strong growth. Speaking on the H-1B visa issue, Parekh said the company does not expect any disruption.
Our US workforce, the number of people that require Infosys sponsorship for immigration is a minority. So the majority of the people don't require it from our perspective. Second, we've built a large number of centers and hubs which are focused on digital, on innovation, on technology and AI in the US. We have relationships with universities, we have a training facility there. With all of that in mind, we are clear today that we will work with our clients without any disruption to their services and into the future.
For this quarter, our net addition is already at 8,000. We had given a guidance in terms of the fresh hiring for the year, and we had said 15 to 20,000 what we expect. We have hired in the first half 12,000 plus freshers already, so we are well on our track to hire close to 20,000 this year.
Right, let's talk about Wipro that largely met estimates in the second quarter. Revenues grew sequentially and margins expanded by 50 basis points. The company is expecting growth to be in the range of minus 0.5% to 1.5%. All the top IT companies have reported their second quarter earnings, and all 5 of them have managed to beat estimates in Q2. Reema Tendulkar is here with the IT report card.
Thanks so much for that. So let's stack up the numbers. The Q2 companies have delivered on muted expectations. All the IT companies have delivered numbers better than street expectations. Right on top, you've got HCL Tech with a 2.4% revenue growth, followed by Infosys, 2.2% ahead of street expectations. Tech Mahindra numbers also looking good at 1.6%. EBIT margin performance has also been fairly strong. Most IT companies doing better than expected. And here, the key driver is one, the rupee depreciation, about 2.5% versus the dollar. And secondly, companies had postponed their wage hikes to the subsequent quarter. So for instance, TCS is giving a wage hike only 1st September versus 1st April. So, wage hike, which typically hurts in the first half of the year, was absent. And the reason the company had done that was on account of the macro uncertainty. And then you got the rupee depreciation tailwind. So margins have been fairly robust. And for most companies, they've expanded on a quarter-on-quarter basis. In terms of the overall commentary, well, IT companies maintain that the demand environment has not changed. It's not improved, but it hasn't deteriorated. And deal wins across the board have been fairly robust for the IT companies. So Infosys, after the strong performance in Q1, they have the confidence to raise the lower end of the guidance. So now they're saying revenue growth 2 to 3%. Earlier, it was 1 to 3%. And the hiring number was also strong, 8,200 added to their headcount on a quarter-on-quarter basis. For Wipro, The Q3 revenue growth seen at the midpoint of their guidance suggests a sequential improvement in the growth rate. TCS also said that the international revenue growth, what is international? X of the BSNL deal, will be better in FY26 versus FY24. HCL Tech also maintained the full year guidance, but for the services business, the bread and butter business, they did raise the lower end. So 3 to 5 became 4 to 5%. And for Tech Mahindra too, it's a work in progress and they continue to hold on to their FY27 turnaround plans.
Moving on, shares of Zomato's parent Eternal declined nearly 4% after the company missed street expectations in the second quarter. Net profit came in at 65 crore rupees, while revenue tripled on a yearly basis. FMCG major Nestle India has reported a strong set of numbers in the second quarter, beating street estimates across most parameters. The company's revenue rose over 10%, but net profit slumped nearly 24% on an annual basis. Margins contracted by over 200 basis points, but in line with estimates. And speaking of Nestle, in an effort for a turnaround, the FMCG company's new global CEO, Philip Navratil, has announced 16,000 job cuts worldwide as he targets volume-led growth. Shilpa Ranipeta joins us now. Shilpa, please take us through the FMCG major's reconstruction plan.
Well, Nestle India has served up another strong quarter under the new MD with double-digit sales growth driven by volumes. Both revenue and profit came in ahead of expectations, and the management has laid out its focus now on penetration-led, volume-driven growth strategy, and it will be investing heavily in brands and manufacturing capacities. Now, these results, though, come at a crucial time for Nestle globally. Now, this is the first set of earnings for Nestle globally under the new CEO, Philip Navratil, who took charge in September after a leadership shakeup at the global parent. And in his first earnings, he has announced that Nestle will lay off 16,000 jobs worldwide, and he has also upped the savings target by about 50 million Swiss francs. Now, Navratil has also laid out 4 top priorities to restore growth at the world's largest food company. First, and the most important one, he says, is driving volume-led growth, and renewed investments in key categories are already delivering results, with organic growth improving to 3.3% this quarter. Now, second, a portfolio review. Navratil says that he will consistently review every part of the portfolio regularly, and he will take swift action against underperforming segments. Water and mainstream vitamins is already under strategic evaluation. Third is building a performance-led culture at the company with sharper KPIs and compensation strictly now being linked to results. And finally, the business transformation and cost savings. Nestle will simplify structures and automate processes, and the 16,000 jobs being cut is part of this. Now, Navratil says that these moves are aimed at making Nestle a leaner, faster and more agile company while maintaining an operating margin at or above 16%. But now, with volume growth, which is real internal growth as it is referred to by Nestle, which was a key investor concern, is finally seeing some growth after years of being flat or negative. So the trajectory from here on will closely be watched. Back to you.
All right. Thank you, Shilpa, for that update. Shifting focus now, quick commerce startup Zepto has raised $450 million from existing investors and a new investor in California's pension fund at a valuation of $7 billion. The company's valuation has doubled in the last 12 months. This is Zepto's fourth fundraise in just over a year. Speaking with the CNBC-TV18, company CEO Adit Palicha said that the company will use these funds to expand operations.
The reason why we were able to get this financing done is because we've been able to grow from roughly around 500,000 orders per day in mid-2024 when we closed our last fundraise to about today 1.6 to 1.7 million orders per day. And even as we've grown the business close to 250% in the past 5 quarters, what we've been able to do, which I think is more important, is we've been able to consistently keep turning stores profitable. The vast majority of this 450 million is primary, and we're now in a position where we've got close to $1 billion of net cash in banks. We're launching a few hundred stores over the next 12 months. So we already have well over 1,000 stores today. We think we're going to add a few hundred more stores, even though we're seeing pretty substantial growth even in existing cities, and we're going to keep doubling down there. The second piece is, we are obviously putting capital behind acquiring new customers, which we've consistently done. So that we're doing over like a longer period of time. And more importantly, I think the bigger piece of clarity, or at least what we realized is that there's a lot of value that we can build technically in our business, right? A lot of intellectual property that we create in supply chain product, automating financial processes, even on the consumer side with search or our advertising business.
Private lender RBL Bank will consider a proposal to raise funds through a preferential issue at its board meet on the 18th of October. The bank could also consider a private placement or other methods to raise funds. Remember, CNBC-TV18 reported that Middle East lender Emirates NBD is looking to acquire up to 60% stake in RBL Bank. And time for a short break. Coming up next, IT major IBM has partnered with the government of Andhra Pradesh and TCS as part of its push to build a robust quantum ecosystem in India. More details when we return. Welcome back. IT major IBM has partnered with the government of Andhra Pradesh and TCS as part of its push to build a robust quantum ecosystem in India. In an exclusive conversation with Shireen Bhan, Managing Director of IBM's operations in India and South Asia, Sandeep Patel explained why the company continues to be bullish on India.
We've obviously continued to progress on our strategy around hybrid cloud AI. In addition, I think since last year, we have announced a series of different partnerships, MOUs and so on. But more markedly, I think the announcement that we've done with government of Andhra Pradesh to land a leading edge quantum machine, IBM quantum machine in India, in Amravati. That has been one of the key highlights where we hope to work with Andhra Pradesh as well as TCS to build a very vibrant quantum ecosystem as that technology continues to progress and develop and really shape the face of computing around the world, not just India, but around the world. Secondly, I think we have continued to work both with the government as well as private enterprises to continue to move forward the whole agenda around AI. A few weeks ago, we announced a partnership with BharatGen, which is a startup out of IIT Mumbai that is focused on building Indic language models. And they are leveraging know-how from IBM research labs, including our AI tools to accelerate that development. And then most markedly today, we announced a partnership with Bharti Airtel to augment Airtel's cloud, Airtel Cloud, with leading edge IBM cloud stack capabilities to truly offer a hybrid cloud offering in India for regulated industries that serves both data residency requirements as well as regulated requirements for India.
Well, Sandeep, there's a bunch of things that you've spoken to us about, but let me pick up on the quantum ecosystem in Andhra Pradesh that you are hoping to build out along with TCS and, of course, the government there. Andhra Pradesh clearly has emerged as the hot spot. We just heard that $15 billion announcement coming in from Google. So explain to me what this quantum bet for IBM will mean in terms of investments, in terms of hiring, and what are we talking about in terms of timelines of building out this quantum ecosystem?
We are working against a very aggressive timeline to make sure that we bring this quantum system up and running in Amravati by early part of 2026. Work is already underway to prepare the infrastructure that's required to land the machine. But as is true with any technology, the proof will be in both what we do with skilling, which we are continuing to do not just in Andhra Pradesh, but around India in the area of quantum skilling and development of Qiskit capabilities, which is the quantum programming language, but also how we start to build out a very vibrant ecosystem for people to use quantum in a meaningful way. Very recently, you may have seen a global announcement that we did where HSBC is starting to see some very promising results from their use of IBM quantum computing for bond trading algorithms. Recently, Vanguard also is starting to look at using quantum for portfolio optimization. And so as some of these problems that today are not getting solved by traditional computing, they start to see applications in quantum, we see that this will create a very vibrant ecosystem and a whole set of algorithms and use cases that can be progressed in India, for India, and the world.
You gave us examples of Vanguard and HSBC, etc. I mean, quant trading is something that the market is quite familiar with. Are you seeing a faster pace of adoption across, for instance, the BFSI space as far as quant is concerned?
I think BFSI has probably been one of the leading industries in terms of experimenting with quantum. I think, as I've always maintained, quantum in probably becoming mainstream is still probably a few years out, but clearly as an industry, financial services industry has been at the forefront of experimenting with quantum and building algorithms. I think the other area that we are seeing some interesting quantum use cases is in the area of drug discovery in the pharmaceutical space, as well as in mineral exploration and others.
What are you seeing in terms of growth here in the Indian market on account of AI?
So clearly AI, I think I've shared this with you, adoption, if we look at the adoption index survey that we've done, and we continue to sort of update that, Indian enterprises lead the way in terms of experimenting with AI. So I think at this point, there's approximately 85+% of Indian enterprises that talk about experimenting with AI. The scaling is still not quite there. It's probably more in the 27 to 30% range. But I think as we continue to start to see startups, compute power becoming more available, the advent of smaller language models becoming more relevant, I think we will continue to see adoption at scale. Now, as you know, I'm not going to talk about hard investment dollars, but we continue to invest in India as a growth market, as a strategic market in the areas that we are continuing to build out. So we are continuing to build out our capabilities with our software labs, research labs, systems labs, and most importantly, I think we've announced that we will be opening up the 7th software lab in Lucknow later this year.
You talked about your 7th software lab, Sandeep. Let me also talk to you about your Agentic AI Innovation Center in Bengaluru and take me through what we can expect in terms of work that's being done there.
The Agentic AI Center and the COE that we have announced in Bengaluru that is an extension of our software labs, but it also brings together a forum for co-creation, ideation with our clients to really continue to build out more agents in the AI space that can then serve as a way to drive this technology more and more for automation in the enterprise.
But what's the pace of growth that you're registering now in India on the back of the many initiatives that you spoke of?
So we clearly, I think, continue to mirror the double-digit growth rate that we have been experiencing over the last few years, and we try to stay ahead of market growth in a meaningful way.
Okay, Sandeep, I want to get you in on the debate that's currently raging, something that Sridhar Rimbu here spoke to me about as well, the Swadeshi tech awakening. What do you make of that? What do you also make of the idea and the suggestion that GCCs, Global Capability Centers, should actually be taxed on the profits that they derive from the innovations done in India, that the IP should be registered in India? What is your comment to this debate that is now starting to pick up momentum?
So I actually commend the government towards its march towards becoming Atmanirbhar and actually building policy and capabilities that are built in India, for India, and then ultimately could be used for the world. And so that progression that the government is driving, I commend them for doing that. And I think that is something that every responsible economy should be looking at.
Presented by Standard Chartered.
We had a lot of stories of failures, almost 5 to 6 ideas we failed.
Was there any hesitation that after, 5 attempts at starting up, that the 6th attempt would be pankha bana rahe ho?
So people from incubation center, they were also stunned kiya pankha, and this time they thought ki we have gone crazy. I got placed, by the way, in ISRO. Being a government job background, my parents were very happy. I lied to them that I got an extension and I can join back ISRO after 1 year. We got into some chawl outside IIT Bombay.
And then the Eureka moment happened while you were sitting in your chawl and looking up at the ceiling.
It was a Sunday afternoon, and me and Manoj were actually lying down on the bed. Manoj said, why don't you just go and change the regulator? And I was saying, no, why don't you go? And that is the time when you started saying, why don't you have a smart fan?
Competition definitely tried to mimic, but that newness and differentiation doesn't come.
To evolve on technology, we'll have to have the R&D DNA, which some of the competition have lost a long back. And it was very hard to explain that you just cannot build DNA with a large balance sheet.
So an IPO then is the most likely option?
Next year, we'll definitely planning to hit. Want to make India a powerhouse of technology.
Before my marriage, I think, I was almost broke. After marriage, after 6 months, we not only have
a life transformed.
Yeah, I think our life transformed. So I give a lot of credit to my wife for that.
They were told you can't take on legacy giants like Havells, Crompton, Bajaj or Usha in the consumer durable space. But two IIT Bombay graduates dared to ask, why not? Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. From near shutdown moments to crossing 1,000 crore rupees in revenue, Atomberg Technologies has gone from being the fan startup to now one of India's most loved consumer brands. At the heart of it are its founders, engineers turned entrepreneurs who bet on BLDC motor technology. We'll tell you what that is in just a second, when nobody else would, turning ceiling fans into smart, energy-efficient appliances that are now found in over 1 crore homes. Today, Atomberg is more than just fans. It's mixer grinders, juicers, water purifiers, and even smart locks. Backed by marquee investors and honored with Global Innovation Awards, it's on a mission to redefine home appliances with technology at its core. But can this challenger brand go global? Joining me now are Atomberg's founder and CEO Manoj Meena and co-founder and COO Shivabrata Das. Gentlemen, many thanks for joining us here on Young Turks Reloaded. It's a wonder that the two of you have been now operating since 2012, but this is the very first time that the two of you are doing an interview together.
Yeah.
Right? So congratulations on making your debut on Young Turks Reloaded. But, here's where I want to start. And Manoj, you're from Dausa in Rajasthan. Shivabrata, you're from Kachar in Assam and then moved to Guwahati. One would have imagined that getting to IIT Bombay in itself was a big deal for the two of you. And then you would have wanted secure, comfortable jobs that gave you the guarantee of a safety net. Yet, you decided to give all of that up and you decided to start up. I want to understand from you, Manoj, why and when did that idea of wanting to start up come about?
Thank you. Since my childhood, I've been super keen in building stuff from my hands. Used to play with toys, build electronic stuff. Used to participate a lot in scientific projects. Got an opportunity at IIT to pursue this passion. And during college, I used to participate a lot in robotic competitions. Right? And I used to borrow money from friends to build these fancy robots and go outside campus, participate in the competitions. And luckily, we were able to win, and celebrate that prize money after that. And that passion I was able to pursue and continue during my college days. But I got exposed to incubation center during my final year at the campus, and got to know about that entrepreneurship is also something, which you can pursue beyond.
It's a career option.
It's a career option, and I personally wanted to, do some meaningful impact. And I strongly believe that if you're an engineer, why don't we apply that engineering learnings in solving mass consumer products? So that was a thing always there. But how to start?
It was in the back of your mind, but you didn't have a plan in terms of how you would translate that into reality, right?
Absolutely.
Yeah. And then you ended up meeting Shivabrata. You were not roommates in college, but you were hostel mates and wing mates. Yeah. And that's, for you, that's where his passion of entrepreneurship rubbed off on you. How did it happen?
I came to IIT. In my second year, I think, I had one small idea. So I'm from Assam. So Assam silk was very popular for.
Yeah.
So there's one buyer in Dubai who wanted to buy something, in silk, because he was buying it from Bhagalpur earlier. So I said, why don't you try Assam also, right? So there were 1 or 2 transactions we did, figure out it's not something that we can scale being in college. Then in third year, we built a website development company. Like, it was a very golden era of that time to build a website development company. We did 4 things. Then in my fourth year, I started is 24/7style.com, which is an e-commerce company, something similar to Nykaa. We raised like a crore, and then in 2013, it eventually, had to shut down. But what happened, interestingly, is that during those 3-4 years in IIT, right, the culture of entrepreneurship was growing. Then some of this probably pushed me to think of entrepreneurship as full time and not, let's say, go and sit for the placements. Of course, we got the placement, but we didn't choose that.
You chose not to take the placement up and you chose to start up instead. But let's talk about how Atomberg happened. And there was no story at that point in time on why Atomberg became Atomberg. Now you ascribe meaning to it, but back then it was just a cool name, right?
Yeah. I think final year idea was to get into something entrepreneurship, and I got placed, by the way, in ISRO as a scientist. And being a government job background and farming background, my parents were very happy that you should definitely go and join ISRO as scientist. And I lied to them, and I had no other job. I lied to them that I got an extension and I can join back ISRO after 1 year. And I assumed that some magical will happen in 1 year. Right? Nothing happened. We were in a more poorer situation. We got into some chawl outside IIT Bombay campus and started some activities. That time, what idea to start, it was not clear. We just wanted to jump into entrepreneurship. So that was, some craziness. People first identify an idea, then they start. So we jumped into entrepreneurship, and then we were like, let's discover, what we can do. And we reached out to some of the colleges and research institutes, including IITs, BRC, DRDO, Indian Navy, and got some projects from them to survive. And that's how we got into data acquisition, development, motor designs, electronic design. But all of that was a kind of a project. We were not able to scale anything. And Shivam was also my challmate. He was also, joined me soon in the chawl. We had a lot of stories of failures, almost 5 to 6 ideas we failed. From 2011, I graduated till 2015. So we would have experimented many ideas, 5 to 6 ideas. Even our incubation center was worried that you guys are always coming up with some new idea. One day...
It doesn't work.
It will work, yeah. Right, so we were losing our credibility every time.
And then the eureka moment happened while you were sitting in your chawl and looking up at the ceiling.
Yeah.
And then what?
If I remember, sometime 2014, right? And it was a Sunday afternoon, and me and Manoj were actually lying down on the bed. There was no actually bed, it was like just a mattress, on the floor. We just had like good time, one glass of beer, both of them, right? And discussing about what else we can do, right? And we were just looking up, and it was somewhere in December, right? So the season was not very hot, not very cold, right? And Manoj said, why don't you just go and change the regulator, right? Reduce the speed. And I was saying, no, why don't you go? And that is the time when you started saying, why don't you have a smart fan, right? Why just can we control everything from phone, right? That was the time when home automation was picking up, right? That was the point where, we figured out that why there was no innovation in fan, right? Why we are still seeing the same fan since decades.
Yes.
Right? And then Manoj went back, did some work. I think, he did a lot of groundwork there. And he came out with this, few companies, and they figured out that we can do a lot more beyond smartness.
Yeah, so it started with the idea of doing a smart fan, but then it became more about efficiency and how you can actually save money for the consumer. And that became the big eureka moment for you, right?
Yeah. See, when we got into deep research, we studied what has been done in the industry, and we were stunned to see that no innovation has happened for last 50 to 60 years. It was decades old.
These companies have been around for the last 30, 40, 50 years.
Yeah. And all of them are running on induction motor technology. It is called single-phase induction motor technology. And Nikola Tesla would have invented that almost 100 years back. Still people are using it. But with time, technology has changed a lot. You have electrically commuted motors. And BLDC is a family of electrically commuted motors. With that,
now we're decoding BLDC, which makes Atomberg the fan that it is. Okay.
Yeah, that our experience of 6-time failures. It was actually helping us this time, because BLDC motor is primarily motor design, electronic design, algorithm design.
So it's not that you designed the BLDC. Just to make it clear to everybody else, that was not the innovation. The innovation was to actually use BLDC in a fan, which hadn't been done before. That was what they did differently. Yeah.
Absolutely. And the challenge was making it affordable and making it meaningful for an application like fan. So we made a prototype, made a small prototype maybe in only 3 months' time because of our past learnings. And we discovered that we are consuming only 28 watts power.
As opposed to 70, 75,
78.
which others were. Yes.
Right, so it's almost 40 watt difference, almost 1/3 in terms of power consumption. So that was a eureka moment for us. It will make sense to somebody. These savings will make sense to somebody. Let's discover who are those guys.
You had the hardest time raising funds when you actually had a product out in the market, when you were getting consumer love, you were getting good reception in the marketplace. How do you explain that?
The common questions are, right? All they appreciated, you have shown good skills on executions, right? You have built a product. You have built a basic manufacturing setup without having any knowledge of manufacturing. You have done the digital distribution. But now that you want to build a consumer brand, right? In 2018, where 70% of our business was B2B. And remaining 99% was online. But our future of 5 years at that time was that we'll be probably 90% consumer, right? From 30 to 90 shift. And within 90, we wanted to have like 60% of offline and maybe 30-35% of online.
So they didn't want you to go B2C and they didn't want you to go offline.
Yeah, so they're saying that how will you build that? They're saying that you can't scale up without getting into these things. But how will you do that? And how will you compete with, let's say, the larger balance sheet-led companies, right? And their question is, fine, they don't have technology today, and probably they're also ignoring us today. Now, what if the moment you start getting some traction in offline, or let's say in a consumer brand, what if they all of a sudden, just get very
also
excited?
Also do a BLDC fan.
And do a BLDC fans, and they will just, then they will just crush you with their distribution and brand muscle.
And that's a real concern. That's a real fear. How did you take that on?
See, one of the thing, and it was a very common question from all our investors, but we have interacted with some of our competition, people, and we learned that a lot of is linked with the DNA. These are incumbent brands surviving for last 50-60 years. They have their own style of working, and appreciating a new technology is a little harder for them. They knew that new brand has come. They were observing us. We only have BLDC as an option. They have induction motor as a main option. BLDC was optional to them. Other brands ignored that BLDC could
make a dent.
And it also demanded a lot of, I would say, muscle around R&D, because out of a sudden, you need a different type of talent. For example, in BLDC motor, you definitely need a motor technology within the team. You need a lot of motor designer. You need electronic designing, programming. So motor design, electronic design, and programming, all of that become a new thing to them. And I tell you why it was more challenging for them. For last 50-60 years, you have been making the same motor. So there was no motor development. And whenever there are new technology coming, you definitely need a right talent in place who can take care of that. A right leadership who believe that this technology could survive and create a disruption. So it is a blind faith a lot of time, which I think Attenborough had, in leadership of Attenborough had. Eventually today, when we look back, we realize that we have built a good amount of capability in terms of infra, in terms of team, skill, talent. All that was fairly important for BLDC to transform and meet the aspirations of consumer. I think today competition definitely tried to mimic, try to copy, but that newness and differentiation doesn't come, because we are always thinking from inside out. We are always trying to decode BLDC, how better we can leverage BLDC next year.
You said the competition now does not ignore you, clearly. It sometimes mimics you. It sometimes copies what you're doing as well. Has it also attempted to buy you out?
Look, I think... yes, we got an offer. I will not take the name of the company that offered us, but it's a large company today. They offered us what I think, if I remember, the enterprise value of 1 crore. And
how far back was this?
It was 2017.
2017, an EV of 1 crore.
Yeah, EV of 1 crore, and of course a loyalty of 25 rupees a fan on every fan that they sell in their brand name, and we become the technology partner, right? Yeah, we thought it's stupid. So we got that offer, and after that, I think in the last couple of years, some conversation has happened. But it's not only about M&A. I think the way we think about this is that there is a larger mission that we have, right? I mean, today Attenborough is not only known for, let's say, fans or appliances, but it also inspired a lot of startups to start hardware companies, to start engineering companies, right? There's a lot of examples that I see that, they want to build Atomberg of, X, Y, Z categories, right? And that makes us feel good. I think it's a responsibility for us to now, how do we, take this platform and really shape the future, right? And I think an M&A now at this stage now is probably not going to help us live that dream. So I think
So an IPO then is the most likely option?
Of course, we have not officially declared it, but we are internally planning, about to start process. Next year, sometime later, next year, we will definitely planning to hit. Yeah, so that is a good option. And which Shivam mentioned, today we feel a sense of responsibility. Whatever we have created so far, it is really important to take it to the next level, not only in fan, but success in the other product category. And very recently we introduced a lot of new product as well. Again, same kind of differentiation and journey we are trying to create again with mixers, grinders, with water purifiers. Today we have very strong portfolio of smart devices. An idea is to make lifestyles of consumer better.
Now this consumer tech platform that is using engineering to solve everyday problems, there's a whole bunch of categories that you've gotten into. How do you ensure that you don't spread yourself too thin? How do you ensure that you keep the newness and the relevance alive while you also sort of broad base yourself?
Almost 10 years back, motor was the only tech we had. But today I am very happy that we have a lot of tech platforms. Motor is one. Electronics is another. IoT is third, where we are talking about connected devices, machine learning, artificial intelligence. Then we are talking about color, material, finish. It is very, very important for a consumer brand. How you are working on new materials, colors. Material engineering itself is a huge vertical.
Yeah.
And there is a team, we called it industrial design team. The industrial design team is responsible to understand consumer insights, understand what is happening across other categories. May not be appliances. What is happening in appliances? What is happening in EVs? What is happening in space? What is happening in the interior furniture? What is the taste of new consumer? And that also different geographies might have different taste. And different maybe middle class, upper middle class, maybe in the price segment also the tastes are different. The premium segment, we are celebrating matte finish first time, because a lot of people who are buying little expensive product, their interior might be matte, maybe different taste of the Indian consumer. A lot of insights are behind whatever we are producing now. And all these things makes you ensure that you are able to differentiate your product all the time. Because we are differentiating it, not sake of differentiation, but meeting the aspirations and consumer delight. And improving experience again and again, and surprising them again and again.
It's surprising them again and again. I think what has also been surprising about your story is the fact that you decided to manufacture your products yourself. You've got a facility in Chakan, in Pune, where you're actually producing everything that you make. How many units of fans do you produce now in a month? And what's the aspiration in terms of being able to grow that from here?
See, manufacturing is something we had to get into right? When we got into BLDC motor, we were not able to find the right ecosystem of components, and we ended up building our own capacities in-house, building the manufacturing lines, and the first set of product we were assembling. Shibam was doing the bearing press in the motor.
I think I remember that day we are doing this assembly in the night, and the next day morning we actually took an Toyota Etios to deliver those fans
to the consumer.
To a school.
Right.
So we actually shipped that ourselves. Anyway.
And the night there was no light.
Yes,
so we turned on
switch on the
torch,
the mobile torch for half an hour.
So that was our first big shipment of 500 units to a B2B client. So that's how journey started. We burned our fingers in, winding the motor, assembling it by our own hand. So we understood the pain. Today we have 2 manufacturing plants in Chakan, and with a capacity of 1 million fans a month, and almost producing 5 to 6 lakh units a month in current scenario. So when you're building a new technology, it is coming up with its own challenges of manufacturing and building the supply chain ecosystem, and that is other competitive advantage we have, that we kept building the processes and manufacturing automation ourselves. So whatever you see in our manufacturing plant, it is designed and developed by our own engineers. Right? Because those processes were not existing. It was not like that I could go to some supplier chain ecosystem and ask them make the BLDC motor for me. It was not possible to us.
So, you said that your goal was 6 crores, 8 crores. We'll be happy today as you clock a milestone of over 1,000 crore rupees in revenue. You're looking at IPOing next year. What's the new goal?
A lot of things are driven by, again, our why part. That we definitely want to make India a powerhouse of technology. We have certain core capabilities which we have been nurturing for last many years, like motors and controllers. So we want to extend our motors and controllers as a component, for other industries. In those areas, we might not introduce our own product, but the idea is to introduce motor controllers as a product.
So that will be B2B.
That is a B2B, and the idea is to empower others. For example, we already started certain development around air conditioner parts.
Okay.
Motors, controllers, compressor is something which is 100% imported from China currently. So the idea is to localize it, have its own Atmanirbhar made in India compressor coming from Atomberg. So these are the new challenges.
When are we going to see an Atmanirbhar made in India compressor from Atomberg?
The first prototype we are aiming next year. We will submit to other OEMs for testing trials.
So you won't actually do the AC, you'll only do the compressor?
Yeah, our compressor will be serving the end consumer at the end of the day eventually.
Right.
And idea is also to participate into space defense areas where the motors are being imported currently. As we speak, we are developing certain motors for drone as an application. So these are certain exciting challenges we have taken. That why don't we, build motor as a product and make it more affordable, localized.
So then that's a new pivot, right? I mean, you're not just consumer appliances and a consumer company at a B2C level. You're talking about now channeling your capabilities and your energies directly selling to OEMs in different sectors, from space to defense to aircons and what have you.
Absolutely.
So will these operate as 2 separate verticals?
I mean, it's as a part of the same group only. Yeah. Right? But of course, the DNA of both those companies is slightly different. I mean, one is, there are some commonality between both the companies and there are some differences. But at the end, it will be like 2 different entities, but under the same umbrella.
You talk about building this R&D culture within the organization, and that's very core to who you are and what you offer as far as the consumer is concerned. Take me through what it's taken to build that R&D culture. What is the most important aspect to your mind that you've been able to do differently, where you get talent to actually come there, experiment and learn and build?
See, one of the things which we realized and we should all appreciate is that India has very good talent, very smart engineers from different colleges. It is really important for you to find them, and provide them the right platform where you can leverage their engineering, they can celebrate solving the problems. So this is what we have been building all the time. It was not only product development, but it was also development of this platform where we can nurture engineering. So we have been investing on R&D infrastructure.
How much do you spend every year on R&D?
So our At the percentage of revenue, if I ask you, right, I think roughly 4.5% of our revenue is
4.5%.
of our. I mean, that's today. Of course, with scale will come down slightly.
Yeah.
Right, but we spend heavily, and we outspend our competitions on R&D significantly, both in absolute spend as well as in percentage term spend.
And then we keep building the right culture. The culture of innovation. Innovation is one of the core value, and to nurture innovation, and we.
How do you define innovation?
The innovation is something where you are trying to challenge our conventional technology. You need to think a little different, come up with some new ways of solving problem differently. This is what we have been doing. And a larger part of innovation happening at Atomberg is primarily challenging the status quo, identifying better ways of doing things, and you end up building some technologies. But the core is always to solve some problem differently.
Yeah.
And then curiosity is another value which we celebrate. We want people to be super curious, super risk taker, allow them to fail. Failure is very well celebrated at Atomberg. And then we just ask them that you need to be more bullish on your technology, and we are there to support you. It is very important, for us to give them the reason why we exist all the time, because we keep adding a lot of people in our team. We call them atomites, and a lot of atomites are there now, working on solving
950 atomites currently working across your facilities.
Yeah. So we keep telling them why we exist. It is really important that they feel motivated from inside. So we tell them that Atomberg has started humbly, right, and with a very lean way, trying to solve problems for consumer. And it has been our mission always that we can improve lifestyles of people in India by technology, right? So that is one thing which give inspiration to people, all of us. It is an emotional feeling.
Yeah.
We tell them that it is our responsibility as an engineer that we keep innovating from India. Let's make a good technology company coming out from India, which can inspire many other hardware companies.
Well, as they say, success happens when opportunity meets capability, and you seem to be at the right place at the right time yet again. But we wish you the very best of luck. Thanks very much for joining us here, coming out of hibernation and speaking to us about the Atomberg story. We wish you the very best of luck for the future and your future plans for diversification. With that, it is time for us to wrap up this edition of the Young Turks Reloaded podcast. If you enjoyed watching that conversation, do send us your feedback, your comments. We always like to hear from you. We'll be back again with more startup stories and entrepreneurship lessons. From all of us here for now, many thanks for watching.
Welcome back. You're tuned in to Finding Alpha. It's a Diwali special, and we have Amit Jaswani who's with us. You often talk about, everyone talks about riding the winners, but don't marry the stocks. That is important as well. When do you decide it's time to jump off?
So I had this old saying, I'll say it again, stocks are girlfriends, stock market is wife. You don't get out of the stock market ever, and you have to stay invested whatever it happens. But every cycle is different, every 2-3 years. And people who buy and hold is not working. See, our goal is to make money. That's our only goal. Buy and hold, every 2-3 years there'll be new winners. And you have to see where the new incremental growth is coming. If a company is growing at 30%, and market thinks that the company will keep growing for 5 years for 30%, markets in first 1 year or 1.5 years will discount the entire 5-year growth. And after that, if you have that stock, you're not going to make any money. It will just, only the results will make you happy. The stock prices will not go up. Markets are hyper discounting.
Yeah.
You have to keep finding newer cycles. Every cycle is different. Don't have 10-year horizons. Have 2-3-year horizons. Max 2-3 year. And you have, think about it. If I have 25 companies in my portfolio, you always have 25 companies which are looking good to you, right?
Yeah.
And you have to keep adjusting your portfolio. Where is the next incremental growth? Where is the next discovery? See, if you want outperformance, if you want beta returns, that's different. But if you want to be the best, then you have to keep finding newer cycles, and there will be newer cycles. Tell me 1 3-year period, and the next 3-year period, the same stocks go up. It doesn't work that way.
Yeah.
Now, markets are very different. 18 to 24 months are the size of one cycle. You keep finding those cycles and keep playing in cycles.
Very quickly, GLP-1 is a big opportunity.
GLP-1 is a large opportunity, and you need to buy, it's a super cycle. It's again a super cycle. I'm not fit, but hopefully I will get fit the next time I come to CNBC. So, but without GLP-1s, but it's a large trend. You know, there are already 1 lakh users in GLP-1. It's a large opportunity, and you need to find a pick and shovel method. When gold rush was there, it was the jeans guys that made the money. So you need to find, according to you, who are the pen guys, who are the other guys, and hope to make money. I don't know. You can lose money also.
No, and GLP-1. I mean, one of the disclosed investments that all made a small investment is Shelly Engineering of late.
Very small part of our portfolio.
Very small part.
But risk management, you have to cut your losers.
Right.
If we cut our losers, and even if I like a story, but if the stock is not doing what we thought initially it would do, my team is beyond me. So whatever happens, have that discipline. If you are finding super performance, be ready to make mistakes. In markets, you will keep making mistakes, and mistakes are part of the game. Right. Do not marry your stocks.
Well said, Amit. Well, we thank you for coming down to the studio for this Diwali special. Thank you for taking us through your investment playbook as well and warning us with regard to the risk. It's a pleasure having you in the show. Well, hope you guys had as much fun as me on the show. That's Samvat for you, telling you about identifying cycles, riding the themes, and also booking your losses when the time comes. Well, we'll wrap up on this edition of Finding Alpha, our Diwali special. Well, hello and welcome to Finding Alpha. I'm Nigel D'Souza in the Mumbai News Center. It's been a challenging year for Indian equities. We have seen sustained FII selling, renewed tariff tensions under President Trump, geopolitical concerns, and muted earnings. All of this has put pressure on the Indian markets. But there's a growing sense of optimism that things could actually be turning around. Well, on this special edition of Finding Alpha, we're joined by Amit Jaswani, founder and chief investment officer at Stalin Asset Company. Well, Amit, thanks a lot for joining in. And before I start off the show, it's going to be a very, very special Diwali for you, because in the last 45 days or so, you've welcomed a baby girl. So all the best to you, your family, and congratulations on the little angel.
Thank you so much, Nigel. It really means a lot.
Okay. All right, Amit, let's get to discussing some themes then. Walk us through the key playbook as well as strategies investors should keep in mind when they navigate the Indian markets from here on. You know, if you could help us out with a few of them. So my first question to you basically is, since we're going to be talking about playbooks, strategies as well, earlier, if I recall, a couple of years or so ago, you all were, more towards towards small cap companies. But if I look at your portfolio right now, it appears you're tilting more in terms of the large cap. Tell us how you're constructing it.
So we've been 50% large cap for the last 7 years, broadly 48, 49% large cap for the last 7 years since the inception of Stallion. We've been about 22 mid cap and 18 small cap, 10% cash. If you take 7 years of average of Stallion Asset as a fund, we've always had near 50% exposure to large cap. It's just that when there is risk on, we go towards high growth small caps as well. And when we go to small caps, our expectation is, so we don't go for small caps, which typically grow at 20%.
Okay.
We want small caps, which can grow at 40, 50, 60%. See, the idea is to make, in a bull market, the idea is to make as much money as possible. In the bear market, you want to retain whatever you made in the bull market. So in bear markets, typically, so in 2018, 2019, the markets were all about quality. We were with quality.
Right.
In 2021, when we keep moving where the markets are moving.
Right.
But over time, we've understood that there are those super cycles that come about where you can create outlier returns. See, our goal of a portfolio management company like ours is to create alphas for our clients. And alphas need superior returns than benchmarks. So you want to be in companies which are growing way faster, but you also need tailwinds. You cannot have companies that can grow super fast without tailwinds.
Got it. So, yeah, Amit. So I mean, I think we get that point then on that front, because I think in cricketing parlance, what you're telling me is that when the wicket is a little tricky, you want to hang in there, and face a large number of deliveries, while when you're seeing the ball big, you want to smash it out of the park. So we'll get to a couple of playbooks on that front. But let's talk about a couple of themes first of all. With the various fiscal, monetary policy as well changes that we have seen, discretionary consumption is something that you're a little bit bullish on. So explain that to us.
So we are actually bullish on consumer-facing companies broadly for last 7 years. For us, has been 74, 75% of our portfolio.
Yeah.
We do not invest so much in government stocks. We've never been able to create alphas. It's just that our playbook's not strong enough. We invest in processes, and our process is very simple. Right now, about 70% of Nifty companies will grow at less than single digit. Your GST growth is around 8-9% for the first few months of this financial year. If your GST growth itself is 7, 8, 9%, companies which can grow at 25, 30, 40, some food delivery companies would grow way faster than that. So wherever there is growth, and that has always been our style, we chase growth. And wherever there is sustainable, predictable growth, and there is the largest player is gaining market share, that is where you'll find us. And and that's the whole playbook, that there is a super trend right now in internet stocks. Internet is the leader of this bull market. And just find good players out there. And if you get a few themes right, this in bear cycles also you can make money. 1996 to 2000, the markets went nowhere, but your tech stocks went up 100x, 200x, 300x. Even post that, between 2000 to 2003, your Hero Hondas, etc. The companies who keep growing consistently. Bull market, bear market is for the entire market. There will always be a set of 25, 30, 40 companies, which will lead the bull market.
Amit, let's take that super cycle first, that first playbook that you're putting out there. And you're telling us that the internet stocks could potentially be in that super cycle, which means, you have the sector tailwind and you have growth as well, which could be sustainable in the near term. Now, I want to ask you about a couple of examples in the past, because the EMS theme, out there, we saw those stocks. I mean, the profitability went up by 5x, 6x in a matter of a few years. Or even when we look at the cash market, the volumes, F&O volumes, cash market volumes, when they went through the roof, that time you saw this entire, some of the exchanges did well, some of the wealth companies did well. So explain a couple of those super cycles in the past.
So typically what happens is, like right now, the global super cycle is internet, and where you have NVIDIA, AI, etc. NVIDIA is now $4.5 trillion market cap. That is as much as India's market cap. Typically what happens, like EMS, such a good example you gave. The largest EMS company in India. This is, stocks are not recommendations. Me, my family have vested interest, and we keep adjusting our portfolio, buying, selling stocks.
We'll get the disclaimer up on the screen.
But stocks like Dixon used to make 120 crores in 2020. India was a net importer of electronics. Today, we're a net exporter of electronics. The profits of Dixon scaled from 120 crores to probably around 1,300 crores this year, and analysts are expecting around 2,000 crores next year. Option trading. It was happening in front of us. Big brokers like Zerodha went from probably 100, 200 crores PAT to now 5,000 crores PAT. Your BSE used to make 100 crores a quarter. Started making 100 crores a year in 2020. That's 25 crores a quarter. Now makes 530. And it was happening in front of us. You could see quarterly numbers. You could keep riding the trend. MCX as well, as an example that you gave. Option trading market, MCX started option trading in 2022. They got permission from SEBI, and from there, it's been a one-way journey. So you keep looking at changes. What is that large theme? And in that large theme, you keep finding names.
So if you have to identify a couple of super cycles, internet could be one theme, right?
Absolutely.
Internet could be one theme. Since we're talking about internet, as you said, NVIDIA's market capitalization is a few $1 trillion, right? And, if I look at a company like, say, Zomato over here, with all your disclosures, etc., some people say it's already 3 lakh crore market cap. But if it's got a tailwind, then do you think themes like these have a lot more to go? Because you add all of them together. Zomato, that's eternal, Swiggy, the other internet plays as well. Still, the market capitalization is not that much.
It's 8 lakh crores. So if, example, Swiggy is at 1.08 lakh crores, Zomato is at 3 lakh crores, 3.2 lakh crores. You have Paytm at 70, 80,000 crores. You have Delivery at 30, 40,000 crores. You have First Cry at 20,000 crores. So basically, when you look up US market cap, $60 trillion is the total US SPX market cap. Out of that, semicon plus technology is about 60%. You're looking at 35, 36 lakh crores. If you take Tesla also being tech and all, then it keeps going higher. Tech is very hyper scaling, because in most companies, what will happen, Nigel, is your cost in tech do not grow with your revenues. So be it exchange, your cost is not directly correlated to your revenue. So every incremental revenues is profit. So when your revenue goes up 100%, your PAT actually goes up 200-300%.
Correct.
And that kind of J curve will keep happening in India. Our total tech market cap right now in India is 8 lakh crores. Out of 500 lakh crores total market cap, we are at 1.6% tech market cap. When we end 2030, there'll be, of course, new IPOs that will come. But when we end 2030, and these private equity, there is no thing. Why did tech not become so big in India? Because these private equity guys would come and keep burning money and make sure the incumbent player doesn't make money. If incumbents' valuation go higher, what do these private equity guys go? They fund the second best guy and just keep putting money in and trying to see if they can make money. But that game is over. The loss-making game, burning game, beyond a point, it doesn't work. Capital is a shortage. Both competition to what the big name that you said, like let's say competition to the leader of food delivery, Swiggy and Zepto. Both have said that they will not open new stores. They will go towards profitability. And Zomato was the guy who didn't lose money. No recommendations, of course. We keep buying, selling stocks. So,
do you think even some of these market-related players, like an AMC, like maybe exchanges, they could still have a longer runway? Maybe they pause in a little bit, but on the whole, they're in a super cycle?
See, weekly options don't stop. I think capital market have already bottomed out.
Okay.
That, I don't know, CNBC keeps playing that it will stop, it will not stop. I don't know. But if this weekly option doesn't stop, then I think capital markets have already bottomed. This is my view on all your exchanges stocks. AMCs will do well regardless because they are not affected by the capital man, but other brokers, etc. The value chain has bottomed. The worst was priced in the day, where rumors were extreme high. That I think the worst probably may be behind, but it all depends on weekly options being there or not. If weekly options are there, then there is way more downside left in these stocks.
So two themes, internet themes and some of these market-related plays.
Capital market.
Capital market plays. Let's go to your next playbook then. So one playbook out of the way, super cycle is what you've told us about. Your next playbook is focusing on identifying the market leaders and also the emerging challengers. How should an investor approach this sort of distinction, in an industry?
So we divide India in 71 industries. In every industry, every quarter we track who's the guy who's gaining market share, who's the guy who's losing market share. From cigarettes, I'm just giving you an example. Cigarettes, this is happening very clearly. That the incumbent player is taking market share from the market leader. It happens in your two-wheeler vehicles. Two-wheeler vehicle is a 2 crore market. And right now, 2 crore two-wheelers get sold in India, and about 16-17 lakhs is your EV two-wheelers. You need to see who will make it large in this EV market. So there are market shares that keep changing. and market values consistent gain in market share. If you see what TVS has done, TVS market share used to be single digit. It's moved to 32, 33% of the entire two-wheeler market. The stock has gone up 100x, whereas Hero Honda, which used to be at 45%, has gone to probably 31, 32%, and the stock has not done anything in 10 years. Basically, you keep focusing on in every market. This is like a playbook, right? You want a GDP growth is 10%. Nominal GDP growth right now is 10%. And now you need to find players who can grow at 25, 30%.
Yeah.
Either they keep finding newer geographies, do acquisitions, etc., or they gain market shares. And market share gains is very persistent. So the stocks which keep gaining market share is very persistent. Every quarter they'll gain. This happened with, we don't own it, so I can say it, like Safari. First 40 quarters, Safari was gaining market share against
VIP.
Against VIP, where the world number one was Samsonite that was losing market share. India's number one VIP was losing market share, and you had Suresh Jatia that was gaining market share very consistently. You keep track of every industry, shoes, right, beauty platforms, what is happening in which industry, which guy is doing well, and that is what we keep doing.
Give us an example with regard to the cigarette theme that you spoke about. There is a smaller player who we all know is eating into some market share.
So we might have vested interest here also. We've got, and we can keep buying, selling based on quarterly numbers and a lot of things. But ITC is 20,000 crores PAT, and you have the second player who's at 1,100 crores PAT.
Correct.
45% of incremental market share is being taken by
Godfrey Phillips.
By the second player, 45%. And so there's a long way to go. So those are kind of themes. I'm not saying buy this stock, it's already rallied, but those are the kind of themes that you need to focus on.
Let's talk about another, playbook that you look at, special situation plays. Could you tell us about identifying such opportunities? What are the key signals you're looking at out there? What is the trigger? What is that trigger point that tells you this is a special situation, need to get in?
So we look at everything, every news that comes, be it demergers, promoter buying stake, right issues. First, learn corporate actions very well. Biggest alpha creation is change in margin. That is the biggest alpha creation source. But second biggest alpha creation source is change in management. So we divide. We are fundamentally just using frameworks and processes to make decisions. We are only making 4 decisions in market: what to buy, when to buy, how much to buy, and when to sell. Coming to special situations, be it demergers from Adani, no vested interest of course, but Adani also was a great story of demergers. Look at every demerger which is happening. Nuama that we had, we still might have no this thing, but Nuama also we bought because of the demerger and this thing. We had in history, we've had stocks like Red Tape where we've done very well. So many demergers are happening and they all list tips. So many demergers, and you have to also look at acquisitions. We got in like the top electronics player again, electronic EMS space again, only because it acquired Vivo's India's business. So basically, keep looking at acquisitions, especially if a company is acquiring companies 1x its size, 2x its size. That is where a large change can happen. See, we want asymmetry. Right. We want that if we lose 20, 30%. But if things go right, you end up making 200, 300, 400%, and your entire portfolio cannot be asymmetry, but half of your portfolio can be asymmetry. Then you have market leaders.
Correct.
Then you have super cycles. You divide your portfolio in 2, 3, 5, 7 themes, and that is how you build a great portfolio.
Got it. All right. Just a quick question, since you're talking about this inorganic growth as well. Off late, we have seen RateGain. They went and they bit large. We had Tega. They went ahead and they did a larger size acquisition as well, or even a Tilaknagar Industries. Those as well could qualify as a special situation?
We might have vested interest in some of them, but you have to look in them. Tilaknagar has bought one of the largest Imperial as is this thing. No, we don't have any positions, no recommendations, but you keep tracker of them. Like this is a point where the J-curve can start at any point of time.
Yeah.
From a brandy only player, the valuations are cheap. And typically if you look at what valuations your Radico is trading at, it trades at 100x.
Yeah.
So you know alcohol as a space, even United Spirits, which doesn't grow at all, gets 60, 70p. So you know in your mind, a national player, whiskey player, gets what kind of valuation. And then if they get the execution right, which is not so easy, If they get the execution right, you can just hit sixers. Now it's become your tracking position.
Correct.
First you track, right? You don't just, the day announcement happens, you may buy if it's a full toss, or you may wait. But in Tilaksanagar case, we are not.
You're not invested?
Not yet, but we are looking into it. The other names we might be invested.
Okay.
So, but we also have tracking quantity. So it's not like when we go, we buy only straight 3% of our portfolio.
Short point is identify that special situation and see whether or not it fits into your scheme of things.
Change in management is the biggest alpha creation driver. Be it CG power, bigger than demerger, the criteria that works. So I'm just telling you back-tested numbers of everything. Change in management. If a large company, if a small company is being bought by a large corporate, that theme is the best theme ever. Even your...
Got it. So Amit, I'm just going to, I'll tell you what. You have told us about super cycles, identifying the leader, also playing those special situations. But we'll take a short break, come back. We'll focus more on risk management. And how do you know when it's the right time to get off the bus? Slip into that break, come back. We've got lots more lined up.
Presented by Policy Bazaar.
CNBC-TV18, the Policy Bazaar Insurance Show.
Imagine saving thousands of rupees every year on your insurance premium, and that without even changing your policy or reducing your coverage. That's the power that a tax component on insurance could bring. Specifically this time around, the GST component as far as insurance is concerned. Welcome to the Policy Bazaar Insurance Show. I'm your host Yash Jain, and in this episode we explore how GST relief can, take away a lot of burden away from policyholders across India. And to break this down further, joining me on the show today are Sharad Mathur, Managing Director and CEO at Universal Sompo General Insurance Company, Mahesh Balasubramaniam, MD and CEO, Kotak Life Insurance, Saravir Singh, Joint Group CEO, PB Fintech. So we have a blend of the entire insurance ecosystem, of course, the distributor, life insurance company, as well as the general insurance company, which gives a fair bit of understanding as far as health insurance is concerned. Let's start with you, Sharad. What exactly was the government's announcement as far as GST on health insurance is concerned? Could you break down that for our viewers just to understand the basics and clear out the foundation for it?
The industry has been asking for it since quite some time, and it's a very welcome move. The whole concept revolves around customer affordability. And when government announced GST, we have been hearing that whether benefit would be passed on to customers or not. So in no way insurance industry, whether it is non-life insurance or life insurance or standalone health insurers, ever thought to have it in pricing adjustments. So it is for the customers, for the common man, and this would going to get passed to them. As a result, say if there was a 100 rupee premium, for example, so policy now would be reduced by 18%, say in case of individual health, PA, and accidental and travel insurance. So it would help us in achieving our end objective, which is insurance inclusion, reaching out to the last mile. We have seen that there are various government schemes for underprivileged communities and for affluent population, which are in urban, semi-urban state capitals. We have seen that affordability is not much of an issue and they are able to buy health insurance, so to say. But the middle group, we call them missing middle, I think affordability was one of the elements where we were seeing that there is not enough offtake willingly also. So now we have to work, industry would be collectively working on the reachability element. Affordability seems to be getting addressed with this GST got implemented on 22nd September. So it is a great benefit for the common man and would have insurance inclusion. And I think sooner, why we should await until 2047 as the government and regulatory goals are.
To you, Saravir, there cuts have been announced as far as GST is concerned on various aspects, and you deal with all those products. Health insurance, term life insurance, ULIP, as well as endowment and annuity. In your understanding, how would these different categories benefit different kinds of users? What is the adaptability of these different products? Do you think that the benefits would be quite equally distributed amongst all these important products?
I think, yes, first, just to reiterate, I think what has been announced is that all individual life and health policies, there will be no GST, which means that for term and health insurance, there is an 18% reduction in the total outgo from a customer's perspective. In ULIP and endowment products, it's a little different. In ULIPs, the amounts involved are smaller and they are part of the product construct as well. In endowment and non-par policies, there's a 4.5% GST in the first year and 2.25 in the succeeding years. So that will be removed. So I think that is the context in terms of how much a customer will benefit. From our perspective, I think the most important thing is that protection products, right, which from a middle class perspective are the most important. I think for a middle class family, having term insurance, having health insurance are very, very critical. And both these products will enjoy the highest benefit of 18%. So what we expect is that, and in fact, what the early days are showing also, is that on the protection side, both term and health insurance, there is a very smart pickup in demand in September towards the end of the month. And this is something which we hope will continue going.
Special partner, Nuvama. Let's do it right.
Hello and welcome to this Commodity Champions that we bring to you from NSE. Well, this year has been completely belonging to gold, silver, platinum and perhaps some other alternate segments as well. Joining us is a very special panel here which will discuss on what the year has been and what is the next Samvat bringing to you in sense of these precious metal prices. Let me introduce you to Firoz Aziz from Anand Rathi, Lakshmi Iyer from Bajaj and Kunal Shah from Nirmal Bank. I also extend a very warm welcome to all of our Access members who are joining us for this show as well. Well, going back, as I said, gold and silver clearly have been the flavor of this year. Gold is up nearly 60%, silver is up 80%, platinum up 90% in this year. When you look back at the year, it has been about geopolitical tensions, tariff concerns. It also had to do with the weakness in US dollar index, and more lately it has been about US-China trade escalations. It also has been about the US government shutdown being prolonged as well. So enough and more reasons, and then on top of that there is investment buying, retail buying and Indian festival buying as well. Plenty to watch out for. Kunal, let me come to you first. What is your sense on gold now? Because all the targets that were being put out for 2026 have already been achieved, and then we are looking at some more gains from here.
Yeah, so this year was an extraordinary year. I mean, after tracking from last 20 years commodities, I have not seen this kind of returns coming from gold and silver in my 20 years of career. And I think the reasons, like you rightly pointed out, and I'd like to highlight the main reason. I think it's more of a fear concerns. It's the fear that things are not going to do well for the Western economies.
Okay.
The way the debt has been piling up, and in order to hedge themselves, each and every central banks and followed by that investors have been buying gold like left, right, center, and there's no tomorrow. One after another reason keeps coming, and that is driving. So recently, last $200, $300 rally is mainly because of what is going on with the US shutdown. Okay, so I believe that the rally has discounted most of the positive news, which is supposed to drive gold to a higher prices. Now gold is becoming like a consensus trade. If you ask anyone, what is the outlook on gold, and everyone will tell you the same story. So it can't just keep moving up on the same news. So I believe that gold going forward may likely to enter into consolidation or may perhaps witness some profit taking. But the fundamental trend of gold is not likely to change at least for next 2-3 years till the debt crisis continues to remain over, till this tariff concerns, the inflationary expectation. So I believe that we are likely to enter in a scenario where either gold will consolidate or it will gradually go down in a shorter term or may witness some profit taking. But if you ask me from someone's point of view, we are not structurally bearish on gold.
Okay.
But whatever dips, what we see in next 2 months, 3 months time, due to any reasons, it can go down without any reason also, the way it has gone up. So those will be the time one should again start accumulating, not with the expectation of extraordinary return like we have seen this year. Maybe perhaps I would say 10-12% return. That would make more sense rather than expecting another 40-50% return. Now everyone is talking about $4,500, $5,000. I've seen reports indicating $12,000. So this is generally a time, where you have to be a little cautious about, rather than being very optimistic. So coming on media and explaining the audience about the targets, I don't think so. One should get carried away and give extraordinary targets. So I would say 4,500, 4,600 by next year would be a realistic target rather than a very swanky target. It can come because the problems of the central banks are not going to get solved. We are likely to enter into an ultra loose monetary policy era going forward.
Right.
The way the macroeconomics is placed right now, yesterday Mr. Powell has indicated that the quantitative tightening is ending. That means the possibility of QE is starting. How they are going to pay their debt? It's impossible. So the possibility of another round of QE in some or the other form is on the cards. And gold is discounting all of these. Inflationary expectations are going to move up. So I am of the view that corrections, dip, profit taking, whatever technical terminology we want to put, but we should wait for that. And that is the time when you again start, accumulating it.
So are you saying that people who felt bad that they didn't buy gold need not feel that way? Gold prices will come down.
Yes.
Also, how much of a froth do you think gold has in itself right now?
So
the last $400, $500?
Yeah, absolutely. Last $300 to $400 of rally.
Just froth.
It's just, I was not expecting this the way it has shot up, and I'm quite amazed that from last 7 Monday, every Monday it opens up by $80. I have not seen this kind of. So what happens on Saturday, Sunday? Nobody knows. Every Monday it opens up by $70 to $80 gap up opening, and this kind of phenomenon is a strange phenomenon. Even though the fundamentals are bullish, but it doesn't mean that you are not going to get gold tomorrow. So I think the sanity should prevail over a point of time.
All right.
And gradually it should correct. We should not worry about it. And when it corrects, you again indulge into buying.
All right. Lakshmi, coming to you then, and what is your sense on gold? You've been pro-gold for most part of the time. Feroz is not the same case. I'll come to him later. But how are you looking at gold prices? We've run up quite a lot. Are you also worried that gold is not behaving like a wealth creation anymore?
So, Banisha, gold was never meant to be a wealth creation asset class. It was never supposed to be the Brahma of your portfolio. It was always supposed to be the Vishnu. Now, Vishnu and Brahma have morphed, which is in fact a divine intervention, I would say. But gold is behaving like, I would say, Rajnikant, saying, you're familiar with Rajnikant dialogues? I'll say it in Tamil and then I'll translate it in English for the benefit of the audience. En vari tani vari, matlab my way, unique way. And it is supposed to be unique, obviously, because there is no cash flows, you're mining out gold. But to Kunal's point, and I completely concur with that logic, you cannot have any asset class running and jumping dollars after dollars just because central bankers are buying gold. Anything looks good at a reasonable price, anything doesn't look good, whether it's gold or any other asset class at any price. So I think a sanity check is definitely required. So today what we are telling investors that yes, gold is supposed to be tail end part of your portfolio, but hey look, 10 rupees or 10% allocation has become 15% allocation. Don't get conned or don't get sucked into the greed syndrome. Take out that money and keep it back and maintain your asset allocation. I think that is something which we will still maintain. That doesn't mean that the positive sheen of gold or the luster from gold is going to go away forever. That's not what we are indicating. But so much of FOMO trade pylons have happened. I think those pylons will have to see some correction so that investors will experience JOMO, which is joy of missing out gold allocation this Diwali, rather than FOMO.
All right, that's a good one. And I do understand that gold is a portfolio diversifier. It's not your primary portfolio. That's not how you build it. But you have so many numbers, Firoz, and he keeps throwing them at me at all times. Central bank buying, oh, this much. FOMO, this much. ETF. Do break down all of those numbers right now. And the kind of run-up that we have seen in gold, yes, this year is extraordinary. But when you look at history, clearly gold has not really outperformed many other asset classes.
Yes, Manisha, I think you've been bullish on gold, and I acknowledge this every time I speak to you, for years. And my bearishness on gold comes from the fact that if you're replacing that with equity, you don't need to have FOMO, right? Most of my clients have made 15-16% for the last 5 years on a zero debt, practically, portfolio, and that's what gold has done after this rally. So that's point one.
All right.
Point two, my opinion is the easiest to predict was the last 600 points, so $600.
Okay.
Like Kunal was saying, I personally think that the last 500-600 was the easiest to predict. We did a show on 23rd of September. I put a reel. You asked me whether it will go to 3,000 or 4,000. I said it will cross 4,000. And my team said, okay, as soon as it crossed 4,000, they put a reel. I don't know. So point I'm trying to make is gold is now a technical trade. When it's a technical trade, like it's a consensus trade, these are signs very easy to identify. When will that take a U-turn? No. I personally think as of now, I would never recommend an ETF. What is the action out of it? It's a technical trade. Never do an ETF, never do a gold. You will not going to hold it for 2 years. Why will you not hold it for 2 years? Is before it corrects, you may want to sell it because tax inefficiency is going to be there. So MCX, I checked how easy is it to long on MCX. The cost of longing MCX and rolling it over for the last 7-10 years has been 6.69%. Highest being 2015 when interest rates were high. So I would rather roll it over. So point one I'm making is it's a technical trade. Like every Monday it's doing well. Then you don't buy ETFs. Those are not the efficient mechanisms. You take an MCX gold. But be prepared to sell gold. India's biggest problem is India has 22.5% of the total household savings is in gold.
Right.
But they never sell.
Right.
मेरी बहन जब तक कि gold physical form में था, she won't sell. I bought her an ETF. She sold it. She says, so financial assets have this big problem that emotionally you sell. So you need to change your mindset. You buy gold, you also sell gold.
Right.
Is the third point I'm making. Fourth point, I completely disagree with this whole theory, which is so popular that I might look like an idiot, but I'll take the risk of saying it, that central governments have added gold. If I read you the data, in the last 10 years, there's only 2 countries which have added, which is India, by a percentage, I'll just read it out to you. You would see that one country which has added is China. Over the last 3 years, China has only added 300 tons. US is the top holder. Germany, Italy have not added one bit. France has added nothing in the last 3 years. Russia has added 0. China has added 14.4% of their reserves. And India has added 0 over the last 3 years. And everybody says, Ukraine की war शुरू हुई, सब लोग gold खरीदने निकल गए. तो सिर्फ एक चाइना है जिसने 300 टन खरीदा है. आप जाएं 10 साल पहले के डेटा में, top 4 countries have added 0. Russia has added 64% in 10 years, and China has added 30%. So China already had 1,800 tons way back 10 years. So what has happened is, this is more popular a theory, but if you look at numbers, it doesn't support that.
Well, the world actually has been adding 1,000 tons every year in last 3 years. And India has added perhaps 77 tons in the last year as well. So there are some numbers, but when you look at the longer horizon, yes, when you divide it, the numbers seem very small. But the last 2 to 3 years, we've seen immense buying happen there. You want to add, Kunal?
Yeah, I'll give you a breakup. So from 2010 till 2020, on an average, central bank has been buying 400 tons of gold.
Right.
But from 2021 till 2024, central banks has been buying 1,000 tons of gold. This is official WGC data.
Yeah.
So I disagree slightly that central bank has been the key reason. So every year, from last 4 years, 600 tons of gold have been bought by the central banks, more than what they used to buy on an average. So predominantly this year's rally, I would say this will not be a central bank driven rally.
Correct.
This is the rally driven by the investors, ETFs. But before that, from last 3 years, whatever upside, the the central banks have been the prime driver of the gold. Now, there is a myth that central bank never sells the gold. Okay.
Which they do.
So I'm not worried about right now we are in a multipolar world where the entire Asia is doing well and the West is having its own problem. So I'm of the view that the Eastern central banks are not going to sell their golds, at least in a near term. But what about the West, who are burdened with the ballooning debt? So we also have to keep this in our mind. It should be under consideration. US, if you take $4,200 as on today, roughly their gold is estimated at $1.3 trillion, roughly. So some of the other central banks from the Western side, because of their ongoing debt problem, may sell gold. But the Eastern central banks, they will need some of the other things to diversify their FX reserve. And
apart from the US dollar and treasuries.
And today's time, it's a hard asset trade in the world going on. China is playing the hard asset trade. They want to have all the hard assets under their control, no matter what. Because whoever is having the hard assets under their control, they are going to win eventually this game of inflation. Instead of putting my money in US Treasury, I would keep my money in commodities.
Just to give a sense on numbers, the production of gold in world, as in sense of total availability, is anywhere between 4,000 to 4,200 tons. Demand in front of that is 3,800, 3,700 some years. So there always is a surplus in sense of gold. And within this, 1,000 tons is what central banks have been buying every year. So 25% of that buying has been by central banks. But that's one part of it. We do understand there's plenty happening and gold is not behaving like gold. Some people told me gold is behaving like Bitcoin, perhaps, the way it has been moving. But Feroz, the important point really is that everybody would want to know is, from here on, at $4,200 an ounce in sense of gold, it can go to a correction, it can go to 3,500, it can go to 5,000. We don't know. But from here, if somebody wanted to add gold to their portfolio, what is the best way to do that? And how much?
I think I've just been saying this, right or wrong, I don't know, but half your debt should be in gold. Okay, if you have half your money in debt, whatever you have, let's assume it's 50, 50, 50 equity, 50 debt, you can divide your debt into 25 debt and 25 gold. Okay. You will not regret. Okay. Now, how to buy it? Buy it in a staggered fashion, unless it's an allocation which you're doing like an MCX leverage trade. Buy it in a staggered fashion. So Kunal Saab ka jo opinion hai, I completely subscribe. Net, they might also, central banks might become net sellers on a particular day. So you please move your debt to gold as an STP would be a good strategy. That's point one.
All right.
Point two, don't get too carried away with this rally of 55%. We looked at, out of the last 25 years, which were the best years for gold and what was the return the subsequent year. That gives you a sense and brings in some parity in terms of recency bias. We as human beings love what performed, right? And we hate what underperformed recently. We give more weightage to 2025 than 2022. That's called recency bias. Sure. If you eliminate the recency bias, you'll be satisfied with your investment. So point I'm trying to drive home is that there could be lesser returns. So please don't derive your expectations from recent past. Otherwise, you'll be disappointed. Again, you will sell gold at the wrong time before it rallies up again.
Lakshmi, what is your sense? How should one be buying gold? And usually when we talk to investors, they barely have commodity as a place in their portfolio. Ki, haan, wife to ghar pe khareed hi rahi hai. That's all the gold that I perhaps need. That seems to be changing this year.
See, what is our objective of making these investments? One is for stability, second is for income, some is for protection, and of course the ultimate goal is you need to beat inflation. So if you're looking at from an inflation beating asset, we just know there's only one Shansha, which is equities, which we have already covered in your previous session. Now when it comes to gold, and you look at interest rates in the country are almost bottoming out. You know, what's happening is that we are reaching at the fag end of the rate easing cycle in India, and therefore you need something which will augment your fixed income returns but still not be able to give you that kind of tucker to equities, and again don't get completely swayed in by what you're seeing in 2025 or what you saw last year. So therefore I'd say that have it as tail end allocation. You can put it lump sum, there is no problem. Of course this timing is a little bit tricky. So this moment, if today and now if one were to allocate, if I were putting my personal money into an asset allocation bucket, would I stagger equities? Answer is yes. Would I put lump sum in fixed income? Answer is yes. And gold, I would want to wait it on for now because some form of gold is already there in the household. It need not be only investments. And the best way to own gold is paper gold. So ETFs, make no mistake. I mean, so that's very, very clear. Buying physical gold is doing no one any good. It is anyways a dead asset class, and I've maintained that forever. However bullish I was on gold, but that does not change.
Okay. I just want to quickly come on in case of gold prices from here. I know it's a difficult one and nobody wants to really predict on where the gold prices could be going. But Lakshmi, I'll start with you first. Where do you think gold can see a range now for the next Samvat? I'm asking a range. It can be either ways, but I know it's going to be a big one because we started this year with 2650. We're at $4,200 an ounce. It's been like a huge run.
See, clearly gold will need more oxygen cylinders to summit higher. That is very, very clear, at least from what I understand from the investment landscape over 2.5 decades. So I'd say that initially we could see probably downside movement in prices for gold and then an uptick. So there is still some meat to precisely put numbers. You know, even if you reclaim 42, 4300 over the next 12 months after a price point correction, it's a job well done for the entire year. So that's the way we'd look at it from a gold perspective.
So are you saying 35 to 4,500? I'm just trying to get some numbers.
I think that would be a fair range to go with, yeah.
Kunal?
Same, I think the way I stated on the downside, 3,800 or maximum 3,700 kind of stuff, and then again up to 44, 4500. That is the range I see. So it will be difficult to generate a big alpha next year. This year was an exception.
Manisha, my opinion is that gold might have some headwinds this year. If the global uncertainties solves itself in terms of the trade war, and also the geopolitical uncertainty solves itself, there's a desire to solve it on the US front, on the Trump side. If he's successful in solving both of these, I think I would look at it at 3,000, 3,500.
All right.
If those get solved, and Trump is as predictable as it could ever get.
Firoz, as Lakshmi said, gold ETFs is one way to buy it, not physical. We don't have sovereign gold bonds anymore. I know that some people are venturing into digital gold as well, where you buy it online in a very tokenized form. But when it comes to jewelry companies, and now there are plenty and more coming perhaps with more and more IPOs when it comes to jewelry companies, is it about, and we don't have too many mining stocks, by the way, there, but gold loan companies. So what, if you had to look at it in an equity way, if somebody wanted to invest in gold in form of stocks, what is a better way then?
Manisha, actually, this is a little dated study. When DSP had launched a gold mining fund,
right.
I was trying the correlations for the subsequent 10 years of its existence. I saw negligible correlations. So playing a proxy deal of gold with gold stocks may not be the most sensible. One of such a large jeweler in Orissa is a very, very close friend and classmate. He says, I'm praying that my stock gets undervalued so that I'm able to sell it. They get mark-to-market gains, but business is what gets valuation.
Let me come about silver now. And Kunal, what's your sense on silver? Because silver is an absolutely different beast here, because short squeeze and way we've seen things happen, and then it's in a critical mineral list as well. So silver really seems to be behaving very, very differently. 80% of a run-up, are we looking at more?
So before I explain, there's a rule in commodity. Whenever there are shortages developing, the price you cannot predict. There are no mathematical, statistical model which can predict any price. No technical, no mathematical. So that is what is happening in silver. So, I mean, from 80,000 to almost in physical 1,80,000, 1,88,000 is the high last week silver made on the physical. So we have seen a rally of 1 lakh rupee.
Lakshmi, it's difficult pushing people to buy gold added to their portfolio. Silver is even more difficult.
See, silver just evolved. I mean, at the beginning of the year, if all of us were doing this show hand on heart, if you'd asked, will silver be quoting or will the jeweler quote you 2,20,000, we all would have had like laughter and splits. So the answer to your question, Manisha, is that if any asset class, for whatever reason, Sam Dam Dand jaise bolte, for whatever reason, behaves in a particular manner, which is not attributable by any form and shape, then the better way is if you're holding it, at least take your profits out. That's point number one. Point number two is if you want to add fresh, it doesn't hurt that you decisively establish a trend before entering that asset class. I think that is what holds good for silver today.
You know, Firoz, I also do some, number crunching, by the way.
A lot more than I do.
Yeah. So most of the short squeezes that we have seen in history last for 9 weeks. This is the 9th week for silver. But the way we are, it perhaps may take another 2 or 3 or 4 weeks before we completely see this squeeze working its way out. But having said that, for silver, what is your sense? Is it a good part in your portfolio, or do you think this has been an abnormal year and maybe not? And silver ETFs perhaps, again, is another story, by the way. But how would you silver in a portfolio?
See, like Lakshmi said, silver is a very, very difficult asset for us to predict. Of course, Kunal has been doing this for a year long enough. How I look at silver is only as a ratio with gold, because gold is a little more predictable, and then you do it as a ratio. As a ratio, it's still fairly valued, right? That's one thing, right? 79 pay gold to silver ratio is not bad at all. Point one. Point two, the whole short squeeze argument can be mathematically checked. How do you check in a rising asset class if the open interest reduces? Okay, I don't see that happening. It was not just a short squeeze rally. If it was a short squeeze rally, what happens is there would be physical gold is at a premium, like Kunal Saab said, 1,88,000.
Right.
But the futures of silver quoted at almost 10-12% lower. That doesn't happen when there is a short squeeze. Short squeeze में आपको physical कम में मिलता और speculative asset महंगे में होती. वो short squeeze की argument is not mathematically supported. I might be wrong. There could be other variables in this.
Okay.
But I'm seeing it as any asset which is being speculated.
Well taken. Okay.
So to answer your point question, if I'm buying silver for the long term, I would be more comfortable buying silver for the long term than gold.
All right. So between gold and silver, silver still is a better bet. Thank you, gentlemen, lady, for being part of this very great conversation, and so much data and so much more analysis and opinion has come out with this. And again, thank you, our Access members, for joining in. You have been a great audience today. Really appreciate it. Thank you.
Happy Diwali to you.
Thank
Happy
you.
Diwali.
Very happy Diwali to everyone. Thank you.
Special partner, Nuvama. Let's do it right. Presented by Nuvama. Let's do it right. Co-powered by C8 Cross Drive. Grip you can trust.
Hello and welcome to India Business Hour. I'm Archana Solanki. Here are the headlines we're tracking this evening.
So I was not happy that India was buying oil. And he assured me today that they will not be buying oil from Russia. That's a big stop.
US President Donald Trump claims Prime Minister Modi has assured him that India will stop buying oil from Russia soon. India's External Affairs Ministry says no telephone call took place between both leaders yesterday. Also adds India's top priority is to protect the interest of consumers. Infosys meets estimates in the second quarter, tightens the FY26 guidance band on expected lines. Wipro also reports second quarter earnings in line with expectations. All big five Indian IT services companies exceed muted street expectations in the second quarter. Festive cheer on Dalal Street. Sensex and Nifty rise to the highest level in nearly 4 months after a strong rally. Nifty banked near record high. All sectoral indices end in the green. Gold and silver continue their record-breaking run as investors look for safe haven buying. Both precious metals have gained over 50% so far in 2025. Nestle India reports strong revenue growth in Q2 even as margins contract. New global CEO announces 16,000 job cuts worldwide as he targets volume-led growth. The Swiss multinational suffered unprecedented managerial turmoil last month, with the CEO getting sacked for an undisclosed relationship and the chairman stepping down earlier than planned. Quick commerce fuels Zomato parent Eternal. In the second quarter, revenue triples on a yearly basis. Food delivery net order value up 14%. Zepto raises $450 million from existing investors and a new investor in California's pension fund at a valuation of $7 billion. The company's valuation has doubled in the last 12 months. Aditya Birla Group partners with iconic French brand Galeries Lafayette to tap into India's booming luxury market. Kumar Mangalam Birla says the group is in the next phase of strategic acceleration and the portfolio is tilting towards consumer-centric ventures. And less than 3 weeks to go for the Bihar elections, the opposition alliance is yet to firm up a seat-sharing deal. Supreme Court tells the Election Commission to explain the deletion of 65 lakh names from the voter rolls, which will be published tomorrow. All right, let's start with the day's market action. Sensex and Nifty ended near a 4-month high after a strong session today. Nifty crossed the 25,600 mark in intraday trade. Banks witnessed big buying with Nifty Bank flirting with its record high. Midcaps also closed in the green but relatively underperformed the blue chips. All the sectoral indices closed with gains, with realty and FMCG rising up 2% each. Here are some top market experts with their big bets this festive season.
If you tell me one sector, it will be financial sector, where I think the overall basis stocks have not performed to their fullest potential. And we are already seeing kind of recovery take place. And there is way to, one is you can play in an asset-light mode, which are capital market related plays. And the second, you can even play banks.
Capital market and bank, and this can sort of squares with what
I'll give you a most unpopular one.
Yes.
Finance Minister indicated that after all her tax work is done, she wants to turn her attention to public sector.
Okay.
They've already said, for example, they may do consolidation of some of the PSU banks. This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat. If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bet.
Just PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme.
India has done very badly this year relative to peers, emerging market benchmarks. So over 5 years, India has still done better than EM and China and all. Maybe only US has done better. But this year, India has had its worst relative performance in 30 years, which is some 25, 27% underperformance in 10 months. That beyond a point does not last. Second is, what are the reasons why FIs are selling? I've been feeling that the world is interested currently, and not feeling that, you can see with data, that the world is putting a little bit of its global money into non-US markets.
From equities to the commodities market, gold extended its rally to a fresh record high. This as US-China trade tensions and the US government shutdown forced investors towards the safe haven metal. Now, prospects of interest rate cuts further boosted demand, also supported prices. Now, prices of silver also saw positive momentum spurred by both consumer and industrial demand. PN Gadgil Jewelers MD told CNBC-TV18 that silver is facing a unique problem in India.
The karigars don't have silver to make articles now. So the situation is like whatever is there in the store is what you can sell. And the demand just doesn't seem to end. Every day the prices are going up. The premiums are going up in the market. But the demand is still going further up. So I think it's a unique situation where prices go up, demand should come down, but here prices go up and demand goes up further.
Let's also get a sense on how the gold jewelry sales are doing in Zaveri Bazaar during this Zaveri Bazaar festival here. Joining us to talk about that is Anil Jain, our Pukra Jewelers, and Mr. Kamlesh Jain is SK Gold. Thank you, gentlemen, so much for joining in. Anil, what is your sense, first of all, with the gold prices all-time high, 60% of gains in this year? Are you looking at a bit of a dent in buying, or do you think people are still attracted towards gold?
People have got now more frenzy. And it's like catching up. They all want to cash in on the daily basis rise and make quick money. The investment buying is like exorbitant. but the emotional buying is a little down.
I think so. This is the highest gold sale ever I have seen in my career from last 32 years. People are buying because this is the safest metal.
As compared to last year, Mr. Jain, what is your anticipation? Are we looking at a bit of a decline in volumes? And if yes, then how much?
I think so. From last year, my business has grown approx 50% more.
So there's no decline for you?
No, it's not decline.
But are people buying 22 carats, 18 carats? What is it that people are investing in?
People are more buying 22 carats and the investors are buying 24 carats. But major people are buying jewellery.
Anil, is it about lightweight jewellery or is it still bridals that's working for you?
The more the prices, the quantum will go down. So lightweight and light caratage also will come in the near future. It will be a new norm now. 22 carat will wane off and 18 will be then setting in, maybe 9, maybe 12. Anything 12 carat also might catch up.
Thank you so much for joining in and giving us a sense on what really is happening here.
All right, let's put the spotlight on the big story that we are tracking. A day after US President Donald Trump claimed Prime Minister Modi assured him about not buying Russian oil, MEA spokesperson Randhir Jaiswal said that no phone call took place between the two leaders yesterday. Now, speaking to reporters at the Oval Office yesterday, Trump said he had received assurances from the Prime Minister that India would halt Russian oil purchases within a short period of time. The External Affairs Ministry had earlier said that India's import policies are guided entirely to safeguard the interests of the consumer. Remember, oil and gas are Russia's largest exports, with China, India and Turkey being its biggest customers.
In light of China's export curbs on rare earths, do you view India as a reliable partner going forward? And are you planning to meet Prime Minister Modi in Malaysia? Are you open to talks in terms of
Yeah,
trade?
sure. He's a friend of mine. We have a great relationship. He just said that 2 days ago, as you know. We have a great relationship. No, we were not happy with him buying oil from Russia, because that lets Russia continue on with this ridiculous war where they've lost 1.5 million people, by the way. Russia's lost 1.5 million people, soldiers mostly. This is a war that should have never started, but it's a war that Russia should have won in the first week, and they're going into the 4th year. And I want to see it stop. So I was not happy that India was buying oil. And he assured me today that they will not be buying oil from Russia. That's a big stop. And he's assured me there will be no oil purchased from Russia. I don't know, maybe that's a breaking story. Can I say that? Would you say? There will be no oil. He's not buying his oil from Russia. It started. You know, you can't do it immediately. It's a little bit of a process. But the process is going to be over with soon.
अमेरिका से जो टिप्पणी आया ऊर्जा को लेके, उस पर हम लोगों ने अपनी एक प्रेस विज्ञप्ति, एक स्टेटमेंट जारी किया है. तो मैं आपसे कहूँगा कि जो हम लोगों ने स्टेटमेंट आज सवेरे आप लोगों के सामने रखा है, उस पर आप नज़र डालिए. जहाँ तक टेलीफोन की बात है, तो उसमें मैं ये कह सकता हूँ कि मेरी जानकारी के हिसाब से प्रधानमंत्री और राष्ट्रपति ट्रंप के बीच में कोई बातचीत नहीं हुई कल.
The External Affairs Ministry also responded to UK sanctions on Canara Energy over Russian oil trade. MEA spokesperson Randhir Jaiswal said that there should not be any double standards when it comes to energy trade and that India does not subscribe to any unilateral sanctions. Now, this comes after UK imposed 90 new sanctions, which include freezing of assets and transport restrictions.
We have noticed the latest sanctions announced by the UK. As I have said this earlier as well, and possibly most of you are aware of it as well, that we do not subscribe to any unilateral sanctions. Government of India considers the provision of energy security a responsibility of paramount importance to meet the basic needs of its citizens. Indian companies source energy supplies from around the world while taking overall market conditions into account. We would stress that there should be no double standards, especially when it comes to energy trade.
All right, let's talk about earnings now. Infosys reported a stable set of numbers in the second quarter, meeting street estimates on most parameters. Net profit rose over 6%, while dollar revenue jumped nearly 3% on a sequential basis. The company said that it hiked its revenue guidance for FY26 to 2 to 3%, while margin guidance remained unchanged at 20 to 22%. Infosys CEO and MD Salil Parekh has said that the company has delivered 2 consecutive quarters of strong growth. Speaking on the H-1B issue, Parekh said that the company does not expect any disruption.
Our US workforce, the number of people that require Infosys sponsorship for immigration is a minority. So the majority of the people don't require it from our perspective. Second, we built a large number of centers and hubs which are focused on digital, on innovation, on technology and AI in the US. We have relationships with universities, we have a training facility there. With all of that in mind, we are clear today that we will work with our clients without any disruption to their services and into the future.
For this quarter, our net addition is already at 8,000. We had given a guidance in terms of the fresh hiring for the year, and we had said 15 to 20,000 what we expect. We have hired in the first half 12,000 plus freshers already, so we are well on our track to hire close to 20,000 this year.
Right, let's talk about Wipro that largely met estimates in the second quarter. Revenues grew sequentially and margins expanded by 50 basis points. The company is expecting growth to be in the range of minus 0.5% to 1.5%. Now, all the top IT companies have reported their second quarter earnings, and all 5 of them have managed to beat muted estimates. Reema Tendulkar is here with the IT report card.
Thanks so much for that. So let's stack up the numbers. The Q2 companies have delivered on muted expectations. All the IT companies have delivered numbers better than street expectations. Right on top, you've got HCL Tech with a 2.4% revenue growth, followed by Infosys, 2.2% ahead of street expectations. Tech Mahindra numbers also looking good at 1.6%. EBIT margin performance has also been fairly strong. Most IT companies doing better than expected. And here, the key driver is one, the rupee depreciation about 2.5% versus the dollar. And secondly, companies had postponed their wage hikes to the subsequent quarter. So for instance, TCS is giving a wage hike only 1st September versus 1st April. So, wage hike, which typically hurts in the first half of the year, was absent. And the reason the company had done that was on account of the macro uncertainty. And then you got the rupee depreciation tailwind. So margins have been fairly robust. And for most companies, they've expanded on a quarter-on-quarter basis. In terms of the overall commentary, well, IT companies maintain that the demand environment has not changed. It's not improved, but it hasn't deteriorated. And deal wins across the board have been fairly robust for the IT companies. So Infosys, after the strong performance in Q1, they have the confidence to raise the lower end of the guidance. So now they're saying revenue growth 2 to 3%. Earlier, it was 1 to 3%. And the hiring number was also strong, 8,200 added to their headcount on a quarter-on-quarter basis. For Wipro, the Q3 revenue growth seen at the midpoint of their guidance suggests a sequential improvement in the growth rate. TCS also said that the international revenue growth, what is international? X of the BSNL deal, will be better in FY26 versus FY24. HCL Tech also maintained the full year guidance, but for the services business, the bread and butter business, they did raise the lower end. So 3 to 5 became 4 to 5%. And for Tech Mahindra too, it's a work in progress and they continue to hold on to their FY27 turnaround plans.
Jio Financial has reported a 1% rise in profits and a 42% rise in revenue for the second quarter. Total income crossed 1,000 crore rupees, clocking a growth of 44%. Net income from business operations saw a 5-fold growth and the company believes it has hit an inflection point. The shares of net income from operations now stands at 52%. This is substantially higher than the 14% contribution made last year. FMCG major Nestle India has reported a strong set of numbers in the second quarter, beating street estimates across most parameters. The company's revenue rose over 10%, but net profits slumped nearly 24% on an annual basis. Margins contracted by over 200 basis points, but in line with estimates. And speaking of Nestle, in an effort for a turnaround, the FMCG company's new global CEO announced 16,000 job cuts worldwide as it targets volume-led growth. The company plans to fire 12,000 white-collar employees and 4,000 employees in the manufacturing and supply chain division. The Swiss multinational suffered unprecedented managerial turmoil last month, with the CEO getting sacked for an undisclosed relationship and the chairman stepping down earlier than planned. Quick commerce fueled Zomato parent Eternal in the second quarter. Its revenue tripled on a yearly basis. Net order value of the food delivery business was up 14%, while the quick commerce net order value saw a 137% increase on a yearly basis. However, the stock ended lower as Eternal missed estimates on the profit and the EBITDA front. Quick commerce startup Zepto has raised $450 million from existing investors and a new investor in California's pension fund at a valuation of $7 billion. The company's valuation has doubled in the last 12 months. This is the company's fourth fundraise in just over a year. Speaking to CNBC-TV18, company CEO Adit Palicha said that Zepto will use these funds to expand operations.
The reason why we were able to get this financing done is because we've been able to grow from roughly around 500,000 orders per day in mid-2024 when we closed our last fundraise to about today 1.6 to 1.7 million orders per day. And even as we've grown the business close to 250% in the past 5 quarters, what we've been able to do, which I think is more important, is we've been able to consistently keep turning stores profitable. The vast majority of this 450 million is primary, and we're now in a position where we've got close to $1 billion of net cash in banks.
Right, coming up on India Business Hour, Aditya Birla Group partners with iconic French brand Galeries Lafayette to tap into India's booming luxury market. A special report coming up in just a bit. And you can also catch all CNBC TV18 news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. Do subscribe to CNBC TV18's Access for exclusive stories and special shows like The Editor's Playbook and many others. You're watching India Business Hour. In international news, the Israel's defense minister has said that the military to prepare for a comprehensive plan to defeat Hamas in the Gaza ceasefire. If the ceasefire collapses, Hamas has returned the remains of 2 more Israeli captives, but admitted that it will need specialized equipment and assistance to locate bodies still buried beneath the rubble. Meanwhile, a United Nations agency has accused Israeli forces of continuing to kill civilians in some areas of Gaza. Russia has targeted Ukraine's energy network yet again with drones and missile strikes. The attacks on gas facilities in eastern Ukraine caused power outages In 8 regions, Russia's defense ministry said that the strikes were in response to Kiev's attacks on Russian infrastructure. This as Ukrainian President Zelensky flew to Washington to meet President Trump and discuss the possibility of US providing long-range cruise missiles. Pharmaceutical giant Johnson & Johnson is facing a major lawsuit in the UK for allegedly selling baby powder contaminated with asbestos. The claim involves over 3,000 people and is based on internal memos and scientific reports. The lawsuit accused the company of knowing that its powder contained fibrous minerals classified as asbestos since the 1960s. The Supreme Court has said it has no doubt the Election Commission of India will fulfill their responsibility and publish the list of names added or deleted in the final voter list in Bihar. The EC assured the list will be out tomorrow. The apex court was hearing petitions challenging the special intensive revision of electoral rolls in Bihar. It directed the ECI to file written notes on whether it has the power to conduct SIR and adjourned the matter till November 4th. Bihar is set to go to polls on the 6th and 11th of November in 2 phases. The father of Sumit Sabharwal, the pilot who died in the Air India crash, has moved to the Supreme Court seeking an independent probe into the crash. His plea has flagged how the government's investigation is focusing on the pilot's error and is failing to look into other plausible reasons. All ministers in the Gujarat government except Chief Minister Bhupendra Patel resigned ahead of a potential cabinet reshuffle. BJP President JP Nadda is scheduled to meet all the Gujarat MLAs at Chief Minister Bhupendra Patel's residence tonight. The state goes to polls in 2027. The Aditya Birla Group's next phase of growth is increasingly being defined by the Indian consumer. After making bold bets in paints and jewelry retail last year, the telecom to financial services and retail conglomerate is now stepping up its luxury play. CNBC-TV18's Shilpa Ranipeta says bringing France's luxury department store, Galeries Lafayette, to India is the next step in this game.
It's a slice of Paris right here in Mumbai's Fort area. Behind these century-old walls of the Turner Morrison building, once the heart of colonial commerce, a new chapter of luxury is about to unfold. In just a few weeks, Galeries Lafayette, the iconic French department store, will open its doors to India for the very first time. Now, across 90,000 square feet, across 5 stunning floors, 270 luxury brands, 70% of who are debuting in India for the first time. It's Eau de Vivre of Paris reimagined for Mumbai. For the Aditya Birla Group, this is part of a deliberate shift towards the consumer sector. After launching a paints business with Birla Opus and foraying into jewelry retail with Indria, it is now aggressively growing its fashion and retail business with a presence spanning the consumer pyramid from mass to premium to luxury.
Our group, as you know, is currently in the midst of its next phase of strategic acceleration. Our core businesses are poised for transformational growth, even as the new ventures are growing with momentum. At the heart of this evolution has been a sharp focus on the Indian customer. Over the past 3 to 4 years, we have deepened our commitment to the consumer space, responding to its shifts with deliberate speed.
The launch of Galeries Lafayette is more than just a part of the group's bet on the potential of the Indian luxury market to grow over 4-fold from $20 billion to almost $90 billion by 2030. The group says it also plugs a hole in the business portfolio and a swift expansion is in the works.
Luxury retail in India is far from reaching its full potential. For years, the ecosystem has lacked the right mix of real estate, supply and service excellence. As a result, Indian consumers, as we know, have looked outward for the experiences that they have sought.
Luxury for the past few years has been increasingly booming in the country. So we are really happy and we are really excited of what's going to happen in the next days when we will open to the public. And we are sure that Galeries Lafayette with Birla will find an amazing market. And as you said, the initial plan are 2 stores, we'll see, perhaps there will be more, and we will discuss with Biala of the opportunities of looking at other cities than Mumbai and Delhi.
Housed under Aditya Birla Fashion and Retail, the department store will feature a mix of Parisian, international and Indian luxury brands across fashion, beauty and lifestyle. The company already runs a premium retail concept, The Collective, and has acquired majority stakes in luxury Indian designers like Sabyasachi, Shantanu & Nikhil and House of Masaba. The Galleries Lafayette partnership, the company says, gives it a much wider luxury portfolio. This Mumbai flagship will join the 67 stores worldwide and mark the beginning of the brand's India journey. Now, while Delhi is next on the horizon, 2 to 3 years away from now, all eyes are now on the Mumbai store this November, where a French icon meets India's fashion capital, and the result is set to redefine luxury as we know it. In Mumbai, Shilpa Rani Peta.
And with that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC-TV18.
Presented by Nuvama. Let's do it right. Co-powered by Seat Cross Drive. Grip you can trust. Special partner, Nuvama. Let's do it right.
Hello and welcome. It's that time of the year again when lights, optimism and the spirit of renewal takes center stage. As investors look behind the candles and crackers to the year ahead, we are here to decode what lies beneath the sparkle of markets this Diwali. Joining us today are two of India's most respected market voices. Manish Chukani is veteran investor, needs no introduction. Actually, both don't need any introduction. As I like to say, he's of course director at Enam Holdings. Madhu Khela is with us, veteran fund manager, and of course founder of MK Ventures. Again, needs little by way of an introduction. Together, we'll take stock of the year gone by, explore what the next Samvat could hold, and ask the question every investor, I think, is thinking about. Is this the time to stay the course, take profits if there are profits, and of course, or double down? Manish and Madhu, great to have both of you here. Thank you very much.
Thank you, Prashant. And a very happy Diwali to you, the entire team at CNBC and all your viewers.
Happy Diwali to you, Madhu bhai. Happy Diwali to you.
Happy Diwali.
I want to start not with stocks, but the hard stuff. Gold and silver is, I think, top of mind. Every day we are sort of seeing this dizzying move. It has been dizzying. Gold, $2,000 in 2020, almost $4,200. Silver has taken out this $50 mark, and it's been a dizzying rally. Manish, you've been talking about this move to hard assets, the dollar debasement kind of trade. But take stock of it from where we are, because what you do depends on what you've already done. So in that sense, what's your take?
So let me take 2 minutes to just give the background to how it plays out. That the world's always looked for something which is a store of value and a medium of exchange. And that's typically then centered around the US dollar ever since they broke what was the gold standard. What that has done is it's given the US the freedom to print money and effectively debase all other currencies and all other asset prices, leading to US now becoming 70% of global market cap. And they were at peak, I think, also 65-70% of global currency reserves. But every decade, this excess money printing has led to bubbles. So in the 70s, you had the Nifty 50 in the US, which then culminated in the rise of gold, silver, and oil in 1980. In the 80s, it went to Japan and Taiwan. Their markets went up 12 times. In the 90s, it went to NASDAQ. In 2000-2010 period, it was back to commodities and emerging markets, of which China was the center. 2010 to 20 went back to technology, and it got extended by the excess money printing which happened around COVID. And that led to also this money going into AI and stuff, which really has 10-15 year gestation. Great technology, but otherwise you would not have had that kind of money to pour into it. On that, when they started seizing the assets of the Russians and cut them off swift, I think the world woke up that we need an alternative to the dollar. And
they went back to the oldest.
And they went back to what they knew best. And remember, 2020 to 30 was also meant to be the changeover from tech to hard assets. So you got both the themes coming together, and this rise of gold, silver, uranium, hard assets. So when you get parabolic rises, typically the market pauses for breath, like a stock market. Last year we were very high. The market went sideways. We paused for breath. It cannot go up continuously. And as Buffett says, gold is a fear trade. It's an insurance. It's not a dividend-paying cash flow asset. Equities is your hope trade. So the world is clearly divided. The equities is going with the AI boom, which at some point will climax out.
So for now,
but this hard asset theme is here to stay.
But pause. I mean,
yeah, I mean, when you see parabolic rises in 1 or 2 months, like silver has just gone parabolic, it has to pause, maybe correct a bit, but this bull market by no means
gold, by the way, going back in history, has corrected 30-40% at times. It has. By the way, I spoke with...
But just pause that thought, because people argue this in dollar terms, but because the rupee keeps collapsing, the Indians have never seen down years in gold.
Correct, obviously.
So that's why gold and real estate have been such favored assets for the average Indian.
William Buter, who was the global economist at Citi, the interview will air tomorrow. He wrote an article in the FT saying that central banks must sell all their gold now.
Great.
Things, well,
buy what?
He says the reserves should be a diversified set of things. It cannot be 25% in gold, which is where it is now.
How much is it?
It's just a controversial view. I'm just taking the opposite side for the sake of it.
Bring him on.
So you're saying a pause, maybe a bit of a correction.
Pullback will always happen, but it's a long-term bull market.
Adu.
So traditionally, I've been more positive, always been in equity, and that fundamental view has not changed. You can tactically use gold and silver as an asset allocation call. But I don't think someone like me can invest heavily and significant portion of my portfolio in gold and silver for a long run. And my premise is based on very fundamental thing that all the noise about this gold and silver price is all technical in nature. There's nothing fundamental about it, right? There's no real fundamental usage of gold or silver which can justify these prices. We are all talking these central banks are buying, dollar is debasing, and I agree with Manish's point. But when I buy good companies, their earning could go up. Like if I buy really good companies, their earning could double in 4 years, quadruple in 8 years. So effectively, I'm buying those companies much cheaper 8 years down the line. The same is not true for gold and silver. That is point number one. And point number two, right now, the rise looks, as a market participant, it looks very euphoric to me. Abhi taxi wala, pan wala, sab gold, silver lene ka advice kar rahe. So I would suggest, if you are buying incremental gold, unless you are buying it for usage, for saving, that that you should refrain from.
Actually, we've spoken to gold companies. They said that volumes are down 20%.
Yeah.
Value is up 20% because of
And I'll make one important point here. Why are we feeling so good about all this, Prashant? COVID low, our market cap had fallen to 1.2 trillion. Today it is $5.5 trillion. Gold has literally tripled from COVID lows. More than tripled, right? And analysts used to expect our gold reserves are $1.5 trillion 5 years back. So but just by definition, it should be close to $4 to $5 trillion, including all the gold, which is
the temples and everything.
Yeah, temple, hidden, not hidden, right?
Correct.
Just imagine the wealth effect which India is going through.
Yeah.
That is the bigger point. That's the bigger picture everyone is missing. Let's say $3 trillion in gold and $4 trillion in the stock market. 85% of all stock market gains are domestic. Only 15% owned by foreigners.
Correct.
100% of all gains in gold are domestic.
But that,
so in economy,
but that gain, it is, wealth effect is very powerful effect, but you can't monetize that wealth effect in that sense.
Prashant, you are feeling good. That's why you're buying a 700 crore apartment, right?
Maybe not
700 crore. Well done, Madhu.
No, I'm just saying the people are buying. This all over the place. I'm just saying this wealth effect
that's
is
true.
what
A
is
powerful one.
Is a very powerful one in an economy which is 4 trillion. You've literally created $7 trillion of incremental wealth in last 5 years.
Yeah, 100%. Let me segue from that point. You say it's a fear trade. Maybe the fear now, hopefully the fear goes down as well, right? Which is one of the factors there. From our perspective is this India-US trade thing, which went completely the opposite way than all of us expected. Voices and generally just the tone, tenor, etc. suggest that maybe it's on the mend. Would you agree, Madhu?
I agree. That's what I'm saying. And this is how the markets make kind of a euphoric rises, that it has to get coupled with this rise, it has to stall somewhere, it has to get corrected with some fundamental thing happening. And this could be the trigger that the 5 wars have stopped. You have to give credit to Trump that literally 5 wars have literally stopped, right? And let's say if US-China trade deal happens and US-India trade deal happens, then a lot of uncertainty will go away. So that fear trade which was going on, at least in gold, specifically the panic buying, I would say, by central banks, that could temporarily stop.
Yeah, maybe along with the Bitcoin as well. That's another story. But
but
on the India,
all these guys haven't held that physical gold. They've all got in a short squeeze. So what he's saying is right. It's all technical squeezes which play out in parabolic rise.
But India-US money, more and more looks like something is going to get done soon.
See, think of India. All the tailwinds now are behind you. Last year we were worried about valuations. We've gone sideways for a year, so we're generally better off. The government's given you tax cuts. They've given you GST cuts.
2.5 lakh crores.
The central bank
budget and GST, 2.5 lakh crores.
Then central bank given you interest rate cuts, and the regulators actually encouraging banks to go out and give more credit. So you couldn't have better conditions for business to take risks. The government's encouraging you with PLIs or what can we do to help you. So the conditions are actually good this year, unlike last year.
One thing that still remains a bit of a, that's what I hear
when you said it, even last time, remember we said our exports were 80 billion, 40 billion were excluded from it. 40 billion largely came down to textiles and aquaculture and so on.
Correct.
So the sentimental effect is great. But the way the erratic policies keep coming and going, if you're an industrialist, do you take a 10-year bet saying I put up a plant? Because if it's beyond this term, then you take a bet. But at the end of this term, what if the next guy comes and says, I want to overturn it? So that animal spirit, as the RBI governors also said, has been a bit missing. Because these policy uncertainties are what keeping us
behind. You think it'll come back with this thing happening
It will be much better. But we couldn't say when the deal didn't happen that we are not so affected and now suddenly say, wow, it's fantastic. It is a positive, but this market anyway is going to take a lot of these positives and start climbing.
The perception, I think what the market was actually worried about, including me, is the perception that India and US are not getting along. And then things could get much worse. 40% of all FI flows have come from the US. Let's not forget, right? And it is one thing is this: $40 billion is only goods export. But just imagine the services dependency on. So US is a very important partner.
I'll give you
and
one
we need
more.
to be friendly.
Absolutely. For sure, you want to be friends with everyone. But I'll give you another interesting way to look at it. The US is close to $65-70 trillion market cap, and it's held 30% by foreigners. So it's almost $20 trillion of foreign ownership of US markets. Every fund manager now in the world knows that you're near the end of the boom over there. That money has to rotate out. The biggest enemy of US is China. Money went to China. The Chinese market is up 40% because when valuations
money went this year. I mean, actually, last couple of years,
but this is when the war was at the peak with China. So we give too much importance to people can be patriotic and they can be investors and they need not be the same thing.
Under Biden, I remember having conversations with foreign investors saying that, well, when Chinese funds, etc., come to pitch, they've said it on air. We just told them, sorry, boss.
But it changed.
But it changed.
It changed. That's what I'm saying.
And it will change big time.
And when you see a profit opportunity, same way 18 months ago, people would say China is uninvestable, it has no terminal value. How come the same chaps have gone and bought it?
Madhu, you have a directional view in terms of if this US-India thing happens, let's just bring it down to the level of sectors where it will show up the most. What's your sense?
So I would say what has proven even in the last year, while I would like to see two things really matter. One, are you able to catch some real long-term theme? Like we discussed 3-4 years back, this energy transition. And you see how much value creation has happened.
On the back of this, where do you think? On the
energy transition thing, right? So I would pick up one of the larger trend which is there is the usage of AI.
Okay.
And really people working on scale and cost using AI. I think it will make dramatic and very significant impact on companies which are able to adopt this. And on companies which are not able to adopt this, it will be a Kodak moment for them.
True. Wow. That's a perfect Kodak moment to take a break also. Let me just, allow me to take a break. I'll come back and we'll start exactly on this point and we'll look at other sectors as well. So take that break. We continue this very interesting chat with both Madhu and Manish. Stay with us. Welcome back to this Diwali special. We are sitting down with Madhu Kela and Manish Chokani, and we are now, over the next 7 minutes, going to talk about where to bet on. I mean, we're not near term, but which are the bigger themes to focus on from here. Before we took that break, Madhu, you said AI.
Yeah. So the AI usage is here. And I would think that this is very early stage of the usage, at least in India. And clearly not reflected anywhere in the market. On a $5.5 trillion, I can't even count $2 billion worth of real AI direct companies. While, in the US, that number could be 15, 20, 25%. Or in China, that number could be similar.
अगर आपको नहीं मिला तो फिर
नहीं ना, listed है नहीं ना.
Listed नहीं, unlisted.
Unlisted में खोज रहे हैं.
We both agree on AI being powerful. And like when the internet came, the beneficiaries were people who used it.
Yeah.
Now, when you think of AI, you want organized data sets for the AI to be unleashed. Who has the most organized data sets? We were the beneficiaries in internet as the BFSI. The same thing applies today in AI. We create analyst reports now in literally 10-15 minutes with use of AI. Imagine what it's doing to the banking sector. Think of productivity gains, which you'll get both in capital marketplace as well as in banking as well as in insurance. It's the biggest play of India, of AI, is actually our financial space. In any case, it's playing into this thematically, that financials is poised to lead this market going forward from here. Like I've given you in our last interaction, that SBI beats Reliance in profits soon. ICICI beats TCS in profits. Axis Bank beats Infosys in profit. It's a seminal change which is going on and people haven't realized. And the capital market theme is a secular structural trend.
So you're saying
and
there
even
is
for private equity,
yeah,
like we spoke before the show, you have ways to access private equity deals also with some of the best. His nephew runs a fantastic fund.
Right, absolutely.
So,
are there
throw the
those
ball
plays
back
in the
to him.
private market, Madhu?
There are those plays which are coming up.
Not listed yet, but they are there.
There are those plays which are coming up. But we are more focused on usage of AI.
Which is application layer.
Which is application layer. I think that is where the real money will be made. Prashant, I'll just take 30 seconds. To give you an example, like today, all legal work is still not AI-led. Now tell me, there are hundreds of judgments which would have happened on any subject in last 100 years.
Right.
Just imagine a situation. Someone will create it in 3 years down the line. If there was a layer, how powerful it will be. And the lawyers who are not using it, how
No, it's happening. I
inefficient.
had a conversation about this with Cyril Schroff, and he said, well, they are doing some
If
real
we
work.
put it in the
And I
judiciary,
can tell you, already in America, it is already happening. There is already a company which has been able to do it in America already.
if they legislate this for the judiciary to give you judgments, those 6 million or 60 million cases stuck in the High Court, then you be bullish on India.
Manish, 10 साल
Because
में
that
हो
is real ease of doing business.
5-10 साल में हो ही गए.
That's where we are stuck.
If not the judgment, but at least judges will start using it to get a proper summary of it.
Absolutely.
जो आप बोल रहे थे 13 मिनट में analyst report. I mean, if you're able to sort of summarize cases which are going
It's
out.
crazy, boss. I'm saying we are seeing the gains of productivity.
The other
already.
one with AI, it's related, is basically the physical infrastructure, which is data centers in India.
Absolutely.
You've invested on the private side, at least, with many of these
Sure,
sort of
absolutely.
things which go into the data center.
Absolutely. Data center and energy both.
Okay.
Because that is what is like an indirect way to play. Because there is so much data that you will definitely need. And according to me, the scale and the size of the growth in all of this will surprise many optimists as well.
Okay.
That's where I can see things going.
On the listed space, there are a bunch of them, but you think
Not too many, not too many. One or two which are there, direct plays are not the ones
where you think where you are kind of at least.
Now I am saying, but what has played out for us is you identify a large theme, right? And you start early, even if you have to wait. I am saying in a fantastic theme, even if you make a mediocre investment, your gains will be phenomenal. If you make an exceptional investment in an industry which is tailwind, I have come out very frustrated investing in best companies.
Where the tailwind is missing.
Where the tailwind is missing. Or rather, there is headwind.
Correct. Manish and Madhu, from the AI is one theme, and I think it's that direction, as you're saying, it's in a way positional chess. I mean, directionally it is going to grow. So you got to find things which you said it's capital markets, financials, which perhaps anyway have a tailwind, and this kind of bolsters the argument. And you spoke about data centers and power, etc., as themes. And of course, on the private side, many application layer companies where you're making
which are coming up.
What else, as you look ahead into 2026, both of you?
I would
which
say
are these themes where you should look for ideas?
Prashant, I would say, let's say broad market. Last year, people are crying. You yourself gave me data. 30% of the companies out of 500 still made 30% return. Was there are opportunities on bottom-up basis. India is happening, my friend. All this capital market money which is being is raised. People are not going to put in fixed deposit. This is money is being raised for productive purposes. And I am specifically very bullish on some of the smaller companies, even the companies that are getting listed on the SME exchange. 100, 200, 300 crore market cap. These entrepreneurs are coming from tier 3, tier 4, tier 5 cities, exceptionally hungry. They have not seen this kind of capital in their lifetime. So there will be lots of winners from here. So Prashant, it's not about calling the broad market. It is actually betting on India's entrepreneurship on a bottom-up basis. That is the way to make money.
Are you going small in that sense now?
We are objective. It's not we are only looking small. I am saying the opportunity is bottom-up. And as long as the market doesn't fall, if I can make a case that market will fall 20%, then this bottom-up will not work. Then everything else will fall. I am not making that case. I think market remains sideways. The view is more marginally positive on the market than on negative, because Manish already spoke about it. There are a lot of things which were like a headwind has already turned like a tailwind for the market. So earning growth will be higher, liquidity is there, RBI has cut rate, globally things looking like settling down. And predictions for earning growth is maybe at the bottom. Things will improve from here for the market as a whole. Now within that, if you call the market, I am saying you bet on bottom-up ideas rather than betting on Nifty. That's
no, 100%. Both without saying, but my point in terms of themes, as you identified, AI as a theme, energy transition was one. Names like transformers, rectifiers, etc. made a lot of. I mean, there are many actually. Alcoholic beverages. I mean,
so that I would say, I would if you tell me one sector, it will be financial sector, where I think the overall basis stocks have not performed to their fullest potential, and we are already seeing kind of recovery take place. And there is way to, one is you can play in an asset-light mode, which are capital market related plays, and the second you can even play banks.
Capital market and banks, and this can sort of squares with what
I'll
you're
give you a most unpopular one.
Yes.
Finance Minister indicated that after all her tax work is done, she wants to turn her attention to public sector.
Okay.
They've already said, for example, they may do consolidation of some of the PSU banks. This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat. If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bet.
Just PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme that, like, I'm just surprised people haven't realized Vedanta will make more than $1 billion on silver, which is a byproduct. So the amount of earnings coming through in metal companies is unbelievable what is happening. The highest rate of change this year in terms of earnings will come in Tata Steel and Jindal, for example. I'm not suggesting the stocks, but the thematically, the way it happened in 2000-2010 period, the move into hard assets and the earnings that can come out from there can be very dramatic.
And you have, I mean, you and Inam, the group has been positioned with metals, JSW, etc.
And so, see, like, again, that gold and all is, like he rightly says, it's part of your asset allocation. It's your insurance policy. It's not an asset.
Earnings kicker is
but earnings is fun is from people who make money out of hard assets. It includes manufacturing as well, which is a big theme for India.
If I can give 30 seconds, before we close. I think I see a lot of people are nervous because money is not being made in the last 12 months. You know, on a contrary, developed markets have done well, silver has done well, gold has done well. But markets have proven that people who have stayed invested through last 20-25 years are the ones which are smiling. So I don't think people should deter away from equities just because last 6-12 months performance have been muted.
Manish and Madhu, thank you very much for joining us.
Thank you.
Thank you.
Shubh Deepavali.
Special partner, Nuvama. Let's do it right. Presented by Nuvama. Let's do it right. Co-powered by C8 Cross Drive. Grip you can trust.
Hello and welcome to India Business Hour. I'm Archana Solanki. Here are the headlines we're tracking this evening.
So I was not happy that India was buying oil. And he assured me today that they will not be buying oil from Russia. That's a big stop.
US President Donald Trump claims Prime Minister Modi has assured him that India will stop buying oil from Russia soon. India's External Affairs Ministry says no telephone call took place between both leaders yesterday. Also adds India's top priority is to protect the interest of consumers. Infosys meets estimates in the second quarter, tightens the FY26 guidance band on expected lines. Wipro also reports second quarter earnings in line with expectations. All big five Indian IT services companies exceed muted street expectations in the second quarter. Festive cheer on Dalal Street. Sensex and Nifty rise to the highest level in nearly 4 months after a strong rally. Nifty banked near record high. All sectoral indices end in the green. Gold and silver continue their record-breaking run as investors look for safe haven buying. Both precious metals have gained over 50% so far in 2025. Nestle India reports strong revenue growth in Q2 even as margins contract. New global CEO announces 16,000 job cuts worldwide as he targets volume-led growth. The Swiss multinational suffered unprecedented managerial turmoil last month. with the CEO getting sacked for an undisclosed relationship and the chairman stepping down earlier than planned. Quick commerce fuels Zomato parent Eternal in the second quarter. Revenue triples on a yearly basis. Food delivery net order value up 14%. Zepto raises $450 million from existing investors and a new investor in California's pension fund at a valuation of $7 billion. The company's valuation has doubled in the last 12 months. Aditya Birla Group partners with iconic French brand Galeries Lafayette to tap into India's booming luxury market. Kumar Mangalam Birla says the group is in the next phase of strategic acceleration and the portfolio is tilting towards consumer-centric ventures. And less than 3 weeks to go for the Bihar elections. The opposition alliance is yet to firm up a seat-sharing deal. Supreme Court tells the Election Commission to explain the deletion of 65 lakh names from the voter rolls, which will be published tomorrow. All right, let's start with the day's market action. Sensex and Nifty ended near a 4-month high after